We are anticipating a soft-ish start, but not really anything that feels very conducive. You've got a lot to think about this week in terms of the narrative that we are going to be watching. You've got Powell on Friday. You've got the big US retailers reporting numbers as well. You've got CPI out of the UK and geopolitics right at the beginning of the week. So how does that all get priced in? Let's find out. It is time for the opening trade. This is the picture. The FTSE 100 expected to climb maybe 0.2%, but flashish at the get-go first thing this morning. Volumes, I would anticipate, are still going to be likely light this week. They certainly were last week, mid-August. You've got to remember that. That's where we are at the moment. Stock 600 really doing not very much. We're slightly more positive maybe than anticipated. We're waiting for the CAC to open, the DAX and the SMI all to open this morning. The IBEX is absolutely flat as a pancake, nothing to see there. We'll wait for the DAX and the CAC to open. It's going to be interesting to see what we see with Novo Nordisk as well as it comes out of the gate first thing this morning. Week of late, there you go. The CAC aren't doing absolutely nothing really this morning, up by 0.1%, but holding in there. I think maybe that should be taken as a positive first thing. But it looks like the markets are looking for a catalyst. Is it geopolitics? Is it economics? Or does the corporate news continue to drive what we're seeing here, Val?
It looks like we got a mix of both here in the first minutes of the opening trade. When it comes to sectors, healthcare is at the top of the basket. Guy, that is all down to Novo Nordisk, opening up over 4% higher so far in trade. Very interesting thing going on here with defense stocks. We are seeing them in the green, the likes of Rheinmetall up over 1%, nearly 1.5%. And on the flip side, Raiffeisen Bank, this is a bank that was known as the reconstruction trade. That's down 5%. So it does seem to be like there is, I guess, some negativity, Guy, on perhaps a peace deal, given the move higher in defense stocks and lower into banks that are leveraged to reconstruction. When it comes to the sectors, though, we do have some in the red, one of those being energy and auto parts, basic insurance, and banks.
So Raiffeisen has hit a series of 52-week highs recently. The banks in Europe generally have been really positive. It has certainly been one of the names that has sort of stood out. Every time I look at a 52-week high list, and there are many on that list, it has certainly stood out, maybe towards the top end of that. So maybe that trade being unwound a little bit this morning. The defence story is interesting. In some ways, you can argue that there could be a defence dividend that comes out of this, a peace dividend that comes out of any deal on Ukraine. But it looks like Europe is going to be providing security guarantees. That means more kits, more equipment being required for that. That would only seem to add into the narrative that Europe is going to need to continue to spend quite significantly. But Novo's the real standout story to me this morning. It's had a really tough ride recently. Many Americans, it seems, are exposed to MASH, which I'm not going to give you the full title of, but it's a liver disease.
6%, you told me
6%
earlier,
of Americans
have liver disease.
So that's a huge number of people that are going to be able to be treated with Wegovy. And I think the significant thing here is that they got to market first as well, before Eli Lilly. Now, last time round, when it came to the weight loss narrative, that initially helped, but it changed really quickly as competition came to the market and Lilly came to the market. So how long does this boost last for? I think it's probably open to interpretation.
Yeah, it's interesting. We're seeing some of the automakers, some of the laggards when it comes to the Eurostoxx 50, Mercedes in the red. You thought maybe that they would perform better today given the outperformance in Chinese stocks on the back of some stimulus hopes, that maybe that could help some European industrials as well. Vestas opening up 9% higher as well. This comes after their decent earnings last week, and they're clearly standing out compared to Ørsted, who had to issue a rights offering to raise cash, and the stock moved 30% lower last week.
I think Ørsted's got ex-dividend today, which is also worth bearing in mind. We both raised an eyebrow at that a little bit earlier on today.
Why are they paying a dividend when they need cash?
Yeah, that does seem to be a little bit odd. Let's talk about these markets more broadly, figure out what is happening here. Max Kettner, Chief Multi-Asset Strategist at HSBC, joining us around the table. Still bullish?
Still bullish. That's
anything,
it.
Anything?
Done.
Okay, we
Monday,
can go. You
8
can
a.m.
go.
Thank you
Back
very
on your
much.
bike. Off you go. Anything denting that? Any cause for concern?
No, not really.
No?
I think, if anything, when we look at the last, I would say, month and a half, what it's shown, I think, is how much we should really focus at the data, at the numbers, and not at the sort of nitty-gritty and, politics here, politics there. And, like 2 months ago, we were all talking about geopolitics, and there was the Japanese bond sell-off, and then it was, now obviously Fed chair getting replaced or not, and, you're sort of over-interpreting every single tweet. And at the end of the day, you're like, well, actually, you know what? The dollar is down 10%. The Mag 7 make, like, a bit more than 50% of its revenues from overseas, so the weaker dollar helps. Thank you very much. We got a bit more earnings boost, really good earnings season. That's what I'm buying, end of story. Right? It's that simple.
Max, can I ask, the move by the U.S. government, or the reported move by the U.S. government to want to invest in Intel, does that make you more or less bullish AI?
I couldn't care less. Is basically my answer. No, honestly, like, no. I don't mean to be derogatory, but it's one of these things. I'm like, yeah, sure, like maybe they'll pay a bit extra. But Intel as a whole, of course, is also not. I don't think is in terms of market cap big enough, right, to really move the needle. That's number one. Number two, it's probably one of these things that I think bearish people will take as, oh my God, the government and the sovereign is investing into a company, and isn't that eroding trust in the economic system of the US? Is it really? I mean, these are the sorts of things. These are the sorts of discussions. Now, frankly, I at least have been having throughout my career every sort of 6-9 months. Right? I remember every sort of half year, maybe it's only once a year, where you start to see, oh, the Fed's been wrong about this and that. Remember just the last 5 years, they've killed transitory, right? Transitory, they've been wrong, and it was like, oh, they've been so wrong. Its credibility is damaged so big time. Then end of 23, beginning of 24, oh, they've been late in hiking. Now they're late in cutting. Oh, it's going to damage the reputation and the credibility of the Fed. Now this. It's stuff that people bring up.
So you don't care about the Fed? Like Val's having kind of small kind of heart
No, but Intel is one of these. No, but it's also one of these things where I'm like, ready?
The Fed is the Fed.
You could definitely argue that the U.S. government investing directly, having this revenue sharing agreement with NVIDIA, could make you, and makes me, more bullish the AI theme. I mean, it's almost better than having the CHIPS Act than just handing out cash to be invested in these businesses' success. Do you agree with that?
Yeah, that one, yeah. I think that if you, but it's only about, I think, the opportunity cost, right? Or what would be the alternative? The alternative would have been, probably pay around 50 billion tariffs over the years, right? And rather than doing that, you're just paying 3.5. It's like,
we're still waiting for the 232 sectoral tariffs on chips. Yes, he did float this 100% tariff with a lot of exemptions. We still have not gotten the on paper report, and that for pharma as well. Are you discounting that as well as a risk on the horizon?
No, I am pretty much discounting it. I'm probably too much in summer mode now. I get it, but like, to me, I think tariffs.
The winter coats.
That's I guess, tariffs for me, overall, they've become a little bit like 5 years ago with COVID. Remember, COVID was the same thing, right? It was like first infection wave, first lockdown, sell everything, ask questions later. By the second time, we kind of already knew, okay, you know what, this quarter is probably going to be a write-off, so there's going to be this dip now, but you need to buy the dip, because we know the quarter afterwards is actually going to be the catch-up. And by the third time, there wasn't even a dip to buy, because it was the muscle memory kicking in and really saying, actually, you know what, why am I even selling? Because I know if I average it out over 2 quarters, things are going to be fine. And this is the same thing where you're like, well, you know what? Yeah, fine, there might be some tariff, but then they'll find some agreement over the next week or month or whatever, and it's going to go away in some shape or form. Fine, move on.
So everything hangs on Mag 7 earnings?
I don't think everything.
Sounds like
right?
it.
I don't know. You know what? I don't think everything, particularly not right now, because what actually is amazing to me is we're talking about Fed chair, we're talking about geopolitics, all these sorts of things.
So they do matter?
No.
Okay,
what I'm saying is, we talk about all this stuff. I think what we're missing is, when you look at the high frequency data out of the US, credit card data, debit card data, high frequency consumer spending, right? Those type of things, even weekly aggregates. I think the Dallas Fed has a weekly activity proxy, so like electricity consumption and labor market data, same store retail sales, all this sort of stuff. Pretty much everything tells you that we had front-loading March, April. May, June was a bit of a temporary dip. Yeah. And now since July, things are actually picking up. And you see that pretty much across the board, that actually over the last month and a half, almost 2 months, things are improving. They're getting better. which actually means now going forward, isn't now the time where you're like, you know what, maybe NVIDIA and the earnings will still be great, but after that, isn't the next trade to play the broadening theme again? Not all the way down into the Russell.
We're back to that. Okay, we're back to broadening.
We're back to broadening because I do think, you know, again, I don't know why people are missing it because you are seeing it.
That sounds inflationary to me, doesn't it?
Well, the small cap trade last week lasted like 2 days.
Yeah.
And the Russell 2000 gave it all back.
That's the thing. I'd much rather stick to the equal weighted S&P, to be honest, than to the Russell, because the Russell issue, of course, is if we do get broadening, if we do get an improvement in the data and people start to realize it, what happens? You get yields up, and obviously with the floating rate debt exposure of the Russell, that's not great for the Russell. You want to stick to the equal weighted S&P. You still want to stick to quality, but go the equal weight S&P. Don't go down the Russell. Don't go down that rabbit hole. Really.
So one argument, maybe to temper the bullishness, is that
wow, can't believe you just said that.
I argue both sides around the table
Try me.
Is that the immigration policy, the lack of immigration, border crossings going to zero, is not only going to have a deflationary effect, but it's also going to have a negative impact on GDP growth. Do you believe what the market is discounting the impact of a massive immigration policy shift? Because, you know, you can definitely frame under Biden, the immigration surged, helped surge along inflation, it helped boost GDP growth as well. Now we're seeing the reverse of that. Are we discounting how much of a negative effect it can have?
Yes, we are, and I think so far correctly, because bear in mind the unemployment rate, U3 in the US is at 4.25. I think once we're going towards 4.10, below 4.10, then I'm with you. Because what I am concerned about is, when I look at you guys, when I look at the Bloomberg terminal, and I look at the consensus and, you know, the consensus page for the unemployment rate, there's pretty much no one that sees the unemployment rate falling. Everyone's kind of like, yeah, you know what?
Isn't that a good labour market?
Isn't
that a good labour market? Why does Powell need to cut?
Well, that's a good...
so why do you need to cut if you've got a good labour market?
But the point is, guys, that you start to see the unemployment rate dropping, you start to see a retightening of the labour market, but for the wrong reasons. You're not seeing it, you know...
It's a supply problem, not
Exactly, it's a supply problem. It's not like we had in 2021, 2022 in particular, or 2023 as well, where, you know, you have this immigration surge, you have people coming in and a positive demographic catalyst, right? A tailwind.
Okay.
Whereas what you're seeing now is a negative catalyst. But I do think it's slightly too early to play that. I think that is, to me, it's the biggest risk to look out for.
I think this is something we're likely to hear from Powell on Friday, right? The theme of Jackson Hole is the labor market. The labor market going through change. You not think he's going to harp on immigration as something that could be a negative risk on the horizon?
I do think that there is really a bit of a risk that maybe front-end pricing is getting a little bit disappointed. Now, you look at the front end, look at October and December cumulatively, we've got, I think, 36 basis points priced in for those two meetings. That's too much. Even if you're saying, yeah, but they're still going to cut in December, then there's still a good 10 basis points too much in the price. So particularly the very front-end pricing really looks a little bit too rich, I think.
For those of you who don't know, Max is from Bavaria, so we should probably ask him some European questions as well, just to kind of get a take.
Some Bavarian questions?
Well, not specifically, but like kind of European, to go with the jacket.
Yeah, exactly.
Do you just ignore Europe? Why do I want to buy Europe right now? Is there an argument for buying Europe?
That's a really good question. I mean, we've just closed the European equity overweight last week.
Yep.
So we were overweight US, Eurozone, and EM, and we've just closed it last week. Particularly, you know, after the run up with the banks again, it's kind of tough to see upside from here because obviously, yes,
upside or outperformance?
Outperformance. I think I'm just neutral.
Right.
I don't think it's going to be as bad as, oh my God, you know, they're going to go down 5-10%. No, but outperformance with SSES really hard to come by because yes.
Currency adjust that for me. Is that just put a currency overlay? Do you think the euro is going to get weaker or stronger?
No, I think the euro probably roughly staying where it is, or like slightly higher. Yeah, fine. But nothing crazy like 125, 130. I think for that, people are too much ignoring at the moment how much of a disinflationary impulse the Eurozone is getting, right? Both in terms of growth and in terms of inflation. So I think pushing towards a 125, 130, then it would be even worse. I think then I would be actually underweight the Eurozone. But what you are seeing in the Q2 reporting season, just overlay earnings beat rates, S&P versus earnings beat rates in the Euro stocks, or you know, you are clearly seeing, very clearly seeing, the dampening effect from the stronger euro on some of the exporters in the Eurozone, and you're very clearly seeing that even in a fairly closed equity market like the S&P, you know, it's only 40% foreign revenue exposure, but it's obviously top heavy, right? The top ones really make much more from overseas, but you're really starting to see how much they're benefiting. I mean, we just had the highest earnings beat rate since 2021. We have the biggest earnings season, really, in 4 years since COVID. It's massive. So that really tells you, European outperformance, hard to come by. Is it going to be really, really bad? No, because you've got the defense story, you've got the fiscal stimulus story. That can carry you another 6 months. Now I'm going to be my German self and be a bit more bearish. But I do think, once we go towards the turn of the year and towards the end of this year and maybe beginning of this year, of next year, we're probably going to start to see some disappointment around implementation. I think people are massively overestimating the fiscal stimulus in Germany. It's not stimulus, right? It's not fiscal stimulus. It's capacity to spend. Doesn't mean that they're spending it. Doesn't mean that they're rushing out the gate and saying, we're going to spend 50 billion.
They are still German, after all.
We look at 50 billion, we're like, we should save that. So it's, I was just in Germany a month ago, and it is amazing. Some of these, like even on small scale, I can tell you a story. In my hometown, we're just building a third windmill, and they've been planning it for 10 years. So it's like, I think particularly American and overseas investors don't realize how cumbersome the regulation is. You look at Germany, public infrastructure projects, 85% is admin, regulation, and lawsuits. 85% of the time.
Yep.
We
know how to do those things in Europe. We've got that cracked.
We got that very, but that's the stuff where I'm like, that's not going to change.
Max, great to see you.
Thank you.
Thanks very much indeed for coming to see us. Max Kettner. How far did you ride this weekend?
130K.
On a push bike.
On a cycle. Not a motorcycle.
On a bicycle, yeah. I'm amazed at the energy this morning, first thing this morning. Max Kettner, Chief Multi-Asset Strategist, joining us from HSBC. Core 6 looks like this morning. This is the picture we find ourselves with across Europe. We've replaced Rheinmetall back with Ferrari. Maybe that was a mistake this morning. Defence stocks front and centre. We may make a permanent change on that picture. Anyway, so that's what the Core 6 looks like. Let's talk about some other individual names. Chloe Mellis here with the details.
Good morning. So as expected, Novo Nordisk is doing quite well this morning. After a series of setbacks and shares really down year to date, it is finally getting a boost from the approval for Wegovy in the US for liver disease, which means that it's now accessing that market before its biggest rival, Eli Lilly. So it is sending the shares up 3.5% this morning for Novo. Moving on to defense. The defense sector is also trading higher this morning. Rheinmetall, BAE, Babcock as well are all up. This is ahead of the talks between Zelensky and Trump that are going to be happening, and the uncertainty there is boosting those shares. Babcock is also upgraded at RBC, so we've got a kind of a double boost there, and 2.7% up for Babcock. Moving on to the Commerzbank. Commerzbank got downgraded at Deutsche Bank this morning, so that is sending the shares down about 3% for the German bank. And then finally, Vestas. We've got new IRS rules around clean energy projects, and they are actually a little bit more manageable than thought originally for Vestas. So that is sending the shares up quite a lot this morning. We're up almost 13% for Vestas.
I'm just trying to see what the GIP5 looks like in terms of the 5-day chart, to put it in normal language, for Vestas. It's up 15% over the last 5 days. The gap higher this morning is obviously significant earnings last week. It was interesting. Henrik was here. He was talking. He was sounding quite positive about the United States, and actually maybe the regulatory burden is not going to be as great as anticipated. Stock really popping on the back of that.
Yeah, and a lot of these clean energy stocks, at least the ones listed in the U.S., the wind and solar stocks in the U.S. have been kind of all over the place. But on Friday, some of these names jumped around 30% on the back of this IRS update.
Absolutely. Just don't build a wind farm in Bavaria by the sounds of it.
Avoid golf clubs.
Avoid golf clubs.
As well.
Okay. Things to watch out.
Especially hole 18, right?
Yes. Well, beyond hole 18. We're talking
beyond hole 18.
We're talking about Trump and Scotland, and he was upset by that. I think he'd be upset by this next story as well.
Yeah, coming up, the Airbus A320 is set to overtake Boeing 737 as the most delivered commercial airliner in history. We'll bring you the details. This is Bloomberg.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. Novo Nordisk blockbuster weight loss drug Wegovy received FDA approval for a treatment of serious form of liver disease. Its stock price is gaining this morning off the back of the announcement, jumping around over 3%. Joining us now to discuss this is Naomi Kresge. Naomi, is this a game changer for Wegovy?
Well, it's not so much a game changer, but certainly an incremental win for Novo Nordisk. For them, it's really about the competition between Novo and Eli Lilly, the American rival, between Wegovy and Zepbound, which is the Eli Lilly weight loss drug. And this is an indication that Zepbound doesn't have yet. And so in this group of patients, Novo will be ahead. It's incremental. I mean, analysts are foreseeing potentially an extra $1.9 billion of revenue, peak annual revenue from this indication. So it's certainly a boost. And let's say a win in one battle in this ongoing war between these two huge drug makers.
Naomi, good morning. It's Guy. How is Lilly going to get approval? How long is the window of opportunity for Novo?
So Lilly is also studying its medicines in this area. They're getting into late-stage trials, so we could see, some few years, potentially year or two of runway for Novo Nordisk. Now, one should note that there are other competitors coming up as well in MASH. There's one drug that's already on the market from Madrigal Pharmaceuticals. Boehringer Ingelheim is also working on a medicine in this area and has had some good data from their drug as well. So the Novo and Lilly are not alone in this group of patients, but this is a good, advance. Like Novo has leapfrogged the competition a little bit with this approval here.
Naomi, thank you very much indeed for the update. The stock certainly responding to this news this morning, as you say, incremental, but certainly positive. Naomi Kresge on what is happening with Novo Nordisk this morning. Let's turn to what is happening in the world of aviation. The Airbus A320 series, poised to overtake its competitor, the Boeing 737, as the most delivered commercial airliner in history. This, according to the aviation consultancy Cirium. As of early August, Airbus had shrunk the gap between the two competitors to 20 units, according to data, with the remaining difference likely to disappear as soon as next month. Remember, Boeing is limited in the number of 737s that it can produce at the moment. Airbus has a massive order book. Obviously, things are changing fairly fast. Anthony Palazzo joining us now. He covers this sector for us. Anthony, there's a 20-year age gap between these two aircraft, and it felt like since John Leahy introduced the Neo version of the A320, it has just been accelerating away from the 737. How big a moment is this for Airbus?
Yeah, well, I think it is a very big moment for Airbus. I mean, these two companies are the dominant plane makers in the world. The rivalry goes back 50 years, and when Airbus started back in 1970, you know, Boeing was the king of the hill, and the rise of the A320 really parallels the rise of Airbus. It's been instrumental in equalizing Airbus's standing over the years, and really in the past 5 to 10 years, overtaking them.
Anthony, are we getting to the end, though? How far away is the next generation of narrow bodies? That's what everybody's asking now.
Right, and it's a good question. We don't have all the answers. Airbus, it's a little bit clearer. They've said that they want to launch a new replacement for the A320 by 2030. That means they'll have to choose on the engine technology right around 2027. And their target is to put the plane in the air by the mid-2030s. Boeing's timeline is a little less clear. They've said that they're thinking about this, but they've had so many fires to put out that they really need to get their house in order first. Yeah. That's the last we've heard from their CEO. They're making a lot of progress, and so we don't think they'll be too far behind.
Okay, it's amazing. The 737 first flew in 1967. Kind of gives you a sense of the history here. The 320.
Yeah. I was going to say Lufthansa was the first customer.
Absolutely, interesting transatlantic element to that. The A320, 1987, 20 years younger. Anthony Palazzo, thank you very much indeed. Coming up, we're going to focus on European defence and aerospace. That's next. This is Bloomberg.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we don't want to lose you, Emily, in all of this?
Stargate, put that name down in your books. What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
This is the opening trade. We're 30 minutes in today's session, and we've lost a bit of momentum over the last hour or so. Eurostoxx 600 is in the red, down 0.1%. We're seeing some underperformance in the DAX and the CAC. Some key underperformers today are the likes of the banks and the insurance sector, so that's kind of explaining that there. The FTSE 100 is the key outlier in the green, up 0.1%. Guy?
Okay, reasonably balanced markets, 307 up, 207 down when it comes to the stock 600. Not a clear sense of direction emanating from that. Volume, despite the fact it's down by a quarter, is actually relatively good compared with what we saw last week. Val's bringing up the banks. Over the last few days, it has been the banks that has dominated the 52-week high list. There haven't been many 52-week lows recently. There are a few this morning, but the 52-week highs this morning look like this. More of a mixed picture. Ital Gas. Interesting to see what is happening with European gas prices today. Actually heading lower. Telecom Italia, unchanged at the moment, but up by a little bit. It says unchanged, but we are basically, we're tracking a little bit higher this morning to a 52-week high. And the Tenor Group up by 0.6%. So we've got a range of 52-week highs today. It is not, as it has been over the last few days, very much dominated by the defense space and the banking space, Val.
Well, here's what else you need to know on this Monday morning. Bloomberg has learned that China's top envoy, Wang Yi, is traveling to New Delhi today in his first trip to the country in over 3 years. The visit is seen as an effort by Beijing to ease tensions with India and comes as President Trump's tariff policy pushes the two countries closer together. White House trade advisor Peter Navarro is calling the dramatic increase in India's buying of Russian oil since the invasion of Ukraine, quote, opportunistic and deeply corrosive. In an FT piece, Navarro linked India's trade barriers and what he characterized as its financial support for Russia, depicting dealings that come at the expense of the U.S. And lastly, European leaders will join Volodymyr Zelensky at his high-stakes meeting with Donald Trump today in Washington. Ukraine's leader is facing growing pressure from the U.S. to agree to a quick peace deal with Russia.
Well, let's pick up on that last story and go to Brussels. Bloomberg's Oliver Crook standing by to give us a briefing ahead of that meeting that is taking place in D.C. a little bit later on. Ollie, set this up for us. How should we be thinking about this meeting? What should expectations look like?
Well, I think that we should hope to try to get as much detail as possible about what was agreed to on Friday between Trump and Putin. What we've heard reiterated from the Trump administration was, in point of fact, that they agreed to nothing, that actually Ukraine must be making those decisions. Ukraine needs to be at the table. That is a very different tone than what some of the things we had heard in the lead up to this meeting over the last couple of months from the Trump administration. And that sort of way of doing business that Trump has now adopted is something that will come as at least a slight relief for the Ukrainians and the Europeans, despite probably their tacit, they won't say this this explicitly, probably great displeasure to see Vladimir Putin walking across a red carpet in Alaska on Friday. But I think the most significant development that we had over the last 48 hours is an outline of some of the agreements that the United States is willing to accept in terms of its role potentially in a post-ceasefire, post-peace deal Ukraine, which is basically assuring security guarantees for Ukraine, basically giving Article 5 style NATO commitments that the United States would in some way back militarily the Ukrainians if ever there was a repeated infraction on Ukrainian sovereignty going forward. What I think is interesting is that this has been sort of styled as something that the Russians have agreed to in this meeting. Of course, Article 5 is not something that exists by Russian consent. It exists despite the fact that despite Russian objections. So the United States could have very easily a few months ago said, listen, we are willing to support Ukraine militarily and say we will give the security guarantees, but that is a position that has definitely shifted over the last 48 hours. If indeed the United States says explicitly it will come to Ukrainian defense if ever there is a further infraction on Ukrainian sovereignty after a deal is struck.
Ollie, overall, do European leaders and even Ukraine, do they view what happened on Friday in Alaska as a positive, as a moving step towards peace?
I think that they're going to spin it that way. I think that everybody, has learned the lesson in dealing with Donald Trump, particularly on the issue of Ukraine, whether it's the Europeans, whether it's Zelensky learning it really the very hard way in February this year, is that you never want to appear to be the obstacle to Trump's plan to a peace deal with the Russians. So what they will do is they will enlist all of their energy to try to spin what happened on Friday as a positive development. And I think that the fact that you have Emmanuel Macron, you have Friedrich Merz, you have Mark Rutte, the head of NATO, Ursula von der Leyen, Giorgia Meloni, Keir Starmer, all going to Washington, D.C., really does give exactly that. It gives prominence and momentum to this plan by the Trump administration. And with everybody sort of going there and sitting in the Oval Office, maybe they won't all fit in the Oval Office, but sitting in Washington, D.C. across from Trump, it makes it very difficult for this to not be a serious plan that gets some momentum going forward. What they will try to do is say that actually we're all willing to be participants in this conversation and be active members in trying to find a solution, but actually Putin is the problem. That is the story that they're going to try to spin over the next 48 hours, 24 hours, and we'll see what we get tomorrow morning.
Ollie, great stuff. Thank you very much indeed. Our Europe correspondent, Oliver Crook, joining us from Brussels. European defence stocks, aerospace stocks, watching this story develop very, very carefully. Benjamin Heelan, head of European Industrials Research at Bank of America, joining us around the table to discuss. Good morning.
Morning.
If Europe provides security guarantees to Ukraine, how do I factor that into the European defence story from a stock point of view?
Well, I think if the Europeans do provide security guarantees, they're going to have to back that up with spending, they're going to have to back that up with equipment, and there is a chance they will have to back that up with troops on the ground, right? Troops on the ground in Ukraine, we had this coalition of the willing at the beginning of the year. France and the UK were the kind of early initiators of that. If you have troops on the ground, that's a decade-long investment. That requires logistics vehicles, it requires armoured personnel carriers. So I think that it just drives that investment story that we've had and just gives a lot more credibility to some of the numbers that have been talked about.
Would it offset, though, the kit that's currently being used in combat?
Yeah.
Like if there is a peace deal, a ceasefire, those equipment that are currently being used on the front line, be it munitions or missiles or armored personnel carriers or whatever, that kind of goes away to a certain extent. Do the two balance each other out?
So it goes away, but one of the big takeaways from the NATO summit at the end of June was inventory, right? We just don't have enough kit, right? And so I think what you will see is that replenishment cycle. If you look at 155 artillery shells, that's a 10-year long investment cycle just to replenish to the kit that we need. So I think there is an argument that you will see, you'll put a low multiple on that revenue because you think at some point you're going to have replenished inventories, you're not going to need it. But I think the investment that you will see that really accelerates is things like air defense, hypersonics, and autonomy. Those are the really high-tech, leading-edge sort of areas of investment that governments are going to, once they do that reinvestment cycle on the land side of things, are going to continue to invest in. And that has the longer growth trajectory, as I see it, over the next 10, 15 years.
Ben, do you think that perhaps alongside this European defense rallying continuing, that U.S. defense stocks are going to rally? And in that comparison, what's the most mispriced in a bullish outcome?
Look, I think the US comes down to the US budget, right? The US defense stocks, it's 80% of the revenues for them. So that comes down to the outlook there. There's obviously growth this year. There's a lot of question marks around growth over the next couple of years in the US defense budget. We are super positive that there will continue to be growth in the US defense budget over the next couple of years. I think for the European side of that theme for the US defense stocks, what you're seeing is a lot of them are actually partnering with the European defense stocks, because Rearm EU, what the European Union has talked about in reindustrializing the defense base here, they want to spend the money in Europe. So actually, I still think the bigger opportunity here is for the European defense stocks, because that's what the European governments, that's who they want to invest in. That's where they want the capacity to be grown.
Okay, and in sensing that upside, are you also watching just how quickly these governments turn around and spend this money? You know, they promised that 5% of GDP for NATO, but over what timeline? Obviously, the market wants them to spend that as quickly as possible to see that kind of PE re-rating.
Yeah.
What kind of things are you watching to make sure that these governments are really going to stick with their word in putting that capital to work?
Look, a lot of it is going to come down to the orders, and one of the big takeaways from the Paris Air Show this year was that France is going a little bit slower than people had hoped. Germany was going very, very quick, right? And I think that when we get the budget agreed and signed in September, when you speak to the companies exposed to that German defense kind of theme, Rheinmetall, Hensoldt as an example, the orders are very, very significant. What is being talked about, what is being prepared. You've seen all these leaks in the press, Handelsblatt, the FT talking about, 6,000 Boxer vehicles and that sort of magnitude of stuff. So I think actually what you're going to see is Germany is going to be the big focus in the second half of the year, because the numbers that are being talked about there, Rheinmetall's talked about 70 billion euros worth of orders just in the next 12 months, largely coming from Germany.
How much? But it sounds like we know a lot.
Yeah, we do. Yeah.
So the market's priced a lot of this already in. So how much, therefore, headroom is there on some of these stocks, which have had a fantastic run?
Yeah, so we've seen actually about a 15-20% derating just over the last kind of couple of months. Once we hit NATO summit, kind of the stocks have all kind of derated a lot. I'd say two things. Right? One, if you believe in the investment cycle, these stocks are very, very cheap medium term, right? But you have to believe in that 5-year investment cycle. We do, but when you're getting these stocks at mid to high single-digit EV/EBIT valuations in 2028, 2029,
you need those earnings to come through.
You need those earnings to come through, but that is attractive if they do come through. The second thing is we've talked a lot about the flow picture, and last time I was on here, we talked about ESG flows. The analysis that we do, those flows have still yet to happen, and I think what you've seen is a lot of the European asset managers have written to their clients, we're going from Article 8, we're going to be investing in this theme of sovereignty, but that flow picture hasn't actually happened yet. That's going to be a September, October event. So we still think as a firm, there's about $70 billion of flow to normalize in the second half of this year just from that ESG money equal weighting the sector in Europe.
Ben, can I ask, we have this meeting in D.C. today between Zelensky, the European leaders, President Trump. Is there any outcome today that would maybe make you double think your bullish view on European defense? Like, what would be the worst outcome for these stocks in this decision, in this meeting today?
Yeah, I mean, tough to frame that. I mean, what I would say is a lot of this, from a European perspective, comes down to this infraction on sovereignty and the loss of territory, right? And so Russia is obviously occupying a decent chunk of Ukraine right now. If Ukraine is needed to kind of just recognize its lost control of that doesn't change why Poland, the Baltics, and Germany and the UK and France are stepping up from a defense perspective, because, you've basically invaded a country and you will keep that territory, right? That's obviously a terrible, terrible message for the countries in Europe. So I think actually you don't see any really big changes in why governments are moving to this 3.5% on hard defense spending over the next couple of years.
Civil versus defence. What's the picture at the moment? There does seem to be there has been a really big move into the defence stocks in Europe. Yeah. Has that been at the expense of the civil aerospace side of the business?
Yeah.
What happens next in terms of? I'm hearing more positive noises coming out of the States in terms of demand there. Just update me on what your current thinking is on Airbus, Boeing.
Civil is in an incredible market position, right? Aftermarket growth, whether it be Safran and GE and Rolls-Royce, just continues to be double-digit. Pricing is good, demand is good. I think for me, the big focus of the second half of of the year is going to be supply chain, and that's going to be the big inflection. It's been the story for the last 3-4 years. Yep. I went to the Paris Air Show. I was in New York with Airbus a couple of weeks ago. It really feels that you're at a point now where there are maybe 2 or 3 sticking points, which is engines and the Spirit Aero deal at Airbus. But once you get through that, things are moving in a very, very positive position. You know, Airbus is already producing today at pre-COVID levels. They just can't deliver them because they're still waiting for the engines from Safran and GE, and that feels like it's coming and is meant to have normalized by the end of October.
So we exceed deliveries this year?
We won't exceed deliveries this year. I think they will be around that guidance level, but they won't do better than the 820. But next year, deliveries should be better than what we did pre-COVID as that engine situation catches up.
Okay. Nice to see you.
Yeah.
Thanks for coming in to see us. Cool. Benjamin Heelan, Head of European Industrials Research, joining us from Bank of America. Coming up with temperatures forecast to reach 44 degrees in some parts of Spain today. We're going to have the latest on the wildfires being fought across the region. It's affecting the whole of southern Europe at the moment. We think it's going to get cooler in Portugal today. Spain remaining very, very hot. That is what we're going to talk about next. Is there an economic effect of all of this? We'll discuss that. This is Bloomberg.
Why is Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come. While we've invested in the convention center, the reason we focused on housing and getting rid of the vacant housing, the reason we focused on violent crime. And now Baltimore is having amongst the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachian Zahran, and this is Bloomberg.
"47 minutes into the equity market session, European equities softer and have become more spread, I guess, I'm trying to think of the right words to describe it. My brain is clearly not functioning this morning. We have softened up since the open this morning. We were anticipating a flattish open. That has deteriorated a little bit. I have to say the German market's under a little bit of pressure. Commerzbank is down today. Crosstown rival Deutsche downgrading that stock. So Commerzbank is being hit on the back of that news, which is dinging up the German market a little bit.
Well, one share attracting a lot of attention and is surging nearly 14% is Vestas, the biggest gainer on the stock 600 this morning. This is after guidance issued by the U.S. IRS on tax credits related to clean energy projects was deemed by analysts to be far less onerous than feared. To discuss this further, we're joined now by Bloomberg's Sarah Scholin. What are the biggest takeaways for investors? There's been a lot of back and forth on this regulation, whether it be a positive or negative for the clean energy industry.
Yeah, in general, the policies, the takeaways in the U.S. have been such a big uncertainty for the wind power industry, and specifically Vestas, that has the U.S. as its way biggest market. So this is definitely the worst case scenario that has now been taken off the table, and that's why we're seeing the shares rallying. Now we expect a flurry of U.S. orders to come in next year, the year after, and we're really probably going to see a lot of activity for the company over the next few years in the U.S.
In terms of less bad, when somebody says less bad for me, I still hear bad. How difficult is the environment going to be for Vestas? Henrik was on the show, the CEO, the other day, sounding quite positive about the United States. What does it look like over the next few years for this business?
Exactly, and I've talked to Henrik as well, and he is quite positive on the U.S. market. He did say when I talked to him a few months ago that regardless of the legislation in the U.S., it is a big market that has a big energy need over the coming years, coming decades, and clean energy and also green and wind energy will be part of that narrative to meet those energy demands. So regardless of what was going to happen for the U.S. in terms of these new rules, IRS guidance, he was really positive on the U.S. markets. This just takes away a big negative and a big uncertainty for the stock, and the stock was trading at a level where investors pretty much were expecting no new U.S. orders to come in, and that's probably not going to be the case now. Now we expect to see a lot of the wind farm developers, they're going to put in orders so they can really get these projects in before the tax credit may run out at the end of the decade.
Sarah, what is the next catalyst for this industry as a whole now that this clarity from the IRS was gained? Is there something else that could possibly pose as a risk event to the clean energy ecosystem?
Something that we're really watching over here in Europe is a competition. Denmark and Vestas, they have been sort of the forefront of wind energy and clean energy, but now we're seeing a lot of competitors come in, specifically from China. They also have really strong industrial policies when it comes to energy and meeting the increasing energy demand over the next generations, over the next decades, where in Europe, it's been, when I talked to Henrik, at least that's what he said, it's been uncertain for him where Europe wanted to go in terms of their industrial policy in energy. So he wants Europe to create these big champions in green energy and wind energy to compete with specifically the Chinese competitors.
Sarah, we're going to leave it there. Thank you very much indeed for the update. Stocks certainly moving on this morning, now up by 14% on the Danish market. Sarah Scholin joining us out of Copenhagen. Let's talk about, you could argue, the other end of this story. Spain grappling with record-breaking wildfires as temperatures soar across the country. The Prime Minister, Pedro Sanchez, is now calling for a nationwide climate pact to coordinate government effort. He wants to deploy hundreds of troops as well to battle the blazes that you can now see pictures of. Bloomberg's Rodrigo Orihuela joins us now. Just talk to us about, I want to come on to what he's talking about, the Prime Minister, in terms of the effort that's going to be made. Rodrigo, how bad is it in Spain right now? How hot is it? How bad are the fires? Is there any end in sight in terms of what we're seeing?
So it is really bad. I mean, all forecasts have that this will be by far the worst year as far as the number of fires and the impact they have in Spanish history since records began. We are talking a huge surge, and the issue isn't as much about the size of the area it's covering as it is about how many fires are going on at the same time, and that is the main issue. I mean, numbers vary, but you could say that there's basically about 40 different major wildfires on right now. The main one is in the eastern area of Extremadura. So it is a really high concerning situation. The defense minister just spoke a few minutes ago. She oversees, obviously, the army, and the army in Spain has a special division which acts in natural disasters, as in this case, and she says that this unit has never seen anything like this in its 20 years, and that we have to accept that some of the fires will not be able to be controlled unless there is a change in the weather. There has been a huge heat wave in Spain over the last 2 weeks. Some areas saw about 45 degrees over the weekend. The forecast by the weather agency is that that will start changing early this week, but obviously nobody knows if that will be enough to stop the fires.
Rodrigo, just walk us through. We heard from the Prime Minister of Spain saying he's been urging for a nationwide pact to unite all levels of government to fight wildfires. Why is this something that doesn't already exist in Spain?
So basically, you have two different situations here. One is that Spain is an extremely decentralized country as far as political powers go. So there are some powers that lie with the central government and others that lie with the regional governments, which are roughly equivalent to states in the US. Now, what happens is that, given that most of these regions are controlled by the opposition, what we're seeing right now is that there is an extreme amount of political bickering going on about whose responsibility it is or isn't to control and to fight these fires. It's quite striking to see the situation going on right now. So that's one phase. Who is responsible and what should each of the political powers be doing? The second issue is that many of these regions are controlled by the main opposition group, the PP, a conservative party which has been in and out of power with the socialists for decades. But in many of these regions, they govern with Vox, the far-right group, which is very anti-climate change policies. And so the PP has started picking up some of these elements. So right now, Sanchez and his government are talking about how this is mainly a situation that's mainly down to weather changes, to climate change. And in the PP, and especially in Vox, they're saying this has nothing to do with climate change, it has to do with political management. So you have these two big situations. On one, who's responsible for this? On the other, whether or not this comes down to climate change. And Sanchez was kind of hinting at that. However, it's something that happens in one way or another with every one of the crises we have seen in Spain of different sorts over the recent years.
All right, thanks to Bloomberg's Rodrigo Orihuela joining us on the story out of Madrid. Thanks so much. Let's take a step back and get you set up for your trading week. There is a big risk event on the horizon that is today with Zelensky and European leaders in D.C. to meet President Trump after his meeting with Putin on Friday. Attention then goes to the UK on Wednesday, UK CPI. Thursday, the global flash PMIs out across the world. Attention on manufacturing and just how that's handling up on both sides of the Atlantic due to tariffs. Walmart earnings starts a slew of retail earnings out of the U.S. Later on Thursday. And on Friday, it's the big one. Jerome Powell will be having his Jackson Hole keynote address at 3 p.m. on Friday.
I hope he lives up to expectations. We kind of big these things up all the way throughout the week. This is the keynote event. This is going to be what you're going to want to watch on Friday. Sometimes he just talks about kind of academic research. You could go down the rabbit hole of what does immigration do and how does that change the narrative. There's lots of ways that this could go. It was interesting, Mark Carmel was saying he expects this to be an event. And I guess saying nothing could be conceived as hawkish. I don't know.
Well, I mean, saying nothing kind of implies that he'll still characterize the labor market as solid. The market wants to hear from him that these payroll revisions mattered to him, because it seems like some people who sit around here on the table totally want to shrug it off, the weakness of the labor market that we've seen in those payroll revisions, which were the biggest in decades.
Yeah. If you back out, what I'm curious to find out is if you back out immigration, what is the long run rate you need to have a stable U.S. labor force at? Obviously, it's going to be much lower than it was over the last few years. Is it 65? Is it 75? What is a steady run rate for the U.S. economy? Because that kind of benchmarks our expectation going forward in terms of the payroll numbers that we're going to be watching.
Yeah, and the theme of Jackson Hole is labor market in transition. So maybe we'll get that kind of color from him on labor market.
Yeah, the immigration story is going to be quite significant. Busy week coming up, main event Friday. We've got all of that covered. We're going to carry on the coverage. The Pulse is up next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Heading to D.C., Ukraine's Vladimir Zelensky and European leaders look to pin down U.S. security guarantees as they meet with Donald Trump. The White House is expected to focus on territorial concessions following President Trump's meeting with Russia's Vladimir Putin on Friday. And traders focus on Fed Chair Jay Powell's keynote speech later this week from Jackson Hole. Now, on the back of that, let's look at the markets. And, of course, they're a little bit shy, a little bit tentative, because there is quite a lot going on that they're waiting to process or they're waiting to find out more about. Now, futures wavering near these all-time highs. Again, at the beginning of a week, that's going to be very crucial to the extensive progress towards a peace deal for Ukraine, but also signals from the Fed on interest rates. European stocks pretty much flat. Let's get to that in a second. You can see gold 3,349 with Brent practically unchanged. Now, if you look at these European stocks, they're pretty much flat because traders are also cautious ahead of that Powell speech a little bit later on. It's very clear that investor expectations for monetary easing next month fluctuate in recent days. The CAC 40 down some 0.5%, the DAX down 0.3%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Donald Trump will host Volodymyr Zelensky and European allies at the White House today. The plan is to set out terms for a potential peace deal that President Trump discussed with President Putin last week in Alaska. Now, the U.S. is expected to focus on territorial concessions demanded by Russia. In a moment, we'll hear from Jens Eisenschmidt, Chief Europe Economist at Morgan Stanley. But first, joining us here in London with me, our own Rosalind Matheson and Oliver Crook, who's in Brussels. So, Ros, let's start with you. What did you learn from Alaska? I mean, there was a lot of actual, the red carpet rolling, but do we know what was agreed? I know there have been a couple of leaks on what the two presidents told each other.
Well, we don't know a lot about what was agreed because there were moments when the two of them were pretty much alone together, including in the presidential limousine. So those conversations we only have a sense of from what Donald Trump has been saying and in the Russian media as well, and what our sources are telling us. But it seems as though, again, as you say, really the red carpet treatment was rolled out for Vladimir Putin, the optics of him being hosted on, U.S. soil by the U.S. president, and again, getting the ceasefire conversation essentially off the table, and Donald Trump now moving very much to focus on the idea of leapfrogging a ceasefire and going straight to a full-bore peace deal between Russia and Ukraine. I mean, Vladimir Putin didn't get the sanctions relief. He didn't get any immediate word on that. That's something he's been seeking because his economy is under some pressure, but equally no sense that Donald Trump is going to push for further sanctions or penalties on Russia. So no immediate relief there, but the sense that Donald Trump isn't going to go forward with some kind of other penalties in the near term. So really, when you look at it, the sense is that Vladimir Putin probably came out on top from this conversation.
And today we have a number of European leaders actually going to the White House with Vladimir Zelensky. So what are the expectations, Ali, going into the White House meeting?
Well, I think the most interesting thing that we learned in the last 48 hours, really since that meeting between Putin and Trump on Friday in Alaska, was not from Trump himself or Putin or anybody else, but it was from Steve Witkoff, who went on the media yesterday and spoke to a number of different channels, saying that basically that the United States had agreed to some sort of Article 5 style guarantees for Ukraine, theoretically, in a potential peace deal. This would mean that the United States would come to the military aid, the active military aid of Ukraine, if ever their sovereignty were further imposed upon by the Russians if there is a peace deal going into the future. That is a significant statement coming from the U.S. administration. This is something that the U.S. has not wanted to explicitly guarantee in any negotiation going forward in the last few months. This is something the Europeans have been calling for, something the Ukrainians have been calling for, but something the U.S. has been unwilling to give. What I think is interesting is it's been sort of spun as a concession out of this meeting with Putin because the Russians have apparently signed off on this idea that they would be okay with the U.S. giving security guarantees. But we should say the U.S. could very easily have unilaterally given those security guarantees over the last couple of months. This is not something that requires Russian consent. Yes, it's helpful, I suppose, if you have an agreement because it means that the Russians have, again, in theory, signed on to this. But again, what does it mean for the Russians to put this into sort of legislation domestically in Russia, as Witkoff says they promised to do? What is that actually worth? But it is significant that the United States has now said, effectively, they would agree to sort of Ukraine in a NATO-light situation. They can't call it NATO because that's a red line for Russia, but that they would come to the security aid of Ukraine after a deal, if indeed one is struck.
Yeah, I mean, what's pretty incredible, Roz, is that there was no ceasefire, right? There's no ceasefire, but actually the start of negotiation. A lot of the U.S. allies are probably now trying to make sure that Donald Trump stands behind Ukraine. Has Donald Trump's thinking changed in the last week?
Well, certainly he is moving in his head, it seems, straight towards a full peace deal. And what does that mean? And how quickly is he going to be pushing for this to happen? And that's the scramble today that we're going to see with these conversations in Washington, is don't go too far too quickly in terms of his understanding what he thinks would be territorial concessions, for example, by Ukraine, that he wants to get done to have this deal take effect. So there's that kind of shift in thinking towards no ceasefire, full peace deal. And what does that look like? And do you race to do that very, very fast? The onus seems to be also in Donald Trump's messaging a bit back on Ukraine. He was saying overnight, the Ukrainian president could do a deal pretty quickly if he wanted to. And, he's been pressuring Russia for the last couple of weeks, obviously frustrated. He's, indicating he thought he was being strung along by Vladimir Putin. That seems to be coming back yet again to now, hang on, we need Ukraine to come and agree to all of this, and it's going to be on Ukraine to get this done. So some of that tone is shifting as well. We don't have a lot of detail on this potential idea of security guarantees. There were contradictory statements from the U.S. administration overnight on that. It's very unclear exactly what that would look like, or even if Ukraine would be able to sign on to it.
So, Ali, what needs to happen today for this meeting between Putin and Zelensky and Donald Trump to actually happen?
I think one of the big differences that you have today versus the first meeting that we had in the Oval Office between Zelensky and Trump back in February, which we remember went really very terribly for the Ukrainian president, is that his whole approach to Trump has changed, and I think the Europeans have adopted a similar approach. What the Europeans and the Ukrainians will try to make very evident to Donald Trump is that they are not the impediment to peace. They are not the ones that are in the way of moving a proposal forward. The very fact that you have world leaders coming from France, the UK, Germany, Finland, from the the NATO Secretary General, Ursula von der Leyen as well, all going to Washington, D.C. to have these discussions with Donald Trump, gives more momentum into a plan that Trump has set out on Friday, which makes it more and more difficult for them to, for the Russians to say, listen, we're going to not actually sign up to this. We're not so clear about this. We're going to continue to bring ambiguity into the situation. This puts more momentum. This puts more energy into those conversations. And as we know, Trump would like to see a trilateral meeting between Putin, Zelensky, and himself, as early as the end of this week in order to get this buttoned up. How exactly you get there is a very difficult question. But at least for the Ukrainian and European perspective, the approach is clear. Don't be the problem.
Harley, thank you so much. Charlie Crook there in Brussels and Ross Matheson here in London with me. Now let's get more with Jens Eisenschmidt, the Chief Europe Economist at Morgan Stanley. Jens, thank you for joining us. I mean, first of all, on this geopolitics, I know you play it through, the price of oil. You could also play it through defense and generally, but what does it mean? Does it mean anything economically, actually, if there is a peace deal or at least a ceasefire?
I mean, we get these questions very frequently from the client side, simply because it has been going on for some time now, that this is back and forth. Can we get a deal? You may remember early in the year, it looked more like an unilaterally imposed deal where the Europeans were scrambling to get ahead of the curve again. So I think the main question is here, indeed, oil or natural gas for Europe. And I think we should sort of listen into what's coming out of Brussels. And I think what's coming out of Brussels is we want to have less Russian gas for the EU, not more. So, of course, there are some countries that have an exception here in that. But I think the general tendency is to wean themselves more off than on. You could still see some other repercussions on the prices, but I think at this stage it's limited, lest or if only we are looking at the outcome that we see right now is the most likely, namely sort of a deal that is not really to the total liking of the EU. Now, if this were to be a deal where Russia would completely backtrack and convert into something different, we would be talking different, but that doesn't seem very likely right now.
Yes, I mean, is there a question about normalization, away from geopolitics, but actually in terms of corporates and deals, and does that take time?
Yes, absolutely. I mean, if you are looking at the region there, I mean, just very simple thought experiment. If you're a corporate, would you want to invest now a lot of money into Ukraine? Would you be assured of the security situation? Would you be assured of, being have total ownership of your assets? The answer probably has to be the honest answer right now, no. And I guess that goes back to my previous point. If we were to come into a completely different setup, where we have a Russia that's maybe pre-14 in its acting, that's different. But I don't think this is very likely. And so for all practical purposes, I think the economic consequences immediately are very limited.
Now, the other big thing this week is, of course, Jackson Hole and that Powell, that speech by Jay Powell. That doesn't have to be on policy, but there's certainly a lot riding on it. What's your assessment of the U.S. economy right now?
Yeah, so I mean, the U.S. economy is certainly slowing down, which is also our forecast. Maybe not by as much as expected. I mean, of course, you have several undercurrents here which play a role. Certainly, we have a slowing supply side in the labor market. Then the question is whether the demand side is slowing by as much. There is this clear construction activity going on in data centers, which to some extent provides some tailwind here. But I think overall, it's clear there is some slowing down. That's number one. Number two, then, of course, you have to ask yourself, is this enough slowing down to completely offset the threat from inflation?
Yeah.
And I guess the Fed has not yet come around to think the answer to this is a clear yes. So I would expect our team actually in the U.S. is expecting a relatively hawkish positioning of Powell in Jackson Hole. In a way, you don't want to give away now all your cards because you just don't know. I mean, there's more inflation reading to come. Prominently the week before the Fed meeting, we have the CPI, of course. That certainly is something that the Fed wants to see before committing on either side.
But do you think we'll get a cut in September? Also, given the political pressure and some people that are on the FOMC, and 25 or 50? So
our forecast is for no cut still. But we have to concede that there's, of course, given also what has happened in the data so far, a cut has become more likely than before. Still, our base case is no cut in September. And I guess the answer would be, if we were to get data in keeping with, us moving to a cut, then it would rather be 25 than 50.
How does that translate for the European economy?
Yeah, no, I think this is a very, very good question. I think right now we are coming out of and I think that was also interesting to see the pricing. We're coming out of the July meeting, which the markets took as very hawkish. Now, the pricing for this ECB is basically no cut in September. And when the pricing moved in the US for the September cut to be almost fully priced in, almost nothing changed on the European side. I think the key here is, of course, the exchange rate. The key here is, of course, also whether, for instance, the data front in the US looks like as if there would be more cuts to come, in which case the ECB can't stand just and ignore that. Our own expectation is we will see a cut in September. But of course, that's something very much, as in the US case, dependent on the data. Here we are looking at the PMIs more than anything else. But we have already seen signs of impeding weakness. If you look at the IP data that we got in August, if you look at the orders data out of Germany, then the trade agreement is probably a little bit worse than what the ECB had expected. Staff would very likely, in my view, go into that meeting in September recommending a cut.
What's your take on the fiscal spending and actually, again, the impact that this has on GDP in Europe?
So that's pretty much limited to Germany right now for all practical purposes. And indeed, the fiscal spending news that we got out of that was essentially more than expected previously. That was before we all went to on summer vacations.
Some of us.
Some of us. I'm sorry to hear that. I'm just back. I think the growth impact for Germany is non-negligible. It's there. At the same time, the trade headwinds, in our own assessment, still outweigh this for Germany, given the trade dependency of the economy. So all in all, for Europe, yes, there's more fiscal spending, but I don't think it's a threat for inflation at this stage.
When you look at the various countries and the fact that actually most of the leaders are going to Washington, I mean, are you surprised by any of the dynamics? It does seem that Europe is holding together. Again, does it make it stronger economically somehow?
I mean, as a European, you would very much hope so. I think we are still some way to travel to get to the real reforms that would get us more growth. Yeah. I think these days, if you talk to asset allocators, if you read the popular press, you can see a lot of statements saying this is the European moment. I think European politicians have yet to live fully up. I think the ECB never tires in making the point about banking union, about capital markets union. I guess the defense angle is a very good one, very productive one, because it's clear to everybody around the table that defense spending has to be more efficient, and that could be a further catalyst for more integration. So the answer is, as always, for Europe, more Europe, not less Europe. Yeah. Do we get there? I think the signs are there that there is some progress, but maybe not by as much as we would want to hope or want to have.
Jens, thank you so much. I mean, a story for another time. I was reading actually in the UK press about Europeans having to go less on holiday in August to make sure that they have full sovereignty. I don't know if I agree with that, but it's certainly food for thought. Jens Eisenschmidt there, Chief Europe Economist at Morgan Stanley. Coming up, Ukraine President Volodymyr Zelensky calls for new sanctions on Russia if it refuses trilateral talks over territorial issues. We'll have more on that next, and this is Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
This week, Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Tune in for continuing coverage leading up to a special episode of Surveillance, Friday at 9 a.m.
We need to use this momentum because President Trump invested a lot of political capital to get it done. There is a readiness, at least readiness on the Russian side to talk. And now we need to use this momentum, but we have to talk from the position of force. And we have this possibility. So the stakes are high, the expectations are high.
Well, that was the Ukrainian ambassador to the EU speaking to us earlier this morning. Now, speaking in Brussels on Sunday, Ukraine's President Volodymyr Zelensky called for new sanctions on Russia if it refuses trilateral talks over territorial claims.
Since the territorial issue is so important, it should be discussed only by the leaders of Ukraine and Russia at the trilateral Ukraine, United States, Russia. So far, Russia gives no sign that trilateral will happen, and if Russia refuses, then new sanctions must follow.
Well, let's talk to Nigel Gold-Davies, a senior fellow for Russia and Eurasia at the International Institute of Strategic Studies. Thank you, Nigel, for joining us. First of all, European leaders are going to Washington, to the White House, to speak to Donald Trump. What are or what should their goals be?
Their goal in the wake of the Alaska summit last Friday is, in the first instance, to prevent the slide of White House policy further towards Russia. What we saw at the end of last week was a profoundly alarming development for Europeans who had worked very hard the previous week to engage President Trump and those around him to keep his position, his latest position, I have to say, fairly strong. But what we saw was something like a 180-degree flip on President Trump's side, having gone into the summit saying he wanted an immediate ceasefire, he'd be very unhappy if that didn't happen, and that severe consequences of Russia would follow. We've seen that position dismantled. He seems to be accepting Putin's view that the only way to end the fighting is a comprehensive peace that would appear to adopt essentially Russian positions. So it's really a matter of stopping the further decline and slide towards Russia, and to provide visible and tangible support for Ukraine. That's very important. So Trump understands he's not just talking to Ukraine, but to the whole of Europe.
But strategically, Nigel, is this trying to reverse some of the things that Donald Trump has agreed to? Is there any hope actually for security guarantees? Or are the Europeans trying to push the policy in a way where actually, President Putin has no choice but to refuse it?
Well, ultimately, we are approaching a moment of truth where President Trump has to decide whether he's going to take a Russian view or a European view on the nature of this war and what is needed to end it. Strategically and diplomatically, the Europeans, I think, will be pressing President Trump to once again agree the unacceptability of forced territorial transfers, to limit and minimize any further demands that are made on Ukraine, such as limiting its armed forces. That's a key Putin demand. And if peace is to come, to ensure there are robust and effective security guarantees. One of the big problems with security guarantees is that Russia's view is that Russia will be a future guarantor of Ukrainian security, which is an extraordinary and perverse position, given that it's Russia that has invaded Ukraine. So the Europeans will want to ensure that in any arrangement like that, Russia does not have a veto on whether security guarantees are implemented or not, should Russia itself resume its aggression.
Are there concrete outcomes today? Do you think something concrete will happen, or is it just further talks down the road?
I suspect it will be further talks. What we've seen in recent months is, in effect, a kaleidoscope that keeps turning. Every time it turns, the pieces of the puzzle arrange themselves in a new picture, a new shape, and that kaleidoscope is turning faster and faster and faster. Ultimately, I think the moment of decision will come when Trump can no longer avoid clearly choosing between essentially a Russian view of the war and an outcome to it, and on the other hand, the European and Ukrainian view. Europe is there, above all, to bolster Ukraine, and Europe will hope that Trump's warm personal relations with individual European leaders, as well as the fundamental stake that America has in European security, will ensure that Trump hews to the Ukrainian and European point of view and avoid trying to impose a form of peace that really will not guarantee a full and final end to the war, but that would at best be the prelude to a future further act of aggression against Ukraine and possibly Europe. Russia has invaded twice.
Yeah.
Could do a third time.
It seems that Donald Trump, is also, posting on social media things like President Zelensky of Ukraine can end the war with Russia almost immediately. He's talking about NATO and things like that. I mean, could we see a showdown like we saw a couple of months ago with President Zelensky being humiliated in the White House?
That's a profound worry. Everyone remembers that, of course. What's followed since was amending of fences. The last few months until the Alaska meeting had seemed positive and encouraging for America's relationship with Ukraine and with Europe. Look particularly at the NATO summit at The Hague in June. There were very warm atmospherics, and President Trump seemed to reaffirm his commitment to European security. But we know what a volatile and unpredictable White House this is. And above all, that's the reason why the Europeans are there, to be a visible, demonstrative presence of support and ensure that President Zelensky is not once again isolated, invulnerable to some kind of sudden hostile turn on the part of President Trump.
Nigel, who does President Trump listen to amongst the European leaders?
This is the paradox. On the one hand, from MAGA, we have quite a hostile rhetoric towards the idea of the European Union. On the other hand, we have these warm and cordial and effective working relationships with Prime Minister Starmer, with President Macron, with Prime Minister Meloni, with Alexander Stubb of Finland as well. They are great golfing companions. He seems to have a very good rapport there. And also Mark Rutte, the Secretary General of NATO. They're all there in force. Some have cancelled their holidays at short notice to be there. That rare collective visit of senior European leaders is palpable, visible demonstration of the stakes that Europe feels are present at this meeting.
Nigel, thank you so much. Nigel Gold-Davies there, Senior Fellow for Russia and Eurasia at the International Institute of Strategic Studies. Coming up is AI coming for your job. We discuss how the global labor market is being shaped by economic uncertainty and the rise of automation. That's next, and this is Bloomberg.
opinion at least, the reason that the U.S. is so creative and innovative and has so much interesting development and has, most of the largest trillion-dollar businesses is because we have the best capital markets. And capital market development is really what creates the funding in order to pursue ideas. So in America, any idea you have, there's a market for it. Right? So building markets like the securitization markets in the U.S., really allowed for non-financial companies to get into the financial industry business. And that was really a derivative of making the securitization market so competitive. So building securitization markets and continuing to grow markets and figuring out how to continuously fund ideas, I think that's going to be the next stage of growth for these markets.
The most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Heading to D.C., where Ukraine's Volodymyr Zelensky and European leaders look to pin down U.S. security guarantees as they meet with Donald Trump. The White House is expected to focus on territorial concessions following President Trump's meeting with Russia's President Vladimir Putin on Friday. And traders focus on the Fed Chair Jay Powell's keynote speech later this week from Jackson Hole. Now, as money continues to be plowed into AI, what will the technology mean for jobs? That's what everyone is wondering. On the one hand, the demand for software engineers is higher than ever, yet with so many other jobs at risk of being replaced almost entirely by AI, automation, and robotics, the overall impact of AI on the global workforce remains to be seen. Well, joining us now is someone who has been monitoring the situation very closely. Johnny Taylor is president and chief executive of the Society for Human Resource Management and a former member of the White House American Workforce Policy Advisory Board. Johnny, thank you so much for joining us. I didn't even know such an organization existed. It's so important because we don't think about human resources until we have a problem. And then they're the most important person in your life. What are they worried about?
So job security is the most interesting. Take us back 2 or 3 years. It was wages, it was, COVID and in the office, out of the office. Now everyone's concerned about their jobs. And no surprise, every headline that you read almost every day, no matter where you are in the globe, there's a conversation around AI coming for your job.
But is it just, there's something in the air when I speak to big corporations, is that people are maybe a little bit less motivated than pre-COVID. I don't know if it's, the needing self-starter, is it work-life balance? Has something changed in the workforce?
Fundamentally, workers changed post-COVID. During that period of time, we're all sitting at home and we're reflecting, do I want to work? For whom do I want to work? How many days do I want to work? Where do I want to work? All of that gave us some real time for introspection, and as a result, we're on the other side of trying to figure out what the future of work is from the worker's perspective.
And so what does it mean on how they are managed and led?
It's tough because for those of us who've been people managers for 2 or 3 decades, you now find yourself in a position where everything that used to work doesn't work anymore.
Such as?
For example, how do you get people to work? What motivates people to work? Increasingly, we're hearing people struggle with not just physical health issues, but mental health issues. That's a conversation we didn't have 4 or 5 years ago. But the threat of AI is existential to people right now. What we're learning is there are two things that present an existential threat to the American worker. It's a threat to their lives, that was COVID, and then their livelihoods, which is AI. So it is literally the dominant conversation right now. And in the past, the conversations were very much automation affected blue-collar workers. This, however, this new AI stuff, generative AI, is impacting white-collar workers and the professionals, and that's creating a lot of angst.
And Johnny, I mean, are people anxious because they don't quite understand what it does, or because it will really displace a lot of jobs?
Both. That's the problem.
Because uncertainty also makes you just even more anxious. You're more worried because you don't know what you're grappling with or what you should train.
That's right. You almost can get comfortable if you understood what the issues were.
Yeah.
But it's so new. I remind people, November 30th of 2022 was when we introduced ChatGPT to the world. Get that right, ChatGPT to the world. And so it's not that long ago that none of us were even thinking about this. Now, all of a sudden, there's a headline from Bezos who says your job may go away, or Gates says your job will go away, teachers and physicians, jobs that we historically thought were safe, maybe not so much.
So what's the right way of thinking of this? If you're a human resource director, if you're like a big manager or leader, how first of all, do you get your employees behind you?
Yes.
And what are the challenges you need to face in the next 3, 6 months, and then 3 years?
So it's all about skills readiness, cross-skilling, reskilling, cross-training, et cetera. What we told employees is like, listen, AI in and of itself won't come for your job. Someone who is proficient in AI will take your job. And so the idea is you've got to reskill. You've got to take your advancement into your own hands. Professional development is not just the company's job or not just the task of high promotable people. It's for everyone. So ultimately, lifelong learning.
Yeah, I mean, and again, the question is with what tools?
Right.
So is that up to the company
now, that's
to come
where
up with it, or is it you?
Absolutely. That's the HR job, HR and the senior management writ large. The responsibility is to ensure that you have the tools to reskill because they're not expensive. Many of us wouldn't know what to do if you gave us a pot of money and said, go retrain. So very much this is our job to facilitate lifelong learning, not just talk to you about it.
Do employees want to learn new skills, or if they're not motivated, maybe like they used to be, is it a bigger challenge?
Well, the motivation now is unemployment, and people are seeing jobs be displaced. There's not a day that goes by where you look in the media, some major company says, I'm laying off people because of AI. IBM did that recently, for example. If you don't think that serves as a motivator for people, we're wrong, because people get it now.
John, is there a place or a group of jobs that you don't think will be displaced?
So that's the big question. I thought so for a long time. But as we've gone from 2022 to now, increasingly that number is smaller and smaller. What we do know is about, in the U.S., we estimate about 10%, 9.2% to be exact, of the jobs we think are really at risk of full displacement. Yeah. Our sense is that more jobs will transform versus be displaced. But 10%, in a workforce, for example, in the U.S., 160 million people, 10% of those jobs going away is significant.
I mean, how do you think it rechanges how human resources work? I've heard of pilots,
yes,
for example, of people, in smaller companies saying, I'm going to do an algorithm through AI that will tell me who's at risk of leaving the company.
There are tons of companies doing that, actually, startups that are saying, we're going to help you decide which of your jobs can be automated. Yeah. And that, again, creates a lot of concern for employees when you hear that your company could actually be... Back in the day, we'd have the big consulting firms come in and tell us what should be replaced. Now there are algorithms that will tell your employer what part of your work and potentially all of your work that could be outplaced.
But that's a danger, isn't it? I mean, I was talking about also people that maybe are flight risk, so people that want to leave the company.
That's right.
But I heard there's then a big backlash of employees saying, well, that's not how I want to be managed.
That's what we're up to. So that's what we're trying to figure out in this post-COVID world. Exactly the point is what happens if the employees rebel and say, that's it. I'm not going to allow you to do this to me or my neighbor. And that's the risk that we pose. So there's a tension right now in the workplace. Employers want productivity, increased efficiency, et cetera. Employees want job security, and thus the battle.
Johnny, thank you so much. I mean, it's, I know, a conversation that we'll have again and again. Johnny Taylor, their president and chief executive of the Society for Human Resource Management. Now, we also talk about oil trading slightly lower this morning as traders turn their attention to Donald Trump's meeting with Volodymyr Zelensky. The Ukrainian leader is under pressure to reach a peace deal with Russia that involves ceding territory. Let's get more with Anthony DePaula, our energy markets reporter in Dubai. So, Anthony, good morning. What would a deal mean for the oil markets?
Good morning. Yeah, well, it really depends on what kind of deal we get. If there's a deal that continues to move towards a ceasefire, towards some kind of peace, then we would probably have to see some kind of loosening in terms of any kind of restrictions around Russian oil. But that would, of course, require real moves towards peace there to get that Russian oil moving more freely. what we don't really see the idea either way that there's going to be much move on oil when we look at the oil markets. We're down slightly today, a little bit weaker than we were last week. But Trump had been threatening serious consequences if the Russians didn't agree to peace, didn't agree to a ceasefire. The meeting came and went on Friday without any of those agreements in place, and we didn't see any of those serious consequences. So it's still kind of a wait and see. But the market has not been bidding up oil, has not been reacting in a way that suggests that they think any Russian oil is going to come off of the market. What we do have are some tariffs on India for buying Russian oil. But that oil, as the market seems to do, is finding a home, probably in China. So we'll see some of the flows shift without really a reduction in supply, Francine.
So, Anthony, could a deal also mean that China is actually not hit with secondary tariffs?
Yeah, well, China's off the hook at the moment. There are other talks going on with China over trade and the potential tariffs that could be in there. So Trump has said he will hold off on putting any additional tariffs or secondary tariffs, whatever he calls them, on China for its purchases of Russian oil. But what we're already seeing is some of that shifting of that flow of those barrels from India towards China as India faces those tariffs on itself, and as some of the refiners scramble to look for other barrels, looking for oil from the Middle East, looking for some barrels from the Americas to replace some of that Russian crude going there. So we're seeing that shift already, but we're not seeing the additional sanctions or tariffs put on China that would really choke off that flow. And we're not seeing wholesale additional sanctions put onto Russia or even enforced more forcibly that would cut off the flow. Of course, oil price is a very important factor that Trump politically wants to keep it low, wants to keep gasoline prices low, and so that's an issue here as well too. So, you know, he's weighing up all those issues, and we'll see how it comes out today with this meeting, whether it is Trump telling Zelensky and the Europeans what Putin wants and that he backs that position, or whether they do really strategize for a move to a final and lasting peace, Francine.
Anthony, thank you so much. Anthony Di Paola there, our energy markets reporter in Dubai. Now, bond traders face an important moment this week when the Fed Chair Jay Powell delivers his keynote speech at Jackson Hole. Powell's speech could give Fed watchers a fresh update on how much support there is to lower rates in September. Well, we're now joined by Van Ram, cross-asset strategist for Bloomberg MLive. Van, so good to speak to you. It's a really, really big week for the Fed. What are the odds for a rate cut in September, and how may Powell actually influence that?
Morning, Francine. Great to be talking to you as always. I think that there is a very high chance that Powell won't stand in the way of the rate cut bets that are mounting in the markets. The markets are thinking that, you know, they are signing an 80% chance of a rate cut 1 month from now. And I think that looks pretty much baked in the cake, because if you look at the jobs market input, there is an inflection point that we are nearing. It seems to suggest that the jobs market is cooling considerably, and therefore I think that the Fed is slightly behind the curve in terms of what is possible. Of course, they have been held back by concerns about tariffs and what that means for inflation. And, you know, of course, producer prices jumped a whole lot in July. And that means that Powell is going to say that, look, we will probably get back to rate cuts in September and December, as indicated in the dot plot in June. But I think that going out further, nothing is sacrosanct, because, you know, because of the way inflation has come back with the producer prices. And if that morphs into a trend, the Fed will warn that, look, further rate cuts down the line are not guaranteed.
Then what are the prospects for a steeper yield curve, both in the U.S. but also the euro area?
Well, I think that, you know, the steepening of the yield curve in the U.S. has got further to run, Francine, because if you look at the front end, I think that, you know, we are likely to revisit the 350 levels on the 2-year, because, you know, the Fed, as we just discussed, is likely to usher in 2 rate cuts this year. So I think that the front end is going to get a bit. The longer end is going to be relatively anchored because of concerns about deficit, and also what it means to have someone who is going to be more willing to be able to cut rates for the Fed when the new nominee is appointed, and what that means for inflation dynamics down the road. So I think that we are setting ourselves up for a pretty steep curve. in the euro area, I think that the steepness has got further to run, but this time led by the longer end yields surging because of the Dutch pension fund reforms. That means that swap rates at the long end are going to fall, and I think that sets up, but that is still a dynamic in play, and I think that that curve has got slightly different dynamics than what's going on with the US.
Ven, thank you so much. Ven Ram there from our MLive team. Now, Novo Nordisk shares have jumped after the Danish drug maker's Wegovy obesity drug won U.S. approval to treat a serious form of liver disease. The shot was cleared for the disease known as MASH in adults with moderate to advanced scar tissue in the liver. Now, the condition affects about 6% of U.S. adults, or about 14.9 million people. It means Novo Nordisk has beaten rival Eli Lilly to the U.S. market for the increasingly prevalent condition. And Spain's Pedro Sanchez is calling for a nationwide pact uniting all levels of government to combat what he's calling an accelerating climate emergency. Well, the move comes as firefighters in Spain, Portugal, Greece, and Turkey continued to battle wildfires that have raged for weeks. Coming up, Ukraine's Volodymyr Zelensky prepares for a high-stakes meeting with Donald Trump today. The U.S. president focused on Russia's territorial demands. That story is next, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, European leaders will join Volodymyr Zelensky at his high-stakes meeting with Donald Trump today in Washington. Ukraine's leader is facing growing pressure from the U.S. to agree to a quick peace deal with Russia that involves ceding swaths of territory. Well, we're now joined by Stephanie Baker, our senior writer, and Mark Champion, who writes about international relations for Bloomberg Opinion. So thank you both for joining us. I mean, to you both, Mark, maybe let's start off with you. It's unclear, Donald Trump, humiliated Zelensky in the White House last time around. Then he seemed to be more on the European side, and now he's gone back to, it feels like, squaring with Vladimir Putin. Do we know why?
I think we don't really know why. I mean, it just seems very clear to me, at least, that, for some reason, he has a real affinity for President Putin. He enjoys meeting him. It's the kind of environment he's comfortable in, more comfortable than with a bunch of, liberal European leaders, for example. And, and he doesn't really, this war in Ukraine is annoying to him. He wants to get on with making trade deals, economic deals with Russia, etc. It just gets in the way, and I think he's just looking for a way to end it. It's much easier to pressure, President Zelensky into accepting concessions he doesn't want than, pressuring Putin into doing so. So I think that this is just a sort of falling back into his natural kind of affinity. Yeah. It's just an easier path for him. And now the difficult, obviously, element for Zelensky and the European leaders who are there to support him in Washington now is going to be to persuade them that, he gave away the farm and we got to change that.
Yeah, and Stephanie, it feels like, I guess there are 3 points, right, that European leaders will try and influence Donald Trump. It's the security guarantees, which Witkoff said the U.S. has promised in some shape or form. It's the land swap, or actually the land grab, which Zelensky doesn't want to give away. And then do they get a meeting between, Russia, the U.S., and Ukraine?
Yeah, I mean, off of Mark's point, I think the thing is that Trump seems to parrot the last person he spoke to. He's repeating the narrative that so he went into the summit having just agreed the sort of negotiating position with the Europeans, ceasefire first, and then a peace deal later. So the question is, after he meets with European leaders today, is he going to change position again? On the security guarantees, that is a major shift in terms of the U.S. Being willing to provide some kind of security guarantees. I mean, in reality, Russia shouldn't have any kind of veto over that. It shouldn't really be part of the negotiations. But the fact that the Trump administration is willing to do that, and Witkoff said that Putin would be willing to allow it, is significant. Now, we don't know the details of that. How is that exactly going to work? But I'm looking for any kind of shift in Trump's tone, and particularly on sanctions. He said, I'm going to park the issue of sanctions for a few weeks. There's no point. And Marco Rubio said yesterday, once we impose new sanctions, that means the Russians stop talking. And I actually think that's wrong. I think one of the reasons why Putin came to the table is because of the threat of additional sanctions on India and Russia's weak economy. So I think it's possible to do both, to really extract concessions from Putin.
But Stephanie, I mean, we thought that Donald Trump would be much tougher on Vladimir Putin, but actually we saw it from the start. I mean, he was quite warm to the Russian president. There was a red carpet, and he was also, I understand, flanked by his Commerce Secretary and his Treasury Secretary during the meeting. So is this about a deal, like a money deal, instead of geopolitics?
Well, as I understand it was Marco Rubio, the Secretary of State, and Steve Witkoff, his special envoy, who attended that meeting. And it is significant that it ended earlier than we had expected, and there were no additional meetings after that with Scott Bessent, Treasury Secretary, and Howard Lutnick, the Commerce Secretary, with their counterparts in Russia. So it indicates that it didn't go that well, and there were some sticking points. But this, the Kremlin has said that Trump didn't actually bring up the issue of a trilateral meeting, Putin, Zelensky, Trump, during the Alaska summit. So I think for Putin, he's always said he'd meet with Zelensky only after certain conditions were met and at sort of final stage negotiations after it had been agreed at an expert level. And that essentially means Ukraine agreeing to the territorial concessions, which they've said they won't sign up to.
Mark, what does success look like from a European leader point of view? Is a ceasefire, I mean, the ceasefire wasn't really even discussed.
Yeah, I mean, so that was the real shocker for the Europeans, really. So, before he went to Moscow, Stephanie said there was this meeting, and they said, look, don't do some, territorial deal that, that Ukraine won't be able to accept. Ukraine has to be at the table for that. For this meeting, just focus on a ceasefire. And he agreed. He said before he was going in, we're going to focus on a ceasefire, see what we can do. It's going to be a look, see, listen meeting. And he did exactly the opposite, right? He talked about territorial concessions and agreed with Putin's position, which all along has been no ceasefire, just a settlement, which is, very detrimental to the Ukrainians. They now have to negotiate giving away their territory while, the Russians are making incremental, advances on the ground. And you can see why this is what Putin wants. It puts him in a much, much stronger position. So, you know, all in all, it's pretty disastrous for the Ukrainian president, and what he'll be looking for today, and the Europeans will be looking for today, is some way to walk that disaster back.
How is this just to make sure that also President Zelensky is not humiliated in the White House? I mean, we all, remember what happened last time.
Well, yeah, absolutely. I mean, that will be part of the issue. I mean, presumably they'll be in the same room, in the same meeting. I'm not 100% sure. Maybe he'll talk to Zelensky first and the Europeans later. I don't know. But that's what the purpose is, to make sure that, he doesn't get just mugged again. And that, there is support for him, and that Trump understands that this isn't just about, some issue between the Ukrainians and the Russians. This is also about European security.
Is there a European leader that Donald Trump listens to more than others that can really help?
Well, he seems to be listening to Keir Starmer quite closely, and Keir Starmer has reinforced his support for Zelensky. So I think that's one of the. But this is a high-powered delegation. Yeah. It's all the leaders of the biggest European countries. Giorgia Meloni of Italy, who has been close to various figures in the Trump world. So I think that could change the way he starts talking about further talks with Russia. I'll be looking for, is there going to be a kind of pool spray? Is there going to be another event in the Oval Office with Zelensky or other European leaders, or will they follow what the format of Alaska, where they didn't take questions and Trump didn't talk? Marco Rubio has said that he did not want to be releasing details on the talks because you can't do these negotiations in public. There's a lot we don't know about what they discussed. There's an awful lot that we don't know. We know that the issue of Ukraine giving up the 25% of Donetsk that Russia doesn't control was on the table, but we don't actually know what they discussed, and was that a sticking point for Trump? So I'm looking out for further details on what exactly did they cover on 2 hours and 45 minutes of talks.
Yeah, there's many questions, not many answers for the moment. Thank you both for joining us. Stephanie Baker, our senior writer, Mark Champion, columnist for Bloomberg Opinion. Now, hundreds of thousands of Israelis took to the streets yesterday to protest against Prime Minister Benjamin Netanyahu's plan to expand military action in the Gaza Strip. Organizers said as many as 500,000 people attended the main rally at Tel Aviv, a massive turnout by Israeli standards. And Bloomberg has learned that China's top envoy Wang Yi is traveling to New Delhi today in his first trip to the country in over 3 years. Well, the visit is seen as an effort by Beijing to ease tensions with India and comes as President Trump's tariff policy pushes the two countries closer together. The Indian Prime Minister Narendra Modi is expected to visit China in August, his first trip there in 7 years. Now, this is what we're expecting for the week book. Actually, the week book ahead is going to be a busy week. Monday, of course, today, it's all about the European leaders with Vladimir Zelensky of Ukraine in D.C. We'll see exactly the format of those talks, whether there's a press conference or anything like that. Then we have a lot of data coming out. Wednesday, UK CPI. Thursday, we have global flash PMIs, but also does the U.S. consumer hold strong? We have Walmart earnings, and that's usually a great bellwether for what the U.S. consumer is doing and thinking. And then we have that keynote speech from Jay Powell on Friday at Jackson Hole. It could sway, actually, markets that he's still quite a lot more dovish or not than expected. And then at the same time, we're expecting a policy speech, but it could be something a lot more academic. Unclear exactly what we get on Friday. Up next, Bloomberg Brief. Of course, they'll talk about Russia, Ukraine, EU leaders, and then they'll also look ahead to that Jackson Hole speech. This is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for VVA is, a source of resiliency of earnings, and it generates, complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this Monday. Will he or won't he? With Jackson Hole on deck, does Fed Chair Powell endorse a cut next month? 90% of the way through a solid earnings season, the last leg, U.S. retailers from Walmart to Target to report. And a coalition of the willing. President Zelensky and his European allies land in Washington to push the U.S. on security guarantees. It has that full-on summer Monday feeling today. It is a melt-up that we saw last week, 3 all-time highs in the market. We are slightly weaker this morning after a weaker end to the week on Friday. S&P futures down 0.1. Same goes for NASDAQ. Russell 2000 futures outperform up 0.1%. That might be because of the rally we are seeing in bonds this morning. Bond yields are lower across the board, middle of the curve. The 10-year yield down just under 3 basis points at 4.28. We're still pricing in something like a 90% certainty that we will get a cut from the Fed next month, but that has seen a curve steepening. The 530s, that is at its steepest since 2021. Let's get you some stocks moving in the pre-market this morning, though. With that is Valerie Teitel. Hey, Val.
Good morning, Danny. I've got a few in the pharma space. Let's start with Novo Nordisk getting FDA approval for its weight loss drug Wegovy to treat a rare form of liver disease, helps cure scarring on the liver. We're seeing those Novo Nordisk shares jump over 2% so far in pre-market trade. Now, note, Danny, this is the second positive catalyst for Novo Nordisk just this month. Recently, the Eli Lilly competitor, their obesity pill came in less effective than assumed in drug trials. The second boost for Novo Nordisk, up 2.4% in pre-market. Let's move on to Tonix Pharmaceuticals. A bit of a similar story here. They got FDA approval for their drug to treat fibromyalgia. That drug will be out in the fourth quarter. The stock was halted for trading on Friday pending this release. It's jumping over 13% in pre-market trade. Lastly, Merger Monday, let's call it. Wall Street Journal reporting that there might be a take private going on with Soho House. Now, this would be backed by some of the members' biggest backers of hotels, and the Wall Street Journal reports that that might be taken private at $9 a share. So Soho House rising nearly 13%, trading at $8.62 a share. The Wall Street Journal also reporting that Apollo was key to lending financing for the deal. Danny.
So House has really been languishing since it went public. Valerie, thank you very much. Now, in just moments, we're going to be catching up with Seema Shah of Principal Asset Management on this record-breaking stock market. Later in the hour, we'll look ahead to this week's Jackson Hole Symposium. We'll speak with Mark Malik of Seabird Financial. Now, that summer melt-up, it continues in force. As I mentioned, U.S. stocks last week hit an all-time high 3 consecutive days in a row. Meanwhile, look at what's happening in credit. Investment grade spreads, those are sitting at the tightest level since 1998 when Bill Clinton was president. Joining us now is Seema Shah, Chief Global Strategist at Principal Asset Management. So Seema, spreads on IG extremely tight, stocks at all-time highs, Bitcoin just below all-time highs, gold hitting all-time highs. Can the good vibes keep going throughout the summer and beyond?
Hi, Danny. Well, yeah, as you said, the market is doing incredibly well. And I think it makes sense at the moment. The backdrop is still one of a fairly constructive economic growth. You know, we've seen some signs of slowdown, but I think concerns about recession are extremely low. And then on top of that, you're now going to get Fed rate cuts. So they're essentially preemptive Fed cuts. So you're creating this really, really strong environment for risk assets to continue to perform fairly well. Now, we have to be aware that there are a lot of risks on the horizon. There's a lot of turmoil, volatility, potentially, continued signs of further slowdown, continued signs of tariff pass-through to inflation. But overall, from our perspective, that's still going to be a lot of noise, and we are expecting this run to actually continue to be sustained into 2026.
It's been remarkable, though, that since mid-April, this is a treasury market that has barely moved. It feels eerily calm. The entire curve has been locked in something like a 25 to 40 basis point trading range, Seema. Yes, this market is pricing in near certainty that we're going to get cuts in September, but what do you make of the calm and whether it can last?
Well, I think our biggest concern about the Treasury curve is really at that long end. You know, we are anticipating rate cuts to start in September. We think they're going to be a fairly shallow cutting cycle. Our concern is more that you're going to see this continued pickup in inflation through next year, partly because of tariffs, partly because of actually fairly strong growth. And then on top of that, we also have to add in concerns about the fiscal debt situation. And none of that is going away. So we are expecting the steepening of the yield curve. And for me, when we're looking at equities, for example, that upward pressure at that long end is a bit that could create some tensions and essentially slow down the pace of positive gains for the equity market and for some other parts of the market too.
Well, where inflation might show through, Seema, are in parts of this equity market that maybe don't care. Just given the narrowness of the rally, the fact that you have the top 10 companies attributing to 60% of the rally for the S&P since the market bottom. So those concerns, I see what you're saying, Seema, playing out for the long end of the curve. Do they matter at all for risk assets in the equity market?
Well, to your point, I mean, concentration within the S&P 500, it is at a level, it's actually becoming a little bit concerning again. I think investors had looked away from it for the last 6 months or so, and now they're starting to look at those AI trades as big tech companies and wondering, you know, is this really sustainable? Is this a key vulnerability? And exactly to your point, increasingly, whereas before COVID, these tech companies were very much of a cyclical play, they are less and less of a cyclical play and almost something which is a little bit more permanent. And the reason for that is because they're driven by the theme of AI and technology really driving productivity growth in the long run. Now, at the moment, we still fully believe in that. But of course, at some point, those valuations do become a little bit frothy, and that's when you start to see investors lose some confidence. At the moment, we think that this can continue to power gains. And certainly if there is volatility and noise in those tech companies, we would actually be trying to look through all of that and saying, look, this is a long-term thematic trade. It's something that we want to stay in, even as the noise continues.
Well, that's an interesting point, Seema. If there is something like an economic slowdown, does that affect big tech prices? Do they hold up? Do they almost become a haven in that type of scenario?
I think they absolutely do. I mean, one of the things that we have to think about is over the coming months, there's going to be a lot of concerns about tariffs. What are the impact on supply chains? And we expect that to be across the board. Any company which has got any kind of exposure to supply chains will have some kind of impact. The good thing about the tech companies is that they do have the strong balance sheets, they have the pricing power, the cash flow to withstand some of those headwinds. So we do think that becomes a bit of a safe haven. It's kind of an island amongst all of the volatility and noise where investors can say, look, we know that tariffs are something which is ongoing right now, But we want to think beyond that. What is going to be driving productivity, et cetera, over the coming years? And it's not really going to be tariffs. Tariffs is going to be something that companies will adapt to. So we do believe that we can just look through that and keep focusing on some of those really big companies which have got provenly successful strategies to date.
Well, to that point, Seema, of companies being able to navigate tariffs, this earnings season had been remarkably strong. The Wall Street Journal had a story out noting that 58% of companies raised their full year guidance in this quarter that we've heard from so far, a far cry from the first quarter when so many companies were issuing these messages of uncertainty when it comes to tariffs. What do you make of that and the resilience of these companies? And if at any point you are going to start to see tariffs drive a greater narrative among them?
Yeah, and I think this earnings season has been a really important reassurance for investors to know that companies don't feel very, very pressured by that political environment and all the noise that has been going on and are able to navigate. Now, the thing that we are expecting is, of course, as time goes by, fewer and fewer of these companies are going to be able to absorb those tariffs. And you could see that increased path through to consumers. And that's when we start to think about an economic slowdown as some of the consumer spending starts to drop away in light of those price increases. So it's still early days. It's going to be very important. I think, as we're looking across a whole breadth of economic data, it's also going to be really important to keep an eye on all those earnings reports, exactly what forward guidance is, how are companies reporting in terms of their price increases, because that's going to be really key to how we want to be deploying some of those assets.
There's been a lot made. I mean, Goldman has talked about this a lot, that about like 2/3 of companies have seen margin pressures hold up in a way, or rather worsening margins that suggest that they are eating the price increases at the moment and not passing it along to the consumer. Seema, what would be the timeline, do you assume, that starts to end? That you do see prices, to your point, start to get passed along to consumers? Is this something that we need to navigate in 2026, or is this the second half of 2025 issue?
To me, this is a 2026 issue, and we're taking a step back and we're looking at the resilience of US companies, the strength of profit margins, the strength of general corporate balance sheets. It does give us a lot of reassurance that these companies are able to absorb some of these price increases without too much concern. Of course, that can't last forever, but really this is a 2026 story, and it may even be a second half of 2026 story. When we're talking to our CIOs across principal asset management, the very, very clear sound that we're getting is real optimism about next year. They recognize that there's potentially a slowdown coming, but they do look at the credit fundamentals, the equity fundamentals of these companies, and are saying, look, we do feel pretty sure that these companies will be able to withstand, and this is still an environment that you want to stay fully invested.
Seema, we're going to have to end it there. Thank you so much. Wonderful to kick off the week with you. That's Seema Shah of Principal Asset Management. Let's get you some other top stories now that are trending on the channel this morning. A gauge of Shanghai-listed stocks closed at its highest level in a decade. That cements a 20% turnaround since the Liberation Day sell-off in early April. Investors with near-record savings have rotated out of bonds and into stocks. Goldman Sachs has opened its new offices in India's financial capital as a U.S. firm seeks to expand in the world's fourth largest economy. A statement says that they are about 50% larger than its previous location in the city. India is Goldman's biggest office outside of the U.S. And shares of Vestas jumping this morning. Tax credit guidance issued by U.S. government agencies for clean energy projects are seen as far less onerous than feared. Analysts at Jefferies wrote that it was, quote, close to the best outcome as possible. Coming up, Presidents Trump and Zelensky are set to hold talks in Washington today. We're going to have more on that meeting alongside European allies coming up on your brief.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Beginning of Russia's brutal invasion, Europe has been at Ukraine's side, united, and we will support you for as long as it takes, for just and lasting peace. And this peace must be achieved through strength.
European leaders supporting Ukraine and President Zelensky after President Trump's summit last Friday with Russia's President Putin. Zelensky, Trump, and the Coalition of the Willing are set to meet this afternoon in Washington for more peace talks. I'm now joined by Bloomberg's chief European correspondent, Oliver Crook. Oliver, what's on the agenda today?
Yeah, so I think there's an exercise in sort of de-shrouding a lot of the sort of mystery that has surrounded this meeting with Putin and Trump that happened on Friday. As you'll recall, after the summit wrapped up, there was a very brief press statement, very uncharacteristic for President Trump. Putin spoke for about 3 times as long as Trump did, and afterwards everyone was left asking, what exactly did we achieve here? What exactly happened? What concessions were made? We got some answers to some of those questions in some of the sort of press statements that have been made by people surrounding Trump, like Steve Witkoff, who yesterday said, and I think this is probably the most significant step forward we've seen from the United States in the arrangement and the discussions around Ukraine, which was this idea that Witkoff presented that the U.S. could put forward security guarantees for Ukraine that would be like an Article 5 guarantee for NATO, i.e., if there happened to be a peace deal between Russia and Ukraine, that the Americans would in fact step in and provide military and security guarantees for Ukraine. That is not something that we've heard previously explicitly stated by the U.S. administration. If that is in fact the U.S. position, that is a meaningful step forward. What is less clear, Danny, is why that is something that the Russians needed to sign off on. The U.S. could very well have put forward those security guarantees a few weeks and months ago without any conversation with Putin. But that is, I think, one of the big chips on the table here, and that is going to be the big prize in the discussions that are going to happen a little bit later today in Washington, D.C. with Zelensky and the many Europeans who will be also flanking him in that meeting, is to see what the United States is willing to do and what they will require from the Europeans also to step in and provide those security guarantees.
Oliver, hang tight, because I also want to bring into the conversation at this moment Liliana Byington in Washington, D.C., our Bloomberg government reporter. Liliana, to Oliver's point, it was an uncharacteristically short press conference that we got from President Trump with President Putin after their meeting. What has the U.S. said about what has been the outcome of that meeting on Friday and how it sets up today's meeting with the Europeans?
Absolutely. You saw over the weekend Secretary Rubio and Witkoff both talking about how they think that this meeting in Alaska on Friday between President Putin and President Trump brought them forward closer to an agreement. You didn't see many details out of that meeting about exactly what the agreement is going forward, but you saw that they both are talking about how they think that this has moved us a step forward towards that. And you saw just last night, overnight, that we saw that President Trump is putting more pressure on President Zelensky to make an agreement. to get closer to an end to the war. And so going into this meeting, President Trump and U.S. leaders are putting pressure on Zelensky to get closer to that deal. And so that's what we're seeing going forward, is those pressure the United States is putting on Ukraine, which is a shift. You know, there's also pressure being put on Russia, but right now the pressure is on Zelensky going into this meeting, wanting the United States. President Trump promised from the beginning to bring an end to this war. That's something he campaigned on, and so he's really pushing hard going into this meeting to try to get to that deal.
Yeah, Trump writing on Truth Social, you could see there that Zelensky can end the war with Russia almost immediately if he wants to, or he can continue to fight. Oliver, how receptive might Zelensky be to that message? What actual concessions, if any, would Zelensky be willing to agree to?
The truth of the matter is we don't know the answer to that question. Very publicly, Zelensky has said from the very beginning of the war that not only are there no concessions that will be willing to be made in terms of land, but in fact, any peace agreement will have to return Crimea back to Ukraine. This, of course, is seen as intensely impractical, and certainly by the Trump administration, which has really been marked by those generous to his view, a much more pragmatic approach to the situation on the ground and having to deal with those realities. The Trump administration says, listen, this is the reality of the situation. We probably need to move in a direction towards a sort of land concessions. But what I think might be interesting, and you might have a situation from what we heard from Witkoff yesterday, is where you have a kind of de facto NATO membership for Ukraine, i.e., NATO-style security guarantees, and then you have the Ukrainians a kind of de facto accepting potentially that some of these regions will be lost. This is not something that will be ever legally acknowledged, I suspect, in Ukraine. It is not something that they would come to. But at the end of the day, the United States holds a huge number of cards, not just in terms of military aid and support, but continuing to sell weapons to the Ukrainians that the Europeans are paying for, continuing to provide satellite cover, intelligence information, all of these sorts of things. And if these are things that Trump is willing to bargain with in order to push people to the negotiating table, that is something that is very material in the calculus on this decision. I think what is very interesting is after that meeting on Friday, you now have seen all of these European leaders. We're talking about Merz, Macron, Starmer, Rutte, Ursula von der Leyen. They're all going to Washington, D.C. to try to give more momentum to these talks and to try to explain to Donald Trump, which is the sort of golden rule here, is that Europe and Ukraine are not the impediment to peace. We're showing up. We're willing to do what it takes to get this over the line.
Liliana, another lever that it seems like the Trump administration is happy to pull is to put pressure on India. This from the White House counselor on trade, Peter Navarro, an op-ed in the FT this morning. India's oil lobby is funding Putin's war machine. That has to stop. What did this opinion piece from Peter Navarro tell us about strategy and tactic from the Trump administration on putting on pressure on secondary tariffs?
Exactly. I think what you saw from that op-ed this morning is just that the United States is willing to continue to put pressure on Russia's economy, and that one of the ways that they're doing that is through India. Trump is planning to double U.S. tariffs on India's goods to 50% later this month unless India stops buying Russian oil, and so that's kind of where you're continuing to see that pressure on the Russian economy, and that's something that Congress has also said that they're willing to support more sanctions on Russia if there isn't getting closer to an agreement in these talks. And so that's something we saw from this morning from Peter Navarro from that op-ed, is continuing to put pressure on India when it comes to this crude oil and buying it, because that's something that really does put pressure on Russia and its economy.
Right, writing, if India wants to be treated as a strategic partner of the U.S., it needs to start acting like one. Oliver, Liliana, thank you so much for joining us. Chief European Correspondent Oliver Crook and Bloomberg government reporter Liliana Byington. Coming up on the show, Soho House may be going private. More on that potential deal and your other front pages this morning. We'll have that for you next on your brief.
think with the new world reorder, it means that there will be regional clusters of excellence. There will be regional clusters of great companies. And so it's okay to be number 2, because you could be number 2 in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns goes to zero. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own needs.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Watching Bloomberg Brief, I'm Danny Berger in New York. Let's take a look at the front pages this morning, what's making headlines in the major publications. First up, the FT and, all newspapers leading with President Zelensky and European leaders meeting with President Trump today. On the agenda, pin down security guarantees for Ukraine. Zelensky wrote on X that they must be really practical, delivering protection on land, in the air, and at sea. Next up on the Washington Post, the story of how a federal agent detained a food delivery driver as he emerged from a D.C. coffee shop on Saturday morning. The incident was captured on video and spread widely online. A Department of Homeland Security spokeswoman identified the man and said that the man illegally entered the U.S. in 2023. Of course, that comes alongside the presence of federal forces in Washington, D.C. Next up on the Wall Street Journal, reporting that a group of investors led by one of the biggest hotel owners in the U.S. is nearing a deal to take Soho House private. The possible deal would end a months-long contest over the fate of the Giant Members Club operations. The investors are expected to pay around $9 a share for the company's outstanding public stock. That values it at $1.8 billion, not including debt. Soho House shares up about 12% in the pre-market. It's languished as a public company, down 45% since it IPO'd in 2021. Elsewhere, markets are calm, but bond markets are rallying, led by the long end this morning, down by nearly 3 basis points for the 30-year yield. That is a reversal of what the trend has been, and that has been 2-year yields down sharply and a long end that's been moving higher, 5s, 30s at the steepest to end the week last week since 2021. Coming up, it's Chair Powell's speech at Jackson Hole later in the week. We'll catch up with Mark Malik of Seaport Financial.
much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this Monday. Will he or won't he? With Jackson Hole on deck, does Fed Chair Powell endorse a cut next month? 90% of the way through a solid earnings season, the last leg, U.S. retailers from Walmart to Target report. And a coalition of the willing. President Zelensky and his European allies land in Washington to push the U.S. on security guarantees. Well, it was record after record for this equity market last week, but we're starting this week on a softer note. S&P and NASDAQ futures down about 0.2%. Some of the outperformance of Russell 2000 futures stays there, but starts to ebb. U.S. IG spreads, by the way, they're the tightest since 1998. Futures for this bond market pricing in over 100 basis points of Fed cuts through the next 12 months. Yields are lower this morning, led by the long end. This has been the reversal of what we have seen, and that is yields lower on the front end and some tension and pushing higher on the long end. The 530s curve, that is the steepest since 2021. But this morning, 10-year yields down by 2.5 basis points at 429.07. Let's look at some of the stocks moving in the pre-market this morning. With that is Valerie. Hey, Val.
Good morning, Danny. Let's start with Novo Nordisk on the back of an FDA approval that its weight loss drug Wegovy can be used to treat a rare form of liver disease. Wegovy is up 2.5% in pre-market trade. This is the second positive catalyst for this stock that's had a really tough first half of the year. This comes after its main competitor, Eli Lilly's weight loss pill, came as not as effective as assumed in clinical trials. Let's move over to Copenhagen. Vestas Wind Systems, the best performing stock in Europe today, up 17%. This comes after the IRS on Friday clarified some rules around these wind energy, these clean energy tax cuts, and they're seen as less onerous than expected. So Vestas Wind Systems, the best performing stock in the Eurostock 600. Lastly, we might have a deal on our hands today. Soho House being speculated to be taken private. This is a report from the Wall Street Journal that it could be taken private as early as today for $9 a share. We're seeing Soho House trade higher by 13%, Danny. They also reported that Apollo was a key part of debt financing for this deal. Danny.
Valerie, thank you so much. It seems to be a big day for take privates. By the way, Thoma Bravo apparently, according to people familiar, in talks to buy management software provider Dayforce. That would also be a take private. Now, elsewhere, the main focus for Wall Street investors waiting Fed Chair Powell's speech at the annual Jackson Hole Symposium set to kick off on Thursday. Bloomberg's Jill Deeses joins us for a look forward to that. Jill, what are the expectations going into Jackson Hole this year?
Well, look, Danny, I think that at this point, we clearly want to see whether we get any kind of an indication from Powell during the speech that we're expecting on Friday, where he's laying out, some hints of policy this year. Is he going to give us any kind of an expectation, any kind of a hint that there could be a rate, that we should be looking at rates in September, right? I mean, I think that ultimately, he has used this speech sort of famously before. You're seeing here right on your screen, we had that announcement last year, time for policy to adjust in 2024, that, really did signal the start, of some of those rate cuts that seemed to be that he was signaling that really clear as day expectation. 2022, I'd also point to as well, obviously those incredibly hawkish comments, massive market reaction there. Are we going to see something similar, this time around in terms of, continuing that easing cycle? I'm not really sure. I mean, look, certainly over the last week or so, we've seen, some of those mixed signals around what exactly is happening here. We had the CPI print, and then that narrative was immediately turned on its head when we had that hotter than expected PPI print. More data obviously to come, but ultimately, I think, the Fed's challenges here really kind of remain the same. We've still got, sort of those concerns around inflation. Not sure that we're seeing enough data in the jobs market right now to sort of justify something that's more aggressive. So I think that kind of leaves it open to interpretation. I'm just not sure that we're going to get something sort of as definitive from Powell this time around as maybe we've gotten in prior years.
Well, not only has the data been split, Jill, it's also been an FOMC that seems to have been split. What does that mean in terms of the consensus building we might get from Powell, or even the noise from other policymakers that we're likely to get this coming week?
Yeah, I think that is huge, Danny. I mean, look, I think, just the fact that you do have some of that split within the FOMC does indicate that maybe there's still some question over, when exactly you cut rates and how, whether that's, something that is a little bit more jumbo size, whether that's something where, it still kind of seems like consensus is building toward 2 this year. But again, maybe it's Powell that ultimately is able to sort of set that out during the Jackson Hole this week. I'd also point to the fact that, you also have the opportunity where, Powell is going to be among his global peers as well. So you've got the opportunity for him to be surrounded by, other, international central bankers that are actually, sort of coming in. How much that actually changes the 10-year, I'd be really interested to see, particularly because, I think the albatross kind of hanging over all of this is, of course, the fact that, there's still quite a bit of pressure from Donald Trump himself, the Trump administration, to sort of bring those cuts forward. We'll have to see what ultimately happens this week at Jackson Hole.
You'd have to imagine that Powell is maybe happy, for lack of better terms, that Myron has yet to be confirmed and will not be at Jackson Hole. Jill, thank you so much for that. That is Bloomberg's Jill Desis. Now, Mark Malik of Siebert Financial is also looking ahead to the Fed, to the Jackson Hole meeting and the rate decision next month, writing, "It is far too early to tell if there will be a cut next month. We still have another inflation number, PCE price index, and a monthly employment number. The latter could be the real catalyst." Mark joins us now, I am pleased to say. Mark, great to see you this morning. Thanks for joining in studio.
Great to be here. Thank you.
So the market pricing an 85% odds that we'll get a cut next month. Are you pushing back against that?
I think 85 is even a little bit high. If you start to look at the numbers, if you look at what we're hearing from the Fed governors that are out there, even the folks that are on the sort of left side, on the dovish side of the spectrometer, you're hearing them sort of hedging their bets a little bit. It doesn't look like a lock. I mean, obviously we have 2 governors that seem like they're a lock for obvious reasons. One of them is going to be on later today, I think, on the channel, so you'll have to get it directly from her. But I think that, again, I think later this week, what we're going to hear even out of Powell is him hedging, not necessarily suggesting anything. He's going to try to keep his powder dry for the next meeting. Next meeting, possibly we can just hear some positive talk, maybe not necessarily a move.
Well, I was going to say, we're just hearing from our reporter, Jill, the look back, 2022, the pain speech. Yeah. Last year, it was time has come for policy to adjust. So are you basically saying that this Jackson Hole, curb your enthusiasm, we're not going to get any grand policy pronouncements from Powell?
Yeah, I don't think so. The market would certainly love it. But I think they have a big challenge ahead of them. I would not want to be part of this FOMC. Look, they're talking about whether or not to cut 25 basis points, and they're talking about not cutting because of the potential inflation from tariffs. But the fact is the Fed funds rate would not impact in any way the type of inflation that we would get from those tariffs, which is the supply push inflation. Really, that affects more consumers and things like that. So the fact of the matter is 25 basis points up or down or the same won't really matter. But the truth is they do have a challenge on their hands with inflation that's still here that they can't control.
Well, in that quote I read from you, basically said the labor market figure is going to be the most important one. So is it your understanding that if that shows still robustness, maybe pushes back against some of the weaker numbers we had in the prior month, that we don't get the cut? Is that the assumption?
I think, yeah. I mean, I think the labor market is the one bit of positive or pressure on the Fed to actually start to consider cutting. I mean, we had 3 months in a row of bad numbers, and so if we get another month yet, I think that that will certainly improve in my mind the probability of a rate cut coming up sooner than later. But if that reverses, of course, the market will be disappointed, to say the least.
Well, it's a market that has been, I guess, eerily calm is maybe the word for it. Stocks at an all-time high. Credit spreads at the tightest since Bill Clinton was president. Treasuries have been moving in a very tight range since the market bottom. Does anything upset that? To your point, we're not really going to get any catalyst till next month, and even then the picture might not be clear.
Look, every month we're still waiting for those bad numbers to show up, and they're not showing up, and the market's sort of reacting to that, and we're almost through earnings. Our earnings was fantastic. It certainly exceeded a lot of our expectations. Look, we're not done yet. I mean, we have a very big week ahead of us. We have the retailers coming out this week. I'm sure we're going to hear something from them in terms of the impact of tariffs. That could sort of tighten things up a little bit. We're entering a seasonally challenging time right now. But again, I think the markets are sort of looking through these things. I mean, we were expecting some really bad numbers, and we haven't seen them yet on earnings and on the economics front as well.
Walmart, I think, will be really interesting because they were one of the first companies to come out and say at some point we're going to have to pass prices along to consumers. President Trump had thoughts about that. But if we get Walmart again and they say, all right, we're eating the margins for now, at some point we actually will pass prices along to consumers. Does that change about how you think about not just inflation, but the strength of this economy going forward if we start to see those consumers really challenged and met with higher prices?
Yeah, I think it is a challenge, and I think that consumers are very sensitive to price right now. I think we just came off a time of very challenging price hikes, and prices are still going up. We have to remind ourselves of that. And so I think Walmart, rightly so, or all these retailers, rightly so, are concerned that if they do pass these hikes on to the consumers are going to pull back. There could be some challenges there, and I think that's why you see a lot of companies trying to eat it for as long as they can, especially ones that don't have pricing power. Like Walmart is more in a commodity type business, so they don't have the same pricing power as maybe a company like Apple, right? Which, we all want our iPhone, so they can raise the price and we probably will still buy it to a point. So, we expect to see a difference between those types of companies.
I gotta say, to that point, it feels like such a bifurcated economy that we can be talking about still consumers sensitive to prices and maybe issues at some of the retailers. And then the big tech companies spending nearly $300 billion so far this year on capital expenditures. Can you really be bearish as long as the latter is going on?
No, not at all. I think that's what really is carrying everybody forward. That is the wind that's keeping everything moving. Certainly on our side, we have such a strong conviction in that whole tech area because we see the spending and we see the market expanding, and we know that tariffs are going to impact certain companies within that area. However, the growth that we're expecting is going to far exceed any of those challenges, and we expect those companies to weather those challenges, even though there might be some extremes, as we are hearing about every other day what type of tariffs might be hitting NVIDIA. Still, the growth that we're expecting out of that company and companies like them far exceeds that. So it gives us a lot of confidence that certain sectors, at least, we can still be very positive because the momentum is strong and it's justified. The thesis still stands.
Well, one of the big sticking points is in the amount of money they're spending, the concern of do they get the return on investment? How long does it take to actually ascertain that? When a lot of these projects are building out data centers, trying to get their hands on energy is still really in the early innings.
Agree, but we are seeing the returns already. So when we just had this last earnings season, we are seeing some very positive earnings attributed to the AI infrastructure. And so this is really sort of at the core of the AI infrastructure, is now just making its way to the outer edges, right? So we are going to see that. It may not be as tangible as, this is the IRR for this specific investment. However, we are starting to see companies improve. We see, we even see a lot of companies now raising their guidance for the full year, and behind that, a lot of positivity around how they can get more improvements in terms of efficiencies and things like that. We are going to see it. It may just not be so obvious. But from our perspective, as long as that happens, it's going to continue to pull this infrastructure, and we're going to continue to see positive growth in those companies.
So I take it you're still happy to buy here, even though we're at near all-time highs.
Yes, look, when there is momentum the way it is, when there is a growth potential the way it is, we are definitely not afraid to buy at the highs, because there is so much evidence that it's going to continue to grow at this point.
Mark,
not across the board, but certainly in that area.
Mark, so great to see you. Thank you so much for joining. Thank you for your time. That is Mark Malik of Siebert Financial. Coming up on the show, Presidents Trump and Zelensky meet in Washington this afternoon. More on what to expect from those talks coming up next on Your Brief.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
AI is definitely in the center of it, and we're looking for how do we spend time and which industries do you invest in. Investors becoming more and more digital or AI enabled that actually adds value to economic growth. And this, we think could be time, because you have a strong hardware power and you have a strong software power, as we see, and it's accelerating significantly. But a very important, another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase productivity in times where demographics are decreasing everywhere around the world. So this, I would say, is a major theme. So digitalization and AI-related technologies, and we think of it technology, but in reality, a lot of the businesses coming up and claiming to be technologies that are actually cannibalizing a lot of traditional businesses.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
As I've often said, Ukraine must become a steel porcupine, undigestible for potential invaders. We welcome President Trump's willingness to contribute to Article 5-like security guarantees for Ukraine. And the coalition of the willing, including the European Union, is ready to do its share.
Security guarantees for Ukraine are on the agenda as European leaders join President Zelensky for a meeting with President Trump in Washington. That's after Trump held a summit on Friday with Russian President Vladimir Putin. For more, we are joined by Bloomberg government reporter Liliana Byington in D.C. Liliana, what did we learn from Friday, and how does that color what the meeting today is likely to be like?
Right. Over on Friday, we saw that meeting between President Trump and President Putin, with Trump leaving the meeting saying that he was more interested in a deal for peace than he was for a ceasefire. That is definitely a shift from what we've seen before from him. And so going into this meeting today with President Zelensky and European leaders, we're seeing a really high-stakes moment for the President of the United States in his quest to get peace between Ukraine and Russia, something that's eluded him so far, but he sees an opening for right now when it comes to these negotiations. Right now, the talks are around security guarantees when it comes to Ukraine and what the U.S. is willing to offer. And so that's what we're waiting to see, what those talks will look like today when it comes to what those details actually look like. President Zelensky is hoping to get that information from President Trump today during their meeting, exactly what that agreement could look like and what promises were made to Putin in those talks.
Elsewhere, we did have Peter Navarro, the trade advisor to President Trump, writing an op-ed in the FT, essentially slamming India for buying Russian oil. Liliana, what was Navarro's argument, and what does it potentially say about where government policy around India and secondary sanctions go?
Right. His argument is that, buying this oil is helping the war in Russia, and that India doing that is causing, the war to continue, and it's helping them economically. And so that's the argument from the United States, from Navarro, and you saw that in that op-ed this morning. And you see that the United States is continuing to put pressure on India when it comes to those tariffs. It shows that the president is not backing down on his threat to boost tariffs on India later this month because of that. And so that's what we're seeing here, is that threat continuing, Navarro continuing to put pressure on India, and those threats continuing on Russia's economy when it comes to, threatening India over these tariffs.
Liliana, thank you very much for your reporting this morning. That is Bloomberg government reporter Liliana Byington in Washington. Now let's switch gears, because we're 90% of the way through this earnings season, and retailers are set to wrap it up this week. It will start with Home Depot on Tuesday, Target and Lowe's on Wednesday, and Walmart on Thursday, with investors looking for clues on tariff impact and the state of the consumer on their guidance. For more, we're joined by Bloomberg Global Business reporter Katie Linzel. Katie, just set it up for us. Given what we've seen from earnings so far, what are we expecting from some of the big box retailers?
So really, I think it's going to be a mixed bag for retailers this week in the US, a very busy one, as you point out. If we look at Walmart, I think it's going to be quite a cautious read from Walmart. When they last reported in May, they were unable to give guidance on earnings per share, and we think that could be the case again this week. Walmart are really challenged by Trump's tariffs. They're really challenged by the sort of increase in prices. And although they're going to be looking to, as much as possible, keep prices down, we have seen, anecdotally, prices already rising there, and that's already got them some bad publicity, so they're going to be very focused on that. If we look over to Home Depot, I think we could see a much more sort of positive read. On Home Depot, there are expectations that we could see US sales rise at the fastest in nearly 3 years. That's been put down quite a lot to favorable weather and seasonality. So we may really see shoppers leaning into buying items like grills and barbecues and the sort of items that you love to buy in the summer. Having said that, consumers are pulling back from the big ticket discretionary items like buying a new bathroom, a new kitchen, that kind of spend. They're thinking, that can wait until interest rates are maybe a bit more under control and until the consumer's feeling more confident. So it's going to be sort of a mixed bag across retail, and analysts are going to be looking very closely, as you say, at how exactly are retailers able to cope with Trump's tariffs.
Well, Katie, to that point, you have seen some of the surveys, like you, Mitch, came in last week, a bit weaker for August than expected, an uptick in inflation expectations. You touched on this, but for the Walmarts of the world, how long can they keep their margins? How long can they keep eating higher prices in terms of margins? And is this a consumer that's willing to accept higher prices?
Absolutely. I think, that might be the lovely expectation, that these retailers can just eat it up, that they don't need to pass on the prices. But really, we know the reality is different. Already there's been, as I said, some negative publicity. There's been sort of, these stores like Walmart and Target have huge numbers of staff, right? And they've already, in some cases, been going on social media showing the price rises that they're seeing in categories like toys, for example. I think fashion, clothing is another category where we've started to already see prices inch up. So really, these stores don't have that much to fall back on. they are going to have to be increasing prices, and we are going to see shoppers shop around as much as they can. Having said that, I think it's going to be a game that many retailers inside the same category are having to do the same thing. So it's going to be tighter and tighter in competition. But really, yeah, there's not that much longer that they can just sort of keep their margins narrower and narrower and try and eat this up.
Yeah, we'll see what that brings. Again, that kicks off this week. Katie, thank you so much for joining us this morning. Global business reporter Katie Linzel. Coming up, high-level talks in Washington. That's in your day ahead. We'll have your trading diary for you next on Bloomberg Brief.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's get you set up for your trading day today. We're going to have fresh housing data that comes from the NAHB Housing Market Index at 10 a.m. Eastern. At 1 p.m., Ukrainian President Zelensky meets with President Trump at the White House. An hour later, they're going to be joined by European leaders. That includes UK Prime Minister Starmer, French President Emmanuel Macron, German Chancellor Merz, among others, that coalition of the willing. And Palo Alto, that is set to report earnings after the market closed. Now, speaking of companies, let's look at some of the individual movers this morning. Novo Nordisk, that is moving much higher in the European trade and the U.S. ADRs by just under 3%. News that Wegovy has won U.S. approval for liver treatment. Soho House, those shares up 13.7%. A Wall Street Journal story that the company is nearing a deal for a take private. And it's a big day for take privates, apparently, because Dayforce, sources telling Bloomberg that Thoma Bravo is said to be in talks to buy out the software firm, those shares of 21%. Let's take a view of this bond market as we head to the end of this hour. We are looking at a rally across the bond market, but Barclays out with a note moments ago saying that the market is sure that they're going to get a September cut. They do not see it happening. They say that the recent incoming data has not been enough to change Powell's mind, and the hawkish members of the FOMC, what we've heard from them, their minds don't seem to have changed much either. We're going to get Jackson Hole this week, so we'll see what the noise coming out of there is. Your 10-year year this morning at 429.26. All right, that's it for your brief. Surveillance up ahead. This is Bloomberg.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
We fell because of the tariffs. We had this big sell-off, and we've now recovered.
I think this momentum is real.
This is an interesting inflection point. There's potential for upside.
This is not a particularly screamingly broad rally.
I think the markets are starting to conclude that, you know what, uncertainty is going to be with us here for a while. Let's move on with our businesses.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, expectations are sky high. The Ukrainian leader arriving in Washington for talks with President Trump. As economists look to Jackson Hole for Chair Powell to tee up rate cuts, investors look to retail earnings to gauge the health of the U.S. consumer. We're facing down a week full of event risk.
Yeah, we've got geopolitics, we've got monetary policy, and of course we've got corporate profitability all on deck this week as we try to understand what the framework is going into the remainder of the year, with stocks at record highs, with corporate bond spreads at record lowest rates since 1998. A key question is going to be what comes out of Washington, D.C. today. And then on Friday, what does Jay Powell signal in terms of whether he's going to push back against rate cut expectations or whether he'll lean in and try to gain curry favor with the president?
Well, let's start with Washington, D.C. in the main event later on this afternoon. Just how high is the bar? European gas prices falling to fresh lows for 2025. I'd say that bar is pretty high.
Well, pretty much also as well when it comes to secondary sanctions. We are not seeing them just yet. When the president said we're going to see severe consequences if there's no cessation of hostilities, well, we don't have a ceasefire and there's no severe consequences. When it comes to this meeting, the president has made it clear it is now up to President Zelensky to get it done. Two big things on the table: security guarantees. This is the conversation Zelensky wanted to have 6 months ago during that Oval Office blow-up, and as well as what does it mean for territorial swaps? What exactly can Volodymyr Zelensky accept and then go back to Ukraine and say that this is palatable for his people?
The President of the United States putting some additional pressure on the Ukrainian leader ahead of this meeting, with the European allies joining him alongside the president.
Yeah, to me, I think who's going to be in the room is actually really important. When you take a look at the roster of European leaders who are lining up, who have canceled their schedules, cleared the decks to be there: Giorgia Meloni, you've got Friedrich Merz, Emmanuel Macron, Alexander Stubbs, Mark Rutte, Ursula von der Leyen. They all are coalescing in Washington, D.C. because they understand how pivotal this is, and that Ukraine is being asked to give up land in response for a peace deal without some sort of ceasefire. The lack of, I don't want to say trust, but the trying to fortify Volodymyr Zelensky is quite clear in terms of the European message.
At the same time, you're going to talk about security guarantees and a NATO-like security guarantee for Ukraine. You have to have the Europeans in the room. They have to be part of this conversation because they're going to be the ones likely that have to send boots on the ground.
Those meetings take place a little bit later on this afternoon. So far this morning, equity's doing okay, just slightly negative. We're down 0.1% on the S&P. Coming up this hour, we'll catch up with Steve Chevron of Federated following a second straight winning week for stocks. Kelly Greco of the Stimson Center as Zelensky heads to the White House, and Neil Dutta of Renmac looking ahead to Chair Powell in Jackson Hole. We begin this hour with Stock Steady. Steve Chevron of Federated Hermes writing, we continue to see an economic acceleration. We expect that the Fed will typically look in the rearview mirror and cut in September. Steve joins us now for more. Steve, good morning.
Good morning.
It's good to see you, sir. Equities just off all-time highs. Investment-grade credit spreads going down towards the tightest levels we've seen so far this turn of this century. I want to understand from you whether that is justified or not.
I think it is. I think so we have a non-consensus view, right? The consensus view out there is that the economy has been slowing and is continuing to slow or decelerate. I think that's an artifact of misreading the data, and I think what's coming through, especially post the jobs revision data, is that you actually had a kind of real slowdown in that April-May period after Liberation Day, where everything ground to a halt, and you're starting to come out. You're starting to see the jobs numbers, even though it was only 75,000 or 73, that was ahead of the 14 and 19 the prior 2 months. ADP has that same pattern. Unemployment claims have that same pattern. Confidence data has that same pattern. Earnings data has that same pattern. And so I think the actual story here, and if you look at the character of the market, it's acting early cycle-ish. It's kind of rates down, cuts coming, credit spreads, they can't improve any further. They're about as tight as can be. And economic data that's starting to accelerate, including some of the inflation data, which hasn't really been about goods prices or tariff goods, but it's been about service prices starting to firm again. So I think the Fed should cut, but I think they're going to cut for the wrong reason.
They're going to re-accelerate the economy.
Yeah.
Going to layer on top rate cuts. Where do you want to be if you truly believe this is early cycle?
Well, you've got to look where there's value and where you're starting to see positive price movement despite, names that have really underperformed. You see that in the early cyclicals. You see it in places like home builders. You see it in places like trucking and shipping. Now, this will all depend on what Jerome Powell does later this week. If he endorses the cut, then I think that early cyclical trade will continue and we don't have the normal seasonal weakness. If he comes out hawkish, then I think you'll see a step back and you'll revert back into the growth and defensive names.
So basically, this is a market that's counting on rate cuts to re-accelerate any kind of growth and signaling, at least when you look at market valuations, that there isn't necessarily a need for rate cuts. I mean, this is sort of the paradox that a lot of people are looking at. How can you justify the need for rate cuts when you have markets that are pricing in a reacceleration, early cycle growth at a time where inflation's not down to 2%?
So I think it would depend on where you're starting with rates. If we were at a neutral rate stance, if we were somewhere around what the neutral kind of level of rates would be, then yeah, talking about a cut here makes no sense. I think the reason why you need a cut, and I think the Fed does need to ease, is because what you've got is an economy that's very strong around tech and tech capex. But if you look at the rate-sensitive parts of the economy, if you look at the housing sector, if you look at autos, if you look at anything that's not on that tech capex story, there's some struggles there. There's some pain that are logical given how far and how significantly the Fed raised rates. You don't want to have a scenario where tech and tech capex slows down and you can't hand the baton off to that other part of the economy that's struggling. And so the issue isn't so much that the economy can't reaccelerate or that there's some immediate need of rate cuts. What it is that if you keep rates this restrictive for longer and you punish those parts of the economy so severely, you won't be able to hand off that baton.
So let's say we get the 100 basis points of rate cuts that a lot of people are pricing in from now until the end of next year, and you have a Fed that does open up the door to potentially easing policy, even with inflation sort of above their ultimate goal. Do you start to get worried about a bubble? And I know that this is probably going to trigger you, but we're looking at gauges.
That's a strong word.
Well, I mean, I know that you're positive, but like, you know, we're looking at gauges, the lowest since 1998, resonance of the 2000s.com bubble. I mean, at what point do you start to worry about that?
I would start to worry about that when you see valuations on the non-Mag 7 get out of control, right? So Mag 7 is traded between 25 and 30 times. I mean, Apple has more cash than Great Britain. They're not going to trade at a 15 times multiple, okay? Like, that deserves a little bit of a premium. When you look at the rest of the market, ex-Mag 7 is trading about 18 times, which is about average. And that's where we see that opportunity. That's where we see that broadening out. So if we were sitting here and the non-Mag 7 were trading at 22 or 23 times, then yeah, that's really rich. But when I look at, despite being at all-time highs, 493 of the 500 stocks trading at an average multiple, I feel like that's okay.
You said you'd be a buyer of weakness if it materializes.
Yeah.
Weakness where?
Well, August, September tend to be tricky just seasonally. If you saw a scenario where, let's say, Chair Powell was a little bit more hawkish than expected and you saw some rollover in those cyclicals, that's where we would be buyers. So small caps, the kind of cyclical, some of the rate-sensitive dividend payers, because again, you're going to have to cut. You're moving in that direction. The committee is moving in that direction. The market is moving in that direction. And if there was weakness because of a temporary setback because of comments over the next couple of weeks, I'd be inclined to buy that weakness.
Is this time around even more tricky for August, September because you have geopolitical risk thrown into the mix?
I don't know how much geopolitical risk offers downside risk here. I think, look, if we come out of the next few weeks and we have some resolution to Russia-Ukraine, I think that's a market positive for sentiment. I think it's certainly potentially lower energy prices. I think no matter what happens, you're going to want to continue to be on this defense spending trend, which has been a big one in the market. I just don't know if we don't come out of this with a deal. I don't know that that's really what's driving markets higher. I think the Fed has more of an opportunity to disappoint the markets than geopolitics right now.
Can we finish on valuations? You touched on them. The S&P 500 has evolved so much over the last several decades. What is the appropriate benchmark for valuations now on the S&P?
Yeah, so averages are very dangerous because, again, if I go back where most of that average was developed, you had a much higher weight in manufacturing. You had no subscription-based models. I like to joke around, you know, when I was a kid, if things were tight, my father maybe didn't take us to the movies. If things are tight now, I'd have to be under dire financial straits to figure out what card I use for Netflix and cancel it, right? That deserves also a premium. And then the Mag 7. So Mag 7 are about a third of the market. They trade between 25 and 30 times. If you put a mid-cycle on that at 27.5 and assume an 18 times multiple for everything else, that gets you to an S&P at 21.5, which is where we think you're about fair, 21.5 times. That's very different from the past. But if you've constantly not owned this market over the last couple of years because you thought it was too expensive, you've left a lot of money on the table.
That phrase we hear a lot on this program, price for perfection, just to wrap it up, you'd push back against that, wouldn't you?
I would, because again, you have large swaths of the market, whether it's the financials, whether it's some of the more cyclical parts of the market, even some of the dividend-specific parts of the market that just are trading at, at best average multiples. They're not cheap, but they're certainly not overly stretched, and that's where we see the best opportunity.
Steve, appreciate your time.
John.
Good luck for the rest of the week. Thank you, sir. Steve Chevron there of Federated. This is a rich market in the minds of many, but justified in the minds of Steve.
What Steve just said really highlights why it's so difficult to understand how to interpret the Home Depot and the Target and the Walmart results later this week. Is this going to be a gauge of the broader economy, or do we hear what Steve was just saying, which is essentially these companies are not the economy. They have models that are incredibly strong and very profitable, and so all of a sudden are you looking at just the gains of the big and the gains of the strong, not necessarily the gains of an overall economy.
Big week for retailers. Home Depot tomorrow reporting earnings. The day after that we'll hear from Target. On Thursday we'll hear from Walmart. Equities at the moment slightly softer but very close to all-time highs on the S&P, with an update on stories elsewhere and worldwide with your Bloomberg Brief. Here's Yahara Anand. Hey, Yahara.
Good morning, John. President Trump will host Ukrainian President Zelensky and European allies in D.C. today to set out terms for a potential peace deal with Russia, with the focus on territorial concessions and Kyiv seeking security guarantees. This after President Trump and Putin met in Alaska, with little revealed in what was discussed. Meanwhile, Hurricane Erin has re-intensified into a Category 4 storm after moving past Puerto Rico. Erin's top winds strengthened to 130 miles per hour, and according to the National Hurricane Center, additional intensification is forecast over the next 12 hours. The storm is expected to pass between North Carolina's Outer Banks and Bermuda later this week. Meanwhile, shares of Novo Nordisk are rising 2.7% after U.S. regulators gave the green light for its blockbuster weight loss drug Wegovy to also treat a serious liver disease. The FDA approved it for MASH, adding to the list of conditions for which the blockbuster therapy is now approved. Analysts say the move could help turn momentum around for Novo after a rocky start to the year. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, Zelensky at the White House.
I believe we had a very productive meeting. There were many, many points that we agreed on, I would say, a couple of big ones that we haven't quite gotten there. So there's no deal until there's a deal.
Up next on the program, we'll catch up with Kelly Grieco of the Stimson Center from New York City this morning. Good morning.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest.
Every trading day.
Only on Bloomberg. In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
What a week coming up, absolutely stacked with retail earnings. It kicks off tomorrow with Home Depot, then onto Target, then onto Walmart. We end the week with a big one, though. Chairman Powell in Jackson Hole, Wyoming, looking for guidance on interest rate cuts. Will he tee up September or not?
Well, what is the incentive to really commit at a time where the data is sending conflicting messages? How does he do this in a way that doesn't seem utterly political to try to avoid the spotlight at a time where the Fed is likely going to cut rates anyway? And that's the reason why a number of people are tempering expectations. I want to understand the framework. Are they going to talk about targeting averages or maybe a higher inflation rate than they have in the past?
Some two-way risk going into Friday with Chairman Powell in Jackson Hole, Wyoming. Equity futures right now in the S&P negative by just 0.1%. On the Nasdaq, a similar move in the bond market. The two-year bond yield this morning down a single basis point. The two-year 3.74. Under surveillance this morning, Zelensky at the White House.
I believe we had a very productive meeting. There were many, many points that we agreed on. I would say a couple of big ones that we haven't quite got there. So there's no deal until there's a deal.
We agreed to robust security guarantees that I would describe as game-changing.
This is not our war. We happen to be in the role of the only country in the world, with the only leader in the world, that can actually bring Putin to a table to even discuss these things.
So here's the latest this morning. Ukrainian President Zelensky and his European allies arriving in Washington for high-stakes talks with President Donald Trump. Trump looking for a quick peace deal, saying Zelensky can, quote, end the war with Russia almost immediately. Bloomberg's Ollie Crook joins us now for more. Ollie, welcome to the program. How much pressure is on the Ukrainian leader today?
There's a tremendous amount of it. It's been ratcheted up really overnight by President Trump, who, as you mentioned, said that basically Zelensky can end the war within the next sort of 24 hours, within the next week, squarely putting the ball in his court. The question is, how does Trump feel about the situation right now? He has been sort of softening his tone towards Zelensky, certainly a different kind of conversation than we had 6 months ago. But I think the most significant thing, John, to come out of the last 48 hours since that meeting between Trump and Putin is that the United States is talking explicitly now about Article 5 style guarantees for Ukraine, i.e. that the United States potentially, if there is a deal struck between Russia and Ukraine, would come to the military aid actively of Ukraine if its sovereignty were imposed upon again by the Russians after such a deal. That is something that has not been explicitly discussed by the United States. What I also think is interesting, John, is that they talk about this as a sort of breakthrough from this conversation with Putin and Trump. But this is a guarantee that can be given unilaterally by the United States. It's something the United States could have given weeks and months ago. It's something that the Europeans and the Ukrainians have been calling for some time, but it is now apparently openly on the table. I also think it's interesting now that after those talks that the Europeans want to take full advantage of this momentum, full advantage of the fact that Trump is putting this plan forward and saying, listen, we take this seriously. We are all coming to Washington, D.C. When you say jump, we say how high, and we want to demonstrate our willingness to get this through. Their hope is that Putin is not being serious about this and that he will prove himself to be the obstacle to any kind of lasting peace and any kind of deal. But that is what the Europeans need to prove, and that is what Zelensky intends to prove.
Ollie Crook with the latest out of Europe. Ollie, thank you. Kelly Greco of the Stimson Center writing the following. Today's meeting will test Zelensky's ability to hold the line and to keep Ukraine's fate from being decided without him. Kelly joins us now for more. Kelly, welcome to the program. How do we avoid a late February scenario? How do we avoid a repeat of that?
Yes, I mean, this has to be one of Zelensky and Europe's main concerns is that we'll see a repeat of this, what happened in February. You know, I think we're in a different place than we were in February. I think Zelensky is much smarter to not fall into sort of the traps that he did in February. And of course, the Europeans are going to be there to act as a buffer.
Kelly, what do you know about this security guarantee? They're discussing the NATO Article 5-like guarantee, but not NATO.
Yeah, so, you know, this is very vague. That's one of the things I would say about this summit. It was ended in sort of a cloud of uncertainty. And I see two possibilities for these Article 5 guarantees. One is that, Putin has actually accepted that Europe and the United States can provide some kind of Article 5 guarantee that if Russia were to attack again, that they would be obliged to respond, including militarily, to an invasion. I think that's unlikely, but the second possibility would be that it's actually something more like there were negotiations in Istanbul shortly after the war started, and there was an Article 5 type guarantee as part of those negotiations that Russia had accepted. And essentially all of the parties, the United States, the Europeans, and Russia itself would guarantee Ukraine's security. If one of them attacked, the others would respond. And I think that maybe that we're returning to the Istanbul formula. Of course, we don't really know.
Kelly, didn't they already make this agreement in 1994? What's so different from this than the Budapest Memorandum?
Yes, so it is different from 1994 when that was a security assurance. The states assured Ukraine, the parties to it, including Russia, that they would not attack. Of course, Russia has not abided by those terms, but there was no obligation in any of the language to say that if Ukraine was in fact attacked, others needed to provide assistance to support their defense. And a security guarantee does that. It actually says that there will be assistance provided in the event of an attack.
The perception after the meeting in Alaska between Vladimir Putin and President Trump was that this was a PR victory for Vladimir Putin. Do you think that there is anything that could happen today in this meeting with European leaders and Volodymyr Zelensky that could reverse that could change that perception and put a new spin on exactly how this carries out over the remaining weeks and months ahead?
Yes, I mean, it's certainly true that for Putin, this was a PR victory, before the talks even started, just being able to arrive on U.S. soil, no longer being, this isolated pariah, but sort of returning to being a statesman. I will say, though, today, I think the stakes for Zelensky and Europe are much higher than even, propaganda victories and PR victories. If I'm Zelensky, I'm arriving in D.C. not for this photo op, but because I want to be able to shape the actual peace process. I think we're now in the stage where this is really shuttle diplomacy. And so it's really up to Zelensky to really walk that needle of being able to assert and protect Ukrainian interests, but also making sure that he is able to keep Trump aligned with him to be able to represent Ukrainian interests with Russia.
How much of a sense do you have about Europeans' willingness to really commit, whether it's money, whether it's troops, whether it's their own guarantees behind any kind of peace agreement between Ukraine and Russia? Because that's been something that's been sort of contentious and contended between the U.S. and Europe.
Yes, I'm so glad you brought that up, because I think this is something that is often overlooked. Which is that, Europe talks a lot about wanting to provide some kind of security guarantee, but they're sparse on the details of what they're actually willing to provide in very concrete terms and how they're going to make that credible. And they face two challenges in this regard. One is that the decades of low defense spending mean that their military capabilities are more limited, particularly to be able to provide for their own security as well as potentially for Ukraine's. And then the second is that this war's gone on for 3.5 years, and the Europeans have not been willing to intervene directly because they don't believe that they have sufficient interest to justify that level of commitment. So how do you make a commitment to potentially enter a new war should Russia attack credible when you've already demonstrated that you weren't willing to fight a war over Ukraine? Those are both really big challenges for Europe.
Kelly, Steve Witkoff said that important discussion will need to be had regarding Donetsk. What can Zelensky accept today?
Yes, so this is, this is the area where it's going to be the hardest for Ukraine. I think these Article 5 guarantees are meant to be a sweetener. And the reality is that there's going to have to be some level of territorial concessions if we're going to get to a peace deal. It is clear that Putin is focused on Donetsk in particular, to try to capture the rest of Donbass. Luhansk and Donetsk make up Donbass. He has Luhansk under Russian control at the moment, or occupation. And he has about 87% of Donbass is under Russian occupation, and he wants the rest of it. And so I think, part of for Zelensky is he has to decide, is it better to do this at a negotiating table or to continue to fight? And it looks like if they continue to fight, the Russians will slowly and painfully be able to capture the rest of Donetsk. And so is it better to have options at the negotiating table so you can get some other kinds of concessions, whether it's other Ukrainian territory or also these kinds of security guarantees?
Kelly, just quickly, it might sound like a silly question, but why are we okay with Article 5 style guarantees but not NATO membership?
Yes, I mean, it's clear that NATO membership is a red line for the Russians. They do not want NATO membership, but this is also why I'm skeptical that the Russians are going to be acceptable with some idea of American or European forces, even in limited numbers, on Ukrainian soil to try to make that kind of Article 5 guarantee credible.
Kelly, appreciate your reaction to things. Thank you. Kelly Greco of the Stimson Center. I think a lot of people have got that question this morning.
I think if it's Article 5, you're expecting troops on the ground to be there, a presence in Ukraine. If it's Article 5-like, I think it's just a commitment verbally to be there if there was going to be another incursion. The problem right now is all of this is very cloudy and murky. This is a lot of rhetoric that's being tossed out. Contours of a plan is what I believe Secretary Rubio called it over the weekend. We need a lot more details to understand this.
I think most people are hoping we can avoid a repeat of the situation that took place in late February in the Oval Office. Up next on the programme, we'll catch up with Terry Haynes of Pangea Policy, saying geopolitics is in the economic driver's seat. Plus, Danny Berger with your morning movers as Soho House looks to go private. That stock is up by 16%. From New York City, you're watching Bloomberg TV.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
2 weeks of gains on the S&P 500, a little bit softer on Friday. Likewise again this morning to kick off the trading week. We're down just 0.15% on the S&P, negative 0.16 on the Nasdaq 100. With 3 hours until the opening bell, let's get you some morning movers. Let's cross over to Danny Berger for more. Hey, Danny.
Hey, John. Soho House confirming a Wall Street Journal report about 30 minutes ago that they will indeed be going private. The current shareholders will be taking the company private at $9 a share. We're not quite at the deal price yet, but shares are still up 15.5%. This is a company that has languished as a public company. IPO'd at $14, falling 45% through to today. It's a big day for take privates in general. Dayforce, those shares up 24%. The HR software group, Thoma Bravo, telling reportedly, Bloomberg sources telling Bloomberg that Thoma Bravo will be taking Dayforce public. This is another company that has struggled. It's down about 60% since the highs of 2021. Finally, Novo Nordisk ADRs in the U.S., those are also rallying some 5.5% this morning. They're getting approval for treating a rare form of a liver disease for Wegovy. That means that they have beat out their competition, Lilly, in bringing that drug to the market for specifically this use of treatment. BMO writing that this will help with much needed momentum after a tough start to the year for Novo Nordisk. John.
Danny, thank you. More from Danny in the next hour. Just on Soho House, isn't there some natural tension between a private members club being a public company?
Well,
isn't there just some natural tension there?
You could argue that this is the case for a private asset manager that also goes public, which has been something that we have seen repeatedly. But yes, I would guess that that would be something sort of odd because you're having to reveal the crown jewels of the privacy to the public in order to remain public, so you would think that they'd want to keep them private.
It's the thirst for growth that I think is where the ultimate contradiction is between, say, luxury, privacy, and exclusivity, then going public, and there's this massive push for growth. Who don't you know that's got a Soho House membership? You know, I remember like 20 years ago, Soho House was like kind of cool, and if someone had a membership, it was like, oh, that was very exclusive. Go down there now. It's like 25-year-old Instagram influencers, anyone and everyone who can get a membership to Soho House.
I think it was Groucho Marx who said, I don't want to be part of any kind of club that actually would take me. And there was something that is true about that with some of these private clubs that have to retain their cachet by remaining exclusive, but kind of are, you know, excited about the money.
A lot of complaints you could see on Twitter with this story that they've pretty much just let everyone that wants to come in, and that basically the standards have dropped in terms of what they're able to provide because they're just overrun with a ton of people.
Total sellouts. Let's see if it changes. It's brutal, right?
You want to be part of it? Do you want to join the Soho Club?
Let's see if it changes.
Would you have wanted to join the Soho Club?
That is not exclusive enough for me, Bremo.
Oh, yeah, I'm sorry.
You know that.
Okay, how many people need to be in your club?
It's like the Delta Airlines lounge of members clubs now.
How about Delta One?
I'm just going to keep on digging.
You're absolutely digging.
On our radar this morning, Ukrainian President Volodymyr Zelensky and several European leaders are meeting President Trump at the White House following his talks with Russian President Vladimir Putin in Alaska over the weekend.
So this is going to be a really high-stakes meeting for President Zelensky. He needs to decide what he's willing to accept in terms of what Putin laid out on Friday to the president, what we assume, because I was there and they didn't really give a tremendous amount of details. The statements that came out of Putin and Trump were pretty much pre-written, and they didn't take a single question from the press. On the other half of that, if Zelensky is able to get to some sort of agreement with the president, then they can go back to the Russians on territory that the Russians are able to accept, is a security guarantee going to be enough? And what does that exactly look like? Which is why it's interesting the Europeans are in the room.
To me, what's most interesting is exactly that, how many Europeans are in the room, and the fact that they all got on their private jets and otherwise and flew to Washington in short notice. Again, let's just read the list. Giorgia Meloni, Friedrich Merz, Emmanuel Macron, Alexander Stubbs, his bestie who plays golf, Mark Rutte, who has been running NATO but also has a positive history with President Trump. This, to me, indicates a level of unity in Europe that is very unusual, and I do wonder whether they're going to be presenting some sort of unified proposal to Trump to try to edify Ukraine's point.
I think there's been this idea in the press that they're there because President Zelensky might get bullied. What happened 6 months ago, that blow up in the Oval Office. But between February and now, there have been so many meetings between Trump and Zelensky, so many phone calls, a lot more than there's been, obviously, between Trump and President Putin. The Europeans have to be in the room. to provide security guarantees, they need to be there. And if things really go bad and you have to have these, quote, severe consequences, what did the secretary say to us, the Treasury Secretary, Scott Bessent? He said when it comes to secondary tariffs to go after Russia and how they fund this war about their crude to China, well, the Europeans need to be on board for that. And right now they're not. And what do they continuously do? They are still importing Russian commodities. They are still taking in Russian gas, and actually it's gone up. So they need to be in the room if they want to be able to settle this war on their continent.
Look out for the outcome of these meetings later on this afternoon. Look out for the outcome of the Federal Reserve get-together on Friday as well. This from the Atlanta Fed President Raphael Bostic saying consumers are growing more stressed and tariff costs are real. His comments coming after meeting with bankers, educators and business owners in the Southeast.
Love the pictures of him in factories with earplugs in, trying to oversee the making of dog biscuits and toys. I do think it's interesting how much what he observed highlights the dilemma of the Federal Reserve, the dual mandate that is in conflict. You have high prices and you have consumers that are indicating that they are struggling. You have at the same time companies saying that they are struggling to find workers at the same time that households are struggling to pay their bills. This is not an easy situation for the Federal Reserve and doesn't lead to a clear answer, which is the reason why he said, I see the world today as having a lot of different possible outcomes. I don't think I have enough confidence about the probabilities assigned to the specific outcomes to feel like we can move definitively in one direction or another.
There isn't a massive incentive for Chairman Powell to signal anything on Friday. We've got another data point, payrolls early September, CPI the week after, and he's got a very divided committee going into that meeting.
And a highly politicized environment at a time when we've heard from President Trump and all of the people around him that they want a Fed rate cut. So if he's not incentivized to say anything, does he just give a 2-minute speech? We just set monetary policy. We're discussing everything. Thanks so much. See you next year. Or does he give some sort of new framework of a way that they're looking at it or looking at data to try to give some more informed view of their decision-making process?
When we were together in Jackson Hole back in 2022, I remember how jarring that 8-minute speech was. We sort of got situated, got a coffee, got ready to sit back for 20 minutes and try and catch our breath, and the thing just abruptly ended. Pain, 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 back to you.
Yeah,
we're not getting that this time around, are we?
Well, last year was 15 minutes. That was the eight-minute
so it's getting longer.
Speech. So all I can say is if he goes longer, that'll give us a chance to go to the bathroom and grab a cup of coffee. But if
just
not,
thinking of you and TK, that's all.
Thanks, that's really, I appreciate that. This was actually a very inside baseball moment when I was hearing you describe that because I reflected on the pain that I felt personally. Let's move on.
I'm going to move on. We'll get more data later this week, and by data I'm talking about retail earnings ramping up through the week. Tomorrow we're going to hear from Home Depot, Target on Wednesday, Walmart on Thursday. This is a really important read on retail in America.
Yeah, do they see a weakening in the consumer? Are they catering more to the lower income consumers by cutting prices? Or are they upshifting some of their goods to try to sell to the higher income consumers that have really powered the entire consumer spending picture in the United States? Are these companies still the read on the economy that they have been in the past, or is that led by some of the smaller companies that we've seen struggling? Because ultimately, the Walmarts of the world have massive tech presences, have massive media empires, have massive shipping empires, and have the heft that a lot of smaller business really envy in terms of negotiating tariffs and terms with their suppliers.
Results from Walmart coming on Thursday. Look out for the big one later this week. The big story this morning is on Ukraine. The Ukrainian President Volodymyr Zelensky heading to the White House. Terry Haynes of Pangea Policy writing, geopolitics is in the economic driver's seat. Terry joins us now for more. Terry, welcome to the show. Just off the top, I just wanted to get your feel on how much pressure is on the Ukrainian leader going into this meeting.
No, there's been pressure on him for 3.5 years. But to me, the only thing that's changed really is that, you know, we're right down to the point where we're directionally in the next week. I think we're going to know whether we're on a path to peace in Ukraine or whether we're on a path to not peace in Ukraine. And for the markets, what matters there is not just the geopolitics, but also whether you see the return of secondary sanctions and the like. And I think that's probably quite likely should we go south.
Well, oil ended the day on Friday. I checked it, Terry, leaving Alaska lower. The market doesn't think we're going to get secondary sanctions. Is the market basically wrong here?
No, you know, what I told markets yesterday was that I thought the markets would probably be positive coming out of Alaska, and then oil was one of those indicators. And so far, that's been correct. But, you know, the markets are going to see with the European leaders flying in today, as well as Zelensky, you know, they're going to see positive strides towards peace that probably justify the continuation of lower oil prices. All I'm suggesting is that we get to a week from now, and that may not be true anymore. Fundamentally, what we've got here is a situation where Trump and Putin started a process. The United States describes itself explicitly as a mediator in this process overall, but that Europe and China, I think, are going to be much more important. And, Europe needs not to be the coalition of the willing. It needs to be the coalition of the acting. And we're going to get to see in the next 7 days whether they are or they aren't.
Well, Terry, we went into the meeting, though, with the president saying there's going to be severe consequences if there's no cessation of hostilities. We all left Alaska with no ceasefire and no severe consequences. Why do you think in a week the president's going to change his mind?
I don't think he's going to change his mind. I think circumstances might well change his mind. I read the administration as jumping over frankly, jumping over the ceasefire into trying to get something lasting quickly. If there's anything we know about Trump, not the amateur psychology that we usually hear, anything we know about Trump, what Trump wants is to have real negotiations that have real consequences. In other words, that succeed or fail, and he wants to do that on a relatively short time frame.
Terry, not to interrupt, but that's what Putin wants. Putin wants to go to a peace agreement and work towards that, because without a cessation of hostilities, he continues to bombard Ukraine and can do so until there is a final peace agreement. Did he not just sway the president to his thinking?
I don't think he swayed the president at all, frankly. I find a lot of the Putin won the debate or the meeting to be a lot of pearl clutching. This is a guy who went, among other things, okay, this is a guy who went to the United States, didn't get to meet in a neutral country or anything else. This is a guy whose war aims are to take over Ukraine. Look at the different handle here. To take over Ukraine. So far, he has lost 83% of his war aims. And this is a guy that got buzzed by a B-2 bomber when he got off his plane. I mean, this is, to me, this is not a guy that's winning anything. And the big question is whether or not the United States and the West will come together meaningfully and press that advantage in a way that gets Ukraine the most favorable terms possible. I think we know that directionally in about a week, whether or not the Europeans are willing to step up or whether they're not. I thought Kelly Grieco in the prior segment did a very nice job at the end there of describing all the ways in which the Europeans hadn't stepped up, as did you. So, I'm waiting for the Europeans here.
We keep talking about Europe. We keep talking about the U.S. What role does China, does India play in trying to bring Russia truly to the table for a lasting agreement?
Russia is effectively a client state of China, in my estimation, and I've thought so for a few years now. And if China didn't want Russia to come to the table and have some sort of an agreement, then they wouldn't be doing so, number one. So I think China's okay with whatever scraps Russia can get. This is very consequential for Ukraine. I am not minimizing that. I'm just saying, whatever they think they can get out of the Donbas, China's okay. China's also okay with Europe tying itself into knots and showing that it's not a geopolitical force to be reckoned with. By the way, so I think those are probably China's motivators.
Terry. Thank you, sir. Terry Haynes of Pangea Policy. Terry, thank you. I think Europe's done a good job of that already, haven't they, over the past few years?
What, tying themselves in knots? Yeah, it seems like a consistent theme, which is a reason why I think it's pretty amazing that they all agreed on a date to come on Monday to coalesce in the White House.
You think they're worried about a repeat in late February?
Yes. Absolutely. I think they're worried about that, and they're worried about not being in the room, about being perceived as tying themselves in knots to such a degree that they're not even at the table of making an agreement.
I think also to your point, Anne-Marie, we can't make an agreement without them in the room.
Yeah, they're very relevant in terms of getting to the end game. You cannot have Europe not there, given the fact this is a war on European continent, and whether or not you're going to get to a peace agreement with security guarantees, or whether or not it's going to be severe consequences on Russia, you need Europe for either scenario.
All eyes on that meeting in the nation's capital later on this afternoon. For now, let's get you an update on stories worldwide with your Bloomberg Brief. Back with us, here's Yahira. Hey, Yahira.
Hi, John. Air Canada has suspended its third quarter guidance and full-year operating results due to a strike that's grounded hundreds of flights. But the airline does plan to resume flights this evening after the union representing flight attendants defied a return-to-work order Sunday afternoon. Meanwhile, China's Shanghai Stock Exchange closed at its highest level in a decade on Monday as investors continue to pile into the mainland market. The move cements a 20% turnaround since the sell-off in April tied to U.S. tariff announcements. The rally reflects a rising sense of optimism among small investors who are rotating out of bonds and into stocks. And I'm sure you were watching this one, John. Scotty Scheffler pulled off an incredible shot to win the 2025 BMW Championship yesterday. The world's #1 landed a wild chip-in on the 17th hole at Caves Valley in Maryland. The two-shot win over Robert McIntyre was Scheffler's 5th of the season, becoming the first player since Tiger Woods to win at least 5 times on the PGA Tour in consecutive years. That's your Bloomberg Brief. John?
Yeah, Hara, thank you. Even with some sloppy putting along the way, just missed the consistent grinding it out. Felt bad for Bobby McIntyre. Just a taste of the Ryder Cup in a few weeks to come. Chance of USA around the golf course over the weekend.
All I can say is I love it when you talk to yourself about golf after we hear from you, Hira, because that's essentially what you're going to be doing. I could pretend.
Both of you always give me the impression that you want to weigh in.
Well, I didn't say anything.
To engage the camera and carry on talking to myself.
It's always really funny that
Okay.
it's always sort of this. You know, I'll come up with something next time. I'll act passionate.
Everybody here is super excited for the Ryder Cup in a month's time. Up next, Chair Powell in Jackson Hole.
We know that the economy barely grew over 1% in the first half of the year. And so a 4.33% Fed funds rate is just too high for the economy that we have right now.
In just a moment, we'll catch up with Neil Dutta of Renmac, live from New York. This is Bloomberg.
In case you missed it on the close.
With regards to the electric vehicle business, when we talk about the commitment to new models and more importantly, commitment to the infrastructure to support that, what's the plan?
We're starting to see different kinds of hybrids that customers are excited about. E-revs, which go about 100 miles all electric, but then you could take a 700-mile trip once in a while. Those look really promising for a 3-row crossover like Explorer. We're going very low end, super affordable EVs for urban duty cycles and for commercial. We're not going to invest in a lot of the very expensive crossovers for pure EV. We think that's going to be a hybrid business.
What does the supply chain look like specifically for the EV and hybrid business right now?
We've moved out our cycle plans. We focused on affordable and commercial. We're fortunate we moved 3 or 4 years ago and we could tilt to hybrid and a specific kind of EV. And the supply chain has been able to move with us so far.
Don't miss the close, live every weekday.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
snapping a three-day winning streak in Friday's session on the S&P 500. Small pullback. A repeat of that again this morning. We're down by about 0.1% on the S&P. Likewise on the Nasdaq 100. Under surveillance this morning, Chair Powell in Jackson Hole.
We know that the economy barely grew over 1% in the first half of the year. And so a 4.33% Fed funds rate is just too high for the economy that we have right now. You have the scope to cut by 50 basis points. And then after that, you'd have to look at the data and you'd have to look at the markets and you have to look at what's going on in the real economy and put it all together.
So here's the latest this morning. Investors bracing for Fed Chair Jay Powell's speech at the Fed's annual symposium in Jackson Hole. Neil Dutter of Renaissance Macro Research writing, "Don't expect a strong signal." Neil joins us now for more. Neil, welcome to the program. Let's start with the labour market. Is this a labour market in transition?
Well, I think so. I think if you look at things like underemployment, discouraged workers out of the workforce, college unemployment, Black unemployment. I mean, these are, there's clearly some weakening in the jobs market, leaving the slowdown in payroll growth aside. And to me, what's important about it is that it really undercuts this argument that a lot of hawks are making that the slowing in the jobs market is largely a supply-driven phenomenon. I mean, did we have a bunch of college graduates swarming across the border over the last 3 years? So I do think that demand is the principal reason why labor market conditions have slowed, and that's something the Fed ultimately will need to respond to.
Is it problematic for you that stocks are at all-time highs and that corporate bond spreads are at the lowest level since 1998 at a time where you and others are making the argument that the economy is weakening to a significant degree?
If financial conditions are actually this easy, why is it that lending standards in the Fed's own senior loan officer survey continue to tighten? Why is it that housing market conditions are weak? I mean, I think the argument is essentially conflating financial market conditions with financial conditions for the real economy. And the Fed needs to respond to what's actually happening in the real economy.
Does it complicate, though, the Fed's messaging at a time where the economic data has been somewhat conflicted? There have been questions about the integrity of it just by virtue of how many people respond to these surveys. And you have a highly politicized environment with the president continuing to jawbone the Fed to cut rates significantly.
No, I mean, there's a lot of noise and uncertainty, but it's also the Fed's responsibility to make decisions under these difficult circumstances. I think that's the tension that the chairman has to deal with. I don't believe that the Fed can cut 50, so it's kind of pointless to even talk about it. You have to basically understand where the other people on the other side of the argument are. I mean, basically, you have a Fed at the moment that is split between people that think they should cut twice and not at all. So it's really hard to just move the Overton window and be like, yeah, let's go 50. I don't think that's going to really persuade people. So you have to kind of, pick the battles wisely. And that's why I think going 25 makes sense as an insurance policy, essentially. I mean, if the labor market deteriorates further, then the Fed can get more aggressive. But if you're calling for 50 right now, I mean, I think what you're basically saying, that's really a call option on another really bad jobs number. So, you kind of have to see it before you can kind of commit to it.
Neil, that's what the Treasury Secretary is calling for. Does he think the economy is worse than you think it is?
No, I think he thinks the Fed is more behind than I think they might be.
When it comes to the Treasury Secretary, Jim Bianco is putting out this argument that Bessent is providing filler names, basically, and that maybe his argument, potential speculation, is that Trump's already cut a deal with Bessent to take the job for next year. What do you think of that kind of argument as you track who is going to be the new Fed chair?
I mean, the Treasury Secretary said repeatedly that he's in the job that he wants, and that he's been offered the job and said no. So I would take him at his word. In terms of, what we are seeing is a flood the zone strategy. I mean, the president said very clearly that there's what, like 3 or 4 people that he's actively considering. And, I do think perhaps a lot of these other names are just kind of flooding the zone to advocate for 50. Folks like Lori Logan, you had up on your screen, she's a voter next year. Maybe if she thinks she might have a chance at the job, maybe she'll start advocating for 50. I mean, I don't know. I think, most of these people that are up there, they're not going to fall for it, and I don't think the market is either. But I do think it's an interesting strategy of getting additional people to kind of come out and support a more aggressive rate cutting path up front.
Neil, just before you go, got about a minute left. Just time for, I think, an important question. You've called this economy really quite well. You've talked about a slowdown that actually started at the end of last year and continued into this year with regards to the labour market. The chairman has anchored his view around the headline unemployment rate. You've raised questions about that. How are you anchoring your view? What are you focused on?
Well, I'm focused on a number of factors. When I talked to them, I highlighted them. But, I think it's important to look at a wide body of indicators and, the Conference Board labor differential as an example. So what are consumers telling you about labor market conditions? They're telling you they're getting worse at the margin, that jobs are getting harder to get, jobs aren't plentiful. Historically, this has had a strong relationship to what actually happens with the unemployment rate. That's not surprising because people tend to see things in their own local economies before the data actually picks up on it. Or small businesses. There was a lot of enthusiasm around small business sentiment rising, but look at what small businesses are telling you about sales, that they're citing that as one of their single biggest problems, weak sales. And so historically, again, when that happens, you start to see unemployment going up. And then looking at the employment data itself, look, we can talk about lower break-even rates all you want, but I don't think a lot of people had like sub 50 on jobs on their bingo card in the second quarter, okay? And that's kind of where we are right now. And you have to ask yourself, where are we going? And I do think it's probably weaker from here, particularly with respect to housing-related industries.
Neil, appreciate your time. As always, Neil Datta of Renmark on the slowdown he sees in the economy and the need, he says, for this Fed to act. From New York, the second hour of Bloomberg Surveillance, up next.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
A cidade estava sitiada.
Isso é o começo, eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
We fell because of the tariffs. We had this big sell-off, and we've now recovered.
I think this momentum is real.
This is an interesting inflection point. There's potential for upside.
This is not a particularly screamingly broad rally.
I think the markets are starting to conclude that, you know what, uncertainty is going to be with us here for a while. Let's move on with our businesses.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance starts right now, live from New York City this morning. Good morning to you all. Your scores look like this so far this Monday morning. Equities pulling back just 1/10% on the S&P 500, down 1/10 also on the Nasdaq 100. Anticipating this week right here, it starts down in Washington with a get-together between the Ukrainian leader and President Donald Trump. As the week advances, the focus on retailers grows. Home Depot tomorrow, Target on Wednesday, Walmart on Thursday, and then the big one of the week for markets worldwide is Chairman Powell in Jackson Hole.
It perfectly sums up the conundrum for markets right now. Essentially, you're going to have companies come out, possibly tell you that they're doing better than expected, like all the other companies that have come out, or the bulk of them, talking about how profitability has exceeded expectations. That has been what we have seen so far. And then you're going to hear an explanation from the head of the Federal Reserve about why they are or are not cutting when the market's baking in more than 100 basis points of rate cuts between now and the end of next year. Try to square this circle. The idea that you see real strength in the underlying economy as represented by corporate America, but when you hear anyone talk about the Fed, they talk about the need for more accommodation.
Whether it's Zelensky or Chairman Powell, those two individuals under pressure from this president, the President of the United States.
And for today, it's going to be Zelensky. President Trump made it pretty clear leaving Alaska. He spoke to Sean Hannity after basically we're all scratching our heads in Anchorage. Why didn't he take questions? This is a president who has the propensity to constantly want to brief the press. And why did they not have an extended bilateral meeting? What happened exactly? What is Zelensky going to put in front of him today? The president says it's now up to him to get it done. He has two issues at play. One is territory, which is really the third rail when it comes to issues politically back home for Zelensky. And then these security guarantees. Georgia Maloney talked about this months ago. Now it looks like they have this concept of an idea of a security guarantee that's Article 5 NATO-like, but not NATO. And everyone is dying to know what actually are the details of this.
We jumped a phase, didn't we? We jumped a step. We've gone from ceasefire talks to a full peace deal and a real acceleration of the process.
Which some people say is probably a bad sign, because without a ceasefire, there is this feeling that maybe Russia could gun it into Ukraine and try to get more territory. A real question here about how much more leverage Putin has gotten and whether he's just buying time as he has done before. I'm just wondering about Europe's role and their ability to get to the table as quickly as possible, and how much this is really a pivotal moment for them to remain a really central player in the global stage, because ultimately that seems to be what's at stake here.
We all want to see peace, and I think we all need to give this space to play out, this process to play out through the weeks ahead. But I do have an obvious question. Why are we okay with Article 5-like security agreements, but not Article 5 agreements within NATO? What's the difference between the two, and what does that tell you about one versus the other?
So it's a wonderful question. If there is no difference, then essentially why would Vladimir Putin agree to it? If there is a difference, why does it provide any protection to Ukraine whatsoever? Because if it isn't really a concrete deal offering protection, how does Vladimir Zelensky have that assurance that they will come to his rescue?
It feels more like rhetoric. I think for it to be Article 5 and actually for Ukraine to be admitted into NATO, that is a red flag, according to Steve Witkoff, that Putin said behind closed doors, and he's been saying for years. For it to be Article 5, likely you have to have boots on the ground all the time and much more of an integrated process between Ukraine and NATO members. If it's just Article 5-like, it sounds like it's some agreement that you're just going to sign on the dotted line that is some vague security assurances. My question is, How is this going to be lasting? Can this actually have the threshold of be continuing throughout multiple U.S. presidencies in the future?
Big focus on the nation's capital later on this afternoon. Big focus on this market through the week. Equities close to all-time highs, pulling back just 0.1% on the S&P so far. Coming up this hour, we'll catch up with Drew Pettit of Citi as stocks pull back from all-time highs. Henrietta Trays of Veda Partners as the Senate confirmation process backs up. And Patrick Moorhead of More Insights and Strategy ahead of new tariffs on semiconductors. We begin this hour with Stock Steady as investors face down a week full of event risk. Drew Pettit of Citi writing, when markets see a not too hot, not too cold economic data backdrop, performance broadens. Any macro concerns or policy uncertainty upticks ends up leading to more of the same, a growth-driven market. Drew joins us now for more. Drew, welcome to the program. Which market are you positioning for?
So short term, we're sticking with growth here. Look, at an index like high level, if you're thinking about high beta, we like NASDAQ over Russell right now. When you think about operating leverage, margin expansion, who can really get through cyclical uncertainty? It's a lot of the growth and AI-driven names right now. So near term, we're going to stick with growth.
Drew, let's talk about the other companies, the cyclical players. When we speak to economists on this program, they talk about building growing evidence of margin squeeze. Drew, do you see the same thing across the companies that you look at? And what are the levers they have available to them to offset that in the months to come?
So we actually agree. That's where you're seeing the margin compression, or I would say even margin stickiness if they have low margins. When you don't have a lot of margin and there's uncertainty or policy changes, there's nothing you can really eat. You either have to pass that through and that can hurt demand, or if you do have some, you got to kind of give it up just to kind of keep some share. So it's been messy for the cyclical side of the market, and that's where you've seen a lot of downward revisions. When we started the year, there was only about 5% of the companies in the S&P that were expected to have negative earnings growth. Fast forward to today, that's almost 30%. So that's been a massive headwind and why we really haven't gotten broadening to this point.
If you put this together, Drew, it points to something we've been talking about and hinting about all morning, which is the big are getting bigger and are in a stronger position. And we're going to see that probably this week with the likes of Home Depot, but more importantly, Walmart. How much does this just broaden the division in performance between the small cap universe, which has underperformed for decades now, and the large caps, which might be poised to continue to outperform based on their ability to negotiate contracts, based on their ability to adapt to the new AI landscape?
So this is kind of the beauty. A lot of what we're talking about now might actually be the backward looking. The one thing that has changed in the last month when we start to think about 2026, and markets increasingly and investors are starting to think about 2026, is the One Big Beautiful Bill Act. So that should actually help a lot more of the cyclical names and some of the names that probably had been hurt more by tariffs. So you finally get a little bit of an offset and the compares are getting a little bit easier. So yeah, all these companies with tons of free cash flow have been able to develop their businesses and take some different shots to change businesses that have really helped them. Going forward, it should narrow. You should finally get some less negative or earnings growers. That should probably help with participation. Will it change leadership? Not sure we're there yet, but maybe finally we can start talking about the Russell finally going up rather than just bouncing off of lows.
How much does that really hinge on whether or not we get rate cuts?
That's definitely part of it. From the performance perspective, we've been saying this for a long time about small cap. It's not an either or. You need both better economic data and lower rates. It's really twofold. You know, a lot of these companies, higher interest rates, depreciation, amortization, that's really hurt because they haven't had operating leverage. So lower interest rates, more access to capital, down cap and in cyclicals can definitely help them change businesses and get some more productivity gains in margin expansion, which honestly, that's what markets want right now in single stocks.
Drew, when you're looking at margin expansions, can businesses pass on the costs of tariffs to consumers?
It depends. This has been messy and honestly something we've had to look at sector by sector. The growth names and anyone tied to any type of tech or secular trend has been able to either get margins by productivity enhancements or gain share because they're just better businesses and experiences for their customers. outside of that, it's been really, really tough to see anyone really have any positive operating leverage and be able to pass on costs.
So if they're not able to pass on costs, but they have to cut costs, Drew, what are they going to do?
You end up kind of surviving until you can get out the other side of what feels like an early cycle environment. And guess what's early cycle? Economic data finally bottoming and rates coming down. And that's a broadening thesis. And that's probably a healthier leg of a bull market. That's something we can see coming in 2026. It's just how early do markets turn? Again, short term, growth names, probably a safer trade to be in if you're looking for some beta. Next year is when the thesis around broadening gets a little bit more real, at least fundamentally.
Hey, Drew, appreciate your reaction this morning. Thank you, sir. Drew Pettit there of Citi on the equity market. So strange to have this conversation about tighter margins and an economic growth slowdown with high yield spreads as tight as they are and investment grade spreads as tight as they are.
If you look at margins in many industries, they're not shrinking. This is the irony. You talk about margin compression, you're seeing it with PPI versus CPI, but when you take a look at what's actually happening for S&P 500 companies, they're not compressing all that much, and corporate strength is all the better. It raises the question, is Scott Bessent correct in saying that margins are just normalizing post-pandemic, or does this indicate that it's being felt elsewhere? Read smaller companies that are the ones that possibly would benefit by cutting rates. Look, the reason why this sounds confusing is because it is. And there are lots of different tiers, and it's the reason why it's going to be very complicated to put it together with one cohesive monetary policy.
Torsten Slok over the weekend of Apollo writing this: solid macro and corporate fundamentals coupled with persistent institutional demand and limited net new supply have anchored credit spreads and performance. Speaks to everything we've seen over the past few months.
And maybe the $7 trillion in the sidelines that people talked about, which I know, I can see you rolling your eyes. And I agree with you, because it's not in the sidelines. Because it's cash and it's actually giving 5% or 4.5%. That's actually pretty good. So maybe it's not in the sidelines, but it's still there. So maybe it's rolling in.
It's a wall of money that steps in every time we get any kind of backup in spread. Every single time.
Yep.
Elsewhere in the equity market, futures slightly softer. We're down by about 0.1% on the S&P 500. With an update on stories worldwide with your Bloomberg brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. President Trump will host Ukrainian President Zelensky and European allies in Washington today to set out terms for a potential peace deal with Russia, with the focus on territorial concessions and Kyiv seeking security guarantees. This after President Trump and Putin met in Alaska, with little revealed in what was discussed. Meanwhile, White House trade advisor Peter Navarro is out with some strong criticism of India's use of Russian oil, calling the purchases, quote, opportunistic and deeply corrosive in the Financial Times. Navarro went on to say India needs to start acting like a strategic partner of the U.S. if it wants to be treated as one. And English football is back, with the Premier League season starting with a busy opening weekend. Liverpool, Tottenham, and Arsenal are off to strong starts after winning their first matches. The new-look Manchester United squad failed to find a spark and get on the score sheet, while Manchester City and Sunderland also came away with wins after holding their opponents scoreless. That's your Bloomberg Brief. John?
Yahara, thank you. Dear AC Milan. When you have one of the world's best midfielders, do not sell that player at the start of the transfer window to one of the richest clubs on the planet for peanuts, for nothing. The debut of Tijani Reinders over the weekend, just absolutely phenomenal. And I think if you are a Milan fan over the weekend, you were shedding a tear for how much little money was raised at Milan and how little has been spent over the transfer window to compensate for it.
Would you like to sign your letter? Love, Jonathan Farrow. I
don't know how much love is left.
I mean, honestly,
I don't know how much love is left.
All I can say is English football never left, because ultimately everyone has a team and everyone has a league, and it feels like this is like the new slave labor. They're just compensated a lot for it.
They've been playing a lot of football, haven't they?
It's crazy. Yeah. I mean, can you imagine?
Don't worry, they get paid a lot too.
I know. It's not exactly slave labor.
Smallest violin on the planet, right? And all that. Yeah, something like that. Up next on the program, the confirmation process.
I'll be naming a new chairman sometime within the next, I think I'll name it a little bit early, the new chairman. I'm down to 3 or 4 names. All good, all great.
We'll talk about that process in just a moment with Henrietta Trays of Veda Partners, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Equity softer this morning, down 0.1% on the S&P. Likewise on the Nasdaq 100, down by 0.1% so far this morning. Under surveillance this morning, the confirmation process.
We call him Jerome Too Late Bell. It will live with him forever. I believe that name will live with him forever. I'll be naming a new chairman sometime within the next, I think I'll name it a little bit early, the new chairman. I'm down to 3 or 4 names, all good, all great. The problem is you name them and then they turn out to be not good. That's happened to me a couple of times.
Here's the latest this morning. President Donald Trump looking to put his stamp on the Federal Reserve and the BLS with Congress on August recess. Both White House economic advisor Stephen Myron and Heritage Foundation economist E.J. Anthony will look to be confirmed on Capitol Hill. Bloomberg's Mike McKee has the latest. Mike, welcome to the program, sir. I think we're all asking the similar question, just how quickly this confirmation process can be conducted.
Well, ordinarily, it can't be conducted very quickly because people who are nominated have to fill out extensive financial disclosure forms, and then they go around on Capitol Hill and meet with senators privately to sell their nomination. The senators do their own investigations, the committees do. So it can take months. In this case, there's going to be a big push from the president to get Stephen Myron in by September 17th. That's going to be tough because the Senate doesn't come back until September 3rd, and they have only 10 legislative days of work in Washington before that September 17th meeting. So they would have to set some sort of speed record for the Senate in getting him confirmed in that time frame. I don't think that it's going to matter much with Antony. The BLS will continue to produce the data whether or not he's in place, and his nomination is going to be a lot more controversial. So I would expect his to take some time.
Mike, just a final question from me. You're in Jackson Hole already, ahead of the annual get-together for the Federal Reserve. Are they going to tackle these issues of data reliability, data dependence? Are they going to tackle these issues of institutional independence? Are these things going to come up?
Probably not in the sessions themselves. We will certainly be asking members of the Fed and others about it when we are up at Jackson Lake Lodge. The issue is there's really only one public-facing kind of speech, and that comes from the chairman. And I don't think he wants to go anywhere near those issues. He'll be talking about the framework we expect and maybe giving some hints about whether they're thinking of cutting rates in September. But the rest of it is probably not going to be something that is widely discussed.
Mike McKee with the latest in Jackson Hole. Mike, thank you. We'll catch up with you a little bit later. Joining us now, Henrietta Trace of Veda Partners. Henrietta, I believe the next Fed meeting is September 17th. Will Stephen Myron be there?
I would be really surprised. There is not always an advantage to being a Senate nerd, but every once in a while it's really convenient. And this is an opportunity where we know that as soon as the senators get back from their month-long recess, they're going to start debate on the National Defense Authorization Act. And once we move to that on the Senate floor, it can occupy weeks of time. So getting a confirmation for somebody who hasn't gone through the motions yet, with the committees not even in session, is actually going to be incredibly complex. And I think that there is a lot of reason to anticipate that the senators are also going to be trying to work with the other, 10 or so votes we're going to need from the Democratic side to keep the government going into September 30th. They're going to have questions about why the Russia sanctions package isn't going into effect. The president has threatened these secondary tariffs on India, but they haven't actually put them on. There's a lot of competing factions and some wars happening that include Republican senators that could delay the approval of any of these nominations for several months to come.
Henrietta, how much pressure right now is the White House putting on the Senate when it comes to Steve Myron to try to get his nomination through before the Fed meets?
I think it's very minimal, just in terms of understanding that the opportunities for the president to continue pummeling Powell are actually very convenient for the president. The more he can lambast the Federal Reserve, the better for the president personally, especially as we get additional inflation data and these tariffs from August go into effect. So I think there's a pretty valuable sort of punching bag in the Federal Reserve right now. And being able to continue to hammer that and say, we want our guys in there, they're not there yet, is in maybe everybody's best interest from the White House perspective.
When it comes to the BLS commissioner nomination, E.J. Antony, there's a 51% chance, according to Kalshi, that he gets through. What do you put the probability as?
I think it's going to be lower than that. I'm a pretty econ-focused person generally, especially on the Hill, and the unanimity behind opposing this proposed commissioner is really alarming. As you guys know full well, economists don't always agree on a lot of things. In this case, it's pretty much unanimous, very outspoken, from really trusted resources, from conservative think tanks, from conservative economists saying this is just not the guy to have continuity of confidence in the data. And I think that there are a lot of senators who would like to advise and consent on this in a way that gets somebody in there that's less polarizing. It's not going to be ever a first-tier concern. Bureau of Labor and Statistics is not where they spend an inordinate amount of their time, and we could very well be walking into a government shutdown, but I think they're very happy to delay. 51% odds seems high to me.
So Congress takes a lot of vacation time, and we talk about this a lot, and they have their August recess right now. We're all jealous. It sounds very European. How many of them go back to their constituents and actually hear what people are saying about tariffs and about the labor market and about the current situation? How much will that change the way they act when they come back to Washington, D.C. in September?
I think it's most relevant for the House members because they're up for re-election and only a handful of the senators are. And the senators who are inordinately exposed to election risk have already said that they're quitting. Tom Tillis of North Carolina has decided not to run again over the one big beautiful bill. I will say that wherever I go, I ask about tariffs. If I'm standing in the grocery line, I turn around and ask people, this whatever about tariffs. Every single person in America is familiar and has an opinion about tariffs, and it's pretty universally negative. 87% of Americans are concerned about the inflation that will come from tariffs per the latest Gallup poll. So it's a pretty easy conversation to have, and I think most members would like to stay away from it. What the Republicans are really focusing on is selling the one big beautiful bill and things like no taxes on tips and pieces along those lines that they think they can message in a positive light to their constituents.
I have to say, I'm thinking about you in the grocery store line and people saying, there goes that woman again. Before we let you go, I do want just a word on what you expect to happen today in Washington, D.C. Very much the focus is on Volodymyr Zelensky, the coalition of European leaders coming to speak with President Trump. What are you expecting to learn from that meeting?
Well, first of all, I'm a delight in a grocery store, and I would just say that it's fun to talk about tariffs. No, I'm just kidding. When it comes to today, I think that what's happening is the United States has an inordinately low gas price right now, which I think is really interesting. I was out in Raceland, Louisiana last weekend, and it was $2.47. The Trump administration is in a position to impose these sanctions from a domestic standpoint, given where gas prices and oil are today. And the fact that they are not indicates pretty clearly that they're not going to put the squeeze on Russia. So I think that is why the European leaders are coming over in such haste, as y'all were pointing out earlier, to make sure that they're involved in this conversation. They don't leave Zelensky hanging in the wind alone like he was last time. But I think we're still a ways away from any kind of full-blown ceasefire or any kind of peace deal. I think this is, obviously in President Putin's best interest to continue that pace. And the India sanctions, the most that I'm expecting in the weeks ahead, not on China, and probably not on anywhere else.
Yeah, let's just build on that. Peter Navarro talked about the same thing. Is there an obvious interplay right now between, say, Russia, sanctions policy, and the approach to tariffs?
Absolutely. You know, it's so obvious from like just the way the president speaks to it, calling them secondary tariffs instead of secondary sanctions. I think what's most telling is the way in which the president has decided to impose the sanctions on India. They're not tariffs. Excuse me, they're not sanctions the way that they ordinarily would be. They're tariffs on all the goods that he's imposing tariffs on under IEEPA. So he's actually evading the strategy of sanctions, which is to target specifically your arms dealers, your arms defense industry, oligarchs, people that you would ordinarily target, financial institutions, just for a sanctions process. And instead, he's using the IEEPA tariffs. And I think there is absolutely an interplay there. And most notably to me is President Trump's resistance to imposing a broad sanctions package that would penalize Russia in a meaningful way. And there's a couple things, most of which is the president of the United States cannot afford to escalate the trade war with China at this juncture and still hope to have a meeting in the fall, still hope to have trade between the two nations. It just can't be done. And so he's high and strong on India, which is why Navarro is highlighting.
Henrietta, appreciate your time. Henrietta Trace there of Vader Partners. Peter Navarro in the Financial Times this morning. American consumers buy Indian goods. India uses those dollars to buy discounted Russian crude. Up next, new chip tariffs on the horizon. Patrick Moore, head of More Insights and Strategy, joins us in just a moment.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Quiet start to a busy week. This week, we start lower by about 0.1% on the S&P, down by 0.16 on the Nasdaq. The busy week I'm talking about, retail earnings kicking off with Home Depot, Target and Walmart. That starts tomorrow morning, concludes on Thursday. Busy week down in Washington as well. It kicks off later on this afternoon with Volodymyr Zelensky sitting down with the President of the United States, and a busy week for the Federal Reserve. That concludes on Friday with Chairman Powell in Jackson Hole, Wyoming. As we count you down to that opening bell, 2 hours away, let's get you some morning movers with Danny Berger. Hey, Danny.
Hey, John. For a second trading day, we're seeing a lot of the clean energy stocks rally. That was after Friday when government agencies issued new guidance when it comes to solar tax credits. The large outcome of that, less onerous than was expected. So Sunrun, for example, that's up 3.3%. RBC also upgraded that stock this morning, saying that what we got from the government removes a lot of the uncertainty. First Solar, those shares up 4%. Elsewhere, Novo Nordisk, those ADRs are rallying thanks to its Wegovy got approval to treat a rare liver disease. The issue, though, for Lilly is it got to market before them. So Lilly was lower this morning, but still down by about 0.5%. Of course, Novo Nordisk has been languishing this year, a lot more competition for its obesity drug. In the last hour, we also learned that Soho House would be going private. They confirmed an earlier report from the Wall Street Journal. Its current investors will be taking it private for $9 a share. We're not quite there. Shares are rallying 16%. John, you talked about the tension of a private members club being public. Of course, the real tension is any of the bankers who work on this deal won't be allowed to be members of Soho House.
Haven't they started to adjust those rules? I know plenty of people, Danny, have got around that, don't you?
Yeah, but I mean, they lied to do it, right? They're not like, oh, I'm a banker, I'm a, executive of a fancy art company or something like that.
People who work in banks are the least of their problems right now. Danny, thank you. Danny Berger, thank you. As some might say, the Delta Airlines lounge of the private members clubs.
Okay, all I could say is I'm really not feeling bad for this. This is Groucho Marx moment, right? I wouldn't want to be a part of any club that would have me, and so at a certain point there is this natural tension between expanding a club that is by nature exclusive.
It's too overrun. You're more of a 5 Hartford Street guy.
Thank you. Appreciate that. It's a good club.
Yeah, it's a good club.
Okay, we'll move on.
I know a few members.
Of course. On our radar this morning, President Donald Trump hosting Ukrainian President Zelensky and European allies in Washington today has set out terms for a potential peace deal with Russia. The leaders said to focus on territorial concessions, with Kyiv seeking security guarantees.
So to me, this is going to be a pivotal meeting to really understand exactly how realistic it is for them to get some sort of peace agreement at a time where ceasefire doesn't seem to be the main precursor to any such agreement. If you don't have that, will Russia really stop trying to get more land ahead of negotiations where essentially the United States is backing Russia's argument for Ukraine to give up some of its land?
Whatever we call it, ceasefire, peace deal, a cessation of hostilities was supposed to be the start of a process, and now cessation of hostilities is the end of a process, which is why many critics think that in the end Putin won, at least on that front, because he can continue bombarding Ukraine and at the same time say that he's part of this process to wind down the war. The president in Anchorage, and I was there, made it very clear there is no deal until there's a deal, which means he has to get Zelensky on board. Now, Zelensky's going to take a big step forward today, as opposed to his Oval Office blow-up in February when it comes to at least a discussion on security guarantees, this NATO-like Article 5 security guarantee, along with European leaders having his back. But when it comes to the territory, this is where it's going to be incredibly difficult, because what Putin is asking for is part of a region, parts of it, that Ukraine actually has men there and troops there, and not just a front line. They've actually fortified cities, and it's become their main front line to Russia. And without that, after that, there's just basically fields, and it gives them an open wide for the Russians. This is why it is so difficult for Zelensky to accept.
And that's the latest on Washington. Look out for those meetings later on this afternoon. Here's the latest on the Federal Reserve. The Fed in focus this week as the Jackson Hole Symposium begins on Thursday. All eyes on Fed Chair Jay Powell's remarks, as he's expected to signal the Fed's thinking ahead of the meeting in September.
Is he? Though this is the question. Is he expected to really signal, will they or won't they cut rates in September? This is sort of the big question. There's that. There's how much does the Fed push back against any kind of political interference? Expect none of these questions to be answered. Instead, it will be an academic discourse on the labor market and the nature of changes and artificial intelligence and immigration and how you measure inflation. And it might be a lot of jargon, because why wouldn't they? Why do they want to weigh in at a time when there is such a lack of certainty around the economic data? Yet that is what people are hoping for.
You sound like someone who's cancelled their flight.
I have not canceled my flight. I'm actually excited to have.
Okay.
I'm actually excited to have these discussions, and I'm excited to go for a hike because I like hiking, and I really enjoy the Grand Tetons, and I do find it really cool that all of the different Fed officials and even global leaders.
Good save.
They all
just
go for
paying
hikes.
for you to go hiking in Jackson Hole.
Yes.
Is that what this is?
Hold on a second. Absolutely not. I'm going to have really substantive conversations.
For the record, I didn't go hiking or bear watching in Alaska. I came right home to make sure I was on the show today.
All right.
Good save, Bramo. If management's watching this morning. Okay. The device war is heating up as foldable phones gain traction. According to NBC News, Samsung's smartphone market share rose to 31%, while Apple's declined to 49% for the second quarter of all the companies, the big companies on the S&P 500 right now. This one in a really tricky spot.
So Apple doesn't have a foldable phone, and they're behind on AI. The idea that Samsung is making inroads at a time where Apple is also challenged by some of the tariffs and where the production lines are coming from really highlights why there is skepticism and why you have seen the shares of that company down 7.5%, even though Samsung shares are up about 35% so far in 2025. It feels like people are waiting for a shifting in the guards. You also see Samsung playing with tablets that aren't just a square or a rectangle, that are flat. They're also looking for other potential shapes. Do we get a circle? Do we get goggles? Do we get maybe a wristband? And these are the things that Apple has really avoided until now.
Innovation. We'd like to see some, wouldn't we? Sometime soon anyway, from Apple. Let's stick with tech. President Trump saying he would set levies on semiconductors in the next 2 weeks, suggesting the rate could be as high as 300% on imported chips. Patrick Moorhead of More Insights and Strategy saying, I do not believe when the smoke clears, the administration will apply large tariffs on chips. Patrick joins us now for more. Patrick, welcome to the program, sir. Let's get to why. What underpins that statement, sir?
Well, we've seen a lot of threats that have made from the administration, and then nothing happens. It's been derogatorily called taco, but the reality is that the administration doesn't want to tank companies like NVIDIA or Apple, and it actually disincents final product assembly here in the U.S.
Really difficult to navigate this moment, Patrick, as you know, because the other topic we discussed just last week is that the money they're using for the CHIPS Act, they might try and use to take an equity stake in Intel. We've got all this heightened intervention, the prospect of tariffs, the prospect of a revenue share if you're selling into China, the prospect of an equity stake sale from Intel to the government. Patrick, how are you suggesting investors navigate this moment in this industry?
Well, I think they do a best case, worst case, and what's likely going to happen scenario. But the reality is that none of us knows what's going to happen. What I am very confident in, though, is the U.S. government will take a stake in Intel and will choose it as a national champion for some of the hyperscalers and some of the big chip makers to manufacture their chips on, because it's about national security. And it's not unprecedented for the U.S. government to take equity stakes. They did it in GM, Chrysler, even Palantir, and more recently MP Materials. And MP Materials is probably the best case or the best case study to see how the government might do that, where they take an equity stake, they take a portion of the profit. But I think there's going to be carrots and sticks involved as it relates to companies like NVIDIA and Apple. And with Section 232, which is about national security, which there's a report that should be completed any week now, that gives Trump the out to go and renegotiate things that may have been considered complete. So, for instance, the agreement with Apple, the agreement with South Korea.
Is government intervention a positive thing for investors at a time when there's a whole method of carrots and sticks?
In macro, no. But we also have to recognize when it comes to advanced chip making, and even more importantly, advanced chip making intellectual property, TSMC Taiwanese government gave TSMC almost half of their initial funding. They currently own 6%. I don't think in the long run interventionism works, because you get the government involved in anything, it tends to slow down. But for a lifeline out there for something that is this important, I do not think the U.S. government is going to let Intel Foundry or Intel Foundry intellectual property go away.
Too important to fail. You said there's likely going to be some forms of carrot and sticks. So we have this intervention potentially for Intel, basically telling all the companies that use chips, you have to use an Intel Foundry. At what point will we get Intel manufacturing at the level we're seeing from TSMC?
So there's two ways to look at it. There's the sophistication of the technology, and then there's the amount of, let's say, wafers that are done, which is the core output of what TSMC does. Right now, I guess on the plus side, Intel's 18A and 18AP look competitive. They're a tad, quote unquote, late compared to what TSMC is working on. But what they did do is they did take a stratospheric leap forward from where they were before. But then there's the capacity side, which is the sheer amount of wafers that can come out of each company, is where Intel would have a very long way to go. Now, signing up somebody like an NVIDIA, like an Apple, like an AMD, or a Broadcom could narrow that gap significantly, and it wouldn't even have to be on bleeding edge, right? Any of these companies could take, let's say, their mid-range lines, where Intel is more than capable in 2026 to be able to manufacture all of these different parts.
Signing up for Intel, that's what it's going to take to get the threshold, basically, to get an exemption when Trump talks about semiconductor tariffs?
Yeah, it is. And, you know, the carrot that I talked about says, hey, if you make a commitment to Intel, we'll give you some sort of tax abatement, or we will cover maybe part of the cost or cover the risk of having to do that. And then if those companies don't bite, it could be the stick, which says, okay, NVIDIA, if you don't want to sign up for any of this, or Apple, if you don't want to sign up with Intel, you're going to have to pay a tariff on those goods that are coming into the U.S. as a final product, as opposed to the chip, because we all know that most chips are not being brought into the United States for final assembly. Most AI servers are actually made in Mexico, and it's covered under zero tariff via the USMCA deal that was cut years ago in Trump 1.0.
Intel up last week by more than 23%. Just stellar rally for that stock. Patrick, thank you, sir. Patrick Moorhead of More Insights and Strategy. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Back with us, here's Yahara. Hey, Yahara.
Hi, John. Hurricane Aaron has re-intensified into a Category 4 storm after moving past Puerto Rico. Aaron's top winds strengthened to 130 miles per hour, and according to the National Hurricane Center, additional intensification is forecast over the next 12 hours. The storm is expected to pass between North Carolina's Outer Banks and Bermuda later this week. Meanwhile, Advent International has offered to buy chipmaker U-Blox in a deal valued at around $1.3 billion. Shares for the Swiss firm jumped more than 25% Friday. You can see the pop there. Following reports of the possible transaction, the acceptance window for this deal would run until around October 29th. And Air Canada suspended plans to resume flights after the union representing flight attendants defied a return to work order yesterday. The government ordered staff back, but the union refused, calling the order unconstitutional. Air Canada now plans to resume flights this evening. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for the update. Up next on the program, the path for a Fed cut.
One of the reasons I support the 50 basis point cut right now is that you have the inversion in the front end of the curve that's something like 60 basis points last time I looked. And so you know that you can cut by that amount without really upsetting things.
A conversation up next with Gennady Goldberg of TD from New York. This is Bloomberg.
with the new world reorder, it means that there will be regional clusters of excellence. You'll be regional clusters of great companies. And so it's okay to be number 2, because you could be number 2 in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns goes to zero. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own needs.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
We're about a month away from the Fed's next meeting. The schedule, the calendar looks like this. So on Friday, you'll hear from Chairman Powell. Then on to early September on the 5th, you'll get payrolls. A week later, CPI. A week after that, the 17th, that Fed meeting. The countdown continues with equity futures slightly negative this morning by 0.1% on the S&P, down by 0.2 on the NASDAQ. Under surveillance this morning, the path for a Fed cut.
One of the reasons I support the 50 basis point cut right now is that you have the inversion in the front end of the curve. That's something like 60 basis points last time I looked. And so you know that you can cut by that amount without really upsetting things. But the weakest part of the market or the economy right now is housing. And so you can't have the long end go up. And that's your constraint right now.
Here's the latest this morning. Investors looking to Chair Powell in Jackson Hole later this week for clues on the Fed's next move. Gennady Goldberg of TD Securities saying, assuming the next round of inflation and payroll data largely behaves, we believe the path for a September rate cut by the Fed has been cleared. Gennady joins us now for more. Good morning, sir.
Thanks for having me.
Welcome to the program. How high is the bar to derail that rate cut expectation for September?
I mean, all he has to do is really not say a ton. I think if he just kind of clears the way and says, look, we're definitely looking at the data, but if all goes well, the market pricing is the market pricing. I think that blessing alone would be fine. I think the big risk for market is if he sounds very non-committal. That's when the October and the December pricing, there's about 35 basis points split between those two. That's when that starts to move around if he sounds like a non-committal chair.
What's the incentive to sound committed to anything on Friday?
It's high. I think that's I'd say the bar is pretty high at this point. The data's been all over the place. You've seen the big revision to payrolls. I think they've seen enough to start to move. I think that's the key here. We're looking for a cut in September, October, December. I think they've seen enough to start moving, but you're right. In order to commit to October, December, they need to really know that things are slowing down. I don't think that's the case. So I don't think these calls for 50 basis point rate cuts in September are justified, at least not yet. But they're going to keep the door open to everything. I think the bigger problem is if he comes in and pushes back on this market pricing and he says, why do we need to cut it all? That's really when markets will start to get upset, because right now markets are trading as though that cut is secured.
Do you think that it's awkward that they're talking about cutting rates in 25 basis point sequential moves for the rest of this year at a time when investment-grade credit spreads are the tightest since 1998?
I think that the issue is things are okay on the surface level. If you dig down into certain parts of the economy, if you look at housing, for example, if you look at certain portions of the U.S. consumer, there are some stresses. But overall, if you do kind of a top-down analysis, there's really two problems. One is that inflation is a little bit uncomfortably high, and we don't quite know the pass-through yet. We know it's kind of getting through there, but it's not as terrible as predicted. And the other one is that, yes, consumers are moderating their purchasing. So do they need a little bit of help? Does housing need a little bit of help? I think 25 basis point increments make sense. You kind of start the process. And, to John's point, you don't commit to anything. You just make sure that you kind of react to the data as it comes in.
I keep thinking about a conversation that we were having last week about, can you have your cake and eat it too? Can you essentially have a really good economy and a labor market that continues to be robust at a time where inflation continues to go down, even though right now you still have it at a relatively sticky pace? Can you, or is that a fantasy?
I think it's, that would be a fantastic end to Chair Powell's career where, you've got inflation basically back at 2%, the labor market at full employment, and you could just sail out into the sunset. That would be fantastic. Reality is often different, but of course, reality is often a little bit different. I think if they can make sure to keep inflation under control, I think that's really what's keeping them from cutting rates here. And if you look at the labor market's starting to soften up a little bit. You are starting to see a little bit of a drift higher in the unemployment rate. We expect more of that in the second half of the year, a little bit less in consumption, a little bit less in hiring. It's not a very dynamic labor market. It's low hire, low fire, right? The problem with that is when you fly that close to the ground, it doesn't take much to upset the apple cart.
When you said data's all over the place, do you trust the data?
I trust the data in as much as I've always trusted it, right? And there's a hierarchy of data, right? First and foremost, you get the anecdotal data. You dismiss, I would say, 95% of that or more because that doesn't tend to drive things. Then you get survey data, then hard data, and then really you get, I would say kind of stretches of data, and you look at averages. So you look at the 3-month to 6-month moving average of something like a payroll report. Those recent revisions really pushed those averages a lot lower. That's what the Fed's looking at for direction. It's not necessarily the next ISM print. It's really the trend in, the labor market, the trend in inflation. And from what they're seeing right now, I think there's enough to start the process of cuts, but not necessarily enough to commit to, 150 basis points of rate cuts, let's say.
But going forward with a highly polarizing, what some would say bias economist leading the BLS, would you continue to trust the data, or is the gold standard out the window?
I think we'll have to see if, exactly who gets confirmed, first of all. I think there's a confirmation process where I do suspect there's going to be some pushback, especially if the views are seen as overly biased. The BLS also has several thousand people employed. There are rule books and manuals. If we start to see that being broken down, then of course I think the data will be suspect. But there are private sector surveys. ADP then suddenly becomes much more important for the labor market. The issue is it's really not a comprehensive data set for inflation. That's the big problem, because everything feeds into the PCE report, which then the Fed uses. So it's not just, it's not that simple, I would say.
Let's talk about the top of the Federal Reserve. We spoke to a Fed chair candidate, Mark Summerlin. You heard a piece of that sound, that interview coming into this conversation. Lisa asked him a fantastic question about what he would do if long-end rates started to rise as they were cutting interest rates. And he was very blunt. He just said, you stop. You stop, because that's not what you want to see happening. That is what happened last year from September onwards. Do you see a risk of that repeating all over again?
I think if you view inflation as not being under control, then absolutely. And I think the issue right now is the Fed's got this very delicate balancing act. They want to start to ease. They want to start to help the economy because they are worried about the labor market. But if that inflationary pressure continues to build, I think the problem becomes they may actually have to stop. Or, I've heard floated, yield curve control as a possible alternative. I don't think we're there yet. I think the Treasury is already starting to worry about it by shifting some of the issuance to the front end and buying back more longer dated debt, right? So the worries are already there. It's just a function of, does the Fed keep moving if that continues to happen? We expect the curve to keep steepening, by the way.
Just quickly, what's your highest conviction trade given all of this? That seems very, very certain here.
I think it makes sense to start legging into duration. We are, whether it's September or October, we are seeing the Fed looking to restart the cutting cycle. All kind of signs point in that direction. I think the 7 to 10-year parts of the curve look especially attractive. The 5-year and under is where everyone's kind of hiding out and parked. So if you can extend out to 7s and 10s as rates start to drift lower, I think that makes a lot of sense here.
Gennady, appreciate your time. Thank you, sir. Gennady Goldberg there of TD Securities. Fantastic piece over the weekend from Peter Scheer of Academy. He put this quote in there. People seem so fixated on whether people would cut or not and not interested enough on what future potential Fed picks would do with policy to impact the longer end of the yield curve. That's a debate, a conversation we've been having too.
How do you manage the balance sheet at a time when potentially that could be used as a tool to bring rates down at the long end at the same time that they're cutting rates on the front end?
Bond yields down at the long end this morning, at least. We're down by 3 basis points at the very long end on 30s, 489 there on 10s. We're down by 2 to 429 at the very front end of the curve, down a single basis point. Your 2-year this morning at 374. Coming up on this program, we'll catch up with Jack Manley of JP Morgan Asset Management as we count you down to a big week full of retail earnings, and then it climaxes, concludes with Chairman Powell at Jackson Hole on Friday. Plus, we'll speak to Anisha Sherman of AB Bernstein, Claudia Sam of New Century Advisors, and Chris Heisey of Merrill and Bank of America Private Bank. From New York City, the third hour of Bloomberg Surveillance. Up next.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I never doing that again.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
AI is definitely in the center of it, and we're looking for how do we spend time and which industries do you invest in. Investors becoming more and more digital or AI enabled that actually adds value to economic growth. And this, we think could be time because you have a strong hardware power and you have a strong software power as we see, and it's accelerating significantly. But a very important, another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase productivity in times where demographics are decreasing everywhere around the world. So this, I would say, is a major theme. So digitalization and AI-related technologies, and we think of it technology, but in reality, a lot of the businesses coming up and claiming to be technologies that are actually cannibalizing a lot of traditional businesses.
Tune in to Bloomberg
Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
We're sort of in a stagflation-like environment.
I think the economy is slower than people think, and we're seeing pockets of inflation.
The big picture is it's an economy that continues to perform. It's just not as dynamic.
We're not seeing the big broad-based kind of price pressures yet.
We see the economy flattening out here in the second half of the year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The opening bell about 90 minutes away. The third hour of Bloomberg Surveillance starts right now with equity futures on the S&P down by about 0.1%. Your week ahead is shaping up like this, a focus on retail and a focus on the Federal Reserve. Retail earnings through the week from Home Depot, Target and Walmart. The Federal Reserve in focus in Jackson Hole, Wyoming. Chairman Powell in Jackson Hole looking for some clues on what might happen about a month from now.
Does he confirm the idea of a September rate cut and then sequential rate cuts after that? Does he talk about what he's seeing in the labor market and the dual mandate of the Federal Reserve? And this comes after retail earnings that are expected to come in probably pretty strong. If you look at the previous earnings reports that we've gotten so far in Q2, which have been pretty robust, well above what people have expected, and kind of pits the sort of S&P versus the economy. And it's sort of this conundrum that the Fed has to counter, which is financial conditions seem to be pretty easy. So then how do you talk about the need to ease monetary policy?
With great difficulty. Let's get into it. The S&P 500, all-time highs. You talked about credit spreads, not just high yield, investment grade as well. Super, super tight.
And it comes at a time when people say that companies are in a great position. They've termed out their debt, so they're not paying some of the very high rates. They look at profits that actually are growing faster than people previously expected. So square this peg, right? Square this circle. This is a really difficult moment. I always get expressions wrong, apologize. It is a Monday, but going forward, I just wonder how the Fed justifies rate cuts without seeming like they are just dealing with political pressure from the White House.
Well, let's focus on the debate of the moment, the labour market. So the title of this year's get-together is a labour market in transition, then a bunch of other words. So let's just focus on the labour market in transition. We've had a step down in payrolls growth. What is the source of the step down in payrolls growth? Is it a turn in the economy or a structural shift on the supply side? And that is the source of great division on Wall Street right now. And I just wonder if Chairman Powell makes a call, takes a side, tells us which side of the debate he's on at the moment, or whether he's still open-minded about September and beyond.
If it is a structural issue and it's more of a supply issue than a demand issue, then ultimately, wouldn't this go against the potential rate cuts that a lot of people are predicting? Because ultimately, it would mean that this is a labor market that is just fine, and that the lower numbers are simply because there are fewer immigrants coming into the United States and because people are aging. If that's the case, it has pretty significant implications for where the neutral rate could be.
Also, there's been a lot of economists that have come on this program saying, what do you expect when it comes to the labor market report when companies continuously told us for months that at the moment they're just on the sidelines waiting to understand clarity from Washington, D.C. when it comes to tariff policy. So they're not going out and hiring a ton, but they're also not firing. So basically, you have a frozen labor market.
A frozen labour market. Looking ahead to more labour market data. Jobless claims on Thursday morning. And then, as we've repeated throughout this morning, the main event on Friday, Chairman Powell in Jackson Hole. Equities at the moment pulling back by about 0.1% on the S&P 500. Coming up this hour, we'll catch up with Jack Manley of JP Morgan Investment Management, with stocks sitting close to record highs. Anisha Sherman of Bernstein looking ahead to a key week of retail earnings. And Claudia Sam of New Century Advisors on why September Fed rate cut is not guaranteed. We begin this hour with stocks little changed as traders await the Fed's annual retreat in Jackson Hole. Jack Manley of JP Morgan Investment Management writing, while the Fed will likely succumb to cutting pressure in September, investors should realize that the trajectory for interest rates may not be as aggressively dovish as recent data suggest. Jack joins us now for more. Jack, good morning.
Good morning.
Just build on that quote a little bit more for us.
Yes. So I think, Lisa, you were bringing up a very interesting point there about what's going on with the labor market and how a lot of
that recent data have, I would say, maybe been misinterpreted. I mean, there's a reason why Powell talks about the unemployment rate and not necessarily about payroll gains, because when you are dealing with structural complaints or structural constraints to the supply side of labor, it would make sense that there are not as many hires out there. And Anne-Marie, you mentioned, right, that fires are still pretty low, right? Jobless claims are still pretty low. It is a reasonably tight labor market. So that, to your point, right, is one reason why perhaps we don't need as many cuts as perhaps the market is cheering for. I would also say you can get a sort of similar story out of last week's CPI data, right? I mean, we know that tariffs in one way or another are going to at least modestly increase goods prices. We know that companies have been able to pad their margins a little bit and so eat that a little bit through the first half. We know that businesses were able to build up inventories, but at some point that's coming here. And you also know that the underlying consumer seems to be doing pretty well. I mean, you have stock prices at all-time highs, as you said, John. You got a lot of fiscal stimulus coming down the pipeline. Again, further evidence that you don't need a ton of easing here. But I feel like we're in this weird cycle right now where we're all caught up around this idea that the Fed needs to shift to be aggressively dovish in monetary policy because we are on potentially the cusp of a recession. That, to me, is the wrong conversation to be having. Powell has very explicitly said that he considers monetary policy to be restrictive. You look at the dot plot, it tells you more or less the same thing. Why would policy be restrictive at a time when there is so much uncertainty? Why not downshift into neutral? So I can stomach the September cut or two. I can't stomach this idea that we're going to cut by 200 basis points. That, I don't think, is where we are right now.
What do you think neutral is?
Neutral is probably somewhere between 3 and 4, so let's call it 3.5%. It's difficult to see what neutral would be in a world where the labor market is structurally supply-side constrained, which maybe keeps wages a little bit firmer, which maybe keeps consumption a little bit stronger. Maybe neutral is higher than it was 5, 6 years ago, but neutral is not 4.5%, which is right around where we are right now.
So if the Fed does start getting to that place, is that supportive of valuations in markets where they are currently?
No, but it helps. I mean, like, I think it's very hard to look at equity market valuations today and say that, you know, a quarter point off of the Fed funds rate all of a sudden makes this okay. I don't think that's necessarily what's going on here. But at the same time, if you look at what's driving equity market valuations into the stratosphere, which frankly is where they are right now, it is still that very small handful of tech-focused names that investors are betting on over the long term. And that's important, this idea that we're looking out over the long run. I mean, you're not buying, you know, an AI hyper giant for the dividend they're going to pay next quarter or for, you know, the next 12 months of earnings. You're buying these companies because you think in 10 to 15 years, if you don't own them, you're going to be out of a job and in the, you know, in the line of the soup kitchen, right? I mean, that's why you're buying these things, to protect yourself against long-term structural changes to the economy, to generate wealth that way. And if that's how you're thinking about this stuff, you don't care about next 12-month earnings, which means you don't care about where valuations are right now. So I guess I answer that two ways, right? This idea that, like, on the one hand, a quarter point doesn't make much of a difference and valuations are pretty rich. On the other hand, maybe valuations don't matter as much when you're focused so much on these tech names that are inherently longer term.
So I was going to ask about whether it does help some of the rest of the 493, but the more that you talked, the more it sounded like you kind of think it's a bit of a tulip phenomenon, that you kind of are getting a little bit concerned about what you're seeing with people betting this as a card into the future, that if they lose their job and a robot takes over, they can at least get paid.
They got a slice of pie.
Exactly. I mean, is that essentially what you're saying?
I mean,
it's just bubblicious?
Sort of. I mean, could it be that I'm just sick to death of hearing about AI? Maybe. maybe I'm just jealous, you know? Maybe that's my problem. But I do think there is a little bit going on here where people are just awfully excited about this stuff and its ability to fundamentally transform every aspect of our lives as we know it. And frankly, it just hasn't yet. And I'm not a technologist. Maybe I'm something of a Luddite. But it's hard for me to imagine that over the next 12 months, there's going to be some sort of paradigm shift. You look at what's going on in the equity market right now, and I think that that's reflected. You know, what was very interesting is in the first quarter, even first half of this year, you were looking at a significant broadening out of participation when it comes to price performance. The Mag 7 accounted for 60% of the returns last year. They were accounting for 20-30% of the returns this year. That number has creeped up to now 50%, and we're looked to be heading higher. The market's back where it was, or heading at least in the direction of where it was last year and the year before, back on this AI hype train, and so yes, maybe a little bit of concern.
So what could be the catalyst for the downside then? Because the market's already pricing in rate cuts, AI, and the likes.
I would say policy change has the potential to be a catalyst for a downturn, in the sense that there's still a lot going on underneath the surface that we don't have a whole lot of clarity on. You know, this administration campaigned on this idea of making significant changes to a number of different policy buckets, and trade and tariffs have certainly been front of mind. Immigration kind of bubbles underneath the surface. There are other things out there that we don't hear as much about, I think, particularly on the regulatory side of things. And there is all this excitement about deregulation and its potential to turbocharge productivity and make a lot of these other problems go away. Let's see what happens on that front, right? Is deregulation really just aimed at crypto, or is it a broader story? So that, I think, could be one of the things that serves as a catalyst for at least short-term sell-off.
2026, what are you worried about in terms of policy uncertainty in Washington?
I think that going back to the regulatory stuff, I think that's important. I think that also, you know, we are at this interesting sort of geopolitical crossroads where the world feels kind of scary, and it's felt scary for a while, but maybe it feels a little bit scarier. Again, maybe I'm just, you know, spending more time reading about this stuff, and so I'm just a little bit more tuned in and a little bit more worried. But I think you have a market that, especially with where valuations are right now, with so much uncertainty from a policy perspective, so much uncertainty from a macro perspective, because nobody knows what the heck's going on, so much uncertainty from a rates perspective, you got a lot of opportunity for little shocks to the system. And I just think, I'm constructive on stocks. I think stocks go up. I know stocks go up over the long run. I think stocks go up probably over the short run. But I think you may see a lot of chop between now and whenever that'll be.
Do what Europeans do. Take August off, Jack.
I'd love it.
It's good.
I'd love it.
Jack Manley at JP Morgan Asset Management. Thank you, sir. What do they say? It's always a bubble if you don't own it. Something like that.
Yeah, well, I mean, look, I am sympathetic, though, with this view that people don't know how to value some sort of moonshot, right? And that's essentially what people are pouring into. I'm sympathetic to that view. I'm also sympathetic to the view of just being sick of reading about the same stories over and over again. So, Jack, I'm sure a lot of people are nodding along and saying, I want to take the rest of August off, too.
That sounds great to me.
European style. It's perfect. We should all sign up to it.
All right, but you actually signed up to the opposite, so you can explain why.
I'm slowly transitioning the whole of this company to the European style way of thinking in America.
Is that so?
Are you?
The biggest load of crap I've ever heard.
Where are you next week, Lisa?
Okay. I am going to be enjoying my life.
As you should.
Hiking.
A week's vacation.
Yeah,
there
exactly.
we go. Where are you tomorrow?
I'm supposed to be off.
On vacation. Let's get you an update on stories elsewhere this morning with your Bloomberg brief right here at Working. Here's Yahara. Hey, Yahara.
Hi, John. President Trump is hosting Ukrainian President Zelensky and European allies in Washington today. The goal is to set out terms for a potential peace deal with Russia, with the focus on territorial concessions and Kyiv seeking security guarantees. This after President Trump and Russian President Vladimir Putin met in Alaska with few details on what exactly was discussed. Meanwhile, hundreds of thousands of Israelis took to the streets to protest Prime Minister Benjamin Netanyahu's plan to expand operations in the Gaza Strip. Protesters are calling for the government to negotiate freedom for the remainder of the hostages to end the war, even if it means leaving parts of Hamas intact. Netanyahu suggesting the demonstrations would embolden Hamas. And President Trump is taking aim at mail-in ballots, posting on Truth Social just earlier. I am going to lead a movement to get rid of mail-in ballots, and also, while we're at it, highly inaccurate and very expensive and seriously controversial voting machines. Trump says he will sign an executive order that he says will help bring honesty to the midterms next year. That's your Bloomberg Brief. John?
Yahara, thank you. This is why I love financial markets. Don't have to talk about those stories.
I 100% agree with you.
Thank you,
exactly.
and move on.
Yeah, no, that's exactly how I feel about it. That's the reason why I love financial markets. It's sort of the collective view of what matters, and right now, that's not it.
What do you always say? How about those bonds?
Yeah.
How about those bonds?
Amen to that.
Up next, the Morning Calls Plus, Anisha Sherman of Bernstein, as the major retailers get set to report earnings through the week. From New York, this is Bloomberg.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest.
Every trading day.
Only on Bloomberg. In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
There's clearly some weakening in the jobs market. What's important about it is that it really undercuts this argument that a lot of hawks are making that the slowing in the jobs market is largely a supply-driven phenomenon. I mean, did we have a bunch of college graduates swarming across the border over the last 3 years? So I do think that demand is the principal reason why labor market conditions have slowed.
Neil Dusser of Renmark looking for a rate cut in September and looking for Chairman Powell maybe to lean into that idea just a little bit. Equity futures this morning negative by 0.1% as we count you down to the opening bell. That's your price action. Here are your morning calls. First up, Stifel raising its price target on Home Depot to 432, saying expectations for lower rates are driving out performance. Your second call from UBS slashing its price target on Lulu to 240, pointing to, quote, lackluster sales momentum and tariff-related headwinds. And finally, Evercore adding target to its tactical outperform list, forecasting increased earnings and near-term upside. Let's stick with retail. Investors looking ahead to a slew of retail earnings out this week with consumer sentiment sliding for the first time since April. Joining us now to discuss is Bloomberg's Anna Wong. Anna, welcome to the program. It's good to see you. It's been too long. I wanted to throw this at you. It comes from Mike Dada of Roth, who said, quote, overly restrictive monetary policy would by definition lead to inadequate nominal spending and income growth. He went on to say, we would likely also see credit spreads widen and inflation expectations fall, neither of which is happening. That's a case not to cut. Anna, would you take the other side?
Well, I think the issue right now is that the tariffs, whether they are biting, we haven't seen a tremendous evidence that it's biting partly because firms still have been stockpiling things and consumers are just starting to feel the bite of the tariffs. And I think the retail earnings later this week will show that we are starting to see just a little bit of a consumers hit from tariffs.
And just on the pre-tariff inventory, they clearly front-loaded a lot of product. How much of that are we still working through?
Well, it depends on the sector. So I think for toys and for Home Depot and the likes of Target, they haven't really front-loaded too much. It's just that they have been trying to raise prices, and yet consumers are pushing back slightly on it. But on the other things, such as sports equipment and audio equipment and photography equipment, those seems to be able to pass through tariffs quite briskly, and consumers are not really pushing back on those because consumers who are buying those stuff tend to be the ones who are higher income and are experiencing some income positive impact from the stock market rally in the last couple of months.
And just finally, are you expecting a sequence of cuts from September? Is it the start of something bigger?
We are not so sure that there's a cut in September yet, given that, as I mentioned, the evidence of a tariff biting on the economy is not yet really showing, and the demand side slowed down in the labor market is just slightly faster than supply side, not tremendously faster. So I think our call is still for a December rate cut.
Anna Wong of Bloomberg Economics. Anna, thank you. Looking for December and not September. Joining us now to discuss, Anisha Sherman of Bernstein. Anisha, welcome to the program. We had that conversation just briefly there about product. How much pre-tariff product do you think is on the shelves of these companies that report this week?
There's not much left. So there was a lot of stockpiling in January to March this year. Then there was a freeze when the April tariffs came out. And then there was a little bit more that came in May and June during the pause rates. But the flip side to stockpiling product is having an inventory glut and then having to clear it at massive discounts. And this is exactly what the retail sector went through 2 years ago in 2022, when a lot of product was brought in, stockpiled, and then 2022 and 23 saw aggressive clearance and a lot of hurting margins. And retailers are wary of that because they're primarily worried about demand. And as your economist just said, we haven't seen the demand impact yet of price increases. We're going to see that now in the next coming weeks. We've already seen consumer sentiment dipping and inflation expectations going up from the Michigan survey work. So it seems to suggest there should be a pullback in demand. We haven't seen it yet. So retailers are very nervous and they're actually underbuying. And I think there's more of a risk of stock outs in the holiday period than there is of an inventory oversupply and pull forward.
Which raises the question, Anisha, about pricing power and whether we are going to see prices go up and whether it could really start with Walmart on Thursday, since they are the biggest non-public employer in America. Could you start to see an indication that they're going to have to raise prices?
They are doing it already. I mean, we are already seeing big retailers. Walmart's already said they're taking pricing up. Many of the companies in my coverage around sporting goods, sports apparel, footwear, discretionary retail, they've already started taking pricing up. It hasn't been peanut buttering a price increase on every item. It's been very strategic and careful and trying not to throw off consumers, but they have been doing it. And so the question is, has that driven some price elasticity yet? It perhaps might be too early to tell, but also I think where the indication of that will be in how they guide for the next quarter. Q3 started in August, and so we're already a few weeks into it. How they guide for Q3 based on their expectations of demand and price elasticity will be really indicative of what the trends are they're seeing at the moment and how much we should worry about this.
How much, Nisha, from the companies that you covered, do you get the sense that people are trading down, that wealthier consumers are trying to cut costs on the edge, or is it the opposite? Are some of the discounters trying to cater to wealthier consumers since they continue to spend? They're the ones supporting the American consumption economy, whereas the lower income consumers have really fallen behind in a material way.
We are seeing trade down behavior. So retailers that offer a good value proposition, mass retailers, off-price retailers are seeing those traffic gains. And the ones that are losing are the ones in the middle. So if you are premium or high end, you're probably a little bit more resilient. We saw Tapestry reporting last week. They said Coach growth in North America is 16%. So there are companies at the higher end that are still doing fine. It's the middle that's getting pulled in a little bit, and this trade down is happening to value. And so some of those value retailers that report this week should see some positive comps. So we are seeing some trade down behavior. It's not a massive move yet because, as I said, those price increases haven't quite rolled out fully yet, but they've definitely started. And so I think that's the real-time data we're looking at now.
Anisha, you said those price increases, they've been strategic when it comes to consumers. Have they been strategic when it comes to the White House? On Friday, there was this Axios report that the White House is keeping track of all of these companies and how much they're a part of the Trump agenda. When these retailers report and then get on the earnings call, how careful do they need to be with their words, thinking of an audience of one?
That's an excellent point, and they have been. And if you look at how they've been talking about it, they've been very careful to talk about price increases, and they've talked about it in a way that is, they're doing it very carefully. They're being strategic. They're continuing to offer value. They are not talking about it very bullishly in the sense of kind of slapping a price increase on everything, because that is one of the concerns they're concerned about. It's not just the demand side. It's also the implications of talking too aggressively about a price increase.
Anisha, just finally, what's your top pick right now? What are you advocating for to clients?
I really like TJX. I think, we could see a dip if the earnings are in line because, if we're expecting a rate cut, a safer name like TJX could get sold off. If it does, I would be buying into that dip. This is a rock solid name into the second half. If there's any moderation in consumer demand, any pullback, any trade down, this one should be resilient and should be a beneficiary and a share gainer.
Anisha, you're one of the best. Appreciate your time. Thank you. Anisha Sherman there of Bernstein on the retailers right now. We've seen the decline, the deceleration in fast casual restaurants. I'm thinking of Carver, I'm thinking of Chipotle. I just wonder how much of that is going to show up in these numbers later this week.
Yeah, especially because right now it really is a tale of two different companies when you have the winners and the losers. For example, you have Chipotle coming out and saying that their fried chicken burrito didn't really work. And then you have McDonald's coming out and saying that their Happy Meals were great. So put them together and ultimately it's very difficult to get.
Have you tried that, the fried chicken burrito? Is that a thing?
I haven't, but I was looking at some of the granular explanations for why Chipotle underperformed, and that didn't overcome the PR miss for not putting enough chicken in the burrito bowl. That was what I found.
I missed this. Was that actually a thing that took place? People complained about that.
Oh, they measured it. It became a social media fad.
How did I miss this?
I have no idea. That seems like something you
very
totally
online. I would pick up on these
Exactly. You
things.
absolutely would say, you know, are we getting cheated out of our chicken?
Because you don't eat Chipotle.
Exactly. So
No, sure, but I'm on Twitter. I'm on X.
But this was a very, you know, very vehement argument. It was something people felt very strongly about. And then on the flip side, you know, people love Happy Meals and the Happy Meals.
5 hours of doom scrolling every single day, and I managed to miss that story. All right, up next, Claudia Sam of New Century Advisors on why September rate cut is likely, but not in the bag. Plus, Danny Berger with your morning movers as the rally continues for United Health. That stock is up again by 2.7% so far this morning. From New York City, you're watching Bloomberg TV.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Take technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Coming into Monday, close to all-time highs on the S&P 500, and credit spreads haven't been tighter on this side of the century. Equity futures negative by 0.1% on the Nasdaq 100, down by 0.14. In the bond market, looking ahead to Chairman Powell, bond yields just about unchanged on a 2-year 374, on 10s, giving up some of the rally on a 10-year 431, and the long end of the curve. Bramo, coming into sharper focus, I would say, going into that meeting next month.
Yeah, a real question about how much they can cut while keeping some sort of cap on how high long yields can go, because ultimately everyone keeps saying mortgage rates are too high, lower rates, and it's sort of a head scratch when you think that they lowered rates by 100 basis points last year, and long-term rates, the mortgage rates, they rose.
I'm not going to say this is a conversation at the FMC right now, at least not in public, but this is a conversation in markets big time. Pretty much everyone in fixed income is talking about this. Could we see a repeat of last year? And I go one step further. The market conversation, as you know, is about what the Fed might be able to do about it with a new Fed chair a year from now.
If you have somebody who truly is an activist Fed chair, could they deploy the balance sheet in a way of Operation Twist or even more aggressively yield curve control, which would be a pretty jarring departure at a time where there hasn't necessarily been a financial crisis.
The difference between 2s and 30s this morning, about 117. With 1 hour away from the cash open, 60 minutes away from the opening bell with your morning movers, here's Danny Berger. Hey, Danny.
Hey, John. United Healthcare for a second consecutive trading day. It looks like it will be outperforming. It's up nearly 3% in the pre-market. On Friday, it rallied 12% after Berkshire Hathaway and other hedge funds added to their share in the latest hedge fund filing. Of course, United Healthcare has been beaten up this year, issues with poor earnings and otherwise really weighing down on the stock. We're also looking at Target outperforming this morning, rallying into its earnings on Wednesday. It was up more than 1%, that ebbing a little bit, just up about 0.9%. Evercore adding it to its tactical outperform list, saying that the expectations are reasonable for Target and it sees no reason to downgrade them in their earnings. Again, those come August 20th. Finally, Novo Nordisk, those ADRs rallying in the pre-market session, up 3%. Eli Lilly, those sink by about 1/3%. Their Wegovy got approval to treat a rare liver disease in the U.S., beating out its competitor Lilly to do so. John?
Thank you. Appreciate it, Danny. Thank you very much. Danny Berger there with your morning movers. A busy week of data and Fed speak ahead with a highly anticipated speech from Fed Chair Jay Powell just days away. Looking ahead to it is Mike McKee. Mike, welcome back to the program. Good to see you in Jackson Hole, Wyoming. What can we look forward to later this week?
Well, that's what you're looking forward to, John, later this week, because there isn't much going on other than we have a bunch of housing numbers coming out this week. Home builder confidence today, and we get existing home sales and housing starts. And everybody knows that the housing industry is in trouble right now. But Wednesday, we get Fed minutes. People will be looking back to see what the Fed was thinking about a September meeting. And then Friday, maybe Jay Powell tells us, I know you guys have been talking about this all morning, will he give us some sort of hint, as he did last year when he said it was time for the Fed to start cutting rates? Or will he say, we need to see more data? Or will he touch the subject at all, because it's long been thought that he's going to tell us something about the Fed's new framework review and how the Fed will look at doing their monetary policy decisions in the future?
Mike, a lot of people have priced in a lot from this Federal Reserve starting in September, beyond this year, going into 2026. I've seen a lot of pushback over the past week, Mike, from Mike Dada, from John Riding, from Mike Gapin over at Morgan Stanley. Mike Gapin said if Chair Powell wants to retain optionality, he will likely push back against market pricing at Jackson Hole. Is that a consideration, Mike, from the people you've spoken to going into Friday?
It is a consideration, and there are some economists out here that we have talked to the last couple of days, and the feeling is that Powell does need optionality because of what's happened with the inflation numbers over the past week or so. and they don't want to go into the meeting with the markets having so firmly priced a cut that there would be a big market disruption if they didn't deliver. So my bet at this point would be that he tries to walk a very fine line without confirming anything about September unless they are really ready to go. And with the data the way it is, it's hard to say that's the case.
Mike McKee, looking forward to your coverage, sir. As always, Michael, thank you. Things can change again in early September when we get that payrolls reprint, and a week later when we hear the latest on CPI.
That's why Andrew Hollenhorst over at Citi just put out a note saying that it is unlikely that he is going to commit to a cut next month because he is awaiting that jobs and inflation data coming out in the next few weeks. He might signal a willingness, but commit, what's the upside?
Let's stay on this topic. Claudia Sam of New Century Advisors writing, now is the right time for the framework review. The changes to the framework this week will largely reverse key changes made 5 years ago. Claudia joins us now for more. Claudia, welcome to the programme. Let's just start with that speech on Friday and the decision a month away. Just how finely balanced are things at the moment?
The Fed is facing a really difficult decision. It's clear from the recent data, particularly employment data, that we have a dual mandate that is in conflict. And that is the hardest situation for the Fed to navigate. It's something that they talk about in their framework. I'm sure he'll talk about that on Friday. But it's, this is tricky. And there's no, that's why they need the data. They need each individually as members to think about their outlooks, their forecasts, where does this land? So that's why I think it's appropriate for Powell to outline how tricky the decision is, as opposed to like trying to, it's September, it's October, like not get into timing, just lay out what it is that they're trying to deliberate on.
So, Claudia, let's get into that. The idea of the framework. There's on one hand the 2% inflation target, which they already have talked about average targeting, and they're going to have to illuminate on that and discuss whether they want to actually increase that target slightly. And then there's a question of how they treat policy when there is a conflict between the dual mandate. So what are you expecting them to come out with, and how much could that actually shift market expectations of how much they'll cut?
Right, so there's going to be a lot changing in the framework. I think if you're wanting to understand current policy, maybe you can set some of that to the side because it reflects assumptions that the pandemic overturned and they're kind of catching up in their strategies and tools. The pieces of the framework that aren't changing on Friday are some of the ones most important right now. So the 2% target, Powell has said repeatedly it was off the table for this framework review. Like they will affirm the 2% target, and let's all remember we've been above 2% for more than 4 years, right? So that setting is important. And then the piece that will get a little tweak but probably remain intact is how they deal with when the mandate's in tension. They think about how far do we expect this to get off track, and how long is it going to take us to get back to the goal for each the employment and the inflation mandate? And I think, again, if you look at the data we have in hand and we think hard about where inflation is and where it's been the last 4 years, inflation still comes up on top as the primary concern of the Fed, and thus calls for the restrictive rate cuts. But it's a very dynamic situation. New data comes out on the labor market. The risks are, things could move pretty fast. But like those two pieces of the framework, I think are really, really important for like thinking about how does the Fed go forward as they're learning more about the economy.
For people who are listening to this and think that it's an academic exercise and coming up with different puzzles to put things together, it's actually incredibly important to understand whether this is just an inherently dovish Fed, whether this is a Fed that wants to prolong the economic cycle for as long as possible because it takes so long to get jobs back when there is some sort of huge wave of layoffs. Do you expect them to sort of codify that type of approach, which has been the assumption right now in markets for a long time, that they are more willing to allow inflation to be higher for longer in order to avoid that type of punitive and long-lasting reaction in labor markets?
So I'm somewhat concerned that the new framework is going to be read as hawkish, like not, going to bat for the labor market in the same sense. I don't think that's the right interpretation. I think when the changes were made to the framework 5 years ago, we were in, the years after the global financial crisis, low inflation, low interest rates, unemployment rate was low. The Fed was like trying to find tools to give some more oomph to the economy to keep us away from the zero lower bound. And so there were changes made tolerating unemployment that gets unusually low because, that could be good for the labor market going forward. And it didn't cause inflation in the past. And allowing for a period of time modestly above 2% inflation. Again, that was all about giving the economy some extra oomph. The last 5 years, the problem has not been the extra oomph in the economy. Like, we had inflation risk that really came back. We had labor shortages for a period of time. So there's going to be changes that reflect some of the challenges the Fed has seen in the last 5 years, but I would not see that as a fundamental, oh, we need to, put less emphasis on the labor market. It's realizing that we have some new challenges. I think we'll see some more about like the supply side of the labor market, structural changes that we're seeing that could get mentioned as well. So it's a tricky document to read, but I don't think one should come at this and say, oh, the Fed is, going to leave the labor market behind. I think it's just really balancing the challenges they face with inflation with the challenges they face with the labor market.
Claudia, before spending a little bit more time on the labour market, can I just ask a perhaps obvious question for people sitting at home? What's the value of a framework review conducted by a lame duck Fed chair?
Right, so this is absolutely the right time for the framework review. The Fed started this in 2012. They started with a framework. It's about transparency. It's a communication tool. It is to clearly explain. It's a short document. It's pretty dense, but it's a short document to explain their principles, their strategies, big picture, high level. What are they doing? They started doing the 5-year reviews in 2020. Again, this is about transparency and accountability and having processes that they can be judged against. And it is true. This is, in all likelihood, Powell's last speech at Jackson Hole as Fed chair. And yet, the framework is not the Fed chair's framework. It's the committee's framework. It is an agreement that they make together, and it isn't about one person. And also, this has been his tenure the last 5 years. So an exercise in accountability and them saying, some of the assumptions we made in 2020, those didn't turn out to be the right assumptions. We've got to make some adjustments. So it's a great time. And above all, they told us 5 years ago they were going to do this review. There's a lot that's changed. This is not a comfortable environment for the Fed to be out in public.
True.
But they're doing the review. And that is so reassuring that we have a process that's working as planned.
We'd love to hear your assumptions on a few things, and particularly the labour market. So let's start with that. You know the source of great division on Wall Street at the moment, and that's whether the step down in payrolls growth is a factor because of what we've seen in the economy, a cyclical turn, or maybe a structural shift with what we've seen on the supply side of the labour market. Claudia, do you have a bias as to which one it is right now?
It's almost certainly both. I think there's a lot of supply side in there right now. And we can see this utilization numbers, like the unemployment rate has been basically flat, right? So we're not seeing the unemployment rate climb as of yet. And also wage growth has not really, weakened. And those would be signs that it's demand. Now, there are absolutely risks in the labor market, and they're not hypothetical anymore. We can point to data that slowing jobs growth could be a real issue. And yet there are policies, supply policies that are at play too. And when we think about the Fed and the way the Fed thinks about the labor market, it's important to remember the Fed does not fight the trend. It can't fight the labor supply. It's trying to smooth out the sharp movements in demand that, can cause, a weakening in the labor market. So it's a tricky situation, but I think there really are signs that a good bit of this is supply, and it is almost exactly the reverse of what we were trying to sift through last year when we had the surge in immigration.
Claudia, this makes it really, really difficult to communicate anything at the Federal Reserve. And given the title of this year's get-together is a labour market in transition, do you believe that the chairman has to make a call here going into September as to the dominant factor he thinks is driving markets, the labour market specifically, at the moment?
I doubt that he'll give us the full picture. I mean, it's one that's still developing. Again, I think by widening and not just saying, oh, well, yes, labor market's weakening, that job growth is too low. Like, he's not going to make a definitive statement that things are really, the risks are really rising rapidly. I think it'll lay out all the different pieces that they're grappling with. And what better thing for them to spend a weekend grappling with the research and talking to scholars and people in the area than structural changes in the labor market? Right? Like, they need to be as on the cutting edge as they can be as they sift through the data and they decide the policy, but they're not there yet. And he's not going to front run the committee and make the decision for September. What possible good would that do? He can be transparent about the process, be honest about what they see in the data, and, we'll see where this goes in terms of a decision. I do expect him to affirm that the next move will probably be a cut, right? We're talking about timing here.
Yep.
We're not, talking about, do they raise rates next? So I think, we just keep it all in context. We're not going to get the answer that maybe investors are looking for, but that's because the Fed is still deliberating.
Claudia Sam with the latest on the labour market and the Federal Reserve. Claudia, thank you. Claudia Sam of New Century Advisors. He's not going to get over his skis here. We've got 2 more big data points to come in the next month. He is facing down a very divided Federal Reserve. How committed can he be to a September call? And we've heard a lot of people on the programme already this morning saying probably a very non-committal Fed chair on Friday.
Yeah, this was what I was trying to get at, not just that I was going to go hiking, but that ultimately, if you're looking for a clean answer in Jackson Hole, you're probably not going to get it. You are going to get a framework, and then people will tell you whether it's dovish or hawkish, and you're going to hear them then discuss that for the next 2 weeks because there isn't a lot of other news for them to discuss. But ultimately, that is going to be the tenor of discussion coming out of Jackson Hole.
What's the source of the step down in payrolls growth in the labour market? I think that's ultimately the key question for me into Friday. We haven't heard really from the chairman since we had that payrolls report, and that's going to be what sets up this market going forward, I think.
Is this just an issue of people not coming into the country as quickly or even departing, and not necessarily a sign of real weakness under the hood? And that really is the key question for policy going forward.
Remember that line, an ounce of protection is worth a pound of cure? Cut now so you don't have to cut even more later on. I wonder if that argument wins out in September too.
At the same time, what we just heard from Claudia Sam, really key. That worked at a time where we were combating low inflation, where we were combating the zero bound. Does that work at a time where inflation is very much of a preeminent concern?
The Fed's bias is still to ease. How constrained is that easing bias? We'll have that debate through the week as we anticipate that speech from Chairman Powell going into Friday. Let's get you an update on stories worldwide with your Bloomberg Brief. Let's cross over to Yahira. Hey, Yahira.
Hi, John. More troops are heading to Washington. GOP governors from South Carolina, West Virginia, and Ohio are deploying additional National Guard personnel to D.C. at the Trump administration's request. West Virginia said it would send up to 400, South Carolina 200, and Ohio 150, adding to the 800 already mobilized in the nation's capital to combat crime, according to President Trump. Meanwhile, White House trade advisor Peter Navarro is out with some strong criticism of India's purchases of Russian oil. In an FT piece, he writes, American consumers buy Indian goods, and India uses those dollars to buy discounted Russian crude. He went on to say India needs to start acting like a strategic partner of the U.S. if it wants to be treated as one. And gotta mention this one again because it was incredible. Scotty Scheffler pulled off an incredible shot to win the 2025 BMW Championship yesterday. The world's #1 landed a wild chip in on the 17th hole at Caves Valley in Maryland. The 2-shot win over Bobby McIntyre was Scheffler's 5th of the season and his 12th in the last 2 years on the PGA Tour. Incredible. That's your Bloomberg Brief. John?
Ton of money as well. Yahara, thank you. I think there's a $40 million purse at the Tour Championship next week. So congrats, Scotty, on another big win. Up next on the program, we'll set you up for the day ahead. We'll catch up with Mike McKee to look ahead to that big Federal Reserve speech coming up on Friday.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
I think the Fed should cut, but I think they're going to cut for the wrong reason. You don't want to have a scenario where tech and tech capex slows down and you can't hand the baton off to that other part of the economy that's struggling. If you keep rates this restrictive for longer and you punish those parts of the economy so severely, you won't be able to hand off that baton. You're going to have to cut. You're moving in that direction.
That was Steve Chevron of Federated Hermes looking ahead to rate cuts from the Federal Reserve. But he thinks this economy is about to re-accelerate, and he's still bullish this market. A market that comes into a brand new trading week close to all-time highs, down just 0.1% on the S&P 500, down by a similar amount on the NASDAQ 100. That's the price action as we count you down to the opening bout, about 40 minutes away. Here's the trading diary for the week ahead. Later on today, President Trump hosting Ukrainian President Volodymyr Zelensky and other European leaders at the White House. Tomorrow, Home Depot earnings. Wednesday, Fed Minutes Plus, results from Lowe's and Target. On Thursday, another round of jobless claims and earnings from Walmart. And on Friday, it's the main event on Friday, remarks from Fed Chair Jay Powell in Jackson Hole. Down in Jackson Hole, Bloomberg's Mike McKee is back with us for more. Mike, looking forward to a conversation you're set to have through the week with Governor Mickey Bowman. One of the dissents, Mike, how aggressive is that dissent going to be in a month to come if they don't cut interest rates?
Well, that's an interesting question because she gave a speech at the end of last week suggesting that she still believes they should cut in September and that they should cut 3 times this year. So she's still in that camp of the job numbers are bad, and that suggested that the economy is slowing down and the Fed should get ahead of it. Chris Waller has reaffirmed he's still in kind of the same position. So we'll have those two. The open question is, would there be a possibility that Stephen Myron would be confirmed by then and add a third dissent? I'm not sure Jay Powell would care since he's going to be leaving. And at this point, the rest of the Fed doesn't seem ready to cut rates, but they're moving in that direction if the data continue to show weakness.
Mike, I just got this message as you and I are talking. It comes from a Bloomberg subscriber. They say this: cutting more now so they don't have to do more in the future would be irresponsible for the Fed. It would create an even bigger bubble, assuming there is one right now, which would create another crisis when it inevitably bursts. That's just a view from Wall Street at the moment, Mike. But Lisa asked a similar question. Equities at all-time highs, credit spreads very tight. From the market's perspective, is this a market screaming for rate cuts?
The market is screaming for rate cuts because the wish is always father to the man. But remember what happened in 2000 when the Fed started cutting rates. We ended up having a bubble burst, and we had a problem with the economy. It wasn't as bad as some others, but the Fed is aware of that, and they're going to be very cautious about what they do. They also recognize that a lot of this is psychological. They cut rates, the markets go up, everybody's happy, but the rate cut doesn't hit the economy until sometime next year. So it's all a question of managing expectations, which will make Jay Powell's speech even more interesting.
Mike McKee, looking forward to catching up with you through the week, and Lisa will be on our way with TCAN the next couple of days, so looking forward to that too. Michael, thank you, sir. Financial conditions versus economic conditions. I think it was Neil Dutta of Rentmac talking about that a little bit earlier on this morning. There's a key distinction to make.
Yeah, although at the same time, what happens is if you try to ease financial, monetary conditions, then financial conditions will just get that much easier. So even though economic conditions might be relatively tight when it comes to lower income consumers and credit card debt, which is usually pegged to the front end, it's not clear that really it's going to help things as much as it might hurt if you do cut rates and foster asset prices just to go that much higher.
We've both been to a few of these. This one feels different. The president really does loom large going into this meeting. Now, of course, Chairman Powell is very unlikely to address that head on, but it's something that looms large for a lot of us all to think about at that particular get-together.
I'll give you this anecdote. Earlier this year, at the IMF spring meetings, there was a talk behind closed doors where Jay Powell spoke to other central bankers from around the world and reiterated the importance of the independence of the central bank. And there was a standing ovation for a prolonged period of time, according to a number of sources who are in the room. And it just underscores how they're not going to come out and talk about it publicly, but it is very much there present in their minds.
But also, this is, in a sense, a legacy speech for Jay Powell. This is his final Jackson Hole before he has to give up his chairmanship. And Mike McKee just said it there. Why does he care? He's on his way out. Well, is he? He has yet to tell the president or the Treasury Secretary that he is going to give up his governor's seat when his chairmanship ends.
Conducting a framework review as a lame duck Fed chair. That's quite a challenging moment.
Yeah, although, as we heard from Claudia Sahm, it also might be a chance for him to say, look, this is what we got wrong, and this is what we got right. This is how I understand the record. I'm going to define my record before somebody else does it for me.
I think they're already trying to do it for him.
I am positive they are, so might as well get his view and throw it in the ring.
He's going to try at least that coming Friday, this coming Friday. That's the main event for financial markets worldwide. Equity's doing okay, down by about 0.1% on the S&P. Coming up tomorrow, the coverage continues. We'll catch up with Brian Levitt of Invesco. We'll speak to Sarah Hunt of Alpine Saxon Woods, Priya Misra of JP Morgan Asset Management, and Jim Caron of Morgan Stanley. Equities close to all-time highs. Credit spreads are tight, and we're having a conversation about the Federal Reserve delivering rate cuts next month. From New York City, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance. It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
in case you missed it on the close.
With regards to the electric vehicle business, when we talk about the commitment to new models and more importantly, commitment to the infrastructure to support that, what's the plan?
We're starting to see different kinds of hybrids that customers are excited about. E-revs, which go about 100 miles, all electric, but then you could take a 700-mile trip once in a while. Those look really promising for a three-row crossover like Explorer. We're going very low end, super affordable EVs for urban duty cycles and for commercial. We're not going to invest in a lot of the very expensive crossovers for pure EV. We think that's going to be a hybrid business.
What does the supply chain look like specifically for the EV and hybrid business right now?
We've moved out our cycle plans. We've focused on affordable and commercial. We're fortunate we moved 3 or 4 years ago and we could tilt to hybrid and a specific kind of EV. And the supply chain has been able to move with us so far.
Don't miss the close, live every weekday.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Futures, a little change to kick off the week. 30 minutes, though, until the start of trading. We're hoping to get pumped up today. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, geopolitics back in the spotlight as Ukraine's president and his European allies head to the White House. Meanwhile, central bankers are flocking to Jackson Hole, where Fed Chair Powell could signal a shift in policy, and retail earnings are on deck this week as we head into the final stretch of earnings season. It does come to an end. Katie, what are you watching?
I'm keeping an eye on shares of Novo Nordisk right now. The FDA approved Novo Nordisk's weight loss drug Wegovy to treat a serious form of liver disease. That is welcome news, of course, for shareholders, considering this stock is down about 39% year to date. They'll chip away at some of that today if this gain holds, currently up about 3.6% pre-market.
All right, from healthcare to the health of the consumer, we're going to get a look today at what tariffs have done in terms of costs and earnings from Walmart, Target, Home Depot, and more all week long. So we're going to focus in on the retailers. You can see they're moving in slightly different directions ahead of the start of trading on this Monday, but this is going to be a very busy week for retail numbers, Katie.
Absolutely. We'll dig into all of that coming up, but let's get back to geopolitics. Ukrainian President Volodymyr Zelensky and his European allies will be at the White House this afternoon to find out what President Trump learned at his summit with Vladimir Putin. A deal, however, not in sight.
I believe we had a very productive meeting. There were many, many points that we agreed on, most of them, I would say, a couple of big ones that we haven't quite gotten there, but we've made some headway. So there's no deal until there's a deal.
Let's bring in Bloomberg's Anne-Marie Horton, our chief political correspondent, co-host of Surveillance, and a lot of pomp and circumstance with little in terms of results, right? What did the president get in Alaska, first of all, in terms of deliverables for today?
Well, a lot remains to be seen. We all left there kind of scratching our heads. It felt very awkward at the end of that press conference because this is a president that has a propensity to want to take questions, to want to brief the press. Vladimir Putin spoke first. He talked about there were agreements. He also talked about the fact that in this meeting, it went beyond just Ukraine. He said he wanted the U.S. and Russia to get back to more pragmatic and a more business-like approach. And the president was really clear, though. He said there's no deal until there's a deal. And he put a lot of weight on the fact that he had to go take these conversations that he had with Putin back to his European counterparts, and most importantly, to Volodymyr Zelensky. Not just did he brief them, but now you have these European leaders descending on Washington, D.C., as well as President Zelensky. But then throughout the weekend, we got a little bit more details because Secretary Rubio went on the Sunday shows, as well as Ambassador Steve Witkoff. And it seems like there's two basically paths at play. One, there needs to be a serious discussion about territory, and this is really the third rail when it comes to Ukraine. Are they willing to give up what Putin wants, which is all of the Donbass? And it's not just the land that Ukraine currently holds, most notably about 25% in Donetsk. It's the fact that they've been able to fortify 3 major cities to actually have a defense posture. Without that, it's pretty much wide open if Russia wanted to have another incursion. Then the other big takeaway is going to be security guarantees. Steve Witkoff talked a lot about this over the weekend. What does this, like Article 5 NATO security arrangement, actually mean? What is the U.S. willing to give? This is interesting because this is the conversation Zelensky wanted to have 6 months ago when he was in the Oval Office and they had that huge blow-up.
And I have to imagine that security guarantees from the part of President Zelensky will be the big topic of conversation, as you say. When it comes to U.S. involvement, what messaging have we gotten from the president when it comes to that topic?
Well, this is the issue. We need the details. If it's not going to be NATO, what does NATO like Article 5 actually mean? The fact is, we don't know yet. Even his own aides were talking about these are concepts of a plan, ideas of a plan. It was floated months ago by the Italian leader, Giorgia Meloni, who's going to be there in the room. Can they get to an agreement where Zelensky feels like it is enough an insurance that he can take this back and basically give a concession potentially when it comes to territory and land, which is going to be really challenging for him to accept and then bring back to the Ukrainian people? Does it mean American boots on the ground? Likely not. But also you have to think there were security assurances or guarantees or agreements in the past. There was a Budapest Memorandum in 1994. There's been a number of Minsk agreements. It actually hasn't stopped in terms of Putin's incursions on Ukraine.
Important context there. Hoping to get more details this afternoon. That is Bloomberg's Anne-Marie Hordern, fresh off a trip to Alaska. Traders will also have their eyes on Jackson Hole this week, where Fed Chair Jerome Powell is set to deliver his annual speech on Friday. Here to take a look at the week ahead is Michael McKee. He is Bloomberg International Economics and Policy Correspondent. He joins us from Jackson, Wyoming. So, Mike, you think about the stage of Jackson Hole. This is an opportunity that Fed chairs often take to make policy pronouncements. It's also Jerome Powell's last speech as chairman of the Federal Reserve. What are we expecting on Friday?
Well, we're not exactly sure. Originally, the thought was he would unveil the changes the Fed is making to its framework of how they look at monetary policy. But now there's this added aspect of, are they going to cut rates in September? The Fed has wanted to keep their options open. So Powell may not go so far as he did last year when he said it was time to cut rates, and the markets took off at that point. Because if they get to September and we have inflation rising, and they still have poor employment numbers, the Fed's going to be in a dilemma. So he doesn't want the markets to lock in on a rate cut, but he does want to give some hope that the Fed is aware of what's going on in the economy. It'll be a tightrope for him to walk.
All right, Mike, thanks very much. Mike McKee, we're going to be checking back in with you a lot this week out of Jackson Hole. This week is also going to be a very busy one for retail earnings. As I said at the top, Home Depot reports, Target, Lowe's, Walmart, all of them out this week. The results will shine a spotlight on the health of the U.S. consumer, important to those at Jackson Hole as well. Joining us now here in New York City is Bloomberg stocks reporter Matthew Griffin. So, Matthew, what are we hoping to learn specifically about the consumer in these reports?
It's worth thinking about the context that we're in here, which is that corporate earnings growth kind of broadly has held up really well this quarter. At the same time, there are reasons to believe that the full impact of the tariffs that have gone into place has not been felt yet. So investors are looking for signs of where we're going, and we could get some of that out of these reports. There's a few things. One, are consumers continuing to spend, or are they pulling back? Two, are they trading down to cheaper goods because they're under pressure? And three, really crucially, are companies eating the impact of tariffs themselves? Are they paying those costs, which could weigh on their margins? Or are they passing them on to the U.S. consumer, which could just pile on more pressure?
Well, that is the big question, right? Across industries, but it's particularly urgent when it comes to some of these retail names. We have heard from some companies in this sector already. I think about Tapestry, for example. What can we extrapolate out from what we've already heard into what we're going to get this week?
So I think all we can say really broadly is we may be in for a little bit of volatility. I mean, Tapestry, investors punished them after they said that tariffs would hit their bottom line. If you think about retail kind of broadly, Advance Auto Parts, similar commentary, similar reaction. At the same time, not all of these companies are they function the same, and that's worth keeping in mind. So your companies that sell staple goods, your food, your toilet paper, are a little bit more insulated. Walmart's in that category. It's worth keeping in mind, too, at the same time, that some of those companies are priced to reflect that. Walmart is an expensive stock, so the upside could be limited there. But yeah, again, we could just be in for some volatility, even if things are strong in a general sense.
Absolutely, and it's important to keep in mind, like you said, we can't paint with a broad brush here. There's a lot of idiosyncrasies. Why did I say that word? That's a hard one. Anyway, there's a lot of nuance. Matt Griffin, great preview of the retail earnings we have.
Idiosyncrasies.
There you go. You can be in charge of saying that word from now on. We do have some breaking news. We mentioned Novo Nordisk at the top of the show, and we just got this news at 9 a.m. that the pharma company is partnering with GoodRx to offer its GLP-1 drugs, Ozempic and Wegovy, for $500, $499 to be exact. That is half the list price. You can see the stock is rising on the news here. We know that, of course, the price tag on these drugs,
it's so fascinating that they've made it seem like that's a deal. So, but you're still paying essentially a car lease, right, to get these drugs.
Yeah.
And probably, you know, not even a few milliliters are costing you $125 a week.
Well, I have great news for you and for our viewers. We're going to speak with Wendy Barnes. She's the GoodRx CEO on this news later on in the show at about 10:10 a.m.
Yeah, I'm very much looking forward to that.
Yeah, it should be a good conversation. Let's quickly check on futures here in the pre-market. It's a brand new trading week, and we are about 20 minutes away from the opening bell. There wasn't too much movement when we checked about 10 minutes ago. It's pretty much the same conversation. Right now, the S&P 500, the NASDAQ 100 down slightly in the pre-market trade. The Russell 2000 peeking into the green here, but not too much action. But we know it's a very hefty week on the earnings front, the geopolitical front, and of course the economic front as well.
Yeah, that's right. We have Palo Alto earnings coming up. They should provide shareholders more detail about the $25 billion deal for CyberArk, and then of course all the consumer news that we talked about, Jackson Hole, geopolitical. There's a lot going on that you don't see in the little movement of the indexes. This is Open Interest.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times, it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Making money isn't about drowning in emotions.
It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Let's get now to high interest. Look at what's making headlines around the world. United Health is extending its Friday rally. The move sparked by a filing showing Warren Buffett's Berkshire Hathaway bought 5 million shares in the quarter. David Tepper's Appaloosa Management also bought shares, 2.3 million to be exact, in the United Health. Soho House has agreed to go private in a deal worth $2.7 billion. The members club said hotel owner MCR and its CEO will buy outstanding shares not held by certain shareholders for about $9 each. You can see the shares trading at $8.88. That's got to be good luck somewhere. Buyout firm Thoma Bravo is also in talks on a take private for Dayforce, a human resources management software provider. Sources telling us here at Bloomberg that a deal to take the company private could be announced as soon as in the next few weeks. And you can see those shares up 24%. Katie?
All right, Palo Alto out with earnings after the bell today. You have shares up nearly 2% this year. That's just about flat as investors await more details about its $25 billion bid for CyberArk. Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh, says that the deal could drag on operating margin, but help competition against Amazon, Google, and Microsoft. I'm pleased to say that Mandeep joins us now. So talk us through that, because yes, that's a very big price tag, but it seems like when it comes to the fundamentals of the company, that this acquisition will certainly help there.
It will, and look, when it comes to security, well, we
seems like we are losing Mandeep, which is a bummer because it'd be interesting to get the lay of the land here.
Yeah, I think it also tells you just a lot about the state of technology. We have all of these incredible tools. We have large language models that help us do so much, and we can't get internet routers that work.
I know, and it speaks to the benefits of being in the office and that organic conversation.
There are so many more benefits I could speak to on that front.
Yeah.
You know, I was looking for people in the office today because I want to collaborate on stories.
I know.
And everybody's seemingly working from home. Katie says it's a Monday, as if that's an excuse. It's still a weekday, right?
It's a Monday in August. People trickle in, you know, it just takes a while. Maybe they're not there at 8 a.m. on the dot. But when it comes to Palo Alto, we'll have to see. We'll get more details about what exactly their plans for CyberArk are. We know that at least Wedbush says that this is one of their top cyber picks for this year. So it'll be interesting to get those details. But
you know, I'm going to just watch the close at 4 o'clock. I guarantee that Romaine and Scarlett and Carol and Tim are going to be breaking those earnings line by line.
Yes, you know
as they
will.
cross. So waiting for Palo Alto, checking on what's going on in futures this morning as we try to get going on this Monday. It's like we're robo-dosing through the mud here. Right now, looking at S&P futures down 0.1%. NASDAQ futures not moving a whole lot more, and Russell futures even less. So, I get this feeling that like there's so much happening, but there's nothing coming out of it, like the Alaska meeting between Presidents Trump and Putin.
Well, that's the thing. For all of the things that we're looking forward to this week, we're really in wait-and-see mode right now. We know we're going to get a very interesting read on the consumer and some of those reports, especially on Walmart. That's not until Thursday. We know that Jerome Powell is going to be interesting in some fashion. We don't hear from the man himself until Friday. And then when it comes to what's going on the geopolitical front, it's another wait and see. We know that the European allies are gathering at the White House this afternoon. We're all waiting for details on what exactly happened in Alaska, but we're just going to have to hang tight, and that's maybe why you see such muted movements in futures.
And I guess it's easy enough to do when you're hanging out at all-time highs, right? On stocks, on Bitcoin, risk assets just are really, I don't want to say frothy, but higher than we've ever seen them. Well, maybe there's a new multiple that we need to be thinking about here. Coming up, we'll talk about that with Joanne Feeney of Advisors Capital. She says some consumers could see tariffs impacting prices by up to 80%. We'll ask what areas of the retail economy she's watching. This is Open Interest.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersetchi in Vienna, and this is Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Goldman Sachs says that U.S. profit margins are capable of withstanding President Trump's tariffs after more than half of S&P 500 companies actually raised guidance for the year. The team led by David Kostin says, quote, "While we expect companies will be generally able to mitigate tariff costs and maintain their profit margins, the magnitude of margin expansion embedded in consensus estimates appears unrealistic." Let's bring in Advisors Capital Management Portfolio Manager and Partner Joanne Feeney. Joanne, great to have you with us. Let's talk a little bit about margins here, because I think for a lot of folks that, okay, this earnings season was better than feared. You see margins holding up. Who's eating the cost, though, of those higher input costs?
Yeah, good morning, Katie. We don't know just yet, right? We've only seen some smaller tariffs start to come in, and we're certainly seeing the producer price index reveal that we're seeing some pass through, but not yet as much to consumer prices. You really have to look at it company by company. Companies that face little competition are going to be able to pass through more of the tariff effect. They may also be able to pressure their suppliers. But when you look at, whether it's a retailer like a TJ Maxx or a Target or a Walmart or something like a Home Depot, when you drill down and look at their operating margins, they're just not that big. So there's going to be limited ability for them to absorb a lot of the tariffs, which means they're going to have to pass through a fair bit. But consumers won't stand idle when that happens. Their demand will likely drop. So companies are going to have to feel it out and see how much they can get away with.
But there's no chance of, in your notes, you talk about what percentage of that increased price that companies pay is going to be passed on to consumers. And unless a company is selling like rare earth magnets, they're not going to move prices up substantially, right? Certainly not 80%.
Yeah, that's right. The estimates so far, based on, I think, prior research on other tariff events, has been that there's about a 30% pass-through. Tariff increases prices by $10, the consumer pays an extra $3. So we will see, whether that's the case this time, because partly the research is based on, more moderate tariff increases. We're kind of in a new world here. We haven't seen this level of tariffs since, Smoot-Hawley. So it's been a really long time. So the data is simply not that rich in terms of telling us what's going to happen. And of course, when you drill down, it's going to depend on, are there substitutes in the U.S.? Are there, demand environments that are really sticky, that are inelastic? And if demand is inelastic, then sellers can get away with a much higher pass-through rate, much higher price increase. And so it's really going to be good by good, company by company.
Well, but if we only see, on an average basis, if we only see prices increasing by 2.5% or less than 3%, for economists and certainly for the Fed, that's great. But for consumers who continue to see these price increases adding on top of price increases, adding on top of price increases, like at some point, you're just too far stretched, right? Or have wage increases kept up?
That's exactly the question, Matt. And consumers, as you pointed out, many households are already, pressured by the past inflation from the COVID pandemic and the immediate, aftermath. So that's why we like to think about the consumer not as this one big aggregate and just look at averages. You've got to break down the consumer into lower income, mid-income, et cetera. And the ones sort of in the lower half of the income distribution are already pretty stretched. They're not going to be able to take more price increases. And so their response will be simply they have to tighten the belts. They're going to be able to put less in their shopping cart to take home. That decrease in aggregate demand means firms in that space are going to end up selling fewer goods. Their nominal revenue will probably hold up just fine, but their margins will probably shrink as a consequence.
So, Joanne, if you're investing in that space, it sounds like there's a lot of due diligence that's needed to make sure that you're actually investing in the right companies here. I mean, how does this period compare to maybe where we were a year ago, 2 years ago, or even during the pandemic?
Yeah, so during the pandemic and the immediate aftermath, right, we're seeing recovery in consumer spending. We were seeing consumers with very healthy balance sheets, excessively healthy in some ways because they'd paid down a lot of debt. And so we were able to figure out, okay, what goods did they miss out on during the pandemic? What do they need now to buy? And they were pretty flush. When inflation hit, belts got tightened. That's when we became worried about the lower income consumer and the mid-income consumer. And so we shifted, the sort of stocks we held. We looked to companies like TJ Maxx, right? The place to go for bargains, but with high quality. And so we continue to expect that company to do well, even as consumers continue to have to tighten their belts here a little bit. Also, though, higher end consumers continue buying. Their income and their wealth has continued to grow as real estate prices have gone up, as the stock market has gone up. So a higher end consumer discretionary company like, say, a Williams-Sonoma is continuing to be pretty well positioned in this environment.
All right, Joanne, hold that thought. We are just getting started. Joanne Feeney sticks with us through the opening bell. The setup doesn't look too inspiring, but I promise there's a lot going on under the surface, and we'll bring you all that action up next. This is Open Interest.
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are moments away from the start of trading on this Monday morning. This is Bloomberg Open Interest. I'm Matt Miller. Take a look at the index futures, not doing a lot right now. S&P futures and NASDAQ futures both down. The small caps gaining just a tiny little bit. And there's really not much going on. We don't have a publicly traded stock ringing the bell at the New York Stock Exchange. It's the Make-A-Wish Foundation, which is great. And then you have CTW Cayman ringing the bell on the NASDAQ marketplace, which is like some kind of gaming platform. They've only been trading for 8 days, and they've already lost 60% of their value. So I hope you didn't buy that IPO. Katie, what have you got? This is actually an interesting story here.
Yeah, bring the camera over here because we actually have a lot to talk about. The FDA, it approved Novo Nordisk's weight loss drug Wegovy to treat a serious form of liver disease. That news came, I believe, at the end of last week, which is exciting, but also exciting coming this morning, the news that Novo is partnering with GoodRx to offer its GLP-1 drugs, such as Ozempic, such as Wegovy, for $4.99 for cash-paying patients. That is half of the list price. You can see shares reacting in a big way. Novo up about 4%, GoodRx up 24%. And good news, we're talking to the CEO of GoodRx, Wendy Barnes, in the next hour. Matt, really looking forward to that conversation.
Yeah, so to be clear, you can use a credit or debit, right? It doesn't have to be an actual cash transaction, but the idea is you don't go through your insurance,
Yes,
and then
precisely.
you only have to pay $500 a month
$4.99
for like a milliliter of drugs. All right, investors will get clues about the health of the consumer and potential tariff pass-throughs with earnings from Walmart, Target, Home Depot, and more. We've been talking a lot about it. We're back with Advisors Capital Management Portfolio Manager and Partner Joanne Feeney. And I guess the health of the consumer is so important right now, but I'm thinking more about multiples because the market is trading at a very high multiple. At least historically, if you look back 21, 22, 23 is not normal. I heard someone on Bloomberg Radio this morning say, but the fact is, we don't have, an entire index full of manufacturers. Like, these are very different businesses that we're grading here, Joanne, big growth businesses. How do you think about multiples?
Yeah, there's no question at first blush the market looks pretty expensive. It is 22.5 or so times. But to your point, Matt, the index is dominated by these big growth companies, not just growth companies, but companies with significant, what we economists call economies of scale, network effects. These are companies that have strong complementarities in their products and also get better as more people use them. And so it's natural that they have become so large, but more importantly, can get larger because of the growth of the services that they offer, the products, whether it's data centers and the growth of AI, and that's just in the early innings. So you look at a company like NVIDIA. Yeah, it's expensive. It's at the top of the market or near the top of the market, and it's going to pull up that average for the S&P. But dig deeper, and you can find some value out there. And that's really the important job for a portfolio manager like myself. We're selecting 40 or 50 equity positions for client portfolios, whether they be a growth portfolio or we're looking for growth at a reasonable price, or whether it's a balanced strategy where we're looking to take a more conservative approach and drive higher dividend yields into client portfolios. So you can find what you need. You just don't want to invest in the index as a whole because it brings the good, the bad, and the ugly into client portfolios if you do it that way.
That's an interesting approach, Joanne, and I really like portfolio managers who pretty much invest in a high conviction list. 40 names, that's certainly something you need to have conviction in. So you mentioned those different buckets that you tend to look at, those different types of portfolios that you might be investing for. Are there any names or types of companies that actually fulfill all those different buckets?
Well, almost all of our strategies on the equity side hold Broadcom. We've held it in growth and balance since about 2015 when I first joined the firm. It's a name I covered when I was a semiconductor analyst for all of the years since its IPO. We like that stock and that company for several reasons. One, it has diversified end markets. It is number one or number two in each of the markets in which it plays. It has very strong margins. That is a deep moat that protects their profits going forward. It isn't looking to be the fastest growing company out there. In fact, when an area of their business grows really rapidly, it becomes too big a part of the business. Hock Tan, the CEO, goes out and buys another company in a different space so as to diversify. So it brings together a lot of positive attributes. Started out with a high dividend yield, but the stock has appreciated so much, it's now one of the lowest yielding companies in our balanced strategy. But still, it's a really solid core holding. It epitomizes the type of growth that we're looking for. It's exposed to AI, it's exposed to smartphones, but it's also diversified, which really helps.
What do you think, Joanne, about software companies? Because there's been a lot of talk about the fact that AI is going to eat their lunch for almost all of them, right? But some are doing so well. Palantir, for example, is trading at over 100 times sales, forecast sales for this year. So which software companies are going to survive this?
Yeah, you know, Matt, it really depends on what you think about as software. Obviously, Microsoft is a software company. And they're right in the middle of the growth of AI and enabling lots of firms and consumers to make use of AI. So you have to dig deeper. Companies like ServiceNow are bringing AI capabilities into the capabilities they provide their customers. They're likely to be and continue to be a winner in the move over to AI. And other companies in software may be able to reduce their costs because AI is enabling them to do some coding on the cheap, as opposed to having to hire lots more coders. So it's really far more nuanced than I think the surface look suggests that it is. There's going to be a lot of winners in software. There's going to be a lot of places where AI makes it more efficient to develop software. So maybe we get some disruption in some of the leaders out there because AI makes a new software tool easier to develop and launch. So it's just complicated, and that's why you have to do an awful lot of work to find the companies, I think, like ServiceNow, that'll ultimately be a winner.
Joan, I'd love to talk about how monetary policy and interest rates specifically factor into your stock selection. We have a big event at the end of this week in the form of Jackson Hole. We'll see if Jerome Powell actually decides to rock the boat there. But how do you think about those different cross currents coming in when you're weighing some of the different factors on the company-specific level?
Yeah, so we do take first a top-down approach here at Advisors Capital. When we're looking at stocks to pick, we look first what's going on in the macroeconomy. What is that interest rate outlook that we have? And then we do the bottom-up detail work company by company to pick the best opportunities given that macro environment. And right now, we've been fairly consistent in our view that we didn't see a recession coming when many others were worried about it. We did see interest rates remaining higher for longer. At this point, given the weakness in the labor market that we most recently saw, and a fair tameness, if that's a word, in prices for now, we do think it's likely that the Fed cuts 25 basis points at the next meeting, but we don't hang our stock selections on this. We expect that equities will be driven more by fundamentals, that is, what earnings rate of growth can they deliver over the next several quarters and years. And we pick those 40 or 50 names based more on fundamentals, with the backdrop that ultimately inflation is under control, even if we do get a spike that lasts for some time because of tariffs, and that the Fed will keep a careful eye on that. It'll probably limit the amount that the Fed can cut rates, so we're not looking for a big surge in equities from drastic rate cuts anytime soon.
All right, Joanne, great to get some time with you on this Monday morning. That is Advisors Capital Management Portfolio Manager and Partner Joanne Feeney. Meanwhile, we're about 8 minutes into this Monday morning trading session. Let's take a look at the market right now. Boy, you look at that and it seems like there's not too much to talk about because the S&P 500 almost perfectly unchanged at this moment. But you break it down into components, it gets a little bit more interesting. You have fewer gainers than losers right now. Up at the top of the board, NVIDIA, Microsoft, Alphabet. You would think that would be enough to push us to a gain, but then you take a look at some of the biggest losers this morning. Here's the reason why. You have Meta, Amazon, Intel, Broadcom, all lower this morning. So those big tech names really fighting each other, and the index ends up unchanged. Take a look at the sector look as well. Also an interesting picture because up at the top, you still have tech higher. That is your biggest gaining sector of the morning, up about 0.3%. We know that healthcare is having a good morning. When it comes to Nova, when it comes to GoodRx, we'll continue to talk about that. You go down the list and you do start to see some more material downward moves. Materials down about 0.2%. Communication services off by 0.9%, and energy having a really rough start to this trading week. That sector off about 1%. Matt Miller.
Yeah, that's interesting because I know that Dan Ives actually added GE Vernova to his Ives 30 AI index. So, and that got me thinking a lot more about energy, electric power, but I guess the market needs to kind of wake up to that on this Monday morning.
It's Monday.
It certainly is. Coming up, Novo Nordisk is slashing the cost of Ozempic for cash-paying patients. Only $500 a month to get a shot a week. More next. This is Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows, up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Welcome back to Open Interest. Let's take a look at all this nothing going on in markets right now. Just a couple minutes into the Monday morning trade. The S&P 500 and the NASDAQ 100, the color is red, but only by a little bit. We're only down slightly when it comes to your big benchmarks. The Russell 2000, this had been your outperformer in the pre-market, up slightly. It's still up slightly if you're an optimist, but pretty much unchanged across the indexes right now ahead of a very consequential week. But it's time now for our top calls. Some of the analyst action in focus this morning. And first up, we have Sunrun upgraded to outperform at RBC. The analyst over there cites new guidance on what is considered beginning construction for clean energy projects, trying to qualify tax credits. A lot to think through there, but shares up about 13%. Next up, we have Duolingo with an upgrade to overweight over at KeyBank. Justin Patterson, the analyst over there, he says that price optimization is a growth lever that has been underutilized. Shares up almost 8% on Duolingo. And finally, Argus Research initiates Reddit with a buy rating. The analyst says that while Reddit's valuation is expensive, its growth runway is promising in the near term. Reddit shares up about 1.5%. We also want to keep an eye on healthcare because Novo Nordisk offering Ozempic for $4.99 per month for cash-paying patients. That news dropped this morning, and it follows the FDA's approval for Wegovy to treat liver disease. Let's wrap it all together with Bloomberg Health reporter Madison Mueller, who joins us now. Let's talk about what's going on with the GoodRx partnership, because you can see that is sending shares absolutely flying this morning. What does this mean for Novo? What does this mean for GoodRx?
I think it's seen, on the backs of this Wegovy approval last week that happened late on Friday. Novo has had a rough start to the year, and this is sort of the good news that they needed to get investors excited again about what the company is doing. It's been losing out a bit to Eli Lilly's drug Zepbound, and so what this really shows is that Novo's trying to get back into the market. They are making some strategic moves to, one, get their drugs to more patients, to sort of this I'm thinking of it a little bit actually as like a 1-2 punch. We've seen the Trump administration wanting to lower drug prices, asking companies to lower their drug prices. And so sort of on the heels of that, we are seeing Novo come out and say, Ozempic, which is probably the most best-known drug right now, we're going to lower the price for cash-paying patients. At the same time, fighting off some of the competition, both from Eli Lilly and from the compounders that have been eating away at their sales.
It's still not very low. I just want to remind everybody, still at $500 a month, if you're on the maximum dose of 2 milligrams per injection, that's like $65 per milligram, and gold costs 10 cents per milligram.
Thank you.
So the compounders, I guess, are the better comparison, right? I'm seeing on my Instagram feed $119, $99. Now, these may be for smaller doses, right? And it's a compound, not the brand name drug. But can they really fight them off with, still the cost of like a nice Hyundai car lease?
Right. It's interesting because patients who are on Ozempic is Novo's diabetes drug. Wegovy is the obesity drug. And there isn't really as much of a cash pay market for diabetes drugs, because if you have type 2 diabetes, your insurance, and you are on insurance, it's usually going to cover Ozempic or another diabetes treatment. So this move, Novo said, I think they said that there's like 98% coverage for Ozempic already. So there aren't that many patients who aren't able to get Ozempic, and $500 a month is still a bit expensive when you have insurance coverage for the drug. So they just, I think, are trying to expand availability as much as possible so patients, no matter what, can go and get the real, authentic, FDA-approved Novo Nordisk medicines compared to the compounded drugs.
And when it comes to expanding access, talk us through how this is maybe similar, how this is maybe different from what Novo is already doing with the likes of CVS, for example.
Exactly. So Novo already launched cash pay, cheaper Wegovy back in March for the same price, and they have deals with CVS to allow customers who go to purchase their drugs at CVS to get these drugs for $500 a month. They also offer those cash pay drugs through NovoCare, which is their cash pay pharmacy, and they have partnerships with companies like Weight Watchers, where people who go through Weight Watchers can get Wegovy for $500 a month already. And so this is the first time that they're launching this cash pay version of Ozempic for the same price, and they're also expanding that partnership, the partnership that they have to GoodRx.
And, at the start, you mentioned the comparison between Novo Nordisk and Eli Lilly. You can see that really starkly when you take a look at shares over the past year, over a year-to-date look here. When we think about that sort of duopoly that they have over the GLP-1 market, I have to imagine that Novo is doing all that it can to close that gap, and that the news that we got this morning, also the news that we got when it comes to being approved for liver disease as well, will probably help close it.
Exactly. Yeah, Novo is clawing its way back into the race with Eli Lilly. Lilly has had a not so great couple of weeks. Investors were disappointed about their obesity pill or orforglipron, some of the late stage data that we got recently, whereas Novo's had some better news over the last week or so. And so, I mean, they're neck and neck right now. They're continuing, both of them, to do everything that they can to stay ahead and keep their edge in this obesity race. It's expected to be a $95 billion market by 2030. So there's a lot at stake here. And right now, it seems like Novo's having a good week. They have a new CEO in there. And so some of these moves also might be him sort of trying to make his mark early, but we'll see.
I'm looking at a 2025 Ford Bronco Big Bend, a four-door at Dorian Ford in Clinton, Michigan. $499 a month, 0 down for a 36-month lease.
You would probably be looking at that anyway, though.
No, I'm just saying, like, that's the price that Novo Nordisk wants for 8 milligrams of
true.
Ozempic.
It's a hot commodity.
Thank you very much, Madison Miller, for joining us. Madison covers healthcare and the GLP-1s for us. Don't miss our interview, by the way, in the next hour with GoodRx CEO Wendy Barnes. She can help answer some of these questions. Why would they make a deal for a drug that's already covered 98% of the time by insurance?
Stock is up 28%, though, so someone thinks
that's
it's
why.
a good idea.
Retail reports also coming out all week long, as we've been telling you. Walmart, Target, Home Depot, Lowe's, all posting earnings this week. We'll take a look next at what to expect with Red Brown. This is Open Interest.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a check of what stocks are doing to kick off the week on this Monday morning. You're not seeing a lot of movement here in terms of size, but the direction is red for the S&P right now, still at 64.45. It's pretty darn high. The NASDAQ coming off 0.2%, also from all-time highs, so not a huge loss. You do see the Dow Jones Industrial Average creeping up there a little bit, 44,950. I just point that out for Katie, who watches the Dow so closely.
Thank you for that.
In terms of the big stocks that we're watching, they're up. So, you know, NVIDIA up 0.75%. That should be a lift on the S&P. It's not doing much good right now. Apple gaining 0.25%. We're going to talk about this Novo GoodRx deal with the CEO of GoodRx. You can see her stock up 35% in one day. Amazing move. And we're going to talk right now about some of these retailers, some of the biggest in the world. Walmart reporting, Target reporting, Lowe's, Home Depot, etc. Katie has got Red Brown on that.
Yeah, just an embarrassment of riches to talk about with Red Brown. He is our Bloomberg earnings specialist. So more than 90% of names in the S&P 500 have reported earnings. But when it comes to the check on the consumer, this is the week that you want to pay attention. And I have to imagine that Walmart is the star of the show.
Yeah, absolutely. Especially, I think this week is a kind of especially a highlight just because all the data we got last week on the consumer, kind of a mixed report between, we saw retail spending wasn't accelerating, or at least a little bit, but we saw that mixed report from the University of Michigan on the consumer sentiment kind of getting worse as well. So with Walmart and Target as well, we'll get to see whether or not people are really spending discretionary dollars on, you know, whatever it might be. And yeah, for Walmart especially, the view will be that still consumers are seeking value. They're, you know, going to Walmart for the lower prices that Walmart have been introducing to kind of get people into the stores, whereas Target, kind of the prevailing narrative has still been that the discretionary spending is down. We'll see if any of the price changes that they've been doing and implementing through the quarter have done anything to kind of gin demand back up. But so far, the prevailing narratives from the last few quarters have kind of continued into this quarter as well.
Is the idea that Target is a slightly more affluent customer than Walmart, or a slightly higher price point than Walmart, and they're moving down from Target to Walmart?
I think with both of these companies, it's kind of like the average American, right? Like, it's not, you know, you get a full spectrum. You have people that are very wealthy going to Walmart, believe it or not, and people that are not so wealthy as well getting in there. So I don't think it's so much of a trade down story. It's just more of what they have on offer. If you go into a Walmart store, it's basically a grocery store at this point, right? You know, most of the times people are walking out with giant carts full of you know, eggs and whatever else they need for the week, whereas Walmart, if you go in, it looks more like a clothing store still. So I think it's getting that assortment right is probably starting to drive the results to Walmart more, or the foot traffic, excuse me, to Walmart more than Target. But again, Target is adjusting. They're trying to catch up. Unfortunately, right now, the expectation is that they will contract by around 3 points. Their sales will contract by around 3% again this quarter. We'll see if maybe there is some room for them to perform a little bit better than the expectations at the moment.
All right, Red Brown, great to get the preview with you. That is our Bloomberg earnings specialist. Really interesting point when it comes to Walmart. Sometimes underappreciated or forgotten that grocery presence is huge when it comes to Walmart.
Right. I actually spent time in a Walmart recently.
Did you?
And I walked around. Before I went to the groceries, I got myself a buck knife.
As one does.
And then I went over and got the eggs that Red was talking about there. Coming up in the next hour, Maria Waitman joins us from State Street. She talks about the easing resolution of trade issues that we've been seeing, plus GoodRx CEO Wendy Barnes on that company's new cooperation with Novo Nordisk. We're going to talk about Ozempic for $4.99 a month.
Let's talk about this villa. Very traditional. a lot of things of the past?
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Another high-stakes meeting set for today on President Trump's bid to broker peace in Ukraine. Days after his summit with Vladimir Putin in Alaska, he's meeting with Ukrainian President Volodymyr Zelensky in the Oval Office. Team coverage begins with correspondent Nancy Cordes at the White House.
What Putin is floating, according to European officials, is basically that he could keep all the territory that he has seized and then some in exchange for a written promise that he won't attack again. That is something that Zelensky is likely to reject.
I'm Vicki Barker at the Foreign Desk in London. European leaders are joining President Zelensky at his White House meeting. They'll encourage President Trump to threaten tough new sanctions against Russia. And if and when Presidents Trump and Putin meet again, they want President Zelensky in the room where it happens.
Officials in northern Utah say they've charged a gunman with aggravated murder after he allegedly shot and killed 2 police officers and wounded a third following a domestic disturbance. Brigham City Police Chief Chad Reyes.
The suspect was convinced to put down his weapon by bystanders, and he was immediately taken into custody by additional responding officers.
A police dog was also wounded. A strike by flight attendants at Air Canada has stranded thousands of passengers in North America. The union's Wes Lasowski.
We will not return to work until members are free from unwarranted discipline resulting from this strike. Participation in a legal strike is not a criminal offense.
Flight attendants walked out Saturday after about 8 months of wage negotiations. CBS's Tom Hansen is at New York's LaGuardia Airport.
There is the expectation that flights could resume, that these flight attendants could come back on the job as early as 4 p.m. today, but that is yet to be seen. We will just have to see how that pans out.
Hurricane Erin is back up to Category 4 strength, stirring up dangerous conditions along the East Coast.
I'm Jim Crisul on the mid-coast of Maine. Weather forecasters continue to say Hurricane Erin won't make a direct hit on the U.S. mainland this week. Regardless, rough surf advisories are posted from central Florida to the Maine-Canada border. A mandatory evacuation order is in effect for Hatteras Island on North Carolina's famed Outer Banks.
MSNBC is changing its name and losing the peacock logo. The new name, MS Now, short for My Source News Opinion World. The switch-up is expected to be complete by the end of the year ahead of its spin-off from NBC Universal. CNBC, USA, Oxygen, and E will also be rebranded. This is CBS News. Hollywood is mourning a legendary stuntman.
Ronnie Rondell Jr. was the man on fire on the cover of the 1975 Pink Floyd album Wish You Were Here. In Hollywood, he was one of the go-to stuntmen.
Ronnie Rondell now in the car to make only his second effort to do this, considered one of the most dangerous stunts.
Rondell showed off his skills in an exploding car on CBS Sports. He performed in more than 200 films, including How the West Was Won, Lethal Weapon, Twister, and The Matrix Reloaded. Ronnie Rondell was 88. Steve Kathan, CBS News.
There is royal trouble in Norway. The country's prosecutor says the son of the nation's crown princess has been charged with 32 offenses, including 4 rapes and assault. Marius Borg Høiby, born from a relationship before the crown princess marriage to Crown Prince Haakon. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so check us out on that YouTube thing. That's the internet. Lisa Mateo and Paul Sweeney with you. Coming up here today on this historic day in Washington, D.C., as the world leaders from the European Union with Mr. Zelensky come to the White House. And we'll have full coverage of that for you on Bloomberg this afternoon. Michael McKee joins us here to kick it all off. He's out there in Jackson Hole, Wyoming. What's this Federal Reserve going to do with its interest rate policy? We'll get his thoughts there. Niraj Patel, Bloomberg Intelligence senior software analyst. A little bit of a deal in the software space today. Thoma Bravo, private equity company, said to be in talks to buy software firm Dayforce. So a little M&A for your Monday. Phil Orlando, chief equity strategist at Federated Hermes. He's going to join us and give us his market call. We got more people, I think, turning a little bit positive on this market. Aaron David Miller, senior fellow at the Carnegie Endowment for International Peace, who's going to recap the Trump-Putin summit and, more importantly, preview what we might see in Washington, D.C. this afternoon. So we've got a lot of economics, got a lot of earnings, and we've got a lot of geopolitics, and it's Lisa Mateo and Paul Sweeney with you. Right now, let's kick it all off with John Tucker in a Bloomberg Business Flash.
All right, not a lot of movement because there's so much we're waiting to happen. This Bloomberg Business Flash being brought to you by IBKR. Will the median new home sales price exceed $430,000 in July 2025? At IBKR Forecast Trader, the yes was recently at 34%. But check the data, spot the trends. Start predicting today at ibkr.com/forecast. Last trading day for this contract is August 25th. Let me start off with data. Home builder confidence falling this month. So right now it's matching the lowest level since 2022. The report shows that building contractors are having to increase their already liberal use of sweeteners to get people to buy these homes. And let me check a Toll Brothers, one of the home builders, that stock right now, it is a little changed. Hearing some of the earlier advances earlier in the morning. Again, not much movement in the averages. S&P 500, after hovering around a record last week, unchanged at 64.49. The Dow Jones Industrial Average 47 points lower, and the Nasdaq 100 right now is 13 points lower. Traders waiting for some word on progress to end the Ukraine war and any hints on monetary policy from the Fed confab that's taking place in Jackson Hole. We also expect to get some reading on the health of the consumer as major retailers, including Walmart, they're going to report their earnings results this week. ADRs of Novo Nordisk, they are climbing this morning. They're up 4.8%. The company slashing the cost of Ozempic for cash-paying patients after the diabetes shop became kind of the poster child for high U.S. drug prices. You can now get Ozempic for $499. That's $499 a month, about half of its U.S. list price. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Paul and hi, Lisa.
She's back.
Good morning.
She's
yes,
back.
I'm back.
Yes. She's been working. Like she did the what's the show before surveillance?
Daybreak.
For like 2
What's the
hours.
show before surveillance? Oh, brother.
Daybreak. So she
I've
did
been
that.
going since early.
And then, yeah, so she's been here. We can't get rid of her. All right, let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside the Lisa Mateo, and we're joined by Bloomberg's Tatiana Daria. Tatiana, what are you looking at today?
Well, it's Deals Monday in the mid-cap space, Paul, as you mentioned earlier. Starting off with Dayforce, your ticker is DAY, up about 27% right now after Bloomberg reported that buyout firm Thoma Bravo is in talks to acquire the HR management software provider. The deal would take the company private as soon as the coming weeks, our sources tell us. Today's rally gives the company a market value of about $11 billion, and that's up from about $8 billion on Friday. So even though we don't have financing details here, that gives you an indication of what investors are expecting. And to just give you a little bit of context, the stock was down about 27% through Friday, down about 60% from its 2021 peak. That's after it saw a big boom after the post-pandemic reopenings. But since then, companies have been pulling back. So it's interesting what this actually tells you about the economy, right? In this uncertain times where companies are pulling back on some of their capital expenditures.
All right, Tatiana, one of the things you know, Paul Sweeney has the in to like all the fancy places, right? In the city, in Vegas, he knows where to go, right? They let him in. But one place I have been that Paul Sweeney has not been is Soho House.
That would have been my question first, Paul. Yes. Have you been there? Because this was I'm new to this company. I have to say, Soho House. It's kind of a co-working space, often compared to WeWork. The ticker there is SHCO, up about 16%. This is after a group of investors led by hotel owner MCR agreed to buy the company in a $2.7 billion deal. It calls itself as a club for creatives, where suits, ties, and corporate attire are discouraged. So curiously,
That's not me.
not you.
I'm not the demo.
It doesn't cater to people working in finance or politics, but rather to the more creative classes. So it will be very interesting to see what the new sort of owners do with this. Do they continue with this strategy, or do they choose to sort of branch out in this other avenues? And the price there is a premium of about 80% over the stock's closing price in December, on December 18th. We go back to that date because that's the date we finally found out that they received an offer. And since then, shares have been rallying about 50%. Yeah, it looks like co-working places are a great idea, but just a very difficult business model.
Okay, very good. How about United Healthcare?
United Healthcare, another name on the move today, up about 2%. And this is more like extending the rally that we've seen on Friday when we learned that Warren Buffett's Berkshire Hathaway and other investors bought shares in the insurer. Among those investors, David Tepper's Appaloosa, some of the world's wealthiest management, like George Soros investment firm. So this is great relief for this stock that has been so beaten down this year. I mean, shares are still down about 40%. And I just had a look at their valuation. So the PE ratio there is about 18, which is lower than the 5 and the 10-year averages. So that tells you that those value investors are onto something there, but it will just take a lot of time to ship this boat around.
Tatiana, thank you so much for that. Appreciate it. Tatiana Dere covers all the markets for Bloomberg News. For more conversations like this one, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. All right, this to me, I think, is an ideal summer weather environment. You wake up mid-50s, have a day of sunshine where it tops out in the mid-80s. No humidity. How's that?
That's better.
That sounds like Jackson Hole, Wyoming, which is why all the smart people in the world of economics get out there every year at this time, and that includes Michael McKee, international economics and policy correspondent for Bloomberg News. Mike, you're back out there in Jackson Hole. Another tricky one for Fed Chairman Jay Powell because the data seems to be all over the place, but the market's pushing for a rate cut. What's the feeling as you get to meet all these people out there in Jackson Hole this week?
Well, I think most people are expecting the Fed to be as careful as they can be. They don't want to make things worse in either direction. They just don't know which way the market, the economy is going. The markets have decided, as you said, that we should have a rate cut in September, but that's a month away. We're going to get another CPI report, and the inflation numbers that we had last week weren't good. And we're going to get another jobs report. And the jobs report we got last month wasn't good. So the Fed's mandate's being pulled in two directions. So my guess is that Jay Powell will try to finesse it and say, we can go either way, but we're not ready to say which way yet.
Now, what about the tone he's going to take, Mike? Because it's not only about rates, but it's also his last speech to the annual symposium before his term expires next May. So is it going to be like a reflection more so, or how do you see it?
Well, we've had a lot of Fed officials make their last Jackson Hole speeches here, and none of them have really done that. They've left it up to other people at the meetings to talk about them, and we've had that. We've had a lot of people who have said nice things about Janet Yellen, had nice things to say about Ben Bernanke, and in 2005, it was quite a famous event when Alan Greenspan finally left the chairmanship. The whole conference was dedicated to what had happened during his term. I don't think we're going to do that again, given what happened a couple of years after that meeting with the great financial crisis. But we would expect others to say nice things.
Hey, Mike, what's the level of consensus for the Federal Open Market Committee here as you head into Jackson Hole here? Because again, boy, the economic data, you could read it one way, things are pretty darn good, or you could read it the other way that, boy, if you look under the surface, there's some troubling signs out there. How's the consensus?
It's really hard to tell because the numbers are not good either way, but they're not terrible either way. What we saw was inflation creeping into the CPI and PPI from tariffs, but not a huge amount yet. It could be, though, by the time we get to the September meeting. We saw the dismal jobs report in terms of jobs created, but the unemployment rate is still very low. So both are giving us mixed signals. The market would like the lower rates because it will increase their value, the value of equities, and everybody wants to see their stocks go up. But the Fed is more concerned with whether we're going to see inflation pick up more than the economy slows or vice versa.
Mike, in the last minute or so we have here, you talked about the data, but what about the increasing pressure from President Trump, the Trump administration? I mean, how much of that is going to play a factor into what's said?
It's not going to play any factor. The Fed chair, Jay Powell, doesn't want to talk about it, so he won't bring it up. And even if he's questioned by somebody, he'll say it's just part of the job, and we're not focused on that. We're focused on the economy. And I think the rest of the Fed will say the same. They'll talk about how Powell is doing a great job, because they've been doing that, but they aren't going to acknowledge any pressure from the president is going to affect them. It hasn't traditionally affected the Fed, and the good news for Jay Powell is he's only got like 6 more months to go, so he can let it roll off his shoulders because there isn't much the president can do to him.
Mike, do us all a favor. Go to the Western store out there. Get Tom Keene an outfit, because I think if you don't, he's going to wear his suit and his bow tie all Thursday and Friday when he's reporting from out there.
we have tried, and he fights that idea. But maybe we can get him a bolo tie.
Yeah, that might work. That could be a nice medium there.
I feel like he would do the boots. You would do the cowboy
Yeah, I could see the boots and the bolo tie and the suit. That could be a look for him. Michael McKee, thank you so much for joining us. Michael McKee, he's international economics and policy correspondent for Bloomberg News. He is live from Jackson Hole, Wyoming. Again, big conference as economists gather out there. And again, Friday speech, Fed Chairman Jay Powell, full surveillance coverage of that Friday. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we're being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Not a lot of movement with the major averages as we wait from Jackson Hole, the Fed officials there, and what monetary policy is going to be like moving forward. Jerome Powell is set to address the confab come this Friday. Also waiting for some word out of Washington, D.C. as President Trump and European leaders meet whether or not there's going to be some sort of a peace framework for the war between Ukraine and Russia. Novo Nordisk slashing the cost of Ozempic for cash-paying patients. Patients can now get Ozempic for $4.99 a month, about half of its U.S. list price, through Novo's cash-pay pharmacy, NovoCare. They're also partnering with GoodRx Holdings to offer Ozempic and its sister weight loss drug Wegovy for the same price at pharmacies across the United States. ADRs of Novo Nordisk, those shares 5% higher right now. United Health Group shares, they're up just about 2.25%, set to extend the 12% rally on Friday after Warren Buffett's Berkshire Hathaway bought shares in the health insurer. TeraWulf shares, the ticker symbol here, WULF. Those shares are up over 17%, reversing some of the earlier declines. This comes after Google agreed to boost its stake in the Bitcoin miner and data center operator to about 14%. And later, we're going to get to earnings after the close from Palo Alto Networks. Tomorrow, we're going to hear from Home Depot. Wednesday, Lowe's and Target, and then Walmart later in the week. Of course, the big focus is going to be for the commentary on the health of the U.S. consumer. Like, is Lisa still buying stuff?
Lisa's on hold right now.
Really? Well, that's an early economic indicator.
Yes.
Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. It's like live Lisa data as it happens.
Thank you very much. John Tucker, as always. We do have some possible deal-making news. So sources saying Thoma Bravo in talks to buy human resources management software provider Dayforce and take the company private. So what does this all mean? Well, we have the right person to break it all down for us. It's Niraj Patel. He's Bloomberg Intelligence Senior Software Analyst. Niraj, you're joining us from Princeton. Thanks for joining. I want you to see if you can talk to us about Dayforce, because I'm reading through the article. It says shares are falling about 60% from their 2021 peak through Friday. Can you talk about some of the things that this company has been struggling with?
Yeah, hi, Lisa. This has been even beyond a Dayforce struggling point. The HCM industry, which they play in, the HR and payroll software, that has been under pressure along with application software. And just for a little bit of valuation perspective, application software companies, they're in the 17th percentile of their historical range, and Dayforce is at an all-time low. And this is telling because they are facing a lot of deceleration on the top line. They, in 2021, 2022, they were at 22% sales growth. Now we're looking at 11% for this year and next year. And there's a lot of factors coming into play here. They have a lot of competition. The customers are slowing in terms of new ads, as well as the upsell and cross-sell to existing customers.
So is this just the spending and human resources part of the pie? Is that slowing, or is it competition here? What's the problem for some of these companies?
Yeah, their competition push is limited. They play in the larger enterprise segment, so they run into UKG or Workday. So it's not so much competition, but it's a little bit of a macro trend. You have the U.S. labor non-farm payroll additions, which decelerate significantly, and that's growing at about a 1% pace. It averages 2 to 3%. So we have a macro factor. Second, they have a portfolio which is common to a lot of peers. So there's a lot of portfolio convergence in HR software. It's covering like payroll scope, account administration, workforce management, talent management, learning management. So these players have all converged on the same portfolio. They're trying to push that sale, but there's only a limiting sale per customer that they're able to translate to. For example, they're selling about $13 of software per employee, and it's only growing at a 5% pace.
Now, Niraj, were you surprised by this report? Because it seems like from how you were talking, I mean, kind of this path was leading to the way it is that this report came out today.
Yeah, no, this didn't catch us by surprise in the sense that we're expecting more consolidation. Paycheck acquired Paycor in April, and that was a smaller player that targeted more small SMB segments. This player, Dayforce, they're targeting the large mid-market customers, so we're not surprised. The valuations are quite low. The one positive factor here is HCM ranking in terms of AI disruption across app software is on the lower side. Sales and marketing is on the higher end. IT service management is on the higher end. So that may be a little bit of the appeal coming from Thomas Bravo's lens, where the AI agents are not going to take over the app function in HR software so easily.
Neeraj, thanks so much. We appreciate it. Neeraj Patel, he's a senior software analyst for Bloomberg Intelligence down there in our Princeton office. Looking back at these markets, again, still kind of a mixed tape out there. Not a lot of direction, but boy, this has been a wild year to date for these equity markets with a big 20% sell-off earlier in the year on that initial tariff discussion from the White House. And then, boy, we've gotten that all back and then some. And somebody who's been there and has been through many, many cycles in these markets is Phil Orlando, Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes. Phil, the Fed Reserve and some other economists that will be gathering out in Jackson Hole this week. We will hear from Fed Chairman at the end of the week. People are really kind of split on what this Fed could do, should do in September. How are you guys approaching it?
No, I mean, that's a fair point. And first of all, Paul, thank you very much for having me back on the program. I do think that Jackson Hole is going to be critically important this year with the follow-on to what is the FOMC do at their next policy-setting meeting on September 17th. Our view is that Powell, when he delivers his speech on Friday morning, which I guess is 8 o'clock their time, 10 o'clock our time, will provide us some clues because he is supposed to be talking about the labor market, inflation, monetary policy, and those are all the things that the market's focused on. So as we take a step back and look at the Fed's dual mandate, there's no question in our mind that the economy has slowed as measured by GDP, the private domestic final sales component, over the last year or so. And the labor market has also slowed. And that's one of the Fed's two dual mandates, full employment. The bugaboo, I guess, is that there are some members of the FOMC committee, the voting members, are concerned about what might inflation look like in coming months and quarters based upon President Trump's policies with regard to things like immigration, tariff, trade, et cetera. Now, inflation is in pretty good shape in our view. It's, just off of a 4-year low as opposed to where we were, 4 or 5 years ago at a 41-year high. But there's some concern looking forward as the tariff situation works its way through the pipeline. Are we looking at a potential explosion of inflation? And is it prudent for us to sort of sit tight and do nothing? Our view is that the Federal Reserve should start to cut interest rates in September. We think there will be 6 quarter-point cuts looking out over the next 18 months or so, taking the upper band of the funds rate from 4.5% now down to about 3%. And we'd love to see Powell provide us with some meat on the bones, with his speech on Friday morning.
Now, Phil, you mentioned a couple of things there. One of the things you mentioned was GDP. Can you dive more into the underlying trend that we've seen with GDP?
Sure. So I referenced not GDP overall, but the sort of the core component of it, the private domestic final sales component. And that's comprised of 3 things: personal consumption, corporate CapEx, and housing, residential construction. Now, the housing market's in tough shape. There's no other way to slice that. And we need lower interest rates in order to get that going. But the other 2 pieces are in pretty good shape. That you look in consumer spending, which accounts for about 70% of GDP, and we saw a nice uptick in July spending with a positive revision in June. So the back-to-school season is going pretty well. The Marpril season, the March, April, Easter season went pretty well. So the consumer's still spending. in that part, we're pretty good. Now, the other thing, the corporate CapEx thing, as a result of the one big, beautiful bill being passed, last month, the single most important component of that, in our view, was the fact that we're going to see 100% expensing of CapEx spending. Now, we saw a decline in productivity growth at the very beginning of the year. The reason we saw that, we believe, is because companies, knowing what was likely to be in the bill, were holding back their CapEx spending, saying, let's wait until we see what the president's able to pass, and then we will come forward with a tsunami of CapEx in the back half of calendar 25 and all through calendar 26. We think that's coming. And so as a result, the personal consumption's in pretty good shape. Corporate CapEx, we think, is going to move materially higher. We think the housing market will pick up over the next 18 months as the Federal Reserve cuts interest rates. So the lull that we're seeing in GDP right now is justification, we think, for the Fed to cut interest rates in order to facilitate much stronger GDP growth in calendar 26 versus calendar 25.
Phil, thanks so much for joining us. Always appreciate getting your insights there. Phil Orlando, he's the Chief Equity Market Strategist and Head of Client Portfolio Management. He's over there at Federated Hermes and really constructive on the markets, gives us some good thoughts on both sides of the equation here. And again, as we think about Jackson Hole, I'm not sure what the Fed can do, Lisa, other than, we're looking at the data. We still got some more data between now and our Fed meeting, so stay tuned. But the market's kind of pricing in.
Yeah, and it's a lot of pressure. I mean, it's his last, speech before, the symposium, and what are people, thinking as far as, President Trump's pressure and the Trump administration on him as well.
Yep, exactly. So we'll have to see kind of where a new Fed chairman comes from where and what that person's policy thoughts are. So a lot for the market to discount as it looks towards Fed policy. And again, we'll have full coverage. Michael McKee is out there for the week covering all the economic doings out there. And then Bloomberg Surveillance will have a live show from Jackson Hole on Friday. Tom Keene, Lisa Abramowitz, Anne-Marie Hordern, they will all be there. So we'll have details of that coming up later in the week. But that'll be on Friday morning and have the speech for President Jay Powell at the conference out there. Markets, just a little bit of red on the screen. Nothing moving really at this point here. Yields on a 10-year Treasury pretty much unchanged, 4.32%. On your 10-year Treasury. WTI crude oil, $62.50.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. An air of caution in today's trading ahead of the Fed's annual retreat at Jackson Hole later this week. Chairman Jerome Powell's speech going to be the highlight for any guidance on September interest rate cut. The money market's pricing in around an 80% likelihood of a quarter point cut next month, and at least one more by the end of the year. Look, right now, the major averages, S&P 500 pretty much dead flat. The Dow Jones Industrial Average 17 points higher, and the NASDAQ 100 right now down 26 points. That's a decline of about 0.1%. So let's focus on some of the individual shares that are on the move. Shares of Dayforce 26% higher after we reported that Thoma Bravo in talks to buy the human resources management software company. And then you have GoodRx shares. They are soaring on the news that Novo Nordisk slashing the cost of Ozempic and partnering with GoodRx to offer the drug at U.S. pharmacies. TeraWulf shares, they are up right now 17%. Google agreed to boost its stake in the Bitcoin miner and data center operator to about 14%. This is part of the Fluid Stack deal at TeraWulf's Lake Mariner data center campus that's up in western New York. Investors this week going to turn their attention to the health of American consumers. You have major retailers, including Walmart, that's Thursday, Target, I believe, is Wednesday, and Home Depot releasing their earnings. And of course, again, the focus is going to be on the American consumer. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Lisa and Paul.
All right, John Tucker, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio in New York City. We're streaming live on YouTube. How about this for a list of who's who coming to the White House this afternoon? President Macron from France, Keir Starmer from England, Mr. Stubb from Finland, Mr. Merz from Germany, and of course, Mr. Zelensky from the Ukraine, all coming to meet with President Trump in a historic afternoon of meetings. Let's break it down here. Aaron David Miller joins us, Senior Fellow, Carnegie Endowment for International Peace, joining us from Washington, D.C. via the Zoom thing. Aaron, why are all these leaders, including Mr. Zelensky, why are they coming to the White House this afternoon?
I suppose backup, using the February 28th meeting earlier this year, which was a catastrophic meltdown, unprecedented. I worked for Republicans and Democrats from Jimmy Carter to Bush 43. Never has there been a display, extraordinary display on February 28th. So I think all the sounds and signs for the Europeans, I think, are pretty running in the wrong direction. We've moved from ceasefire to permanent agreement, and if you could get one, that would be great. But I think it's not going to happen anytime soon, which will allow Mr. Putin to continue Russia's advances, however insignificant they may be right now along this very long front line. And then, of course, you have the issue of territorial concessions. So the point of departure for Mr. Trump appears to be the ball is now with Zelensky and the Europeans, and Putin all but said the same thing in Anchorage, hoping that the Europeans and Zelensky would not, I forget his word, sabotage, intrigue against the understandings that he and the president had reached.
So, Aaron, with your background, what needs to happen in order for these talks to be successful? And then are all the elements there?
I mean, talks can be successful. The question is, Lisa, and I think your question cuts to the core. And as I mentioned, you know, I've been around summits and negotiations in the Middle East for a better part of 20 years. I know there are fundamental differences, but basically you need four things. And I just don't see them. Number one, leaders both who are willing to negotiate seriously. Second, a mediator that not only appears to be, but is prepared to use both honey and vinegar, incentives and disincentives, and hasn't adopted fundamentally the side of one over the other. You need urgency. You need enough pain and prospects of gain to get the parties to a negotiating table and to keep them there. And then finally, you need a deal that both sides can walk away from the table and say to their respective constituencies and to themselves, we won. Frankly, guys, I mean, I've been wrong before. I just don't see any of these four factors present in the current circumstances.
Aaron, what's the likelihood that President Trump will effectively wash his hands of this whole thing and just kind of let the Europeans deal with the Russians?
I mean, so far that approach, walking away from the table, appears to have not cost him much politically on just about any issue. Walking away from the table, I worked for Bush 41 and his immensely talented Secretary of State, James Baker. Baker threatened to walk a couple times with both Israel and Syria, and it worked. But then again, there is no James Baker here, and there is no Bush 41. So yeah, walking away from the table, if it's meant as a tactic to get the parties to get serious, both of them, I might add, can be an effective tactic. But walking away with no strategy, walking away out of disgust and frustration, walking away because you really don't want to press both sides to the end game because your attention is easily distracted and lies elsewhere, that's not a good look.
Now, what about the last time? I just have to point out, President Trump met with Zelensky. It didn't go so well. There was a shouting match. There was a briefly pause of military aid to Ukraine. Are we expecting something a little bit more civil this time around?
I would expect the answer is yes. I think, and again, I don't know what the reason for this next step would be, but I think Mr. Trump would like to have one more round. You have Anchorage with Putin, got Zelensky and the Europeans in Washington. I think President Trump would like to have a trilateral. Now, if in the wake of that, he could walk away, he'd have a little more credibility, but I don't see, frankly, the point of a three-way meeting right now. And Zelensky has to make a decision. Is he going to shake the hand of Vladimir Putin while Vladimir Putin kills Ukrainians? Literally yesterday, today, tomorrow, coming week, without any promise that that meeting would lead to, at a minimum, a ceasefire. He's in a bind, and Trump put him there, as did Mr. Putin, who, to use the president's words right now, by the president's own choice, I might add, because Trump has many cards to play, but right now, Putin's got them all.
Yep.
And Trump appears not to want to take any of them back.
Aaron, you referenced Secretary Baker back in the Bush 41 White House. Where is the State Department in this White House? Where is the Secretary of State? It just seems to be Donald Trump and Donald Trump alone. Is that kind of the where it is and where it should be?
That would be my read. I mean, I worked for half a dozen Secretaries of State of both political parties. I mean, I think Marco Rubio, probably of all the national security team that the president put together, is clearly the most knowledgeable. And before he accepted this job, sympathetic and empathetic to many of the policies, including the dissolution of USAID, that Mr. Trump has presided over. So, no, I don't think Marco Rubio is an effective Secretary of State. To be an effective Secretary of State, you need the supreme confidence of the president. You need to be a really good negotiator. Baker and Kissinger come to mind here. One other thing, you got to be willing to sit your boss down and say, you know, you are not headed in the right direction. And I have a way we can try to make this better. He's not willing to do that. If loyalty is key here. Blind loyalty is a disaster. And if Marco Rubio isn't willing to say to the president, or Witkoff for that matter, the envoy for everything, this isn't going to work. I mean, of what value are these advisors?
Right. Aaron, thank you so much. I really appreciate it. Aaron David Miller, he's a senior fellow at the Carnegie Endowment for International Peace down in Washington, D.C., joining us via Zoom for what will be, promises to be, a historic set of meetings between President Trump and European leaders as they continue to try to move towards some type of peaceful resolution in Ukraine. Those meetings will begin this afternoon. Bloomberg will have full coverage of those meetings as they happen. So that should be very compelling. S&P 500 down 5 points. We'll have more coming up. This is Bloomberg Morning.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, welcome back to Bloomberg Intelligence. I'm Lisa Mateo alongside Paul Sweeney. We had some FDA approvals. They're pushing gains in some pharmaceutical companies, specifically Novo Nordisk. So here to break that down and a whole lot more news that's coming out about Novo is Madison Muller. She's Bloomberg Health reporter. Now, I got to point out, okay, so Novo ADRs, they're up about 4.5%. But the big news, so the weight loss drug Wegovy got this U.S. approval to treat a form of liver disease. So what does this mean for the company?
Yeah, so on Friday afternoon, late on Friday, Novo Nordisk got approval for Wegovy, which is its weight loss drug to treat a liver disease called MASH. And this sort of is we've seen over the last couple of years so many studies come out to show the potential health benefits of these weight loss drugs beyond just, reducing the number on the scale. And we knew from studies that there was some benefit to the liver from taking these drugs. And so Novo was able to notch an approval for that, which helps one with insurance coverage. Wegovy and then Eli Lilly's drug Zepbound are still not super widely covered by insurance companies for weight loss, but having some of these other health benefits shown and proven in studies helps them convince insurers that they are worth covering. And so this gives them an edge against Lilly. Lilly's drug Zepbound is not approved yet for this indication. And so it gives them sort of a leg up there. And then it also gets, it sort of is another benefit for Novo because they've been struggling over the last year, just with Zepbound sort of making waves in the market and taking market share from Wegovy. This gives them a leg up there as well. And just with the tumultuousness of the last few weeks, they had a CEO ouster and a few other moving pieces. So this is good news for them, and we'll see. But it will maybe help them gain back some market share.
Again, one of the issues for these weight loss drugs is the cost. And if you're not covered by insurance, they really are expensive. So by slashing the cost of Ozempic in half, does the company believe that's going to open up a big new vein of new customers maybe?
So it's interesting because if patients are on Ozempic, they are usually on it. It's a type 2 diabetes treatment, and usually that's covered by insurance.
Diabetes, but does it have a side benefit, I guess, of weight loss?
Yes. So, there are two different drugs, right? There's Ozempic, which is the diabetes drug, Wegovy. They both use the exact same active ingredient, which is semaglutide. Okay. Wegovy is a higher dose version. If you're on Ozempic, it's lower doses. So it's not quite as strong. But there is that weight loss side effect on both drugs. Previously, Novo actually did cut the cost of Wegovy down to about the same price, $500 a month, back in March. And now they are doing the same for Ozempic. But it's interesting because the question of whether or not this is going to expand access for more patients sort of remains to be seen because, again, if you have Ozempic, you usually are covered by insurance for it.
Now, something I also said, they're partnering in this article. It said with GoodRx to offer Ozempic Wegovy for the same price at pharmacies. But didn't Novo try the partnership thing with Hims and Hers, and that didn't work out so well?
Yeah. So Hims was one of several partners that Novo has sort of worked with over the last couple of months, again, to really make waves and get into this market or gain back market share because it's really lost ground to Eli Lilly. Hims was one of the companies that they partnered with. They've partnered with a couple of other telehealth companies, as well as CVS, to make this cash pay price more widely available. But this is the first time that they're dropping the price of Ozempic as well. So this partnership with GoodRx, any patient is essentially a coupon. Like any patient who goes to a pharmacy uses GoodRx is going to be able to get this cash pay price for Ozempic and Wegovy.
Mention the Hims and Hers, those compound drugs. How effective are they vis-a-vis the GLP-1s themselves? Because that would be if I were like Novo Nordisk, I spent all this money to develop it, that would be a bummer to see these guys come out.
And that's a really good question, actually, that question of how effective are these drugs, because that's the problem, is we don't know. There are studies that drug makers are required to do. They have to go through a lengthy FDA approval process to prove that their medications are safe and effective. Compounded drugs don't go through that same approval process. So there's no actual studies showing how effective those medications are. And it's a little bit of a gamble. We've seen patients losing weight on these compounded medications, and we haven't seen a tremendous amount of side effects that are really different from the branded medications. So the problem is just more that we don't actually have a lot of visibility into that compounded market and don't know how those drugs stack up to the branded medications.
In the last 30 seconds or so we have, where does this all put Eli Lilly then? I mean, they already had the setback with the weight loss pill. So now we're hearing all this about Novo. Where does this put them?
Yeah. I mean, it's interesting. Like the two companies, I think last year, it was just, they were so red hot and there was like nothing, the expectations were sky high. There was really nothing that seemingly could bring them down. But now we're seeing a couple of stumbles. And I think that, shows, again, how high the expectations are for this market. There's just no room for failure. But we'll see what happens next with Lilly.
When is the pill going to be available? 6 months, 12 months, a year?
Sometime 2026. So they said that they're planning to file for FDA approval by the end of the year and then hopefully launch next year.
As someone who administers the shots, they're no big deal. But the pill is going to be huge.
It just makes it so much easier. Yes.
All right, very good. All right, Madison Muller, thank you so much for joining us. Madison Muller over there at Bloomberg News, giving us the latest on Novo Nordisk. This is a story that just keeps on giving. I mean, I think this market, it's just, although it's funny, like if you see someone overweight, you're like, boy, isn't there a pill for that? But there's a million different reasons why people can't get them, costs or all that kind of stuff. So you have to see how the market develops
And
here.
how the side effects too.
Yeah, exactly right. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Paul Sweeney.
The semiconductor business is a really cyclical business. The market's telling me, here's another AI play. Just bid it, buy it. Is the market over their skis? Are people just too exuberant out there?
Breaking market headlines and corporate news from across the globe.
This was a big success story for Apple.
We like bonds. We think bonds are attractive.
Private markets have become very diverse.
What we're telling people is be cautious here.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, there's Mateo, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up, we're going to check in with Mike McGlone, Miami Mike. He's our Bloomberg Intelligence Senior Commodity Strategist. Talked about gold, talked about crypto. I want to talk to him about some of the soft grains out there. There's a story out there that I want to bring in front of him and see what he's got to say, because he used to be a farmer out there in, I don't know, Illinois or something like that. Mandeep Singh, Bloomberg Intelligence Senior Tech Analyst, is going to bring us the latest on what's going on out there in the world of technology. Francis Duflo, Bloomberg Intelligence Aerospace and Airlines Analyst. Air Canada pulls its forecast, citing the flight attendant strike. I thought they had that thing settled over the weekend, but apparently not. So it's also BNEF. We're going to talk to Anastasia Davies, head of renewable fuels, on the renewable fuels industry. Where are we on that? Is it still as supported by this administration as it has been in past administrations? We'll get the latest there. But first, let's kick this hour off with Charlie Power.
Thank you very much, Paul and Lisa. Here's what's going on. We've got the Dow higher, the S&P, NASDAQ. They are both lower right now, looking at a loss of just about half a point on the S&P 500 index. Little change, 64.48. Dow Industrials up 15. That is an advance there of just under 0.1%, while NASDAQ slumping by 13 for the NASDAQ Composite Index. A drop right now on NASDAQ of just under 0.1%. 10-year at 4.33%. We've got the 2-year yielding 3.76%. Gold down $2.50 the ounce, 33.33. That is a drop for the precious metal right now of under 0.1%. West Texas Intermediate crude 62.90 a barrel, up 0.1%, and Bitcoin down 1.6%, 115,750 on Bitcoin. As for the overall market backdrop on this Back to Work Monday, Scott Cronert is head of equity strategy research at Citigroup Global Markets. He was a guest this morning on Bloomberg Surveillance.
Part of the storyline here is that, great, we've got this AI tech-related leadership. Understand that. It's going to perpetuate for some time here. The broadening is when you continue to navigate something that looks and feels like a soft landing, but with enough constraint on inflation that it enables the Fed to continue to go down the easing path into the tail end of the year.
Scott Gronert of Citigroup Global Markets interviewed this morning on surveillance. You can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Air Canada's Canadian shares down 2.3% right now after pulling its financial guidance through year-end, citing the impact of that strike by flight attendants that has caused the airline to cancel hundreds of flights. We've got more on Air Canada and the strike coming up in just a moment right here on Bloomberg Intelligence. Again, recapping, S&P 500 index wavering lower, little change right now, down by 1 point. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate that. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Lisa Mateo, and we're joined by Bloomberg's Tatiana Daria. Tatiana, what are you looking at today?
Well, starting off with Novo Nordisk, which is ADRs are up about 4%. Your ticker is NVO. And I know you guys just discussed the story, but what is interesting to me is that it all comes after President Trump has been putting pressure on pharma companies to lower drug costs. So the company slashed the cost of Ozempic for cash-paying patients to $4.99 a month, about half of its U.S. list price, saying that this move really caters to patients who don't have insurance. So it looks like maybe companies are trying to work with the president here to avoid more public shaming, because Eli Lilly also last week raised the list price for its obesity shot in the UK by as much as 170%, as President Trump also asked companies to increase prices in Europe and to lower them for Americans. Well, for the record, Novo said that the offer is unrelated to discussions with the U.S. government. And it's also worth noting that the stock was rallying there a little bit even before the news, as Wegovy received FDA approval to treat a serious form of liver disease. So it looks like there is different parts here, but it's interesting to follow sort of that the government or Trump's push to low drug pricing, and if that is really having an impact already.
And then GoodRx, is this tied into Novo Nordisk too?
Definitely tied to this story.
Okay.
You know, the company, the stock is up 33% right now. The ticker is GDRX. The CEO on Bloomberg TV making the case for the company this morning, explaining really how this company works, because a lot of people had questions. And it says that it's a digital marketplace for drugs pricing. It really doesn't fulfill or dispense the drugs, but it negotiates the most competitive prices with insurance. And analysts are saying that this deal with Novo Nordisk will allow the company to monetize about 17 million patients looking for GLP-1s. So huge opportunity there for them.
All right, what else?
Well, staying with the pharma space, looking at CVS, UBS upgrading the stock. Your ticker is CVS, up about 3%. The analysts are writing that the upgrade follows 2 strong consecutive quarters, an early sign that the healthcare benefits segment fixes are on track. As a reminder, the company is exiting the Obamacare individual health insurance exchange market next year, and it is focusing on higher margin segments like Medicare Advantage. And it looks like that is really catching analysts' attention, because this upgrade comes after a similar boost from Baird on Friday. The stock now has 23 buys, 6 holds, and no sells, Paul. And the average price target is $81, signaling analysts see growth potential, because we're trading at $70.66 right now.
You know, I think I know more about AI than I do about healthcare economics, which I've been following my entire life, studying my entire adult life. I still have no idea who pays who, where the money comes from, where the discounts go, who gets insurance, benefit money. I have no idea.
I don't know if they know either.
I just, you know what? I never pay like my doctor's bill, because there's always stuff going on, and there's always insurance payments hitting. And at some point, I don't know, at some point though, it'll catch up to me. But I mean, like, I haven't made a payment in like forever. It just keeps rolling and rolling and rolling. So anyway, that's how I think about healthcare economics. Tatiana Daria, thank you so much for joining us. We appreciate that. The great thing, for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. The great thing about Mike McGlone, you can talk to him about pretty much anything that is remotely connected to or could be characterized as a commodity. I'm talking crypto to like gold oil, and then even the grains. We're talking corn, and I got to lead with this corn story here. There's a story out there that there's maybe some problems with the corn crop, but the U.S. government is forecasting a record corn crop, but pictures of corn with missing kernels due to, quote, tight tassel wrap, unquote, have triggered concern about the upcoming harvest. Mike, what is tight tassel wrap, and should we be concerned about it?
It's part of the corn growing process. Right now, if you go out to the Midwest, you will see a sea of grain tassels from the corn. If you can get high enough, typically you have to go like over an exit ramp on a expressway to do that because it's so flat. But it's just an absolute sea of tassels because there's so much supply coming on. USDA upped their estimates. I did enjoy that article about some of the grain not looking so good. That's going to happen everywhere, particularly sometimes like you might not be raining on your farm, but it's raining on your neighbor's farm, so that's a problem. But it's just the overall macro is very bearish for corn, and I enjoyed that article because you can do everything you can to make the prices go up a little bit, but the thing is corn's in an enduring bear market. There's excess supply all over the place, and typically it takes it to get down to near 3 than stay above 4. Right now, the December contract is right around $4 a bushel. Speculators are short. The market's going down. We know what happens. Sure, we get a short cover and rally, but if we can get a little short cover and rally, and if this kind of article sparks it, your prudent investors will probably be looking to sell into that rally.
I'm learning everything about Mike McGlone. So he has a farming background.
Exactly.
Who knew? Okay, so I want to switch gears from corn to gold. Now, it was inching higher. I'm looking at COMEX gold right now, down about 0.1%. Spot gold, little change. But this is all ahead of the Federal Reserve's annual gathering, right, in Jackson Hole. Potential interest rate signals. Mike, can you school me a little bit? I mean, why do lower rates typically benefit gold?
It's competition. So, for instance, if you have U.S. T-bill rates at 10% in the stock market on a tear, why buy the rock? Why buy gold? But what's happening is all those interest rates are heading lower, particularly in the rest of the world, almost 1.8% in 10-year note in China, and deflationary forces. So the best things for gold are either deflation, T-bill rates going down, or inflation, big signs of inflation. But typically that happens in other countries that have debasing currency. The key thing to think about corn right now, it's almost a perfect bull flag. It's been at the price right now, $3,333 an ounce for 5 months. It first printed that place in August. Remember when the VIX took off, the stock market collapsed, and it collapsed, and just waiting. But what's happened since then, central banks are buying more, deepest pockets on the planet, and the most significant development is massive buying from ETFs. We had 4 years of outflows from corn ETFs. It's shifted very positive so far this year at about almost 93 million ounces total gold holdings. It's up almost 11%. So investors are tilting over to the rock, potential anticipation, a little bit of a back and fill in stocks.
All right, so we got all the economists heading out to Jackson Hole, Wyoming, because why not? It's mid-80s, no humidity, sunshine, great mountains. I get it. That's why Mike McGlone, he's out there early to make sure everything's perfect. So good for him. Mike McKee. What do you expect, Mike, from the commodities space? Anything this week are you looking for? Are you waiting for Chairman Powell to say something? What's your market telling you?
Yeah, unlikely he's going to say anything. So last year at Jackson Hole, Ira Jersey pointed out he tipped his scale a little bit, pointed out we'd be easing. But the market's already priced for it, and there's still a lot of data coming. There's so much pressure. But just the concept of easing with inflation above its targets, unemployment okay, and the stock market on a tear, and crypto's on a currency on a tear. I'm old school, Paul, like you don't ease in that environment. You tighten. But okay, we have a new world, a new environment. So the key thing I'm watching in commodities is copper, Dr. Copper, because copper made a significant high this year, just like crude oil did in 2008. It's on the cusp of potentially tilting down in the year, which would tell you everything with it. It's the last vestige of bullishness in commodities outside of gold, because crude oil's going down, corn's going down, so I'm really keeping a close eye on copper. And this is the bottom line for copper. The world's facing tariffs from the world's largest goods importer. That's a pressure factor for Dr. Copper, the metal with a PhD in economics.
There you go, Mike. As always, appreciate getting your thoughts. We went from copper to Bitcoin to corn. There you go. Mike McGlone will do pork bellies next time. Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence. Let's switch to tech. Like, when I go to vacation, I go to, like, the Jersey Shore. Mandeep Singh, no. The dude picks Calgary, like, in Canada. Like, who does that? I love skiing out there. So I don't know, maybe he knows something we don't. It's beautiful out there. I get it. Mandeep Singh, Bloomberg Intelligence Senior Tech Analyst. Mandeep, here's the story I want to get to. Back in my day, if you were in a public startup company and your stock was all tied up in a private company, you had to wait for an IPO. Then you had to wait for the 6-month lockup, and then you could begin starting selling. That's not the case today. The people in OpenAI, they're selling about $6 billion in stock here. This is becoming more and more common, isn't it, for your tech companies?
It is, and I think Meta exacerbated that trend by, the acqui-hires they've made in the last 2-3 months. I mean, there are startups that have just disappeared without an outright acquisition because Meta acquired their top 5 people or top 10 people. And look, when you have that sort of risk of losing talent, you got to find ways to, liquidate your stuff, the stock that you have in your company. And for OpenAI, I mean, talent is paramount. This is a company that may end up doing, almost a $20 billion revenue run rate by the end of this year. And the same thing for Anthropic. Anthropic started off the year at $1 billion run rate. Now they're at a $5 billion run rate. When you 5x your revenue like that, you have to find ways to, keep your employees happy and retain them. And I think this is their way of making sure the employees can liquidate some of their stock.
So is this a perk for all OpenAI employees? I mean, do you have to be there a certain amount of time, or can anyone take part in this?
I mean, we don't know that level of detail, but suffice to say, I think they've allocated a certain amount, and the private valuation of this company has gone from almost $250 to $300 billion to $500 billion now. And so clearly there is a lot of appetite for a company like OpenAI, which is at the frontier of everything that's going on in generative AI. And, there are buyers of that kind of stuff.
All right, I got to satisfy the banker gene in me. Is there an OpenAI IPO at some point?
Probably they will. And my hunch is, when you are a category leader in any sort of technology trend, you want to be a public company because, one, it clearly helps you get more long-term investors for your stock, and also it's great PR. So I can't imagine an OpenAI staying private for very long. With that being said, their financials don't look great. I mean, from what we know, they're burning a lot of cash right now. So it's not a very profitable business model, but the top line growth is really what is getting them all the attention right now. So they will have to clean up that OPEX side if they plan to go public. So I don't think it's imminent in the near term, but I wouldn't be surprised if it happens in the next 2 years.
Hey, Mandeep, in the last minute we have here left, does this put, OpenAI as the world's most valuable startup? I mean, does it push it past SpaceX? Is it sustainable?
By far. And look, the top line growth, as I said, both for OpenAI and Anthropic, this is not something we see very often. So at their revenue base, I mean, they are clearly the most coveted and the most talked about name. And that's going to be the case for a while.
Mandeep, what skill is the AI skill? Like, what are these people acquiring in these acqui-hires when they're paying out these big packages? Is it coding? Is it just engineering 505? What is it?
So right now, when you think about how GPT-4 and 5 became smarter and smarter, it's about, engineers who can help these models become smarter and smarter in terms of answering more questions, doing more types of things. And that requires a certain knowledge of probability, statistics, tokenization, that, the way large language models are built, there is a neural network aspect to it, and that refinement of LLM is what is making them more intelligent. So you need to have that basic level understanding of tokenization and what are the tokens that makes these LLMs smarter and smarter. And I think that's why they deserve to get all the attention.
Yeah. All right. Mandeep, thanks so much for joining us. Appreciate it, bud. Mandeep Singh, he's a senior tech industry analyst at Bloomberg Intelligence from Calgary. Stuck because of Air Canada. Jeez. No kidding. I love these notes. So the dude's out there for vacation with his family. That's cool. He gets caught up with the Air Canada strike. So, hey, there's worse places to be than Calgary. Beautiful country out there. A lot more coming up this evening.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're all trading lower right now. Stocks, bonds, and the dollar did see a quiet start to a pivotal Fed week. Geopolitics, though, coming into play as Ukrainian President Vladimir Zelensky and his European allies get ready to meet with President Trump. So here's where we stand. We do have the S&P down 2, drop there of just under 0.1%. The Dow back in the green right now, up 12, has been swinging between gains and losses. Little change. That is the key takeaway right now. NASDAQ down 24 for the NASDAQ Composite Index, a drop there of 0.1%. The Russell 2000 Index of small cap shares is gaining up 0.3%, while our Mag 7 Index is down 0.3%. The 10-year on this Monday morning, 4.34%, with the 2-year 3.77%. Gold flat on the day, $33.35 the ounce. West Texas Intermediate crude up 0.3%, $62.98 a barrel, and Bitcoin now down by 1.7% at $115,709 on Bitcoin. Ukraine says it has carried out a fresh attack on Russia's Druzhba oil pipeline system and halted a conduit that is important for crude supply to parts of Central Europe. Right now, we've got West Texas Intermediate crude higher, up 0.3%. Among some of the oil names, ExxonMobil up 0.1%, BP lower, down 0.8%, Chevron lower by 0.4%. This Bloomberg Business Flash brought to you by Oracle. Attention, growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Recapping, S&P little changed on the day, down now by 3 points. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right.
Oh, sorry.
Oh, no.
Go, you hit it, dude. Let it rip.
Hit the button. All right. Thank you, Charlie Fellows. So Air Canada, right? They pulled their financial guidance through year end. Thousands of Air Canada flight attendants, they walked out over the weekend. So what we're going to do is find out more behind the strikes, more behind of what's going on. Here with us to explain more is Francois Duflo. He is U.S. airline aerospace analyst here. Francois, thanks for joining us over from the Princeton office. First off, I mean, this is the peak travel summer season. How much of an impact is it going to have for the company?
Yes, good morning. Yes, exactly. That's the worst time that it could happen. August is one of the busiest month of the year. And when we look at the number of cancellation during this weekend, almost 80% of the flight and the seat were canceled during this weekend. So it's really significant. When we try to do the math, we get to something around 200 million impact revenue, so that would be about 3% of the 6.3 billion revenue expected for this quarter. So it could be big, and the question is, how long does it take for Air Canada to resume and get back to the full operation? Because it's not just the flights and the seats canceled during this 3 days, but it's also how long does it take to resume and return to normal operation, knowing that we are not even sure when flight attendants will go back to work. So that's a big question. And then obviously the lasting impact on bookings, fares, and the brand name that the strike could have through the rest of the year, because when this kind of event happens, you usually end up having to discount a little bit fares to lure customer back to your flight. So there is also those questions, but that's the kind of amount that we see for this quarter. And just to give a little bit also of context, this happens at a time where Canada is hit by the U.S. trade disputes that not only impacts the GDP, but also impact the travel patterns. And Air Canada was definitely facing big headwinds because of this and had to reallocate seats from the U.S. to somewhere else, and that had an additional impact on yields during 2Q and likely 3Q.
Air Canada, what's the market? How's the market share shake out in Canada?
In Canada, they have almost 50% of the market in terms of capacity, between 45 and 50, depending on the market, depending on the quarter. But it's very significant. And then you have a second competitor, WestJet, which has about 30%. So you have a very two strong airlines in Canada that have a sizable share.
All right, Francois. Canadians this winter, when it gets cold, you're telling me they're not going to fly down to Arizona and Florida?
Probably less. At least Air Canada cut travel to the U.S. Right. They cut 8% in 2Q. They were likely to do the same through the end of the year. That's the only way in order to make sure that yield remain kind of stable. They managed this in 2Q. The hope was to do it again in 3Q and 4Q. We'll see if that can happen, and we'll see what kind of deal flight attendants can get during the negotiation, because that's also some things that the market will be looking at.
Francois, thanks so much for joining us, my friend. Francois Duflo, He does all that airline and aerospace stuff for Bloomberg Intelligence. He's based down there in Princeton. Let's get to the private equity space. Here's my big thing. Anybody can raise money. Anybody can invest money. It's getting an exit that is tough. That's my Elizabeth Weymouth joins us here. She is founder and managing partner of Graphene Partners. Elizabeth, talk to us about the market to actually monetize investments, because I hear so many funds, you know, the 3 to 5 year hold, well, they're now in year 6, 7, 8. Talk to us about the ability to get monetization in the private equity space today.
Well, thank you, Paul, and great to be here. Good to see you. I think the good news for us all is that monetizations are picking up. So in 2025, we've had a little more robust of an exit environment. While the number of exits is around 215, so that's down year over year, the volume and the size of the exit is bigger. It's around 308 billion or so. So that's provided much needed liquidity to the LPs. We talk to LPs all the time, and that's the number one concern, but it's picking up.
And M&A activity, IPOs, every time we just kind of mention these, I always hear woohoo from Paul, you know, like gets excited about it. Do you see it picking up?
We do, we do. I see some IPOs are coming out very strong. The big ones we hear most about are from the tech sector. But IPOs are not the only means of liquidity that is being provided to the private equity market. I think, you know, because the LPs were pounding the table on the needing of DPI, so distributions per invested dollar, the GPs listened. So then the environment has been more accommodating for the exit. So apart from the IPOs, apart from the M&A activity that's involved in the IPOs, there have been some GP solutions to provide liquidity to investors as well. So you hear the secondary market is alive and well and growing and at its peak, actually. And then you have CVs, so continuation vehicles, continuation funds, and then you have LPs leading the way to do this, and not even to mention new forms of capital coming into the market with the democratization of private equity.
So at Graphene, I know you guys invest in new private equity managers.
Yes.
As well as doing your own deals. Talk to us about the capital markets for middle market deals. Where's the debt coming from these days?
Interesting question. Well, the debt's coming from, you know, you'll see banks like a JP Morgan get back into understanding that private credit has stepped in, and they are now providing other alternatives in addition to what they have done in the past. But private credit is also alive and well in providing some debt financing. The good news about where we focus, which is the middle market and the lower middle market, because that's where we believe the alpha is in private markets, is that these are generally companies that use lower debt. So that's a very important metric for us when we get involved in investing in those companies. But you're right, what we have done is found a space that really wasn't occupied to provide investors with alpha in light of the big firms getting bigger. So we have a different strategy that sort of complements the mega funds.
And Elizabeth, in your notes, you say the U.S. economy remains strong. Interest rates could start moving down again soon. How soon do you think?
Well, it's hard for anyone to predict.
Yes.
I know what's going on in Jackson Hole this week. We'll all be waiting with bated breath. But, you know, I think conditions are such that, at least my personal opinion, is that there's certainly room for a moderated, you know, lowering of the interest rates. And that will, of course, be a nice boost for the private equity markets and deal making and liquidity providing back to the investors.
Are there industries that you guys like more so than others these days? Because it seems like you have to have AI in your pitch book somewhere, in your deck somewhere, but how do you guys think about it?
Yes, no, it's a great question. We've been focused on really finding this unique off-market, high alpha private deal flow. So the reason we all came to private equity in the first place. And as the big firms are getting bigger, the returns are compressing. And so we think about sectors, to your question, in the sense of really who's starting the firm. So we're actually putting entrepreneurs who are starting new private equity firms in business. For the first time in history, we have people, I think over 50% of the private equity firms in the US are over 20 years old. So people inside of those firms have 15 to 20 years of experience in a certain sector with a track record you can verify. And for one reason or another, notwithstanding the terrible fundraising market, they are leaving to start new firms. This is when you can get alpha. So on a specific sector, it's really about, we tend to back the athlete, for lack of a better term, and where they've had success. And if the conditions that led to their success in the past, we deem are available in the future, then we'll put them in business, and then we'll co-invest with them, and then we'll do direct deals on our own.
How do you talk to your clients about, I mean, there's a lot of geopolitical tension, a lot going on in the news and the headlines. We hear it. You have the U.S.-Russia summit, then we have the Putin summit. How do you talk to your clients about that and put them at ease?
Yes, it's a constant source of conversation with respect to how it might impact U.S. private equity, and our focus is U.S. private equity in particular. We also have an office in London, so we do get involved, and we back European managers as well. So as it relates to the deal environment, it's absolutely a factor we take into consideration. But we can't wait for it to be resolved, and we do go ahead and do find deal opportunities. And I think that the conversations with our investors are usually robust because we tend to back investors who have an opportunity in hand at that moment, and it's usually a deal that has resulted from a dislocation in their own sector. And so all of the macro factors have been taken into account about the projection of how that deal might do going forward with their help.
I'm going to give you 30 seconds here. How bad is the capital raising environment these days?
It seems to go to new lows as far as the availability of capital every year. So we're at a new low right now for the private markets, and it's the worst since 2016. It's bad, particularly for the sector that we focus on, which is more these new emerging managers in private equity. Capital from LPs is consolidated to the bigger players, and they're expanding their franchises. So for us, it's an opportunity, but for anyone launching a new platform or for people coming to market again without a distinctive strategy necessarily, that's a tough road to hoe.
It mirrors what has been happening in the hedge fund business as well.
Yes.
All the money's going to those big platforms. Elizabeth Weymouth, thank you so much for joining us. Elizabeth Weymouth, founder and managing partner at Graphene Partners and a double UVA. A lot of time in Charlottesville, undergrad, and then the Darden School. The Darden kids, they just work too hard. I mean, that's why I didn't go. I'm like, I just got out of 3 years of being an investment banking grunt, and now you want to work me even more so? Oh, yeah, sorry. All right, Elizabeth Weymouth, thank you so much. We appreciate it. Markets absolutely doing nothing here today. The Nasdaq's down 50. We're waiting for the news coming out of Washington, D.C., and then, of course, Jackson Hole later. We'll have more coming up. This is Bloom.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Jones Industrial Average swinging between gains and losses. Right now, lower, little change, down just about half a point. Stocks, bonds, and the dollar seeing a quiet start to a pivotal Fed week with geopolitics coming into play as Ukrainian President Vladimir Zelensky and his European allies get ready to meet with President Trump. Keep it locked into Bloomberg for the very latest on any geopolitical developments out of Washington. Right now, the S&P down 5. That is a drop of just about 0.1%. The Dow higher again, up by 2 points right now. The key takeaway, though, little change. NASDAQ down 36. For the NASDAQ Composite Index, a drop there of 0.2%. Our Mag 7 Index slumping 0.4%. Right now, the 10 years yielding 4.34% with the 2-year 3.76%. Gold down $1 the ounce. Little change, 33.35 the ounce. While West Texas Intermediate crude is up 0.2%, 62.94 for a barrel of WTI. Wall Street looking ahead to Fed Chair Jay Powell's remarks Friday morning in Jackson Hole, Wyoming. Elizabeth Weymouth is the founder of Graphene Partners. Moments ago here on Bloomberg Intelligence, she told us she'll be listening for any remarks about potential rate cuts.
I think conditions are such that, at least my personal opinion, is that there's certainly room for a moderated, lowering of the interest rates. And that will, of course, be a nice boost for the private equity markets and deal making and liquidity providing back to the investors.
Elizabeth Weymouth of Graphene Partners interviewed moments ago right here on Bloomberg Intelligence. Home builder confidence fell this month to match the lowest level since 2022, forcing firms to lean more heavily on incentives to counter high mortgage rates and persuade unmotivated buyers. Among home builders, a mixed picture. Toll up 1.1%, Pulte Home flat on the day right now. KB Home down by 0.6%. Sources tell Bloomberg Thoma Bravo is in talks to acquire human resources management software provider Dayforce. They say the buyout firm is planning to take the Minneapolis-based company private in a deal that could be announced as soon as in coming weeks. Dayforce right now is trading higher, surging 27%. And Air Canada pulling its financial guidance through year-end, citing the impact of that flight attendant strike. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you very much, Charlie. Okay, so here's a stat for you. We have over 66 million gallons of renewable jet fuel. It was supplied to U.S. markets in the second quarter of 2025. This is a big milestone, but why? So we want to go to someone who knows why. That's Anna Davies. She's Bloomberg NEF's head of renewable fuels. Anna, you're here in studio with us. This is the first time quarterly volumes exceeded 50 million gallons. So what's the reason behind it?
There has been an influx in attention and growth in the sustainable aviation fuel market. And this is basically a market to produce a jet fuel molecule, but not use fossil fuels. So usually they use biofuels instead of fossil fuels. So something like used cooking oil out of a fryer. You can clean it, purify it, upgrade it. And then you can make a hydrocarbon molecule like jet fuel from that oil. And it's a way to decarbonize a sector like aviation, which if you don't have these fuels, it's very hard to decarbonize because there's no real alternative to jet fuel, and jet fuel is so highly carbon emissions.
How efficient is this jet fuel, this renewable jet fuel?
So it is almost identical to fossil jet fuel.
Okay.
So in terms of, it works the same way. You burn it in an aircraft engine. It releases CO2 like fossil jet fuel does. But the main thing is that it's from a plant or some other renewable source. And so if you think of agriculture, they absorb carbon dioxide for photosynthesis. And so therefore you can think of it as sort of a net CO2 neutral-ish technology because it at least absorbs some CO2 in the growing of the fuels.
So are there any challenges with renewable jet fuel?
There's a lot of challenges.
Okay.
And the main challenge is cost. It's very costly. So the cheapest way to make these fuels is kind of what I've been describing. You take an oil, like use cooking oil. That alone is at least 2 to 4 times the cost of fossil jet fuel. And that one is tough because there's only so much used cooking oil out there. You can use other oils like soybean oil, but that has fewer emission benefits associated with it because then you're growing soybeans to cultivate further oil. So you have land issues, you have, all the pesticides and fertilizers and emissions that come from agriculture with that.
Who makes this stuff?
It is mostly the oil refineries these days.
Really?
Because they can utilize existing oil refineries and upgrade them to handle a bio oil similar to a fossil oil. The process for making it becomes quite similar. So your largest producers are things like Neste, or here in the US, Phillips 66, and Valero have some pretty big operations.
Now, you talked about 2025 numbers, but how do you compare that to 2024? Like, was it a significant jump?
Yeah, so this was a really big, well, 2025 numbers so far is on track to double 2024 numbers of production of this fuel in the US. 2024 was a quadrupling of 2023 volumes. So these are really growing at a quick rate. That said, it's growing from a very small number. So even with this quadrupling and doubling, we're still at less than 0.5% of all US fossil jet fuel, or less of all US fuel.
So it seems to me this is probably one of those supply and demand situations. I need demand to ramp up production to bring down the unit costs here. So what are the airlines committed to taking this fuel?
This is definitely a chicken and egg scenario. The airlines have targets in place. A lot of them want to have 10% of their fuel being SAF, sustainable aviation fuel, by 2030. But these are just targets. There's no real ramifications if they don't meet it. Some countries, like the EU and UK, are setting very strict mandates. So both of those regions have 2% mandates for SAF use in 2025, and that increases over time, and there are penalties associated with it if they don't meet that. Here in the US, we're definitely taking the incentive approach by offering tax incentives or other policy incentives to try and encourage production. There's no strict target.
Now, what about looking longer term? Like, is the outlook for this as it's been on this trajectory, you're saying, but can it continue this?
So that is a really good question. The countries like the EU and UK have very ambitious targets. The EU wants to see 70% of all jet fuel be made from sustainable aviation fuel by 2050. We at BNEF think that that's going to be very hard to achieve, just to produce that quantity of these fuels. Where would you get the feedstock from? Who would shoulder the cost of that? So we anticipate it'll probably be closer to sort of the 10% by 2050. 2030 is another time. There's a lot of targets. Like I said, airlines have 10% by 2030. We don't think that will be achieved either, just because a lot of projects have been delayed or canceled in recent years, especially as interest rates are high, policies have been changing. There's a lot of uncertainty, especially here in the US, where a lot of these facilities are being planned. So there's been a lot of slowdown and delay in this industry. And the 2030 might be a time where we see really ambitious targets and not enough supply to meet it.
I'm a little reticent to ask this question, but how has this current administration impacted the adoption of SAF, these
aviation fuels? Yes.
Yes.
You can't talk about aviation fuel without talking about policy. This current administration, aviation fuel is something that they've permitted. They've allowed policies. There was a tax incentive in the Inflation Reduction Act to continue. They've done a few tweaks, though, that really changed the game for the industry. The first is that they are really promoting domestic production ahead of decarbonization. So things like U.S. crops now fare better relatively than, say, imported used cooking oil. The other challenge is they've sort of shifted the incentives a bit, so now it's a lot cheaper to produce the counterpart, which is road fuel, renewable diesel, for trucking than it is for sustainable aviation fuel. They're produced in the same method. It's a tad costlier to make jet fuel over diesel just by the mechanics of how it's produced. So the Inflation Reduction Act offered more of a tax credit for jet fuel, making the economics kind of more on par. They've sort of reduced that leg up, so we expect more diesel, less jet fuel in the coming years.
All right, Anna Davis, thank you so much. Anna Davies, I'm sorry, head of renewable fuels at BNEF, joining us here in our Bloomberg Interactive Broker Studio. Supply of renewable jet fuel in the U.S., known as sustainable aviation fuel, is breaking records. 2024 supply was 4 times that of 2023, and 2025 is on track to be 2 times 2024. So moving higher, but a long way to go, and we'll stay on top of that story. Looking at the markets here, not a lot happening, folks. I can't sugarcoat it for you. Nothing on the indexes. Let's just move on, shall we? I'll give a shout out to Tom Keene's VIX. We're now sitting just above 15, but pretty docile, I would say. The Bloomberg Dollar Index showing a little bit of life. We'll take that because it's still down around 9% year to date. The dollar is not rebounded. For Alex Steele, I'll call out the WTI crude oil. We're now below $63 per barrel. I think I'm going to get below $3 a gallon the next time I'm at the pump. Gold, pretty much unchanged, $3,300 an ounce, and BitDog, 115. That's called 116. We'll have more coming up. This is
This is Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, Lisa Mateo, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Historic day. I mean, as Tom Keene started off our morning this morning on surveillance, a historic day at the White House today. The leaders of some of the leading European countries, along with President Zelensky from Ukraine, coming to the White House to meet with President Trump. And we want to get a sense of how that might go and how the president might approach this delicate situation. And there's absolutely no one better to get inside the head of President Trump than Tim O'Brien, senior executive editor for Bloomberg Opinion. He has a long, long history dealing with President Trump for decades here in New York City. Tim, you have an opinion column out today. Don't expect Trump to put Ukraine above himself. What do you mean about that?
Well, it's so much of what President Trump is doing in his second term is about embracing his ability to exercise unilateral authority across many, many venues. We've seen it on tariffs, for example. We've seen it on some of his efforts to take stakes in publicly traded companies. We've seen it on immigration. We've seen it on the occupation of a series of U.S. cities. And now we're seeing it, it's his preference for how he acts and thinks diplomatically. He personalizes these situations. He likes to conduct a lot of the negotiations in the dark. We don't get good records about what's being sought or what's being said. And at the end of the day, it's hard to separate how much of this is about Trump's own self-interest and how much of it is authentically geared toward constructive national security policies, and in Ukraine's case, a stable and safe and economically viable Western Europe.
Wrong button. There we go. So Trump's meeting with Putin, it raised concerns among European leaders. And we were just talking right before you came on here, you're saying like they're kind of hovering around, like protecting the little brother in a way. Yeah. But can you dig into the European leaders? I mean, they have a stake in this.
They have a stake in this. And I think, of course, some of it is about protecting an ally. But it's also they're concerned about their own futures. It's no secret that Putin has had designs on the Baltic states. For some of the same reasons he's had longstanding designs on Ukraine. And so those countries are well aware of it, as are the succeeding neighboring countries in Scandinavia and elsewhere in Western Europe. And I think they rely on the U.S. for a guarantee of safety and stability, and they don't see this as limited solely to Ukraine, and no one should. The idea that the U.S. itself doesn't really have anything to profit from protecting Ukraine or ensuring a stable Europe is just short-sighted, and it contradicts very hard-won historical experiences that have taught us otherwise.
Tim, do you believe President Trump is committed to doing the hard work to get a just peace with President Putin? Because it seems like President Putin has most, if not all, of the leverage, not the least of which time.
Well, and the question is, why does he have leverage over the United States? We can understand why he has leverage over Ukraine. He's been willing to churn hundreds of thousands of troops out of Russian prisons into Ukraine to keep a war going now for 3 years. But that shouldn't grant him leverage over the United States. And Donald Trump went into the meeting on Friday in Alaska saying that he was going to seek a ceasefire before peace negotiations could begin. And within the short span of that meeting, he did a complete about-face and sort of threw the chips onto Putin's table. So we have to ask, what is Trump's interest in doing that? Why does he believe that Putin has leverage over the most economically and militarily powerful country on the planet? It is not in the U.S. interest to negotiate this way.
One of the things I do believe that President Trump really feels passionately about is he's so abhorred by the pain and suffering and killing that's happening in Ukraine. I think he really personally wants to stop that. Is that enough for him to get tough with Putin, do you think?
Apparently not.
Okay.
At this point, I think between 60,000 and 100,000 Ukrainians have died. I think the overall casualty numbers are around 1.2 million. And I think it's 100,000 to 200,000 Russian soldiers are believed to have died. There's no indication that that's going to cease by appeasing Trump or Putin in the short term.
You mentioned President Trump as a deal maker. That's how you started off talking. Will we see a trilateral meeting? Do you think this will happen?
I have no idea. I mean, I think as well as I do at this point. I think I think there's a myth around Trump, the deal maker. His business history is littered with bankruptcies and broken deals. He's an impatient man. He's very visceral, and he loves being in the spotlight. And those are three factors that actually can undermine effective deal making. The best deal makers are people who have long-term plans, stick to their guns, and seek constructive outcomes where both sides can win. That's not often been where he's resided.
30 seconds. What do you think his objectives are here with today and then future meetings with Ukraine? What do you think his focus is or objectives are?
I think he would like the war to end because he promised when he got elected that he would end it in a matter of days, and he hasn't. And so I think there's this, his ego is closely involved. We have to ask whether his own business interests are involved, as they've been in so many policies he's pursued. That's a question hanging over all of this. And then I think lastly, I just don't think he has enough of a stake in a long-term solution here to pursue short-term goals that are commensurate with that.
All right, it will be a historic time at the White House this afternoon in any case. Tim O'Brien, thank you so much. We appreciate it. Tim O'Brien is the Senior Executive Editor for Bloomberg Opinion. For our listeners in the in the U.S., a reminder, you can listen to us via satellite radio and Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up in just a moment. And the future's turning a little bit softer here. S&P down 6, Dow down 20, and the NASDAQ down 36. So a little bit of a wait to this tape here. We're going to have more coming up. This is Bloomberg.
CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. Key meeting today at the White House. Ukraine's president will be there just 3 days after President Trump met in Alaska with Vladimir Putin.
Zelensky's last visit to the White House didn't go so well.
You don't have the cards right now. With us, you start having cards.
Right. Today, he brought some European leaders as backup to help end Russia's war in Ukraine. While President Trump was pushing for a ceasefire before his meeting with Putin on Friday, he's now suggesting going directly to a peace agreement instead. But Zelensky doesn't seem to be on board.
It's impossible to do this under the pressure of weapons.
Stacey Lynn, CBS News, the White House.
Overseas, an apparent movement in the Middle East.
I'm Vicki Barker at the Foreign Desk in London. Possible ceasefire in Gaza, which could pave the way to the freeing of Israeli hostages there. Hamas has agreed to a new ceasefire proposal without requesting any changes. The deal reportedly calls for an initial 60-day truce with hostages released in 2 stages. Israeli Prime Minister Benjamin Netanyahu has been insisting that all the hostages be released at the same time, but Israeli media are reporting he's prepared to consider a partial ceasefire and staged hostage releases.
A House panel investigating the Jeffrey Epstein case is getting closed-door testimony from former Trump Attorney General William Barr. CBS's Katrina Kaufman.
It was very unusual for an Attorney General, Bill Barr, to personally oversee this investigation of Jeffrey Epstein, to personally be reviewing that surveillance footage. Also, his staff was on site shortly after Epstein's death. That was very unusual as well with an inmate death.
2 weeks after leaving, Texas Democrats heading back to the state to face off with Republicans who are pushing a redistricting plan. CBS News Texas reporter Trevor Sohaki.
Multiple sources tell CBS News that the Texas House Democrats who left are now coming back or already back in the state capitol, but each is coming back according to their own schedule. Now, we are going to be waiting and watching, though, because they have to meet a quorum, and we'll have to wait and see because the House is reconvening today.
There's word Newsmax will pay $67 million to Dominion Voting Systems over false claims the cable channel made about the 2020 presidential election. Now to northern Utah, where 2 police officers responding to a call about a domestic dispute were shot and killed. And Brigham City Police Chief Chad Reyes says a suspect is in custody.
The suspect was booked into the Box Elder County Jail on charges of aggravated murder.
A sheriff's deputy was wounded. Checking Wall Street. Right now, the Dow is down 13 points. The S&P is down 4. This is CBS News. A prediction from a man who was once one of the kings of late-night TV.
Late-night television, as we have known it since around 1950, is going to disappear.
Conan O'Brien gave his prediction during a speech at the Television Academy Hall of Fame ceremony.
Steven is going to evolve and shine brighter than ever in a new format that he controls completely.
Perhaps a la Conan, who moved on from his TBS show in 2021 to host a podcast and star in an HBO Max travel show. Last month, Colbert announced CBS was canceling The Late Show in May. Deborah Rodriguez, CBS News.
MSNBC says it will be rebranded as MS Now later this year as the network prepares for a spin-off from Comcast. It'll also shed the Peacock logo and its link to NBC News. It's been around as MSNBC since 1996. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
It's a high-stakes day here in Washington as President Trump meets with Ukrainian President Zelensky. Welcome to the Monday edition of Balance of Power. We are moments away from European leaders arriving at the White House to show their support for Ukraine as these talks continue. I'm Tyler Kendall here alongside Bloomberg's Michael Shepard in Washington. Joe Matthew is off, and we have a busy afternoon ahead. We'll bring you all those updates. Bloomberg's Jordan Fabian with the view from the White House as President Trump says it's now on Ukraine to make a deal. And later this hour, we'll speak with retired Lieutenant General Ben Hodges. He's the former commanding general for the U.S. Army Europe on everything you need to know about where this conflict stands now. Mike, coming off of last week's meeting between President Trump and Russian President Vladimir Putin, there are a lot of big questions here about what was discussed and how they are going to move these talks forward.
You're right, Tyler. It was really unclear what emerged from that meeting, especially when it comes to the U.S. and European view over the years when it has come to Ukraine. How much of a pivot has Donald Trump made, and how much of a pivot has he made toward Vladimir Putin once again? We have seen him move kind of back and forth in recent weeks. We had even seen him questioning Putin's willingness to actually commit to any sort of a ceasefire or peace agreement. Now we saw that tune change, Tyler.
A lot of big questions. And right now, if you're joining us on YouTube, Originals, wherever you might stream us, and for our radio listeners, we're looking at a live look at the White House. The honor guard is out. That's what we typically see when leaders visit the White House. And Mike, today we have a half a dozen of European leaders that are going to be here for these talks, including the UK Prime Minister Keir Starmer, also the French President Emmanuel Macron. We've already gotten a note that he's already touched down here in Washington.
Yes, and Tyler, we're going to be watching the body language of these leaders very closely. And we've seen so many times before when, heads of state, heads of government have shown up in the Oval Office and had a moment with Donald Trump. And sometimes those moments haven't gone so well. And of course, the one that we all can think of was Volodymyr Zelensky's last visit with the president and Vice President J.D. Vance, which really, in everyone's view, went off the rails. And we'll want to see how the conduct of this meeting carries out and unfolds.
Right. It's something we'll be watching, and also something that the markets are watching too, right? We're going to get a check here shortly on this.
That's right. And now let's go to Charlie Pellet, the voice of Bloomberg Radio and the New York City subway system, for a look at those markets now.
Hi, thank you very much. And here's what's going on. Back to work Monday. We've got U.S. stocks now lower. The Dow, the S&P, NASDAQ, we're all in the red. S&P down 7, drop there of just about 0.1%. Dow Industrials down 32. On the Dow, a decline of 0.1%, while NASDAQ is lower by 34. For the NASDAQ Composite Index, a drop right now of 0.1%. The Russell 2000 Index of small cap shares is advancing up by 0.3%. Your 10-year, 4.33%, with the 2-year 3.76%. Gold down 0.1%, 33.32 the ounce, and West Texas Intermediate crude 63 even a barrel, up by about 0.3%. Bottom line here, quiet start to a key Fed week. Geopolitics, though, coming into play as Ukrainian President Vladimir Zelensky and his European allies get ready to meet with President Trump. We got you covered right here on Balance of Power. So again, recapping, S&P little change, down by under 0.1%. 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Balance of Power continues. Once again, your hosts, Tyler Kendall and Michael Shepard.
All right, Charlie Pellet reporting for us from World Headquarters in New York. Thank you so much. And as Charlie mentioned, all eyes right now are trained on the White House as we wait for European leaders as well as Ukrainian President Zelensky to meet with President Trump. And here to break down for us what we should expect is our very own Bloomberg's Jordan Fabian, who helps lead our White House coverage here at Bloomberg News. Jordan, what should we expect here? Because the last time that we had Ukrainian President Zelensky in the Oval Office, the meeting ended early. It devolved into a shouting match. How could this time be different?
Well, I think you hit it, Tyler. And I think anything can happen. We have to be ready for anything to happen in that Oval Office. I think back in February, everyone was expecting an orderly meeting where they would come to an agreement on path to end the war. And of course, it devolved into a shouting match. And I will mention that this time around, you're going to see a similar cast of characters in the Oval Office, including Vice President J.D. Vance, who helped provoke that outburst that occurred. So I think we should, again, be ready for anything, not to mention the fact that Donald Trump is going to try and press the Ukrainian president, Volodymyr Zelensky, to take a position he's uncomfortable with, which is ceding territory, in fact, some that the Russians don't even control, in exchange for peace.
Jordan, we have seen the president evolve in his position on Ukraine since taking office, and then perhaps evolve back again. Several weeks ago, we were getting signals from him of frustration with Vladimir Putin over refusing to come to the table, refusing to actually take steps to end the war. But things really seemed quite different Friday when the two men sat down together.
Yeah, look, I think the president has always been solicitous of Vladimir Putin, and the fact that he got him to come to the United States, sit down with him. There was all that pageantry with the red carpet. That went a long way in Donald Trump's book. And now the test for both Volodymyr Zelensky and the European leaders is to get him back into their corner. You know, Donald Trump is also someone who often listens to the last person in the room. So is there someone in that European delegation, if it's not Zelensky, like Alexander Stubb or Giorgia Meloni, someone he's close with who can get him back on board?
So how eager is the president to reach a deal? Is he, are we sensing this urgency? He skipped over now the ceasefire step?
Absolutely. The president, in his campaign, he said he could end this conflict on day one. That obviously didn't happen. One of the big promises to his supporters was he was going to end wars and get the U.S. out of being involved in foreign wars. This has persisted along with the conflict in Gaza, and that's been a sore spot for Donald Trump. So he is definitely eager to see an end to this, which may be why you saw him adapt so quickly to Vladimir Putin's position of, let's just skip ahead, let's skip the ceasefire, let's go to a full peace agreement, even if the terms aren't what Ukraine wants.
I want to drill down a little bit more on the optics that we're going to see today. And you spoke about some of it, but we have quite the group descending on the White House. And I think it's fair to say that some of them have a relatively warmer relationship with President Trump. I'm thinking about the Italian Prime Minister, Giorgia Meloni, Keir Starmer, the first to ink a trade deal. How is that going to potentially alter the dynamics today when you know that these leaders are pushing for some things that this White House hasn't really been on board with?
Right. I think the Europeans saw what happened last time when Zelensky was left on his own in the Oval Office and saw how detrimental that outcome was to their position. And so they're sending in this almost support group to try and help him out. And as you mentioned, Tyler, carefully calibrated it with leaders who Donald Trump has gotten along with in the past, and especially the leader of Finland, the leader of Italy. He's had an off and on relationship with Emmanuel Macron of France, but he'll be there. The UK Prime Minister, he was just in Scotland with and had spent like 2 days with at 2 different golf courses. So they're certainly trying to appeal to his sensibilities in this meeting.
Do we have a sense that they actually have his ear? And especially, as you said, he has been so solicitous in the past of Vladimir Putin. Will they have his ear in a different and perhaps more productive, in their view, way?
Yeah, I mean, there are certain people, I mean, Stubb especially has gotten along well with Donald Trump, but the challenge for them will be to frame this in a way that Trump sees it as benefiting himself. Like, Trump is never going to do something that is benefiting another person or another country over himself. We've seen this time and again. And so if they can frame an outcome that is beneficial to Ukraine in a way that seems beneficial to Trump as well, I think that's the key to getting him on board.
For those tuning in on YouTube or wherever you may stream us, it looks like we are getting the first arrivals of European leaders at the White House. A few leaders now starting to step out. It looks like the first one is the NATO Secretary General Mark Rutte at the White House, greeting U.S. officials as they begin to walk in ahead of this meeting. Of course, we're expecting about half a dozen of them to be here later today. But Jordan, I also want to talk about the U.S. side of things. What do we know about the president's own negotiating team? We're talking about Steve Witkoff, who has really taken a role in these negotiations. Secretary of State Marco Rubio. What do we know about how the White House has calculated its side of these negotiations?
Certainly. I mean, Steve Witkoff has played a big role. He, doesn't have a lot of foreign policy experience. A lot of the proposals he floats on television are, he presents them as novel and extraordinary when in fact they're not, and it kind of betrays his lack of experience on the world stage. The problem is he's a personal friend of Donald Trump, and so I think that's been a challenge for the Europeans, is that you have someone talking to Vladimir Putin who doesn't necessarily know the history of this conflict. We're talking about something like security guarantees. That was something that was offered to Ukraine in 1994 that Russia then violated when they invaded Crimea. And so for the Ukrainians, they've been working through Keith Kellogg, his Ukraine envoy. Secretary of State Marco Rubio is someone who has a little more experience, but doesn't appear to have as much influence as Steve Witkoff.
Jordan, when it comes to this question of security guarantees that you just mentioned, is it possible that the U.S. and Russia could be on the same page when it talks about them? This is what we seem to have heard from Steve Witkoff over the weekend, and yet his version of security guarantee sounds an awful lot like Article 5. How is that something that the Russian government would accept?
Yeah, that's something they'll have to work out. But, Mike, you'll remember that, 1994, when they did the Budapest Memorandum, Russia signed that. And that said, Ukraine will give up its nuclear weapons. And in exchange, the signers of that pact, which included Russia, will not use military or economic coercion against Ukraine and take its territory. And Russia did just that. And so I'm sure that Vladimir Putin told someone like Steve Witkoff, who might not know that history, hey, yeah, we're on board for security guarantees. We've been on board for security guarantees. And he says, that sounds great. So they might be on the same page, but then putting it into practice in a way that is going to gain the trust of not only Ukraine, but the European leaders is something that's going to be very difficult to achieve.
And as we're talking, more leaders arriving at the White House. We just saw the EU's Ursula von der Leyen get out of a car, shake officials' hands and walk into the White House. They are on the South Portico. There are so many of them coming. Normally, we see them enter through the White House North Lawn, but today, because there was such a large gathering, it seems that they have opted for the south side of the White House. But Jordan, I want to build on this idea of security guarantees, because for such a long time, right, we've really heard the White House say that security guarantees were going to be implicit, that they were going to be because the U.S. had this vested economic interest in Ukraine. They signed that economic cooperation agreement earlier on, but now it seems like the White House might be willing to put something a little bit firmer on the table.
Yeah, there's some sort of mechanism militarily that's been discussed, but it's very vague at this point. And I think with the economic incentive too, one thing that doesn't get talked about a lot is they don't know actually how many rare earths or what kind of rare earths are there. And so while that is, they might have the right of first refusal over them, if it's not a big stockpile, one incentive is there for the U.S. to say, yeah, we absolutely need this territory to satisfy our needs on that front.
Jordan, what would the U.S. role be when it comes to ensuring that these security guarantees actually work and have some teeth? Will there be a U.S. role? We also detected a shift in that position.
Certainly, yeah. They've talked about some sort of arrangement where, U.S. troops aren't necessarily on the ground. There would be European troops stationed there with some sort of U.S. advisory role. But how that plays out, remains to be seen. And also, you've seen this before, conflicts dating back to Vietnam, where, the U.S. is in an advisory role and all of a sudden they get pulled into conflicts. And I think Donald Trump and many of his supporters are wary of that. They know that, and, that they could see how that could devolve into a situation that would violate his campaign promise not to get the U.S. involved again in foreign conflicts.
Well, let's build on this because his vice president, J.D. Vance, was one of the staunchest opponents of additional aid to Ukraine. Last year in April, when we saw that additional aid package held up, that was ultimately a campaign that was led then by then Senator J.D. Vance. How do we know the different how have we seen perhaps the administration defend against this idea? Because J.D. Vance has come out in support, obviously, of how these negotiations are going.
Certainly. I mean, I think for all the people under Donald Trump, they tend to just follow which way the wind is blowing when it comes to Donald Trump. So, for J.D. Vance, someone who wants to be president perhaps in 2028, he's not going to do anything to get really publicly crosswise on with Donald Trump. Maybe if he doesn't believe, in his heart of hearts that Ukraine should receive additional U.S. military aid, I doubt that he's going to do something to publicly break with the president in this kind of format.
And he also has something else at stake, his own presidential ambition. So how carefully is he treading in these moments now?
Yeah, it's a tough balance for him because he knows, or at least he thinks, that the Trump base doesn't want, again, additional U.S. involvement, perhaps U.S. aid to Ukraine. And so he signaled that he's on that page. But again, you don't want to have this break with Donald Trump because we saw what Donald Trump did with Mike Pence, his last vice president. He basically quashed any question of his political future on January 6th, and any other administration officials who've gotten crosswise with him, he's hit them over the head. And so J.D. Vance certainly knows that.
Jordan, Fabian, thank you so much. Thank you for joining Balance of Power today. And we have more leaders arriving here, Tyler.
Right, exactly. We just saw the UK Prime Minister Keir Starmer enter the White House. We were talking about relatively warm relationships before. Of course, the United Kingdom was the first to ink a trade deal. And Mike, I was reading one of our analysis from our analysts at Bloomberg Economics, and I found it so interesting because they said that, of course, these European leaders want to play a central role in this. They had wanted to be at the table in Alaska last week, but actually this is considered to be a relatively positive sign for them because at least now the administration is discussing with them this idea of how they're going to move forward in Ukraine instead of the more unilateral approach that we had saw when the Trump administration first began and reached out to Russia. We saw those meetings in Saudi Arabia earlier this year where Ukrainians and the Europeans were not conferenced in at all.
And it's interesting in the sense that the president has tried to enlist more of the counterparts that he has gotten to know better since taking office this second time around. And that includes, of course, the UK Prime Minister Keir Starmer, but also familiar faces to him like Giorgia Meloni and, of course, Emmanuel Macron. We're joined now by Melinda Herring, who's Senior Fellow at the Atlantic Council's Eurasia Center and an authority on Ukraine and Europe. And we want to thank you for joining us today to talk about what could be a very consequential moment for not only Donald Trump and his foreign policy ambitions, but of course for Europe and Ukraine. The president is moving very fast with this. What is the risk in terms of the process in crafting an agreement that will really hold and ensure Ukraine's integrity and security?
Thanks for having me here. So I would say don't put any champagne on ice today, okay? Everyone's here, everyone's excited, everyone wants the war to be over. But this is not going to hold unless Ukraine and its security aspirations are part of the picture. And right now, there's no real lasting security guarantee. Yesterday, we saw Steve Witkoff kind of writing something on the back of a napkin on the Sunday shows. That's not going to hold water. So this is a very complicated problem, but it's also a domestic problem, Mike. So Zelensky's going to have to sell this to his people. He's going to have to convince millions of Ukrainians to stand down. And right now, what's been offered is certainly not good enough.
Now, on the question of the security guarantees, is there a version of this that really would be acceptable to both Ukraine and Russia? There does seem to be a gulf. The whole question of NATO membership and the idea of NATO support for Ukraine has been anathema to Vladimir Putin really from day one. He claims it as really an origin cause for his decision to invade the country back in 2022. And yet what we're hearing from Steve Witkoff sure sounds Article 5 like. So how does what the U.S. puts together as a security guarantee together with Europe emerge as something that's palatable for both sides?
That's the big question we're going to be talking about at the White House today. So I think it involves boots on the ground from the French and from the British, and we'll see if what the Germans are willing to do. I don't think they're willing to do that, but Britain and France have talked about putting boots on the ground. We need to see what that would look like. I don't think that's going to assure the Ukrainians. You have to remember, Ukrainians have a long, painful history with this. In 1994, they gave up their nuclear arsenal with security guarantees from the United States, from Britain, and from Russia. And it was all for nothing. And the Ukrainians remember this. You have a conversation with any Ukrainian, and they will say, we remember the Budapest Memorandum. So Ukrainians are unwilling to give up any kind of land swap. It's not going to happen today. I think what we're going to see today is damage control. So President Trump many things can be said about him, but he always remembers the last conversation he has, and he's very influenced by the last person he spoke with. So I think we see 7 European leaders in the White House today trying to pull him back. He's accepted Putin's narrative. That's what we saw in Anchorage, just to get to the point. He accepted that, no, we're not going to do a ceasefire. We're going to go straight to a peace agreement. And he's saying today, it's up to Ukraine to end the war. That's nonsense. Ukraine started the war, and Russia is the only one that can stop it. Russia has to go home. Russia has to give something. So I think it's what I'm watching for today is, will the Europeans be able to say, Donald Trump, hello, Russia is not as strong as you say. Its economy is doing pretty badly. All the military assessments that the British government just put one out, and it says it'll take years for the Russians to take those 5 oblasts that it wants to occupy and another 1 million soldiers. The Russians are not in great shakes today. So I think that's what Europe is trying to do. And it's also there to remind him of the stakes. You know, they need the United States for these security guarantees, but if they can't get a deal, Europe is really going to have to. It's really going to have to carry its own weight, and that's pretty scary.
Well, if you're watching us on YouTube, streaming us, our radio listeners, we're now seeing Italian Prime Minister Giorgia Meloni enter into the White House. Her car rolled in to the South Lawn, flanked with Italian flags as we keep seeing these leaders rolling in for these negotiations. And Melinda, I want to pick up on something that you were just discussing when it comes to territory. Can you talk to us about how critical the eastern southern parts of Ukraine, we're talking about the Donbass region. Our reporting indicates that President Trump had relayed to allies that Putin wants Ukraine to seek control of that territory, even though Russia doesn't have military control of it. Why is this area such a friction point in these talks?
Sure, it's a great question. So we don't know the details, but what has been leaked out of Anchorage is this. Putin wants 5 oblasts. These are regions of Ukraine. And the Russians already occupy the northern oblast. It's called Luhansk. The next one down is called Donetsk, and that one's really crucial. The Russians occupy a good chunk of it, 87%. But the Ukrainians have really dug in there, and they have many cities that are called fortress cities. And they are heavily defended, and they are key to Ukraine's success. So they have to stay there. They're not just going to walk away from that. And then Putin allegedly wants to freeze the line in Zaporizhia and Kherson Oblast, and they want Crimea legally recognized. If you remember, back in 2014, Russia illegally invaded Crimea and had a bogus referendum. And it says that Crimea it's ours, but the international community doesn't recognize it as such. So if Zelensky walks into the White House and says, okay, uncle, I give, this has enormous implications for the world order. It means might makes right. It means that the Chinese are licking their lips and saying, oh, baby, it's time for Taiwan. I mean, this would undo the order that was established after World War II, and it would consign 43 million, you get 37 million Ukrainians up to a fate. They didn't do anything wrong. This is not the American order that we've defended since World War II.
And this puts an enormous amount of pressure on Volodymyr Zelensky as he walks into the Oval Office today. And we're thinking back to that first meeting, which, as we all remember, really went in a very different direction than Ukraine would have wanted. What is the Ukrainian president's ask, and what is his goal today as he heads in?
I think the word you're looking for is disaster. That meeting was awful, and no one wants to repeat that. So I think Volodymyr Zelensky is a showman. He's extremely articulate, but he has a short temper, and he has to be very careful. J.D. Vance is going to be in the room, and J.D. Vance is going to poke him and try to anger him again. And so he's got to defend Ukraine's interests. He's got to keep his cool, but he also has, he has the Italian prime minister there to help him. My eyes on Mark Rutte, though. Mark Rutte is NATO Secretary General. He's got Trump's number. He knows how to flatter him, and I think he's going to help Zelensky. So when it gets heated, I expect the Europeans to pull back and turn down the temperature. But the job today is there's not going to be a land swap. We're not going to be having this discussion at the end of the day. Mark my words. We're going to be talking about they're going to go back to a ceasefire agreement and security guarantees. The other thing that I think Zelensky will talk about is justice. There was no talk about justice in Anchorage. So Russia has kidnapped more than 19,400 Ukrainian children. It's taken them, it's given them new names and new identities. Those children have to be returned. That was not talked about. There are so many war crimes. There are rapes. These things have to be addressed, and they haven't been talked about at all.
And we did see First Lady Melania Trump write a letter over the weekend that touched on this idea that you're talking about these children that were taken from Ukraine. I do want to go back and pull on your expertise on something that you were just talking about. When you were mentioning the Vice President J.D. Vance, we just had this conversation with Jordan Fabian earlier in the hour, this idea that he had been a pretty staunch opponent of additional aid to Ukraine. Could you give us just a little bit of background here about how we got to this point when it does come to U.S. support in Ukraine, the type of support that we have given up to this point when it comes to additional military assistance?
So the United States has been the big player. And the last big package that the United States authorized was in April of 2024. And at this point, it doesn't look like this Congress is going to authorize another package. Never say never. There's a bill that Jean Shaheen and Murkowski just put in place that would authorize additional monies. But at this point, I don't think it's going to happen. So the United States is a massive player, but Europe has had to step up to the plate. And there's more than one way to give. There's military assistance, there's financial assistance, and the U.S. has been part of that. Europe's been a bigger player on that as well. But we also provide intelligence sharing, and that intelligence sharing has been key. So the two things that I'm watching for, to cut to the chase, the United States must supply intelligence sharing. That's absolutely crucial to keep the war effort going. And the other thing that the Trump administration just authorized is a deal. So this is through NATO, and Western European countries have a $1.5 billion deal where they can buy weapons from the United States. It's mostly Patriots, it's air defense. And our Patriot systems are really special because they can take out ballistic missiles. These are the missiles that are killing children at night, that are hitting hospitals. So Europe is buying our weapons and sending them to Ukraine. So at the end of the day, if Donald Trump it keeps on the intelligence sharing and he continues to allow Europe to buy U.S. weapons, I'm going to be pretty happy.
Do you see any prospect of Vladimir Putin taking whatever emerges from today's discussions and actually buying into it and accepting it? What is the incentive for him to actually stop prosecuting this war in Ukraine, which is now well into 3.5 years?
Putin, he's got no incentive. Mike, he thinks he's winning, and he's been making small incremental progress. This has not been a great year for him, but he's all in. He bet his presidency on it. He's not going anywhere.
And you talked about the Russian economy, though, and how much it has suffered as a result. Have the sanctions really had that kind of effect, and are they having the result? There's a difference between the effect on the economy and the actual political result. Would further sanctions even work at this point?
So do sanctions change behavior? No, they've not changed Russian behavior, right? Just to cut to the chase. But there's many more things we can do. And if President Trump or his team is listening, I just got to say, enforce what you got, baby. You got some good sanctions there, but make sure the Department of Treasury is enforcing. And do the things that you've threatened to do. There's another bill right now, Lindsey Graham's bill, that would increase the sanctions by 500%. He could also increase secondary sanctions on China. President Trump has a lot of options. He actually holds the cards. He could change Russia's behavior, but you can't just do it through sanctions. Sanctions are not enough. You also have to supply the Ukrainians with the military might to defend their territory.
As we've been talking, we did just see the Finnish President Alexander Stubb arrive at the White House. If you're keeping track with us, we've so far seen the NATO Secretary General Mark Rutte, the EU Commission President Ursula von der Leyen, UK Prime Minister Keir Starmer, and also the Italian Prime Minister Giorgia Meloni. We are still waiting on the French President Emmanuel Macron as these leaders come to the White House for those discussions today to lend their support to Ukraine. Picking up on what we were just talking about, you mentioned so-called secondary sanctions, and we heard President Trump over the weekend say that he's not looking to up those tariffs, so-called secondary tariffs. There's some different wording being thrown around here. But tariffs, we've seen so-called secondary tariffs ramped up on India, for example, over their imports of Russian energy supplies. President Trump says that for now he's going to hold off on doing that for China. And he said that it's because he made progress with his talks with Putin. I'd love your geopolitical perspective here. How much of a factor is actually China when it comes to the future of the war in Ukraine?
Huge. So both Russia and Ukraine have been getting their drones from China, but Russia relies on China and on North Korea to keep its war machine going. It cannot prosecute the war without the Chinese. But in President Trump's mind, he started with the Indians, and that was supposed to be a sign to the Chinese that you're next. If you don't fall in line, you're next. But we don't see really any action on that. President Trump likes to threaten sanctions, and then he backs off. Even he had threatened much harsher sanctions, and then he just sort of gives. One other point that I think that's worth bringing into this discussion is that if we do get to a land swap today and they break out the maps and they start talking about giving up territory, it's not Donald Trump's territory to give away. And U.S. law, the sanctions prohibit him from giving any Ukrainian territory away. Congress would have to authorize it, but even more so, Ukrainians would have to hold a referendum. So this whole talk, we're all getting, I think, agitated because of what Putin was suggesting up in Anchorage. But the bottom line is Putin is trying to kick the can down the road. He wants to continue the war to go on. There are no consequences, right? He bought himself more time in Anchorage. That's what Anchorage was about. He got a red carpet treatment, and he was treated like a major head of state. And he is according to the International Criminal Court, he's a wanted war criminal.
When it comes to Ukraine, though, it is not up to the U.S. to decide the fate of those territories. But what is Ukraine's view? At some point, would they say, hey, look, we've had enough, and we may just have to recognize a redrawing of borders to simply spare us from more bloodshed? Or how close are we to that point? Will Volodymyr Zelensky say, look, that is a red line still? We are, and he has made clear in his most recent comments that that's the case, but behind closed doors, will there be perhaps a different tune?
No, there will not be another tune. That is an absolute red line. Until there are real security guarantees, there's not going to be a discussion. And I think it's worth pointing out, yesterday Rubio said there has to be, both sides have to give. What have the Russians given? Have the Russians given any territory back? Are they offering any territory? Are they conceding anything? The Russians haven't offered anything in return.
So part of the security guarantees that we had originally heard, and we were talking about this earlier, is this idea that the U.S. kept saying that security guarantees were implicit. The U.S. had a vested economic interest after signing that economic cooperation, the so-called critical minerals deal. Where does that stand now, Melinda? Is that already in effect? How is that playing into these discussions, if at all?
It's not playing into the discussions. It's a great question, but the critical minerals deal, we're years away from that. So unfortunately, I think that was more of a theoretical argument that it would provide some kind of safety assurance to investors. We still see rocket and missile attacks every single night. The month of July had a 798% increase in 2025 over 2024. I did the math. There were 5,208 rocket and drone strikes this year. And the previous year, the figure, was a fraction of that.
What was the logic, in closing, of skipping over this ceasefire step, if there was any at all? Is it really just about getting to a grand bargain, a grand deal faster?
So it is Vladimir Putin's strongest desire to go straight to the peace agreement. He can continue the war, and it is unlikely that we're going to get a peace agreement. This is a really thorny issue. I think it's worth, and this is not me being partisan at all, but you can't spend 3 hours in discussions about an issue that is this complicated and expect both sides to come to an agreement. They didn't do their homework in Anchorage. We're nowhere near a peace deal, unfortunately.
All right, Melinda Herring of the Atlantic Council, we thank you so much for your expertise joining us here on set in Washington. A big story today as these leaders continue to file in to the White House for these discussions. And Mike, while we were talking, there was another national security story that crossed the terminal. Bloomberg News reporting that the Trump administration is in discussions to take a stake of about 10% in Intel, according to a White House official and other people briefed with the matter. I know this is something that you cover very closely, and this really does extend into the conversation we were just having when it comes to national security in China.
Yes, very much so, Tyler, because the whole question of where semiconductors are produced has been one of enormous national significance, not only for this administration, but for the prior one. President Joe Biden got behind the CHIPS and Science Act as a way to stoke and incentivize more production of semiconductors, especially the advanced versions of chips that are used to power artificial intelligence. So much of those microprocessors are produced overseas, especially in Taiwan, which of course is geopolitically vulnerable. It is a self-governed island that China claims as its own. The risk of having all that production concentrated in one place is something that U.S. officials have acknowledged for a long time, and now there is this push to make sure more of these chips are made here. This is part of that effort. They want to shore up Intel as a key producer here in the United States, but Intel has had its struggles. It has put off completion of a factory that it had been planning in Ohio for a number of years. It is pushing it now past 2030, owing to really a lack of customers. You know, it's such a big fab, as they call it, that if they don't have the customers, they can't justify the expense. These factories cost tens of billions of dollars to put together, Tyler, and they take years to build. And if you don't have the commitments on the customer side, it can be a real challenge. So the administration is stepping in, looking perhaps to take a stake of up to 10%. And the idea would be to shore it up in the eyes of investors. It would speed some of the money from the CHIPS Act to the company to give it, an ability to use it much more quickly.
Fascinating story that we've been all on top of, especially Bloomberg's Michael Shepard, and Intel shares look to be down about 5.5% off of the news. And of course, this is a story about national security, which brings us back to our other lead story of today, which is these European leaders arriving to the White House in real time as we're talking. If you're following us on YouTube, if you're listening on radio, we still have this view of the White House South Portico as these leaders arrive. While we were chatting, the German Chancellor Merz arrived at the White House, joining the other list of leaders that are already there, like the UK Prime Minister Keir Starmer, also NATO Secretary General Mark Rutte, who's going to be absolutely essential in these talks as we discuss security guarantees potentially for Ukraine going forward. And that's where I want to start by bringing in today's political panel. It's Jeannie Shanzano, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. She's also a Bloomberg Politics contributor. And we're also joined today by Moore Gillespie, Blue Stack Strategies founder and a Republican strategist. Welcome to you both. It's great to see you on what is a busy day here in Washington. Maura, I want to start with you. What is at stake here from President Trump as he enters into these conversations today? What are you looking for from this White House?
Well, given what was, kind of shown to us from the meeting with Vladimir Putin of Russia and Alaska, I certainly hope that he can turn the table as his previous meeting with Zelensky, not the one in Rome, but the one with Vance being in the room. I think that really left a poor taste in many of the world leaders' mouths, but also here in America, that was an embarrassing moment as far as diplomatic relations with Ukraine. And so I do think it's important that the president remembers that Ukraine was attacked. They were invaded unprovoked by Vladimir Putin. And so the concessions that they discussed in Anchorage are not things that from reporting is that Zelensky is going to be open to. So he needs to find a way to show Zelensky and the EU leaders that are there today that he is on their side, he is part of their team, and that they are trying to find a solution with Russia that saves lives, but also ends this conflict. And so how do they get there? I hope he shows that at the end of the day, his alliance and his partnership is with them and not with Putin.
Jeannie, this is Mike. I wanted to turn to you for some insight on what the political liabilities for the president and the U.S. overall are from your standpoint.
Yeah, there's enormous political liabilities just domestically. Donald Trump made a promise over 50 times on the campaign trail to end this war day one. And obviously, he has not been able to do that, nor should he have made that promise, because, of course, it was an unrealizable promise. And so that's not to say that American voters going to the polls are going to be keeping foreign policy fresh in their mind. But the fact that he made promises, he wants to show he can deliver on those. He's been unable to deliver on this one. And, I watched the summit very carefully on Bloomberg, and it was very clear when Donald Trump came out, didn't take any questions, highly unusual for President Trump because he loves a good press conference. And he said, this is up to Ukraine and Russia now. In other words, I'm leaving this in their hands. I have said multiple times I can resolve this, but you know what? I realize now I can't. And he cannot, because these positions are intractable. And today, what I suspect will happen is Vladimir Zelensky is going to be in a very, very tough position. Does he give up land in return for security guarantees? We saw over the weekend, Donald Trump took the idea of NATO off the table. He took the idea of Crimea off the table. Those are going to be very bitter pills for Ukraine and Zelensky to swallow, but I suspect he's going to be in a position of having to do that for security guarantees. And by the way, fresh in Ukrainians' minds, the last time the United States gave security guarantees, or the West did to them, they failed utterly. And so what incentive does Vladimir Zelensky have to believe that they'd work this time? So I think it's all going to be on Vladimir Zelensky, and he's going to be in a very, very tough position.
Well, Maura, I'd love to get your same thoughts on what Jeannie's talking about. All eyes today on Ukrainian President Zelensky, which, of course, last time he was in the Oval Office, the meeting really devolved into a shouting match. How much pressure do you see on the Ukrainian president today, and how have we seen perhaps this relationship evolve with the Ukrainian president since that meeting from the White House's perspective?
Certainly. Well, I don't think it's any coincidence that he's showing up today with other members of the EU who they met with over the weekend. And as much as the White House will say that it's not because of he needs backup, I do think that there is a recognition here that this is an issue that impacts the world order. And the meeting that the president had with Putin most recently in Anchorage, rolling out the red carpet, speaking so favorably about him, really did kind of set up this comparison between the two different meetings. And so it's really important for Zelensky to lean on the other EU leaders who are with him there today about the importance of what this means to the world order, not necessarily just for Ukraine. Yes, there's tough decisions for Ukraine to make because they are facing this brutal assault for the last 3 years where, Ukrainians have been attacked, killed, children have been taken. There's a lot that's going on here that he's going to want to talk about, but to get to Trump and to speak to him is by bringing these leaders together to say this impacts the whole world order. Vladimir Putin is a war criminal. He is a brutal dictator. So we need to band together to say this is unacceptable. We have to put a stop to this. And how is the best way of going about that? I don't think that the NATO thing off the table is going to be what Zelensky wants because of those concerns he's going to have about, what faith do I have that I'm going to have the backing if it's a Article 5 agreement? What does that even mean? I think there's going to be a lot of questions there to iron out. But again, I'll reiterate, it's really important for the president of the United States to stand behind our allies and not show that he is standing behind Vladimir Putin.
Well, speaking about our allies, for our radio listeners, we just saw the French president, Emmanuel Macron, arrive at the White House for this meeting. He, of course, is one of half a dozen leaders who are there today to show their support for
Feels like
Ukraine.
we need an attendance list here,
Yes.
Tyler, to check off all the names, but it is something we'll have to keep watching and to also watch the body language. But there is so much more happening, news and especially in politics, Jeannie, I wanted to get to, and one of those is Sherrod Brown, who is throwing his hat back into the ring for a U.S. Senate seat in Ohio. How does he think the formula is going to be any different this time in 2026 than when he lost his last election?
Yeah, I think this is going to be last time around when he lost in 24. It was one of the most expensive races ever. This likely will be as well. I think a couple things he's got going for him. He hasn't been out of the Senate very long. He's got enormous name recognition and a lot of support in his home state. Most importantly, the environment. Sherrod Brown feels that he can make the case that what they have done in Trump's first 6 or 7 months, particularly as it pertains to healthcare, Medicaid, SNAP, food programs, they have worked to enrich the very wealthy at the expense of the lower and middle class, something that Sherrod Brown cares very deeply about. So it's fascinating. We also heard that since he is not going to be running for governor, Mike Rogers may be running for governor. So it sort of shuffled the deck in a big way. And of course, all eyes on 2026, as after the meeting with Putin, Donald Trump said he is going to issue this EO about the mail-in ballots. So, between the redistricting, Sherrod Brown, Donald Trump, you can bet that the president, the White House, and Congress all have their eyes on 26. And Sherrod Brown jumping into that mix is, I think, going to be interesting because, of course, Ohio, a very important state if Democrats could pick that up.
Jeannie, you talk about how important Ohio is, but do we have a sense that there has been a change in the animal spirits in the U.S. electorate yet enough that it would give Sherrod Brown the kind of lift he is expecting?
I don't know if there's been a complete shift, but we do know that voters are angry, and they're usually angry at the incumbent. And Donald Trump was not the incumbent last time around. Sherrod Brown was in the Senate race. This time around, he has the advantage of being on the outside, so to speak, and he can run against the Trump administration. And if he is able to do that successfully, and his opponent, by the way, who was appointed by the governor, never ran for the seat, then he does have a chance to pick up J.D. Vance's seat. But the problem for Sherrod Brown, if he does win, he's got to run again in 2 years. So Mike and Tyler, we'd be just doing this every 2 years like it's a House seat as opposed to a Senate seat, which is, tough for Sherrod Brown or whoever wins this seat.
Well, Maura, let's bring you into this conversation. Our viewers might know Sherrod Brown as the former head of the Senate Banking Committee. He did hold a prominent role in the Senate, but Ohio is a state that Republicans, I believe, have won the last 3 election cycles. As Jeannie just mentioned, J.D. Vance represents it. Are Republicans really concerned about this seat? What are you hearing when it comes to how this could be pivotal come 2026?
I mean, with the announcement today, Republicans have largely felt pretty confident about taking him on again, so taking on Sherrod Brown again and not feeling as though they would be in jeopardy of losing their stronghold there. What I will say, though, is it's interesting when you think about how Sherrod Brown ran his campaign in 24. He started towards the end there really trying to align himself as the moderate, as somebody who, didn't agree with everything that Kamala Harris or Joe Biden was saying. And so he tried to definitely play more to the purple parts of Ohio and trying to appeal to a wider swath of the voters there. So I think he will try and use that again in saying that, I did stand up against some of the things that you didn't like that Kamala Harris and Joe Biden were trying to sell you. But what Joe Biden, what Donald Trump is selling you is even worse. And so I think he's going to try and play that middle road. I don't know how effective it will be, but I certainly see that being a tactic that he will use both if he runs in this cycle, but also, looking ahead, as Jeannie mentioned, for the reelect in two more years past that.
Well, I do want to bring in the headline that we had just crossed the terminal about the Trump administration saying to discuss taking a 10% stake in Intel. This more hands-on industrial policy is becoming a trend here when it comes to this White House. We saw it with the so-called golden share in the Nippon Steel deal, right, Maura? And this was an issue that Sherrod Brown had actually campaigned on. He was against this deal. Of course, we know that one of the companies in his home states, Cleveland Cliffs, was also vying for a position when it came to U.S. Steel. I'm wondering how you're tracking these types of issues when it comes to boosting manufacturing, economic a push to revitalize the economic base. Is that going to be a big issue here heading into 2026 as we see some of these big headlines crossing the terminal as soon as today, such as this one with Intel?
Well, I think what's interesting is, yes, manufacturing and bringing that home is a message that has largely been winning over American people, right? You know, from Illinois to Ohio and places where Pennsylvania, manufacturing is a really big factor. It's very big industry, and it's important to remember that that messaging worked really, really well for Donald Trump in terms of we want to bring companies to America. We want to bring manufacturing home. That's something that, yes, Democrats use it too. Republicans largely back that up with economic policies that tend to make that more viable. I know when I worked for Congressman Kinzinger, he represented a very large portion of Illinois, and we had passed legislation, you know, Made in the Americas Act, trying to get more companies with incentives to bring manufacturing here, or at least to our hemisphere, to make it easier for exports and for imports and things of that nature. So it is a tactic that we have seen to be effective. And I believe that this kind of policy does work well with Americans in terms of messaging. When you decided to, you know, profit one company over another, I don't know how that will go and play out if Democrats choose to use that against Republican candidates who have supported it. But that's to be seen. But the overall messaging tactic is a strong one for Republicans.
Jeannie, how do Democrats then try to take on and challenge the Trump version of economic policy? In other words, picking some winners, and then also perhaps charging NVIDIA and AMD a 15% fee, if, for lack of a better word, for selling advanced AI chips to China. How does that play out, and how do they respond?
What voters are going to care about is they're going to care about their lives and their pocketbooks and their jobs. And so I think what Democrats have to do, and Sherrod Brown does this very well, is say, Donald Trump, the Republicans have been in for the last 2 years. By the time this election gets going, a year and a half, how are you feeling? And the reality is Donald Trump has been all over the map on things like reshoring and manufacturing. His tariff policy is something that almost no economist supports. But more importantly, the American public, how are they feeling? And they are seeing higher prices when they go to the grocery store. They are not seeing more money in their pockets as a result of jobs. And that's going to be important. If Donald Trump can move on the interest rates or move Jerome Powell on the interest rates, that may help. But it's all going to be about the pocketbook, especially in this race for Sherrod Brown.
Maura, I wanted to go to you to talk about this executive order that President Donald Trump is floating, one that would try to correct what he calls, in an all-caps message on Truth Social, some of the issues with voting across the country, and that would spell an end to mail-in balloting and perhaps even voting machines. Where does he even begin with this, since most voting is administered by the states, by law, under the Constitution?
To Jeannie's point, this is just another example of Donald Trump being all over the map, really just throwing a bunch of things at the wall and hoping to see a few of them stick and distract. And this, to me, shows me that our president does not know how our government works and the reasons why we have state powers, because we don't. Our founding fathers did not want centralized power. It was something that they fought against and left the crown and sought independence for, fought for this independence. And to sit there and say that the states are merely an agent for the federal government and for the president to do as he will, that's just a very large disconnect from how our government works. And so for conservatives and for Republicans, who our core principles talk about wanting a smaller, more accountable government, what Donald Trump is offering and espousing and saying he's fighting for is a big government takeover. That is not what we stand for. And so I would hope that other Republicans like myself, those in Congress, will balk at this idea. Largely, I would assume that they're going to try and dismiss it, but this is a big problem. And I don't think that, one, it's not constitutional, so I already see problems with it in the courts. But again, it goes against the Republican principles, the conservative principles that make us who we are.
And as we're talking, we of course have one eye on our top story today, which is that European leaders are at the White House to show support for Ukrainian President Zelensky. And if you were just joining us on YouTube, on Bloomberg Originals, now you can see it on your screen for our radio listeners. We've seen the honor guard now move to the front of the White House, right in front of the West Wing, where they're flanking essentially where the entrance is to the Oval Office as we wait for the Ukrainian President Zelensky to arrive. According to the official White House schedule, that should be at 1 p.m. Eastern. We'll bring you those developments as he comes through. Now, Jeannie, just in our final 30 seconds here, I'd love to just get your beat on this executive order that President Trump's floating, because this isn't necessarily a new idea, right? We've heard him be critical of mail-in ballots before.
Yeah, absolutely, Tyler. What's new to me, I would say, is an American president taking tips on how to run a democratic election from the leader of Russia, who's been in that position since 1999 and won his last election by 87% of the vote via fraud. That is new to me. So it's quite a change.
Right.
And that was Jeannie Shanzano and Maura Gillespie, our political panel for today. We're grateful for you for joining us.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
It's a high-stakes day here in Washington. We are moments away from President Trump greeting the Ukrainian President Zelensky at the White House. Welcome to the second hour of the Monday edition of Balance of Power. I'm Tyler Kendall here in Washington alongside Bloomberg's Michael Shepard. Joe Matthew is off. We have a busy afternoon ahead, and we'll bring you all of the updates, all of the developments, as we've now seen about half a dozen European leaders, Mike, enter into the White House, including the UK Prime Minister Keir Starmer, the Italian Prime Minister Giorgia Meloni, NATO Secretary General Mark Rutte. The list really goes on and on here.
Quite a
ahead
bit of choreography.
Right, exactly. We're seeing them start to flood into the White House. If you're joining us on radio right now, we have a shot up right in front of the West Wing as we wait for Zelensky to arrive.
And he is really the guest of honor, if you will, at this moment. He is going to be hearing from President Donald Trump in person about the steps forward following President Trump's meeting with his Russian counterpart, Vladimir Putin, in Anchorage last week. The goal from all sides really, of course, is to end the war in Ukraine, but the terms are going to be very different, Tyler, based on what we've heard emerging from that meeting between Trump and Putin Friday, and what we have heard since coming from European leaders and most certainly Volodymyr Zelensky. There is a great concern that Donald Trump may be giving away too much and falling too much for some of the talking points and goals even of Vladimir Putin and Russia.
Right, we're going to get into all of it here in our next hour. We'll be joined by Bloomberg's Wendy Benjaminson, a senior editor who covers the White House, as President Trump says that it is now on Ukraine to make a deal. And we'll also be joined by Rebecca Grant, vice president at the Lexington Institute, for all the latest on this conflict, Mike.
Yep, Tyler.
And for more now, we're going to get a check on how the markets are watching today's news. So we go to Charlie Pellet in New York for an update. Charlie?
Thank you very much, Tyler and Michael. We have got stocks lower, the Dow, the S&P, NASDAQ, all in the red. S&P right now down 6, drop there of 0.1%. The Dow flat on the day, lower by 7 points, unchanged essentially. NASDAQ lower now by 0.2%. Wall Street focused right now on geopolitics and, of course, unfolding developments at the White House. 10-year at 4.33%. Spot gold flat on the day, down 0.1%, down $3 the ounce. West Texas Intermediate crude up 0.5%, 63.10 a barrel. Sources tell Bloomberg the Trump administration is in discussions to take a stake of about 10% in Intel. Intel right now down by 4.4%. That's a Bloomberg Business Flash. Back we go to Washington. Balance of Power continues. Once again, your hosts, Tyler Kendall and Michael Shepard.
right. Charlie Pellet from World Headquarters in New York for us. Thank you so much. Of course, our top story today is the meeting, the high-stakes meeting unfolding at the White House. The European leaders are already there, and we are moments away from the Ukrainian President Zelensky from arriving. If you're joining us on radio right now, we have a picture up. It shows the honor guard flanking the entrance into the Oval Office as we wait for this meeting to begin. And joining us now with the view from the White House is Bloomberg's Wendy Benjaminson, a senior editor for here who covers all things Washington for us. And Wendy, I want to start right here because the last time that Zelensky was in the Oval Office, it didn't go so well.
That didn't go so well.
That meeting ended up devolving. There was a shouting match. It ended earlier. What are we expecting from today? How could this be different from what we saw the last time Zelensky was there?
First, this time he sort of brought backup with him, which is most of the leaders of Western Europe. They will not be in the meeting with him. They're having a separate brief meeting with President Trump afterwards. But also, this will be a chance for Zelensky to finally really get a sense of what happened in Alaska last Friday and find out whether any of these terms are even wildly acceptable to him. I mean, what we believe right now is that what Zelensky will be presented with is an impossible choice to give up territory, which the Ukrainian constitution forbids and is politically and in every other way bad for Ukraine, in exchange for some vague security guarantees that Steve Witkoff laid out on the Sunday shows yesterday, some Article 5-like guarantees, but no NATO membership, which these are what Putin wants. And Trump tweeted this morning, or made a social media post this morning, that it's now in Zelensky's court. So who knows? It could end up devolving into a shouting match again, but we hope not.
Wendy, you were on the story all weekend long, and thank you for your efforts, of course, on that. But tell us how it's evolved since Friday, since the meeting between the two leaders. The storyline seems to have shifted, and what emerged seemed to have shifted and reshaped and maybe was reframed on the Sunday shows and even into this morning. Talk about that evolution.
Sure, and still not a lot of clarity because they, as you know, on Friday they had a news conference where they didn't really say anything, took no questions. Each went to their respective capitals. And then on Saturday, Steve Witkoff, the special envoy to Russia, played golf with Trump. We didn't hear anything from really either of them. Then on the Sunday shows, Witkoff comes out and announces this security guarantee plan as if it were a done deal. What is strange in the arc of presidencies, but sort of typical for this administration, Marco Rubio, the Secretary of State, who was also in the room with Witkoff and Trump and Putin, came out with a completely different story on different networks, saying that this is in no way a done deal, that this is something the president might decide, and of course we might want to ask Volodymyr Zelensky about it, and it's all very undone. So now again, the ball is in, as I said, in Zelensky's court to kind of take this plan or leave it, and then we have to see how Europe responds.
Well, I'm glad that you mentioned Europe because, of course, we should talk about some of the optics that we're seeing play out here today, because some of these leaders, I think it's fair to say, President Trump has a relatively warmer relationship with, right? I'm thinking about the UK Prime Minister Keir Starmer, the first to ink a trade deal with the U.S., the Italian Prime Minister Giorgia Meloni, one of the first European leaders invited to the White House after President Trump's inauguration. How could that potentially temper what we see happen here at the Oval Office today?
Well, I think and Mark Rutte, the NATO Secretary General, who Trump also has a pretty good relationship with. The rest, not so much, I think we should say. But it sort of depends, I think, on whether they were able to help him or talk to him before the meeting, or whether what they're going to hear after the meeting. I think, Trump is one of those leaders who often listens to the last person he spoke to, and so we'll see how it goes with them after the meeting. They're all going to have a family photo. They'll all be smiling, and then they're all going home tonight. So I'm sure we'll hear from them as the evening wears on, and I'm pretty confident we'll hear from the president as well, and we'll just have to see again how Zelensky reacts to all of this.
Wendy, do we have any sense of what the next steps after today might look like? Would they be proceeding to another meeting with Vladimir Putin?
Yes, that's what Trump and I think Putin were hoping for after this meeting, is to set up within a week a trilateral meeting among the three of them, Trump, Putin, and Zelensky. Those meetings are usually take a lot longer to set up because the staff has to pregame what's going to happen, and everything is just left to be signed. But the way these guys are operating this time, they're going to decide in a room on the spot. So we could see that meeting as soon as next week.
That was Wendy Benjaminson. Wendy, thank you so much for joining us today on Balance of Power. We're now joined by Rebecca Grant, who is the Vice President of the Lexington Institute and an expert in the areas of Russia and Ukraine. Rebecca, thank you so much for joining us. We want to get into this whole question of the security guarantees and whether this is something that would be toothsome enough to get Ukraine to actually come to the bargaining table with Russia, and what these security guarantees would have to look like from their point of view.
Yes, the security guarantees are Zelensky's #1 concern. And of course, the most interesting item we've heard is the potential Article 5 style guarantee between several European nations and maybe the U.S. and Ukraine. That, as you know, is in NATO's Article 5 is the mutual self-defense part of this. But the reality is that this security guarantee is going to take not only the pledges, but a lot of weapons, most of which Trump already has in the works. So, 2 Patriot batteries from Germany going down to Ukraine, the continued sale of U.S. weapons, the participation of NATO partners, because there will still be a nearly 800-mile front to defend to contain Russia, and then also to contain Russia's activities in the Black Sea, where Ukraine has done a fantastic job. So expect a lot of military hardware to be in the mix for these security guarantees.
Well, Rebecca, earlier this year, we saw the United Kingdom and also France propose this idea that there would be some sort of security guarantee led by Europe, but then backed up by the United States. And that could include reassurance forces, air cover, things like that. Is that where you see this sort of guarantee trending towards? Or could we see perhaps a more wide-ranging one like the one that Mike was talking about, something similar to Article 5 without actual NATO membership?
I would say all of the above. And you're so smart to raise the air piece, because this security guarantee in operation will have to be what the military calls multi-domain. So Ukraine already shares NATO cyber awareness. And of course, Elon Musk has used Starlink there. But this is going to take a lot of air power as well. Britain and France have talked about potentially putting peacekeepers on the ground, which really gets Putin's back up. But if there is some territory to be traded, the #1 job will be making sure that that is done in a safe and secure manner as Russian forces and Ukrainian forces retrograde in the battle space. So I wouldn't be surprised to see some peacekeeping observers or forces there on the ground. But longer term, this is really going to be about air defense, cyber domain control, and of course controlling that land front and keeping the Russian fleet bottled up in the Black Sea, which Ukraine has done so well.
Rebecca, do you see the U.S. taking any direct role in enforcing those security guarantees, say with boots on the ground? The president and Steve Witkoff indicated a little bit more openness to this, but it's unclear whether that would be more than an advisory role. What's your take on it?
Well, first off, that will be up to President Zelensky, who, for the record, has never requested U.S. or NATO boots on the ground. The U.S. role here will be absolutely essential in overall command and control and playing a role in training of Ukrainian forces, which we've already seen NATO and the U.S. partners do. What the specifics of it look like, that's going to be yet another thing for Zelensky to decide, because he will have to invite any forces into his country.
And Rebecca, we went from hearing talks go from a ceasefire to talks that they want a full peace deal. We had Secretary of State Marco Rubio over the weekend in an interview say that one of the problems with a ceasefire approach is that a ceasefire has to be maintained, and it doesn't seem like Russia is coming to the table in a meaningful way to agree to a ceasefire, a pause in the fighting. What's the strategic reason here to push for a finalized deal, foregoing a ceasefire? Is this creating urgency, or is this Russia just buying time at this point?
Well, best case, I think, because the ceasefires just haven't worked. You know, we've been close to ceasefires a couple times this spring, and then there went Putin unleashing, 500 drones and Iskander missiles right back into Ukraine, luckily Ukraine shooting them down. But that was a big reversal coming out of Alaska, and I think Trump is seeing there is momentum for an actual possible peace deal. And I think Rubio was very realistic about how tough this is all going to be, but they're willing to try for that whole peace deal at this point. And then, of course, the issue, like you said, is will Russia truly respect it when they tell them to, hey, stop shooting?
Rebecca, what does success look like from today for European leaders and then for Volodymyr Zelensky as they go to meet with Donald Trump?
Well, for Europe, it's just one thing, and that is to deter Russia. Russia has rearmed. They're on track to replace all their losses in Ukraine, and Putin has that economy on a wartime footing with the 100% backup of China, which is terrible. So the Europeans, no matter what comes out of this meeting or the peace process, Europe will be defending against Russia and Putin for the long term. So they want to make sure that Ukraine can be a viable part of that defense. For Ukraine, a viable state, a viable economy, sovereignty, and a path forward. I'd like to see every Russian out of Ukraine, but we're really hearing that de facto line of control will be there.
Right, exactly, Rebecca. And as you're speaking for our radio listeners and those joining us on Bloomberg Television, we're seeing the Ukrainian President Zelensky get out of his car, shake President Trump's hand.
President Trump, sir, your
Let's listen
to the
in.
people of Ukraine as world leaders gathered here today. Russia continues to attack civilians in Kharkiv, killing many.
Is there a just option for peace on the table? Will you see land from Russia?
All right. That was Ukrainian President Zelensky pulling up to the White House, shaking President Trump's hand. He was asked what his message was to the people of Ukraine, and President Trump responded, quote, "We love them." Of course, this is a big, big day. It's hard to underestimate how high stakes this meeting is, as now Ukrainian President Zelensky is inside the White House, Mike, alongside half a dozen European leaders who have also traveled here to Washington on short notice to show their support.
And it was notable that President Donald Trump only came out of the White House to greet Volodymyr Zelensky. The other European leaders were greeted by other administration officials as their cars pulled up, at least from what we could see outside. And really, the stakes could not be higher, especially for Volodymyr Zelensky, who is viewing this moment as perhaps an existential one for his country.
A really important moment. And Rebecca, I want to bring you back into this conversation as now the leaders are there at the White House. They are getting these talks underway. I'd love to get your perspective here on those other leaders that are there beyond the Ukrainian President Zelensky. We have some that President Trump has relatively warm relations with, as we've been discussing here on Balance of Power, like the Italian Prime Minister Giorgia Meloni, the NATO Secretary General Mark Rutte. What do you make of the optics now that we have all of these European allies in the same room for these discussions?
Bigger than the Alaska summit. Look at the ceremony, the location in the Capitol, and these leaders. So I'm very impressed. We see Keir Starmer from Britain, Britain has led the way all along in support for Ukraine and in greenlighting the use of longer range weapons. Emmanuel Macron, very central. Of course, Friedrich Merz, very important, as I mentioned, German Patriot batteries going down to Ukraine. These are the European power players. Very important that we have Finland's President Stubb there as well. That's a long border between Finland and Russia. Finland would never have joined NATO without this rising Russian threat that they've seen and changing that policy of neutrality. So these are the players, and along with Italy and Giorgia Meloni, and of course, Mark Rutte, former Prime Minister of the Netherlands, so smart in keeping this group together. And he's the NATO Secretary General that got NATO to 5%. These are the European power players. Putin is watching. Xi Jinping in China is rushing, because all those leaders know that Xi Jinping cannot be trusted either. They know who's responsible for keeping Russia in this war. So this is the group that can give Ukraine the security guarantees, the economic deals, and for true, powerful deterrence against Russia going forward. It's the right players in the room.
Rebecca, when it comes to actually reaching some sort of a final deal, Donald Trump has floated this idea of lands swaps and giving back some territory to giving some territory over to Russia that Russia has taken from Ukraine. In what universe do you see Volodymyr Zelensky actually accepting that as part of these discussions, either now or down the road?
Yeah, maybe the universe that is convened there in the White House. Mark Rutte has talked about it as though it's a de facto recognition, but not a de jure. You know, that will still be recognized as part of Ukraine, but under Russian control. Nobody likes this, but there we are. The most painful part, possibly, if they are asked to give up territory in Donetsk province that Ukraine has held, such as the city of Kramatorsk. But we are looking at this as a possibility. I think it does put Zelensky in a tough position. But I remind you of two things. One, he was elected in 2019 to try to bring about a peace agreement after the 2014 invasion and the continued fighting and loss of life there. And also, it's very important now to think about rebuilding Ukraine. And Trump has put together, I think, what he has called a really good deal. This should be an excellent deal. And I hope it's enough that Zelensky can take it and, as they say, end the war at the negotiating table rather than on the battlefield.
Rebecca Grant of the Lexington Institute, we thank you for your time. And we're now seeing more movement at the White House. They're preparing to bring the press into the Oval Office, Tyler. And I think we'll look to see what what we're hearing from the president.
Right, exactly. President Trump speaking right now. Let's listen in.
In many ways, we had a good meeting, as you know, just a short while ago with the president of Russia. And I think there's a possibility that something could come out of it. And today's meeting is very important. We have, I guess, the seven very powerful leaders from Europe. And we're going to be meeting with them right after this meeting. And thank you very much for being here.
Thank you so much, Mr. President. If I can, first of all, thank you for invitation and thank you very much for your efforts, personal efforts to stop killings and stop this war. Thank you. And using this opportunity, many thanks to your wife, First Lady of the United States. She sent a letter to Putin about our children, abducted children, and my wife, she, First Lady of Ukraine, she gave the letter. It's not to you, to your wife.
Oh, I want it.
Yeah. So we are saying this is a sensitive topic. Yes, please. And thanks to our partners and that you supported this format that after our meeting we can have leaders who are around us, UK, France, Germany, Italy, Finland, EU, NATO, I mean all partners around Ukraine supporting us. Thanks to them and thank you very much for the invitation.
Thank you very much for being here.
President Trump.
Yes, Peter.
Thank you, President Trump. So, President Zelensky, you say in a post on X today, Russia must end this war, which it itself started. President Trump, you say President Zelensky of Ukraine can end the war with Russia almost immediately if he wants to. Which is it?
No, I think that's true. I think we're going to have a meeting. I think if everything works out well today, we'll have a trilat. And I think there will be a reasonable chance of ending the war when we do that.
And, is this the end of the road for American support for Ukraine? Is today's meeting deal or no deal?
I can never say that. It's never the end of the road. People are being killed, and we want to stop that. So I would not say it's the end of the road. No, I think we have a good chance of doing it. It's been almost 4 years now that a lot of people were killed last week. A lot of people last week. I mean, millions of people killed, but a lot of people last week for whatever reason. A big number, a lot of soldiers, on both sides. And I know the president, I know myself, and I believe Vladimir Putin wants to see it ended.
And as you met with Putin on Friday, today you've got President Zelensky here. As you listen to Russia and Ukraine, which side has the better cards right now?
I don't want to say that. I'm just here to be, look, this isn't my war. This is Joe Biden's war. He's the one that had a lot to do with this happening, and we want to get it ended. and we want it to end good for everybody. We want it to end good. The people of Ukraine have suffered incredibly.
President Zelensky, are you prepared to keep sending Ukrainian troops to their deaths for another couple years, or are you going to agree to redraw the maps?
Thank you for your question. So, first of all, we live under each day attacks. That today have been a lot of attacks and a lot of wounded people, and the child was dead, small one year and a half. So we need to stop this war, to stop Russia, and we need support, American and European partners, and we will do our best for this. I think we show that we are strong people, and we supported the idea of the United States, personally of President Trump, to stop this war, to make a diplomatic way of finishing this war, and we are ready for trilateral, as President said. This is a good thing about trilateral. I think this is very good. Thank you.
Mr. If the peace deal will be achieved, are you going to be willing to send American peacekeepers to Ukraine?
Well, we're going to work with Ukraine. We're going to work with everybody, and we're going to make sure that if there's peace, the peace is going to stay long term. This is very long term. We're not talking about a 2-year peace and then we end up in this mess again. We're going to make sure that everything's good. We'll work with Russia. We're going to work with Ukraine, and we're going to make sure it works. And I think if we can get to peace, it's going to work. I have no doubt about it.
Your team has talked about security guarantees. Could that involve U.S. troops? Would you roll that out in the future?
We'll let you know that maybe later today. We're meeting with 7 great leaders of great countries also, and we'll be talking about that. They'll all be involved, but there'll be a lot of help. When it comes to security, there's going to be a lot of help. It's going to be good. They are first line of defense because they're there. They're Europe, but we're going to help them out also. We'll be involved.
Mr. President, Vladimir Putin mentioned that the war will not end without addressing the root causes of this war. Have you had an understanding what are the root causes of this war?
Well, look, the war is going to end. When it ends, I can't tell you, but the war is going to end, and this gentleman wants it to end, and Vladimir Putin wants it to end. I think the whole world is tired of it, and we're going to get it ended. It was, I've done 6 wars. I've ended 6 wars, and I thought this maybe would be the easiest one, and it's not the easiest one. It's a tough one. A lot of reasons for it, and they'll be talking about it for a long time, but they'll be talking about the others. Look, India, Pakistan, we're talking about the big places. When you look at, you just take a look at some of these wars. You go to Africa and take a look at that. Rwanda and the Congo, Republic of the Congo. That's been going on for 31 years. And so we've done a total of 6, and we really have 6, not including the fact that we obliterated, and it turned out to be a total obliteration, the nuclear, as you said, the future nuclear capability of Iran. And this one, I think we're going to get solved also. I feel confident we're going to get it solved.
Thank you, Mr. President. Can you tell us about your conversations with European leaders and what they need to see to support an end to the war?
Yeah, well, we're going to be meeting with a great representative group and 7 very powerful, very big countries, great people, all friends of mine and friends of yours. And we're going to have some suggestions made. They want to see peace. They would like to see peace.
President
In the red.
President Trump, do you think it's fair for Ukraine and for Russia to achieve a lasting and durable peace if Ukraine cedes its territories that Russia hasn't yet conquered? Do you think it's a fair peace for Ukraine?
We're going to have a lasting peace. Just to answer the first part of your question, we're going to have a lasting peace. I hope it's going to be immediately. I hope it doesn't have to go on. And I think people of the whole world is going to be very happy when that's announced.
Thank you, Mr. President. You posted on social media, Mr. President, a very touching letter from the First Lady, and the letter was hand-delivered to President Putin. and it calls for an end to the war, essentially, because of the children and the children's future. Why did the First Lady feel that letter was necessary? Was it because she believes that Mr. Putin is the aggressor in the war? Is a similar letter being hand-delivered to President Zelensky?
So the First Lady felt very strongly. She's watched the same thing that you watch and that I watch. I see things that you don't get to see, and it's horrible. But when she's got a great love of children, she has a wonderful son that she loves, probably more than anybody, including me. I hate to say it, but she loves her son. She loves children, and she hates to see something like this happening. And that goes for other wars too. I mean, she sees the heartbreak, the parents, the funerals that you see on television. Always funerals. We want to see something other than funerals. No, she felt it was a beautiful letter. It was very well received by him, and she did ask me to say, you know, she would love to see this end. She would love to see it end, and she says it very openly, very proudly, and with great sorrow because so many people have been killed.
Last week,
Brian, go ahead, Brian.
Yes, sir. I've got a question for each of you.
Yes.
First of all, Mr. President Zelensky, you look fabulous in that suit.
I said the same thing.
Yeah, you look good.
I said the same thing.
Yeah, looks good on
I
you.
said the one that attacked you last time. See, now he's
I remember that. Yeah, I apologize to you. You look wonderful. No, my first question for you, President Zelensky.
In the same suit. You see, I changed, you are not.
Maybe yours is much better. Real quickly, upon peace, God willing we get peace, are you open to holding an election in your country?
Yes, of course. We are open for election, yes. We have to do safety circumstances, and a little bit we need to work in the parliament, because during the war you can't have elections, but we can do security. We need, maybe, how to say, we need a truth, yes, everywhere, in the battlefield, in the sky, and the sea, yeah, to make possible for people to do democratic, open, legal elections.
So you say during the war you can't have elections. So let me just say 3.5 years from now. So you mean if we happen to be in a war with somebody, no more elections? Oh, that's good. I wonder what the fake
news like this idea?
Yeah. No. Speaking of news, I got a question for you. This sounds insane for me even to ask this, but do you think the American media really doesn't even want a peace deal because they've seen they've been so critical of you every step of the way as you lead the charge for peace?
It's an amazing phenomenon. I said that if in the settlement you got Moscow, St. Petersburg, and thousands of miles around them, they would say, I made a bad deal. The level of hatred and animosity is incredible. Not with all. I mean, we have great people up here. We also have terrible people up there that I think are told what to say. But, you know, in solving all of these wars, they don't even write about it. You know, I saw major wars. I saw wars that have been going on for 31, 35, and 37, and a couple of quicker ones. One that was going to go into a full-blown deal very quickly. You know what the one I'm talking about. It was a big one. But they don't even write about that. No matter what I do, no matter what, and you know, this is not anything to do with you. It's probably to your advantage in a certain way. But no matter what I do, no matter what deal I make, from my standpoint, you'll come out good. Maybe President Putin will come out good. But they'll say, Trump was absolutely horrible. It's just that, and I've lived with that for a long time. I've lived with it since just before the first election. I used to get great publicity. Now I get the worst publicity anyone's ever gotten in office, but I won in a landslide, so that people understand. They're the only ones that count, ultimately. But I've also had great reporters. I've had journalists that are very good. But it's very sad when you do the right thing. As an example, they said, because of the fact that Vladimir Putin came to American soil, this was a tremendous defeat for Donald Trump. No, it was really wonderful that he did it. It was a hard thing for him to do, to be honest with you. It was the opposite of what they said, but they said it. Now, if he didn't come, they'd say that was also bad for Trump. You know, there's no way. And there's just a great dishonesty of the press, and I think that's why it's lost its credibility. You know, its credibility is at an all-time low. We have a thing going on right now in D.C. We went from the most unsafe place anywhere to a place that now friends are calling me up, Democrats are calling me up, and they're saying, sir, I want to thank you. My wife and I went out to dinner last night for the first time in 4 years, and Washington, D.C. is safe, and you did that in 4 days. I'll tell you, it's safe. I had another friend of mine, he has a son who's a great golfer, he's on tour, and he came in fourth yesterday in the big tournament where Scotty Scheffler made the great shot, and he said his son is going to dinner in Washington, D.C. tonight. I said, would you have allowed that to happen a year ago? He said, no way, no way. He said, what you've done is incredible. And I think the people realize it. But the press says, he's a dictator, he's trying to take over. No, all I want is security for our people. But people that haven't gone out to dinner in Washington, D.C. in 2 years are going out to dinner, and the restaurants the last 2 days were busier than they've been in a long time. Thank you.
I walked around yesterday with MTG. If you could walk around with DC with MTG and not be attacked, the city is safe.
Thank you, Mr. President. Last week, you warned of what you called severe consequences if a 30-day ceasefire or any type of ceasefire were not agreed to by Russia. Will there be severe consequences? Does that change because you're meeting with
I don't think you need a ceasefire. You know, if you look at the 6 deals that I settled this year, they were all at war. I didn't do any ceasefires. And I know that it might be good to have, but I can also understand strategically why, well, you know, one country or the other wouldn't want it. You have a ceasefire and they rebuild and rebuild and rebuild, and, you know, maybe they don't want that. But if you look at the 6 deals that we made peace and you know, long-term, long-running wars, I didn't do any ceasefires. Would I like the concept, you know, I like the concept of a ceasefire for one reason, because you'd stop killing people immediately, as opposed to in 2 weeks or 1 week or whatever it takes. But we can work a deal where we're working on a peace deal while they're fighting. They have to fight. I wish they could stop. I'd like them to stop. But strategically, that could be a disadvantage for one side or the other. But all of these deals I made without even the mention of the words ceasefire.
President Zelensky, can you explain the decision to offer Ukraine Article 5-like security guarantees, but stop short of pushing for their full membership?
Yeah, well, we haven't done anything on that yet. If you look back and you go back long before President Putin, it was always a statement that they would never allow Ukraine into NATO. So that was a statement that was made, but we haven't discussed any of that yet. We're going to be discussing it today, but we will give them very good protection, very good security. That's part of it. And the people that are waiting for us, they are, I think they're very like-minded. They want to help out also.
Thank you, President. Thank you, President Trump.
Are you disappointed there's no ceasefire,
The United States has already given hundreds of billions of dollars to this war effort in Ukraine. At best, it is a stalemate, and the killing continues. So, President Trump, how much more is the United States willing to give Ukraine? And President Zelensky, how much more do you want?
Well, I'll start off just by saying we're not giving anything now. We're selling weapons. This is something before, I guess, the number is well over $300 billion. That was under Joe Biden, a corrupt politician, not a smart man, never was. By the way, go back 40 years, he was not a smart man 40 years ago either, but now he's in particular bad. This was done by a corrupt administration that shouldn't have been in, and frankly, if the right results of the election were given, if I were president, this war would have never taken place, and he would have been very happy, because he would have liked to have seen. I mean, they went through hell. He went through hell. This war would have never happened, and the people that were killed, a couple of million people, a lot of people with soldiers and everything else, and the people that have been displaced and forced into other areas and other countries because of what's happened, none of that would have happened. And I'm just saying that he was a horrible president. Whether it was the borders or this, he was just a horrible, corrupt president.
Mr. President, you want to I can. Thank you so much. So first of all, we have possibility now to buy weapon from the United States. We are thankful for this program and this opportunity. We are thankful for Europe. They pay for this, and through NATO program, for example, Pearl and etc. We have some programs where we can have some money to finance this, and this is a part. I think it's not a part for the war and to defend us. It also will be a part for security guarantees, to strengthen our army, to rearm Ukrainian army. This is very, very important. And it depends how much money we need to rearm. For example, the question of air defense, we spoke about it with President Trump, and I'm happy that we have now bilateral decisions and we work on it with production, American production. Nobody in Europe has so many air defense like Patriots, for example. We need it very much, and this is also about defending.
I think the good news, we make the best military equipment in the world by far. You mentioned the Patriots. How good are they?
Systems.
We have systems. They're literally 100% foolproof, and it's really like shooting two bullets. You know, two bullets hitting each other in the air in a space like this. The chance is 100%. It's 99 to 100%. So we sell the equipment to NATO, and NATO does what, I don't know what the arrangement is that you have with, but I know that they want you to have the equipment. And we're getting the best equipment in the world, but they pay us for the equipment. Under Biden, it was just crazy what was going on. I believe the number is over 300. I think it could be $350 billion worth of equipment and money and everything else. And we've made more progress in settling this war in the last 2 months than they made in 4 years. This should have been settled a long time ago, but it should have never happened. Yeah, please.
Real quickly, you pushed out on social media.
All right, Brian, go first.
You pushed out on social media about doing away with mail-in ballots and potentially electronic voting machines. Can you expand on that and how important
Well, that's a very off-topic, just really quickly. Mail-in ballots are corrupt. Mail-in ballots, you can never have a real democracy with mail-in ballots. And we, as a Republican Party, are going to do everything possible that we get rid of mail-in ballots. We're going to start with an executive order that's being written right now by the best lawyers in the country to end mail-in ballots because they're corrupt. And you know that we're the only country in the world, I believe, I may be wrong, but just about the only country in the world that uses them because of what's happened. Massive fraud all over the place. The other thing we want change are the machines. For all of the money they spend, it's approximately 10 times more expensive than paper ballots. And paper ballots are very sophisticated with the watermark paper and everything else. We would get secure elections. We'd get much faster results. The machines, I mean, they say we're going to have the results in 2 weeks. With paper ballots, you have the results that night. Most people, but most people, many countries use paper ballots. It's the most secure form. So between paper ballots, very, very important, paper ballots, and I think maybe even more important, the mail-in voting. We're going to end mail-in voting. It's a fraud. If you have mail-in vote, even Jimmy Carter with this commission, they set it up. He said the one thing about mail-in voting, you will never have an honest election if you have mail-in. And it's time that the Republicans get tough and stop it because the Democrats want it. It's the only way they can get elected. Because with men and women's sports and with transgender for everybody and open borders and all of the horrible things, and now the new thing is they love crime. They're fighting me on the fact that I've made Washington, D.C. safe. We're not going to get mugged, beaten up, or killed like all the people you've been watching get so badly hurt. I'm glad, I hate to take your time on this, but I'm glad you asked me that question.
Sorry.
We're going to stop mail-in ballots because it's corrupt. You know, when you go to a voting booth and you do it the right way and you go to a state that runs it properly, you go in, they even ask me, they asked me for my license plate, for identity. I said, I don't know if I have it. They said, sir, you have to have it. I was very impressed, actually. But it's very hard to cheat with mail-in voting. As you know what happens in California, it's so corrupt, where some people get 5, 6, 7 ballots delivered to them. Now, we got to stop mail-in voting, and the Republicans have to lead the charge. The Democrats want it because they have horrible policy. If you have mail-in voting, you're not going to have many Democrats get elected. That's bigger than anything having to do with redistricting, believe me. And the Republicans have to get smart. We're not going to have a country. I said for a long time at rallies, you need borders and you need free and fair elections. Those two things, otherwise you don't have. We have strong borders now. In 90 days, Mr. President, we didn't have 0, 0, and 3 months. Not one person came in illegally into our country. In fact, even I find that hard to believe, but it's run by a little bit of a liberal group that put out the numbers, so I guess it's, but 0, 0, and 0. You go back a year ago, 2 years ago, 3 millions of people poured into our country. It was terrible. Thank you very much.
What security guarantees do you need from President Trump to be able to make a deal? Is it American troops, intelligence, equipment? What is it?
Everything. And really, it includes two parts. First, strong Ukrainian army. That's what I began to discuss with your colleagues. And it's a lot about weapon and people and training missions and intelligence. And second, we will discuss with our partners. It depends on the big countries, on the United States, on a lot of our friends.
And Mr. President, are you willing to commit American troops to that NATO-like protection in order to get President Zelensky to a deal today?
Well, I don't know if you define it that way, but NATO-like, I mean, we have people waiting in another room right now. They're all here from Europe, biggest people in Europe, and they want to give protection. They feel very strongly about it, and we'll help them out with that. I think it's very important. I think it's very important to get the deal done.
You've been involved with the peacekeeping in Ukraine since your first day in the administration. What would you say to the Ukrainian people right now who are suffering under the Russian attacks and hoping that the American people will stand with them?
Well, I know Ukrainian people. I've known many over the years. They're great people. They're smart. They're energetic. They love their country. I mean, they love their country, and we want to get this war ended. That's all I can do. I love the Ukrainian people, but I love all people. I love the Russian people. I love them all. I want to get the war stopped. Very important.
Mr. President, was there any aspect of your discussion with Vladimir Putin that left you disappointed?
Look, we just spoke to, I was just telling the president, I just spoke to President Putin indirectly, and we're going to have a phone call right after these meetings today. And we may or may not have a trilat. If we don't have a trilat, then the fighting continues. And if we do, we have a good chance. I think if we have a trilat, there's a good chance of maybe ending it. But he's expecting my call when we're finished with this meeting. Thank you very much, everybody.
You've been listening to President Trump in the Oval Office alongside Ukrainian President Zelensky for a high-stakes meeting here in Washington. This is Balance of Power on Bloomberg Television and Radio. I'm Tyler Kendall alongside Bloomberg's Michael Shepard in Washington. Joe Matthew is off. Our top story today, this big meeting in the Oval Office. The pair started their remarks by shaking each other's hands, a much warmer reception than we saw the last time that Zelensky was in the Oval Office earlier this year. And for our radio listeners, Zelensky was wearing a suit. We mention it because that was something that was a point of contention the last time he was at the White House, and perhaps will be a memorable visual from today's meeting. Now, President Trump said that if everything works out today, there will be a trilateral meeting coming soon. That would be between the Ukrainian President Zelensky, President Trump, and Russian President Vladimir Putin, saying that there's a, quote, reasonable chance of ending the war if that meeting happens. Now, Mike, on security guarantees, which is one of the top issues today, President Trump said that the U.S. will be involved, but he declined to give specifics on exactly what that would look like.
Yeah, he was reluctant to get any further about what those security guarantees would look like. We did hear from some of his advisors over the weekend about the possible shape, but again, how much money that would involve. involve? Would it involve U.S. advisors on the ground? And of course, his counterpart, the Ukrainian leader, Volodymyr Zelensky, sitting alongside him. Obviously, a very different dynamic to this meeting today, Tyler, than the one we saw several months ago, the meeting that really just devolved into almost a shouting match between the two men. We didn't see any other members of the president's team interject. It was really the focus on the two men. President Donald Trump did say that he would be speaking with Vladimir Putin later after he concludes his conversations with Zelensky and with European leaders as well.
Right, an important development, an important part about the next steps here, which is where we want to begin by bringing in our next guest. We're joined now by retired Lieutenant General Ben Hodges. He's the former commanding general for U.S. Army Europe. General Hodges, thanks so much for being here. I want to get your reaction to what we just heard from President Trump. He says that he will be speaking with Russian President Vladimir Putin after he has this high-stakes talks today, not just with the Ukrainian President Zelensky, but also about half a dozen European leaders who have also come here to the White House. How can we measure success today? What are the increments that we should be looking for as these meetings get going?
Well, I have to say that based on the president's record of not following through on any threats to increase pressure on Russia with sanctions or other measures, nothing that's said, I think, can be really counted on until we see action. I do expect that the European leaders who have turned up for this are there because they're worried that the President of the United States is going to abandon Ukraine or somehow put all the blame on Ukraine if there's not some sort of a deal. If the president were to say, Vladimir Putin, get your troops out of Ukraine, which is never said, by the way, neither he or the Secretary of State have never said the Russians should leave Ukraine, not one time, that would be a significant shift.
General Hodges, what has been the reaction in Europe, a region where you have spent some key parts of your career? What has been the reaction in Europe among your former counterparts and others in the area to the summit on Friday, and then what we have seen unfold since?
I'd say three things. First of all, they are aghast and in disbelief that the President of the United States has treated President Putin the way he has, and that he does the Kremlin's bidding. I mean, almost verbatim on some of the talking points. That most Europeans are dumbfounded that this is what's happening after decades of American leadership in European security through NATO, but also deterring the Soviet Union and then Russia. That they can't believe it. The second thing, the reaction is, of course, an acknowledgement by most Europeans that they have failed over the last 3 decades to do what they should do, to be strong militarily, to deter Russia, and to have to perhaps do something without strong American support. That's in the industry side, the nuclear deterrence. They were very late in cutting their dependence on Russian oil, which made them very vulnerable, of course. And then the third thing I would say is Europe is probably going to be forced into doing something they've talked about, which is to accept more responsibility, this sovereignty, if you will. And in the long run, I think we in the United States are going to regret that Europe will not be as dependent on us. It's going to hurt us economically as well as in a security standpoint.
And General, to follow up on the difference between Europe and the U.S. here when it comes to Ukraine now under Donald Trump, the president is now skipping over the step of obtaining a ceasefire before actually reaching a peace deal that would last. The Europeans have pushed for a ceasefire first. What is the significance of skipping over this step? How are we to read it, and who does it favor?
Well, I think it favors the Russians. The fact is, nobody in Europe, and probably most serious people in the United States, know that Russia cannot be trusted to live up to any agreement, let alone a ceasefire. to have an effective ceasefire, there has to be some kind of enforcement mechanism. And so here is where I think Europe could convey to the President of the United States that if the U.S. would call for this and the U.S. would help with some things such as intelligence and maybe logistics, that the Europeans would shoulder the burden for enforcing a ceasefire. But instead, they have agreed or given in to Putin's demand that no NATO troops of any type can be on the ground in Ukraine. That's not a decision for the Kremlin to make, but that's how we are acting, as if they do have that right to make that demand. I think that the idea of going straight to some kind of a peace settlement, the danger is that, again, nobody trusts the Russians. There's no record of Russia living up to any agreement unless they were forced to do it. And so I think this is why, and even Secretary Rubio, up until just a few weeks ago, he talked consistently about the need for a ceasefire to stop the killing, but also to build trust and confidence that Russia would actually live up to an agreement. Look at what Russia did last night. They killed another 7 Ukrainian civilians with incendiary bombs dropped on top of an apartment building the night before this meeting is supposed to happen. And then you've got Russian bombers flying out in the Barents Sea close to Alaska. These are not signs of a Russian government that is really, really wanting to have a negotiated settlement that's acceptable to all.
Right. And General, I'm glad that you brought up Secretary of State Marco Rubio, because he actually did say in one of his interviews over the weekend that one of the issues with a ceasefire is that you have to enforce it. And perhaps that's starting to be some of the messaging that we've seen out of the White House. And another area where the Secretary of State was pressed on, President Trump was pressed on in the Oval Office, is exactly what those security guarantees are going to look like if they do move to a peace deal. And I would love to get your thoughts here on exactly what the Europeans are going to be pushing for, because we have seen a range of options perhaps floated on the table, such as the UK and France earlier this year proposing a plan that would see reassurance forces, air cover, things like that. What, in your view, is realistic, and what do you expect our allies to really be pushing for that they think they could get when it comes to guarantees from the United States?
Well, if I may, of course, Secretary Rubio was correct to say that a ceasefire would require enforcement, but so would a peace settlement. I mean, there is nobody in Europe trusts Russia to do what they say they'll do unless they're forced to. So whether we go to ceasefire or go directly to some sort of an agreement, does anybody seriously believe that Russia will live up to it? There's no record of them doing that anywhere. But let's go to the point of your question of what would a enforcement or what would security guarantees look like. Obviously, I'll say what many have said is that NATO is the best security guarantee. These things that Mr. Witkoff has said about a NATO-like or a NATO-style guarantee, what a meaningless statement. I mean, what does he mean by NATO-like? That means an attack on Ukraine would be considered like an attack on the U.S.
Retired Lieutenant General Ben Hodges, the former commanding general for U.S. Army Europe. Thank you so much for joining us here on Bloomberg. Make sure to join us later for the late edition of Balance of Power on Bloomberg TV and Radio. Bloomberg Business Week is up next.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
A very good afternoon, everyone. Live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week Daily. I'm Tim Stenivek. That is Emily Griffeo from the Bloomberg News cross-asset team. She's in for Carol Masser today. Carol is out. We got a big show, Emily. All eyes focused on Washington, D.C.
Yep, that's right, Tim. This is where President Volodymyr Zelensky is meeting with Trump and a number of EU leaders, including EU Commission President Ursula von der Leyen and NATO Secretary General Mark Rutte, among a number of other European leaders, of course, to hash out potentially getting to an end of this Russia-Ukraine war.
Well, the White House and the president's meeting with Ukrainian President Volodymyr Zelensky, the two of them just wrapping up this press conference in the Oval Office. Now they are meeting without press there. The president, though, at the end of that press conference, he did say he'll call Russian President Vladimir Putin after meeting with Zelensky and European leaders at the White House. Emily mentioned a few of the names. There are more than half a dozen who came in specially for today. They actually met with Zelensky earlier in the day before heading to the White House. We're going to be all over everything happening at the White House and in Washington, D.C. throughout the program. Our team on the ground with the latest from the White House and a possible end to this war, Emily.
We're also going to be speaking with our senior geoeconomics analyst for Europe, who's going to join us from Geneva with analysis. And the Trump administration is in discussions to take a stake of about 10% in Intel. We'll get an update from the Bloomberg exclusive on that Thursday.
Stocks lower fractionally, but standing by with an update on exactly how markets are doing and all the business news. Here he is, Charlie Pilot.
Thank you very much. And here's what's going on from Washington to Wall Street to Jackson Hole. We got you covered here at Bloomberg. Right now, we are looking at a down day for the Dow, the S&P, and the NASDAQ Composite Index. Wall Street holding its breath ahead of Jackson Hole. S&P right now down 864.41. That is a drop of 0.1%. The Dow lower now by 66, down 0.1%. NASDAQ Composite Index down 34, a drop there of 0.2%. Our Mag 7 Index down 0.4% on a down day for the broader market. The Russell 2000 Index of small cap shares is gaining 0.4%. The 10-year 4.33% with the 2-year 3.76%. Gold lower little change, down under 0.1%, 33.33 the ounce. West Texas Intermediate crude up 0.9%, 63.38 a barrel on WTI, and Bitcoin $116,500. Bitcoin down by 1%. Sources tell Bloomberg the Trump administration is in discussions to take a stake of about 10% in Intel. Intel down now by 3.2%. Recapping stocks lower, S&P down 8, down 0.1%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. We begin in Washington, D.C., where the president is meeting with Ukrainian President Volodymyr Zelensky and other European leaders as we speak. These two, along with Vice President J.D. Vance, Secretary of State Marco Rubio, and U.S. Special Envoy Steve Witkoff, they spoke to reporters from the Oval Office earlier today. Here's what President Zelensky partly had to say.
We need to stop this war, to stop Russia, and we need support American and European partners. And we will do our best for this. I think we show that we are strong people, and we supported the idea of the United States, personally of President Trump, to stop this war, to make a diplomatic way of finishing this war. And we are ready for trilateral, as President said. This is a good signal about trilateral. I think this is very good.
There you have it. President Zelensky at the Oval Office just in the last hour speaking to reporters alongside President Trump. We've got with us Bloomberg News managing editor for U.S. Economy and Government, Mario Parker. He joins us from Washington, D.C. Mario, we're going to get to the strategy, the possible end of this conflict here, but I think it's important to note that the last time these two sat alongside one another in the Oval Office back in February, it was a lot more contentious, a very different tone to today's press conference.
Everything about it, Tim, was 180 degrees different than what we saw earlier this year, right, when one of the most brusque displays in the Oval Office in recent memory. What we saw when President Zelensky even arrived from the White House, he had a suit on, right, which was the starting point of the contention during the last meeting. He and President Trump exchanged some friendly banter about the president's attire as well. And then that warm tone carried over into the Oval Office spray that we just saw.
What do we understand right now about what is the current position of the other European leaders that are in attendance at the White House right now?
Well, it's unclear exactly what the position is right now. One of the positions, I mean, obviously the fact that they all harried, some of the most powerful leaders in all of Europe, hurried to Washington, D.C. to be here. And I think that not to be lost with the comment that we just talked about with the attire, you can see that Zelensky was coached and prepared by some of his counterparts in Europe who understand the stakes right now. Just given the about face that President Trump has made in the last couple of weeks, we saw the president go from threatening secondary sanctions on Russia, India for buying Russian oil, and then he had the meeting on Friday in Alaska, in which he came out largely understood to be towing the line that Vladimir Putin had suggested about a peace agreement before a ceasefire. So you could see Europe wanting to make sure that the United States doesn't pressure Zelensky into taking a deal that would threaten that alliance with NATO, but also cede too much territory from Ukraine.
Well, help us understand where the daylight remains here between the U.S.'s position and perhaps the European position. Is it fair to say, Mario, that the European allies, at least who showed up alongside with President Zelensky today, they want the exact same thing that Zelensky wants? Or perhaps a better way of saying that is they would be willing for Ukraine to give up and ask for the same things to end this conflict? Are they aligned here?
I think it is safe to say that Zelensky and the European allies are very much so aligned. Now, a couple of things that came up during the spray that we knew about as well. President Trump was non-committal but not hostile toward the idea of some type of U.S. security guarantee. That lines up with our reporting over the weekend that Europe and Ukraine wanted some type of guarantee of U.S. backing going forward as to prevent or deter Vladimir Putin from launching another attack at some point against the country, vis-a-vis what happened after Crimea as well. Some of that, again, President Trump seemed open to without necessarily committing U.S. troops or intelligence. He characterized some of the support on our artillery and weapons as being sold to NATO and essentially making their way to Ukraine, as opposed to just handouts, is how he characterized it previously.
Zelensky said that Ukraine is ready for a trilateral meeting with Russia and the U.S. I'm wondering how realistic you think that is, that we do get that trilateral meeting, and what we could see come out of that potential meeting.
Well, I think it's a positive sign that Zelensky invoked it, because we know that that's something that President Trump dearly wants, right? So part of the gambit with Trump and the dynamic, I should say, between Trump, Putin, and Zelensky is that everyone knows that Trump really wants an end to this war. He kind of alluded to it as much in this Oval Office spray, where he said that he thought that this war would be one of the easiest to solve. Recall the campaign pledges that he made to satisfy it on day one. He says that it's been much harder for him to get to that result. A trilateral agreement, according to the two men, would signal that some progress has been made, both in this bilat with Zelensky, also coming off the heels of the bilat with Putin, and then whatever the White House discusses with the European leaders, and find if they are able to find some common ground as well. So a trilat would signal something going in the right direction, and the fact that Zelensky seems open to a trilat also is a positive sign there.
Mario, based on your reporting and the reporting from the Bloomberg team, the analysis, the analysts that you and the team have spoken to, is it realistic to think that this war could end without Ukraine giving up some sort of territory?
That, based off of our reporting, that does not seem very likely. It'll come down to what parts or what territory Ukraine would be willing to cede. We saw President Trump over the recent days mentioning Crimea, specifically that Ukraine wouldn't get that back. We know that Putin would like the eastern flank of the country, representing about a fifth or so of Ukraine's territory, maybe possibly even solidifying the battle lines from the war. Whether or not Ukraine will be on board with that, whether or not that's too much of a price for Europe as well, we'll see. But I think it's fair to say, based off of our reporting, that some territory will be, at the very least, some territory will be ceded to Russia.
Hey, before we let you go, Mario, speaking of your reporting and the team's reporting, Bloomberg News reporting that the Trump administration is set to discuss taking a 10% stake in Intel. This is a follow-up to the Thursday exclusive from our Bloomberg News deals team. What have we learned since then about what this stake could look like?
Well, it looks like it's moved forward. Last week, we reported that was something that was on the table. Today, we reported that it does look like that's a 10% stake or so, to the tune of some $10 billion, $10 billion plus dollars. It would be essentially grants under the Chips and Science Act that would be converted into a U.S. stake into the beleaguered chips maker.
All right, Mario Parker, managing editor for U.S. Economy and Government, joining us from Washington, D.C. Well, speaking of Washington, D.C., and back to what's happening at the White House, our own colleague Enda Curran writing on the live blog, which you can find on the Bloomberg terminal and at Bloomberg.com, that the outcome of today's discussions on Ukraine and Russia has important ramifications for global inflation, given the potential for an impact on oil and gas prices. I want to bring in Jim Bianco, founder and president of Bianco Research. It focuses on macroeconomics and the implications for financial markets, as well as provides market commentary. He joins us from Chicago. Jim, why did you want to talk about Jackson Hole and what you think of Jay Powell's task ahead of him, the rethink of the American labor picture? We're going to get to that, but since we are so focused on Washington, D.C., from a macro perspective, how are you watching what's happening at the White House today?
Oh, with great interest, because I think it is what Enda just said. It's about whether or not we get a deal that will bring some stability to the oil market, or we don't get a deal and it adds more instability to the oil market. Russia is the largest oil producer in the world. They are a larger oil producer than Saudi Arabia or the United States. So they matter on the margin. And if the world is trying to either sanction them or ostracize them, it matters. If we don't get a deal, President Trump has opened the door to potentially sanctioning Russian oil, and it would matter at the margin.
So, Jim, for Jackson Hole this year, just pivoting here to that economic symposium, the theme is labor markets in transition, demographics, productivity, and macroeconomic policy. What are you expecting the discussions to sound like at Jackson Hole this week?
Simply, what's happened in the U.S. over the last 120 days is probably the most underreported story right now. The border is closed. That's not underreported. The population growth of the United States has slowed to potentially the slowest point in American history, because all of our population growth is really coming from immigration, and we have none right now. President Trump even went as far to say we have net negative immigration, where more people are leaving the country than entering. And that might be the first time in American history. So why does that matter? Because of the payroll report that we saw last month that's sparking all this debate about a rate cut. If you have no growth in the population of the country, you're going to have no growth in jobs. And that's to be expected. Cutting interest rates to stimulate growth back to some 80,000, 100,000, 120,000 jobs assumes that there's a certain population growth in the country. If that is not the case, all rate cuts do is create inflation. This is what the Fed is going to talk about: labor market productivity and demographics. And what does that mean for the labor market? And I'll tease you, the American Enterprise Institute put out a paper on this last month. They suggested that by next year, if this state of population growth near zero holds, that any payroll report above zero might be enough jobs for the United States. Now, we would think of it as a recession, or we would think of it as something terrible because we're still used to a country that has a modest level of population growth. But now with the border closed, it really does have a big impact on economic growth.
Jim, I think there are a lot of implications here, not to mention, of course, what happens to Social Security and the workers who pay into that as the working population ages, but also just when it comes to growth in general. Like you said, immigrants, from a growth perspective and from a population growth perspective, have been keeping the U.S. afloat for years because we're not having enough babies. What does it mean for actual productivity in the U.S.?
Well, it's going to be a drag on productivity, I think, initially. And the big hope is that AI is going to offset that somewhere down the line. Now, count me as one of those that does think that AI is as big as the internet, or it's going to be bigger than the internet. But I also believe the Bill Gates line, too, that he said about technological advances, that over the next couple of years, technology will probably do less than what you think. But over the next 10 years, it'll probably do more than what you think. So we've shut the border now. There's no population growth now. Will AI come in later this year, next year to offset that? Probably not. How about in 5 or 8 or 10 years? Probably will. But over the next several years, it's not going to be able to, make up for that lower population growth. Remember, the biggest driver of economic growth for any country, you got to start with your population growth. If your country's growing, you're going to have more growth. If your country is not growing, you're only going to be able to have growth to the extent that you have productivity. Beyond that, you're not going to have any much more growth.
Right. Look at China and look at Japan for examples of this. The question I have, though, is about the actual jobs that AI can help augment and the workers that are not coming to the U.S. now as a result of immigration policy. AI is not going to build houses or be construction workers. AI is not going to be food delivery workers. AI is not going to be plumbers.
No, it's not going to be all of those, but also, that is a portion of the labor growth that we've had from immigrants. They've also taken white-collar jobs or office jobs. That's really what AI is looking to try and automate, is that. Let's also keep in mind, too, and I'll quote Bob Gordon, who's a professor at Northwestern University, who's done some work on technological growth, that any technological advance like AI will lead usually to a net creation of jobs. And to put it in stark terms, there's been estimates that AI over the next decade plus might eliminate 50 million jobs. It'll probably create 60 or 70 million jobs. The problem is, I don't know the 60 or 70 million jobs it's going to create because those are in industries that don't exist. I can identify the 50 million jobs it might do away with. You could start with automated driving, and you could start with the job of driver, which is the most popular job in the United States. I think it's like 12 million people list on their tax reforms that their job is driver, whether it's bus driver, taxi driver, forklift driver, or anything in between. And so, yeah, I understand those jobs will go away, but it will lower the cost of transportation, and it will open up whole new industries that don't exist. Think of what the App Store did a couple of years ago when Steve Jobs held up the Apple iPhone 1. Did anybody say, oh, that's the end of the taxi industry, or that's going to forever change the hotel industry with Airbnb within 3 or 4 years? That's what technology changes do. They create jobs as much as they displace jobs.
Jim, love it when you join us. Thank you for taking the time this afternoon. We went a lot of places with you. It's exactly what we wanted to do. Jim Bianco, founder and president of Bianco Research out there in Chicago. Coming up next, we are absolutely laser focused on Washington, D.C. We're going to be joined by our senior geoeconomics analyst for Europe for Bloomberg Economics. He's out there in Geneva with the European perspective. Markets slightly down. This is Bloomberg Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. A move lower for the Dow, the S&P, and NASDAQ back to work Monday. We are looking at losses right now on the S&P 500 index, down 8 to 64.41, a decline of 0.1%. Dow Industrials lower by 73, a drop there of 0.2%. The NASDAQ Composite Index down 27, down 0.1%. The Russell 2000 Index higher on a down day for the rest of the market. Russell 2000 up by 0.4%. Our Mag 7 Index down now by 0.4%. 10-year at 4.33%. The 2-year 3.76%. Spot gold is down 0.1%. 33.32 the ounce. West Texas Intermediate crude up 1%. 63.45 a barrel. And Bitcoin now down 1.1% at 116,369 on Bitcoin. Sources tell Bloomberg the Trump administration is in discussions to take a stake of about 10% in Intel. Intel down now by 2.5%. Economic data, home builder confidence fell this month to match the lowest level since 2022. Among home builders today, Toll Brothers up 0.8%. Pulte little changed, up under 0.1%, and KB Home down 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Staying with our top story today, what's happening in Washington, D.C. between President Trump and Ukrainian President Volodymyr Zelensky, and also leaders of more than half a dozen European countries in Washington, D.C. as well. I want to bring in Antonio Barroso, Senior Geoeconomics Analyst Europe for Bloomberg Economics. Antonio joins us from Geneva. Antonio, I want to kick off a question to you that I kicked off to Mario Parker last hour, and that had to do with the goals of Volodymyr Zelensky and the European allies who are there with him. European Commission President Ursula von der Leyen, NATO Secretary General Mark Rutte, British Prime Minister Keir Starmer, German Chancellor Friedrich Merz, Italian Prime Minister Giorgia Meloni, Finnish President Alexander Stubb, among others. Are there goals aligned with Zelensky's goals?
Oh, I think European leaders' goals are completely aligned with those of Zelensky. Look, I think the main goal is you take into account the fact that neither Zelensky nor the European leaders were at the table during the meeting between Trump and Putin. They want to make sure that they won't be at the menu. And by that, I mean that they want to make sure that they show openness to a peace negotiation with Russia, to keep Trump engaged, to keep the United States engaged in Ukraine, while at the same time trying to avoid having to accept concessions that might be detrimental to the sovereignty of Ukraine and even to the long-term security of Europe.
Isn't any concession of land detrimental to the sovereignty of Ukraine, though, Antonio?
It is, but Zelensky and Kiev has shown a certain flexibility to negotiate around the front line. What is not acceptable for Ukraine is basically reports that Putin might have suggested a land swap by which they will control the full Donbas and essentially Ukraine giving up on territory that Russia doesn't control, especially because of the strategic dimension of that territory. So, yes, obviously, in any negotiation about territory, there might be some loss of sovereignty. But I think the important thing here in a negotiation about peace is about the long term, and it's about the fact that there is a strong and credible deterrence on the ground that will allow Ukraine to fend off future Russian, or at least deter Russia from future invasions.
The meeting is underway right now. I'm curious just what you make more broadly about exactly what kind of progress we're going to see come out of this meeting in terms of this war getting one step closer to coming to a close. Are we going to see any progress, really?
I think we will see some clarity, to be honest. I think there were a lot of contradicting narratives coming out of the Trump-Putin meeting. We saw, for example, U.S. Secretary of State Marco Rubio saying, look, we are not close to a deal and a ceasefire is not off the table, while President Trump said effectively that Ukraine should go straight to a ceasefire, right? Sorry, to a peace deal, not to a ceasefire, right? So I think Europeans and Zelensky are going to get some clarity on what can be negotiated. And then, as I said, show openness to that negotiation to make sure that they're not the ones blamed for any potential failure in the peace negotiations. I think when you look at the positions of Ukraine and the position of Russia, they remain quite far apart. So we believe that a swift peace agreement, a quick resolution, the quick win that Trump is looking for is going to be very hard to get there.
I want to talk about security guarantees and what that means in your view, Antonio, based on your analysis, the team's analysis. A security guarantee, a guarantee is only as good as a guarantee. It's somebody's word. What is a security guarantee in this context? In the context of a Russia that has shown that it won't abide by guarantees of the past?
Well, you're absolutely right. In this case, a deterrent force is only as credible as the military that is backing it, right? And that's why European leaders want the U.S. to be engaged in any kind of security guarantee, because let's face it, the U.S. is the most powerful military in the world. So I think, some of the issues that are going to be discussed and that need to be clarified is, first, when Trump talks about the U.S. being implicated in this security guarantee, what is he talking actually about? In the past, he has refused to put U.S. troops on the ground. Is he talking about providing some sort of extra support, air, et cetera, et cetera? So I think the main thing to clarify first is what role is the U.S. going to play if there are security guarantees on the ground, and then how this is going to be structured if Europe is going to be, at the end of the day, leading that security guarantee, that deterrent force on the ground.
What would be the best case outcome for Ukraine here, in your view?
Well, the best case outcome for Ukraine is one in which they get a ceasefire, first of all. I think Ukrainian President Zelensky has made very clear that he wants a ceasefire and that essentially the killings will stop. But then, if there is a negotiation, that it is a negotiation in which he's not forced to accept things that cannot be accepted at home, right? Because let's not forget, in international negotiations, leaders normally negotiate at two levels. They negotiate at the international level. In this case, will be Zelensky, Trump, Putin, the Europeans. But then there is domestic politics, right? So Zelensky needs to be able to sell whatever he negotiates at the international level at home. So I think, as I said, the main thing is a ceasefire for the time being. And then if there is a peace negotiation, something that he actually can sell at home and is acceptable for Ukrainian people.
What does it seem like the U.S. appetite is for continued support, at least from the perspective of sending weapons, or perhaps sending weapons to other European countries that then are able to sell them to Ukraine or give them to Ukraine? What is the U.S. appetite for that?
Well, I think the U.S. administration stance towards Ukraine has sort of slightly changed since the beginning of the year. Let's not even go to weapons yet. We can talk about sanctions, right? So there has not been any movement from the point of view of the U.S. on additional Russian sanctions. Now Trump is saying, well, it actually Putin doesn't show a true willingness to move towards peace. I might actually impose additional sanctions, right? He talks about secondary sanctions and the like. So that shows that there has been a slight change in that regard. Trump has said repeatedly that he will be willing for the U.S. to continue selling weapons as long as Europeans pay for it. And I think, not only on the U.S. side, also Europeans have become more aware of the fact that the future of Ukraine's defense lies with them, right? And that they are willing to actually step up and pay for those U.S. weapons that are critical to Kiev's security. We were talking about the best case scenario. The worst case scenario for Kiev will be one in which the U.S. completely withdraws all support, including crucial operational intelligence, and that essentially Kiev and Europe are left to essentially defend Ukraine by themselves. I think that would be the worst case scenario for the Zelensky.
Bloomberg has reported that Russia's economy looks to be weakening. I'm wondering how much leverage you think that gives Ukraine and the EU more broadly.
Well, I think it gives it leverage if Europe is able to convince the US, and more specifically Trump, who is the key decision maker, that additional sanctions should be imposed on Russia to go further in the effort to hurt the Russian economy. But Trump is not there yet. We have seen it, like following the meeting between Trump and Putin, there was no talk of secondary sanctions. He mentioned, those are off the table for now. So, the ability of Europe, the US, and Ukraine to put more economic pressure on Russia depends on their ability to impose sanctions. And for now, Europe has been pushing for more. In fact, President von der Leyen, European Commission President Ursula von der Leyen has announced that a 19th package of sanctions is coming on the EU side, but you really need the US on your side, basically, for those sanctions to bite quite a lot on the Russian economy.
We're speaking with Antonio Barroso, Senior Geoeconomics Analyst Europe for Bloomberg Economics. He joins us from Geneva, Switzerland. We're also looking at pictures right now from the White House where we expect a family photo, a so-called family photo, President Trump and Volodymyr Zelensky, alongside other European leaders, including European Commission President Ursula von der Leyen, NATO Secretary General Mark Rutte, British Prime Minister Keir Starmer, French President Emmanuel Macron, German Chancellor Friedrich Merz, Italian Prime Minister Giorgia Meloni, and Finnish Prime Minister Alexander Stubb, expected to appear a little bit later. We will bring you those images when they do appear. In the meantime, I want to get back to our conversation with Antonio. Antonio, I'm wondering from the perspective of European security. I just listed off a name of more than half a dozen European leaders. Obviously, this is incredibly important to the entire continent. Is this a Russia that is more emboldened than it was 3.5 years ago and has more territorial expansion aims than it had 3.5 years ago? In other words, is this a Russia that greater Europe has to be worried about?
Well, I think that's the fear among several European countries. And I think this explains to a large extent why so many European countries are rallying so strongly behind Zelensky, because they realize that fighting in Ukraine is actually cheaper than a long-term confrontation, or cheaper in terms of, by the way, economic terms and in terms of human lives, that having to fight a wider war with Russia in the long term. Bloomberg Economics, we try to model different impact of different types of conflict with Russia, between Europe and Russia. And the worst case scenario is one in which Russia might attack the Baltic countries, right? Which will be, really negative for Europe. So I think there is a concern that Russia has territorial expansions beyond Ukraine. I think different European countries, I think this perception of the threat, it's true that it changes and varies across different countries. The perception of the Russian threat is not the same in the capital of Poland, Warsaw, than in the capital of Spain, Madrid. But overall, I think there is a significant number of European countries that fear that what might be next after Ukraine might be actually a wider confrontation with Russia. And that's why they are putting so much support behind Ukraine.
What does that support look like with or without the United States?
Well, that support already looks, is starting to shape up a little bit like a wall in which Europe carries the burden of supporting Ukraine in the bulk of support, at least. Right now, Europe supplies more in terms of monetary cost of weapons and financial aid, supplies more aid to Ukraine than the United States. However, the key problem here is that the U.S. supplies some key things that Ukraine needs. For example, as I mentioned, operational intelligence, crucial for Ukraine's war efforts. Things such as key weapon systems, HIMARS, Patriot missiles, things that are actually quite important in the efforts by Ukraine to defend itself. So I think if the U.S. were to withdraw, I think in monetary terms, Europe has the funds. It can find the funds to help Ukraine. The problem is it doesn't have some of the capabilities that Ukraine requires and that, frankly, only the United States, at this stage at least, can provide.
Do you think we learned anything after the Trump-Putin-Alaska meeting, or even just what we've seen from the tone of the meeting at the White House today, about where the U.S. is currently standing on potentially wanting to withdraw that support? Have we learned anything new about that?
Well, I have to say, with Trump, it's always difficult because, he at the beginning of the year, he was extremely critical of Ukraine. We all remember now, it's written in the books of history, how, that meeting between Zelensky, Trump, and U.S. Vice President J.D. Vance, in which there was open conflict essentially in the air for everyone to see. Now he seems to have changed at least his stance towards Zelensky, his stance towards Ukraine. He became much more, let's say, aware of the fact that Putin might be stalling any kind of peace talks and that he was delaying efforts to achieve peace, which is essentially, at the end of the day, what Trump wins is to get a peace deal and to be the mediator or to be the generator of that peace. So I think Trump's opinion has changed quite a lot in the last months. Now the question is whether, if he considers that he really needs a quick win, a quick peace deal, the question is whether he sees that both parties, Russia and Ukraine, are not getting to a deal, whether he says, okay, that's enough, I'm just pulling out because I tried and I cannot get a peace deal, right? I think, as I said, that's the worst case scenario for Ukraine, and it will be, in terms of the Russian war efforts, will be the best case scenario for Putin.
Yeah, I think one thing that I'm really struggling to understand is what peace looks like if there is no ceasefire, or what an end to the war looks like, or some sort of negotiation if a ceasefire is not included. Is that even a possible scenario to talk about?
Well, the thing is that you look at international peace negotiations normally, I mean, the sequence, you normally get a ceasefire, and then you negotiate things such as territorial concessions, which, by the way, are always one of the most difficult things to negotiate. I mean, we're talking about countries giving up on their land, right? Especially in the 21st century, where interstate war had practically disappeared. So I think we are putting a little bit the cart before the horses here now. The question is whether in the path to a peace agreement, whether actually Zelensky, the Europeans, and Trump can put for an actual ceasefire so the killing can stop, because otherwise Putin, this favors Putin's strategy, which is to continue making territorial advances on the ground while not having to concede anything, right? So I think I completely agree with you. It's difficult to see how you get to a peace settlement right away. At some point, the violence needs to stop.
We were speaking with Bloomberg News' Mario Parker a little bit earlier in this hour, and we were talking about just kind of zooming out whether or not some territory will most likely have to be ceded to Russia for this war to come to an end. What's your take on that right now?
Well, it's a tough one because, as I said, it's difficult for Zelensky to accept that any territory might be ceded to Russia. Now, that being said, I think there is also a recognition of the facts on the ground, right? And that Russia has occupied territory, that maybe Zelensky is willing to negotiate not to recognize de jure, that means legally recognize that Russia holds those territories, but to de facto say, okay, for now, Russia holds them because they have the military advantage, and if this is what it is required to make peace, that might be a possibility. But as I said, it's really difficult politically for Zelensky because any kind of sessions in terms of territory are very politically difficult for a leader that essentially has vowed to fight until the end, right? So you might well see that maybe some territorial concessions might be part of a deal, but in no scenario that will mean that Ukraine legally recognizes those territories as Russian. So it might be more sort of a de facto acknowledgement that peace needs to be, that essentially the war needs to be frozen at the current front lines.
We're looking at a shot of the White House right now, where we do expect to see more than half dozen European leaders, along with President Trump and President Zelensky, when they do appear for what is referred to as that family photo. We're also speaking to Antonio Barroso, Senior Geoeconomics Analyst Europe for Bloomberg Economics. He joins us with the European view from Geneva. On that European view, let's say that Ukraine does indeed have to cede territory to Russia. Does that mean that people who live in that part of Ukraine will now be Russians?
Well, these are all questions that are very hard to answer because we are not even there. As I said, territorial concessions are really the last thing that you normally negotiate in any peace discussions, because, as I said, they are the most difficult thing to do. I think the key issue for Zelensky now is trying to get some sort of ceasefire where the killing can stop, and then with the backing of the Europeans and with the backing of the United States, try to get an arrangement that actually works for him and works for the Ukrainians. The key problem here is that the positions of Kiev and Moscow remain so far apart that getting that quick win that Trump wants is going to be extremely difficult.
Antonio Barroso, Senior Geoeconomics Analyst Europe for Bloomberg Economics, joining us from Geneva. Antonio, appreciate you taking the time this afternoon. Thank you so much. Hey, I do want to get on over to Charlie Pellet because he's been watching the markets and watching all the business news happening. Hey there, Charlie.
Hi, thank you very much. Little change for the Dow, the S&P, and NASDAQ right now. Interestingly, on a down day for the rest of the market, the Russell 2000 index of small cap shares is pushing higher, looking at a gain of roughly 0.4% on the Russell, but the Dow, the S&P, NASDAQ, all in the red. Little change, perhaps the key takeaway at this hour. Right now, the S&P is down 6, drop there of 0.1%. Geopolitics certainly coming into play. We've got the Dow down 66, down 0.1%. NASDAQ Composite Index down 18 right now, a drop there of 0.1%. Your 10-year at 4.33% with a 2-year currently yielding 3.76%. Gold is down 0.1%, 33.31 the ounce, and West Texas Intermediate crude now up 1.1%, 63.48 for a barrel of WTI. Bitcoin down 1%, 116,510 on Bitcoin. Sources tell Bloomberg the Trump administration is in discussions to take a stake of about 10% of Intel. Right now, Intel shares, they're down 3.3%. And Novo Nordisk is slashing the cost for Ozempic for cash-paying patients to $499 a month through NovoCare and partnering with Good RX Holdings to offer it at the same price as U.S. pharmacies. Novo Nordisk shares, they're up by 4.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. As we've been talking about throughout the program today, our top story is what's happening in Washington, D.C. The conversations happening between Ukrainian President Volodymyr Zelensky and President Trump of the United States, alongside more than half a dozen European leaders. We're awaiting what's referred to as a family photo of those European leaders and the president. You can see that there on the screen if you're watching us on Bloomberg TV, YouTube, or Bloomberg Originals. We'll bring you that image and any commentary as we do get it. Right now, the latest, though, is that the discussions in Washington are continuing. As we read a little earlier on the program, Enda Curran on our Bloomberg News economics team, noting on our live blog that the outcome of today's discussions on Ukraine and Russia has important ramifications for global inflation, given the potential for an impact on oil and gas prices. I want to broaden the conversation a little and bring in Elena Anderson. She's got about a $1.1 billion fund. She joins us from Chicago. That fund is the William Blair International Leaders Fund. It's up close to 17% this year. Elena, good to have you with us. Appreciate you joining us. I want to start big picture and talk a little bit about this geopolitical environment. Because if I look at the Bloomberg terminal, WILIX-US is the ticker for the William Blair International Leaders Fund. When you think about geographic allocation for this, more than 11% is the UK, more than 8% is France, more than 8% is Germany. The three leaders of those countries are in Washington, D.C., doing these negotiations right now. How do you invest against a backdrop of geopolitical uncertainty such as this?
Well, thanks for having me, and thanks for the question. We think that there are several factors that are impacting the current market backdrop, and we think that the current backdrop, despite the geopolitical turmoil that you mentioned, is quite favorable for non-U.S. equities. Chief among those factors is that growth differentials between U.S. and non-U.S. jurisdictions are narrowing, and they're narrowing because of tariffs that we expect to take a bite out of U.S. household income wealth. We'll probably start seeing that here in the second half. They're narrowing because of shifts in policy priorities that are happening abroad. You're seeing investments in growth and competitiveness that are being deployed outside the U.S., and we expect to see inflections in growth because of that. And then they're narrowing because of some concerning macro developments here in the U.S. Think rising deficits, weak dollar, inflation that's been sticky to the downside. So all of these elements, combined with the fact that valuations in the U.S. are quite full, make that valuation per unit of growth equation quite favorable for non-U.S. equity investing.
Tim mentioned that your fund has top geographic allocations to a number of countries in Europe. How are you thinking right now, though, about countries outside of the European Union. Is that an area that you would want to be investing a significant amount of the fund in?
Certainly. Europe has been well discussed, I think, as a place where growth is inflecting, whether that be because of defense spend or infrastructure spend. We've heard various jurisdictions of Europe make commitments in that regard, but we're seeing opportunities across all developed markets and across emerging markets and across various industries. You can imagine, and we probably have to remind ourselves, that most of the AI ecosystem is located offshore. While the hyperscalers are here in the US, it's the equipment companies and the testing and packaging companies and the semiconductor manufacturers that are really driving that growth.
Elena,
and they're located outside the US.
I'm so sorry to jump in. Sit tight. I just want to go to our shot at the White House right now, where we see President Trump flanked by Ukrainian President Volodymyr Zelensky and French President Emmanuel Macron, in addition to other European leaders, including European Commission President Ursula von der Leyen, NATO's Secretary General Mark Rutte, British Prime Minister Keir Starmer, German Chancellor Friedrich Merz, Italian Prime Minister Giorgia Meloni, and Finnish President Alexander Stubb. This is what's called and referred to as the family photo taking place live right now at the White House.
Elena, let's get back, though, to what you were just talking about.
Just a reminder that all these leaders are in Washington today, and what they're doing is they're really trying to negotiate on behalf of Ukraine, discuss with President Trump a way to end Russia's invasion of Ukraine, Russia's war in Ukraine. A reminder that President Trump, at the end of that, I don't want to call it a press conference. It wasn't a formal press conference, but he took questions from the press in the Oval Office in the last 90 minutes or so alongside Volodymyr Zelensky of Ukraine. And he said that he would call President Putin of Russia to push for a trilateral with Zelensky. He said that at the end of their meeting, the leaders of these European countries and leaders from Europe, along with Zelensky and President Trump, have now retreated from that family photo to ostensibly continue discussions at the White House. We'll continue to bring you updates from the White House as we do get them.
And we will go back now to Elena. Elena, you were mentioning the supply chain investing. One of your top holdings here, TSMC, that's a stock that has had an incredible run lately. I'm wondering how you kind of square continuing to invest in semiconductors with, of course, concerns about valuations.
Sure, valuations are a key part of our due diligence process, and we are focused on looking at long-term value creation. So we're always balancing our notions and thoughts on long-term value creation with risk reward. And so we still see that the risk reward for a company like TSMC is quite favorable. And that is because they have an unrivaled position as a global leader in semiconductor manufacturing. They're only increasing their footprint globally. And we feel like they're very well entrenched, and that really does underpin how we think about risk reward for TSMC.
Do you rethink at all your geographic allocation here based on macroeconomic events, or do you look at these solely based on companies? And the reason I say macroeconomic events, I'm not just talking about conflict like we're talking about right now and risks to the European continent, for example. What I'm referring to is tariffs, for example. Like, do you rethink your investments in these companies outside of the U.S. as a result of American policy?
Certainly. While we are fundamental bottom-up investors, it is hard to invest internationally without some